Yeah, it feels like it's been 2 weeks. I don't know why. It feels like last
We
week was a
packed a
full
lot of
week.
action into 4 days.
Yeah.
So
Yeah, man, that
really
was a lot
three
of
and a
action.
half.
Still going. A
Yeah.
lot of this action that you're talking about.
Absolutely. Bitcoin above 90,000 briefly, and then not.
It's ridiculous.
So
It's ridiculous.
I saw it this morning, 91.5, and now we're back to 85, which again, a $5,000 pullback, but we're still up, I think, $5,000 in the
insane.
last day and a half. So the herd trade is still flush with funds, it seems.
The herd, you want to talk about it? There's plenty of herds running wild in this U.S. I mean, U.S. dollar is
Absolutely
up against everything again this morning. I can't find a rough spot. And what's been interesting, Pete, and maybe we go a little deep on this because, okay, we have the full board up here, and you can see sterling down another 50 pips, euro down another 40 pips, yen down another 40 pips, Aussie actually taking part in some of the Aussie's been one of the stronger ones.
Right.
The commodity currencies have been relatively strong. Aussie's getting hit pretty good. CAD's getting hit pretty good. Swiss franc is holding, and maybe we'll take a look at that. In a
we
second.
should look at, because that's a little bit. That actually an hour ago was dollar Swiss was trading right up near its highs, and all of a sudden some sellers came in.
Well, so
we saw Swiss bounce a little bit.
We'll get to Swissy in a second, but I do want to start with the biggest mover here, which is the sterling piece in my mind, sterling and euro, because it seems like the greatest damage has been done to these European-based. Obviously, the euro is the euro area, and the pound is UK, all included in the European continent. But UK viewed as different than the euro area, and then Swiss franc as well, different. What is going on that those major currencies are getting hit the hardest off of this reaction? Because even Japanese yen, and we usually group in the Forex space, euro, sterling, and yen as kind of being like, I don't know if you want to call them like the blue chips or like the developed, like super developed economies. And then we group in Aussie, Canada, Mexican peso, New Zealand dollar as being more like, can be more volatile, relatively smaller economies, still developed obviously, but relatively smaller than those big three.
Absolutely.
Why is the pound and euro, and here I have the pound up, we'll go to that in a second, but euro, I mean, this is a bloodbath. And it's nonstop, unrelenting compared to, just really quickly before you dive into it.
We got one day of two-day action, and that was it.
Compared to this Aussie that's getting hit pretty hard today, but you can see
we're nowhere near those. We didn't take out the post-election lows or those lows we had beforehand. So
back and forth, and this euro and sterling here just getting punished. What is the story that's going on that is causing so much damage to be done to the euro and the pound specifically?
So I think the euro in specific is a little bit there from, again, not to dive too deep into the macro side, but the thinking is that, again, a new administration with much less focus on Ukraine or NATO in general, basically pay your freight or we're not going to protect you anymore. It's kind of, and I don't mean to, I'm not making a judgment.
Just the way it is.
But it's just the way it is. There's going to be a different dynamic about supporting your, so is the challenge going to come to an economy that's already a little bit challenged within Europe? Germany always had engine. Germany just had a change in leadership in their government, so that is a little bit of disruption. And then the periphery of countries that make up the euro also under additional stress. We're seeing rates go higher, long end rates go higher there, where we're seeing the same thing here. The bonds, the 20 years, the 30 years trade yields higher than the 2 years or the shorter term. So they're their bunds, which are their equivalent of their 20-year, trading lower, and the idea that they're going to need to borrow more, their economy is going to be more challenged, they're going to have to pay for more of their own defense, and depending on how Ukraine unfolds, geopolitically, it becomes a little bit more challenging to them closer from an expansion standpoint. So I think all those things are weighing on euro here. A little bit of, again, some of those pieces playing through, as well as the fact that pre-election we traded up to the upper end of the range, 112. So where are we? We're through the range, but we've basically just given back. We've given them back basically 7 months worth of work in a matter of a couple of days, 6 days. So to get us right back down to those levels. So it's interesting here is that we're going into the morning here, right on the lows. There really is no. Where are you on a?
That's the daily chart, just showing a little bit of
Right.
that context that Pete is talking about from the spring until really the election season started to kick off in October,
Right.
and then you really started to see Trump gain in a lot of the different predictive markets and polls and what have you, and then obviously he wins, and now we're trading through those lows. To your point, Pete, yeah, the journey from 106 to 112 on the upside
Right.
was a lot longer and painstaking and big developments having to come through of, different periods of, oh, wow, the euro area's, GDP and inflation and employment metrics are maybe looking stronger than the U.S.
Right.
is. Obviously, the U.S. bigger economy, but everybody over the course of the middle part of this year is worried about, how is the economy going to take interest rates still being higher than they've been the last 2 decades, really. And we've come down a little bit in terms of, when inflation was 9%, that was teamed with an economy that was really running. And we're talking about, earnings that are going off crazy, stock market moving through highs and everything else. And now the fear in the middle part of this year was, how is the economy going to deal with these rates that are now at these high levels? And even if they come down, they're not going to go down to zero like they've been at for the last decade.
Absolutely.
And we went back and forth between, the euro area is looking stronger than the U.S. The U.S. is looking stronger than the euro area in this kind of come down phase. And now it seems that the U.S. election has totally transcended or maybe made that even tougher for the euro area or shined a brighter light on the fact that you still have 4% plus interest rates. And to your point, the fact that bond prices aren't rising and they're not pricing in more cuts or lower.
The short end is, though. So they're getting we're going to have, and again, we're running a $28 trillion deficit here.
Mm-hmm.
So it's not like we're not going to have to borrow a lot of money too.
Sure.
So, but what's playing through now is that combination of effects of they're seeing their long end rates rise, where they, what they're going to do to stimulate the economy will be more of a question. When rates diverge, we see that play through the currencies. We saw that play through yens, with yen at 25 basis points, our short-term paper at 4.5, now closer to 4, but that divergence driving dollar yen. So we're seeing a little bit of that play through here. I
the
think
short-term rate divergence between the euro area pricing in more cuts in the short term because of the added stress post-U.S. election.
Yes, and the slowdown they're seeing in their economic numbers. So so the question becomes, if I'm trading FX, do long-term rates differences drive the difference, or is it short-term? It's really the short-term rates are what determine the carry on the trade, or whether you're getting paid or paying to carry that position, or embedded carry if you're trading other products. That's really what's reflective, but there is the market looking at longer term rates. So the math is based on short term rates. The market chooses what it wants to look at. And I think it's looking at this divergence in what they may have to spend and where they may have to sacrifice to meet those requirements.
I always view it as like tiers, because you can look at every asset class and kind of create, and it's not always 100%, but you can create tiers of what is the most meaningful to that asset class. And so, for example, if you're looking at the S&P 500, right, the first tier is going to be those top 5 or 10 stocks that make up, 20 or 30% of the weighting, and what earnings are doing, what's going on at those companies. Essentially, it's going to be that first tier, and then maybe the second tier is like interest rates in the U.S. is going to affect the S&P 500, and then after that, maybe it's smaller tangential stuff. With Forex markets, it tends to be more so, and we're looking here at Eurodollar, so we'll stick on this as an example. That first tier is likely going to be short-term interest rates in those two regions because it's a huge driver of essentially the supply and demand dynamics of that currency. Tends to be more demand for a currency that is in here two relatively stable regions because that can transcend this first tier that I'm going to talk about in just a second. But yeah, if there is now a market pricing in lower short-term rates for the euro area, and I'm looking at this euro dollar trade, and to hold long euro dollar for that carry trade, I'm going to have to pay more because I'm now financing my long euro position in a short dollar position at higher rates. The short euro dollar position might get more demand, might get more looks because you're getting paid that higher U.S. rate.
And where can you see that?
Well, you could see that here in the platform.
Absolutely.
But the other, and you can see right now, it's a relatively small amount, but Pete's point being maybe this market is gone from 112 down to 110 pre-election and now down to 106, with the idea, part of the idea being that short-term rates continue to diverge, and this number,
and
the swap bid.
And that swap bid has moved down recently. So that is taking into account that. So that gives you, again, the swap rate is, and I keep promising, and we will put some content together about this for the show, understanding what swap rates mean and how they impact whether you get paid or pay to carry a currency pair, and why some traders look at that and where the carry is the greatest. So that's one aspect of trading spot FX that's really interesting and differentiates it from products. Doesn't make it more confusing, just adds another element to it that's interesting. So looking at those swap weights is an interesting way to see that interest rate divergence.
And a couple of things to say on that. One, the swap rate, just like theta in an option strategy, doesn't guarantee you anything.
No.
Because you can be short the euro dollar pair here and be getting your 0.1, 0.2, maybe it continues to climb 0.3, whatever pips for days, weeks, months, and the euro dollar market can be moving higher by 5, 10, 20 pips on average per day.
Absolutely.
And that doesn't create a sustainable strategy. So it can work in your favor. It can work against you if you're long euro dollar. And here, of course, the classic example of the last couple of years is this dollar yen, where the big divergence between short-term rates in Japan being essentially 0%, here in the U.S. still being around 5%, giving you 1.5 pips on a daily basis. Also, these are indicative prices. They can vary from day to day.
Yeah.
But the price action is a huge piece. But also that second tier is the geopolitical piece that can transcend any of this. And I'm glad that you brought that up with this euro dollar piece here, because it was completely out of my mind, the Russian-Ukrainian war that's been going on and how a Trump presidency might lend to that versus a Harris presidency. And it seems like, again, nothing has been solved. It's not like this guy was elected last week, and so this is how the next 4 years are going, and you better pile into short euro dollar because it's going to dust. This is just the reaction on the fact that, to your, and I think you use this word, stress. There just might be added stress in the euro area with this Republican presidency versus the Democratic one. And that's what seems to, the divergence in rates is maybe that first tier.
Right.
That second tier might be the added stress of the war going on relatively closer to the euro area, and as well as a relatively weaker economy that now might be more stressed by U.S. euro trade relations not being as smooth as they've been.
Yeah, absolutely. And so the market prices all that. Again, you don't need to be a macroeconomist to trade FX. The market prices that all in wonderfully for you.
The market does it better than the macroeconomists.
Much better than the macro guys. You want it, so they had such an argument about whether those election markets were destructive to the election itself? Were they misleading or anything? And we found that the election markets actually were much more accurate predictors of the outcome than what all the polls say.
Yeah, for sure.
So interesting one there. And again, the markets continue to be, now that's a market that's evolving, but the markets continue to be very efficient ingesters and disseminators of all that information. So we take it for what it is, and we trade accordingly. But yeah, this continues to be, short of that one-day rally we saw Wednesday into Thursday, this continues to be a market that doesn't exhibit. And even if we go down, let's go to an hourly. This
is a rough trade.
This is a very rough trade because you see, we had two little basically pauses where the market tried to build a little bit of energy and gave it right back. And we're continuing to do that again. We're rolling over it into the U.S. session on the lows. I think this is going to be a challenging trade right now, whether or not they plumb through 106. And we see that play through. Let's take a look at client sentiment. Where are TastyFX and IG? Okay, here's a market where you would expect this a little bit. Now we're seeing this. Traders are, again, some traders are momentum guys, so they're looking for. I want to see the capitulation. I want to see the break of 106 and see where it goes, and they'll lean into being short on a break to a new level.
Well, and being short, like we talked about, is giving you that carry.
Absolutely.
So,
and now you've got the contrarian guys who are looking too far, too fast. I want to play this from the long side.
And this is what makes this, in some ways, an impossible task. No one, macroeconomist, best trader in the world, Warren Buffett, whoever, knows what the next price of euro dollar will be, 107 or 105. If we're sitting here at 106, let's just call it 106. But what makes it so intriguing, and what's interesting about this being, yes, 69% long, which is overwhelmingly long,
right,
but not 100% long. And we've seen some of these client sentiments historically, Pete, 75%, 80%,
we saw that in the yen.
85%. I think we saw short in the yen when we got up to 160.
Yeah.
But the dynamics of this make it so split, even at this extreme, and 69-31 isn't 50-50. But again, I would make the case that it's relatively equal on both sides for a market that's just getting trounced. And
Agreed.
There's a bunch of interesting things to take into account here, because we talked about the carry trade and how maybe there are, we don't know, maybe there are a lot of people in this Forex market that have been short or created new short positions recently because the carry is in their favor, and they think the carry is going to continue to move in their favor, and so they'll be short and take all the noise of 106.
With the idea that I get paid a little bit every day on the trade.
But the other interesting thing, and this is something that you and I have looked at so many times, and it does not guarantee, it's not predictive of the future, but Forex markets historically are some of the most mean reverting markets of all time. So these guys on the long side aren't necessarily sitting there. You might quickly cross them off by saying like, oh, they're catching this falling knife. Trump is in the White House now. This is going to be different. The U.S. dollar is going to railroad all these other currencies. Well, let's take a look quickly at the historical context here, because we've had a Trump presidency, and during that period, this euro dollar market
120,
traded between 105 and 120. And right now we're at the lower end of that range. And also take president out of it. Take, Trump, Biden, Harris, whoever out of it. Of course, we've had a pandemic, all these different things. And also, I should say as a quick aside, there's always something. Like you always want to say, oh, well, you can't really talk about Trump versus Biden because there was a pandemic. Every 4 to 8 years, there is something.
That's why we don't get caught up in it. We talk about context a little bit, and like client sentiment. You're going to talk to half the guys who said, well, the market's always wrong. So those 70% long guys are going to get tested, and we're going to trade lower. Then you get the guys, I want to go with the herd, and I'm going to buy them down. It's just a tool. Again, you parse it and move on as a tool in making decisions. It's not, as you said, there's no guarantee to any of this.
But what is interesting is you look at these historical prices. Because you pull up a chart of equities or gold, a handful of these different assets, and you get an up and to the right chart. And what we like so much about the Forex space,
It's a great point.
is that, like, especially when you're looking at major, actually, honestly, pull up a historical, and TastyFX has a ton of historical data on 80 plus pairs here, so you can go crazy. You pull up a chart like this. This is the monthly chart going all the way back to 1990 for euro dollar. So more than 30 years of data. And you don't really see more than a couple of years in any extreme.
Right.
And especially the last 2 decades here, Pete, you're trading between, of course, there's the outliers here of when we traded parity for a month or two. And there are the outliers here where we traded above $1.50 for a couple of months. But you're, for the most part, really trading in this 110 to 130 range. And so you have, 69% of that audience there, maybe they're not saying exactly this, but long on and taking that negative swap rate with the idea that this market is likely to mean revert at some point in the future. Right. The question becomes, and the hardest thing for traders, from where, from when, is it going to, mean revert from parity or from 95 cents or from 90 cents, which we got down to in the early aughts? Is it going to happen tomorrow? Is it going to happen next week? How long and for what distance can I hold on to a long position here? And so you might have 30% of those short traders, either taking that carry into account and willing to take the noise, or they're short just for 50 pips or 100 pips or whatever. So many different dynamics, but that's what creates, a two-sided market, an even market that is not able to be predicted.
Absolutely. And I think what's great is, again, zooming out to this monthly is great in the fact we have all this history, gives you context. And the context is the market cheap right now? Yeah, we've given back 6 handles in the matter of a month. That's a big move. That's a 5% move. Usually currencies move 3% on a yearly average going back the last 20 years. But when you look at this, it's like, sure, we're down a lot, but this is why, whether we're going to be a contrarian and be long or short with momentum, we're going to put structure around both sides of that trade, if I'm right and if I'm wrong. And that's the important thing here, is you can't go through the exercise, it's so cheap, it's got to bounce. It does. We do have a mean reverting aspect to these pairs, which is really nice, but we always set those management techniques. That's really important takeaway. This product or any other you're trading, you've got to go into this with the idea of, when you start telling, the market's just wrong, this has gone too far too fast. The market is the most efficient pricing tool of all this macro stuff that's out there. And when I hear 3 guys over the weekend all tell me, par's coming next, that just drives me to want to be long because whenever anybody makes those calls, but I'm also mindful of, depending on what side you want to trade as a contrarian, you're setting realistic expectations on both sides.
Well, and I think that's a great place to end this discussion, because at the end of the day, absolutely nobody knows.
No.
And if I learned anything when I studied math in school, when we were we would come up with all these different models to predict markets. And inevitably, the best way to model a market is expect that the market doesn't really drift in one direction or the other. And it's symmetrical on both sides.
Right.
And when you think about it that way, if you're looking for a mean reversion to the tune of 115 or 120, well, then you better have enough capital and enough risk tolerance to take a move down to parity or 95 cents, because it's just not realistic to say, I'm putting my foot in the ground here and I'm saying it's not going to go lower than 105, but I'm going to hold for a reversion back to 120, because you're likely to get a lot of noise in there. Now, if you're looking for just a quick trade up to 107, then yeah, maybe you're only looking to take risk down to 105.
Right.
But it's something to be aware of, and I love that you brought mechanics into it. It just depends on how you're trading this.
Well, and you want to see a little bit of break. Let's jump to the Swiss just really quickly, because we're seeing that is something that's giving us a little bit different view right now. So Swissy, again, remember this is dollar Swiss instead of euro US, so
Inverse.
Strong dollar again, inverse, but very kind of setting the table in a different way, not sitting right at those highs, i.e. Swiss lows, right when we go to the US session. There's been a solid pullback here a little bit. So 30, 40 pips. Are we seeing a little bit of two-way action? Yeah. So this actually, and don't be always necessarily chasing the thing that's at the cheapest extreme. Look at the tape action a little bit and see where you're seeing a little bit of two-way back and forth, and that's where you may want to find. And that's what's great about FX is you can find the currency pair that's giving you the kind of action you like. So you're not having to squeeze yourself into a one-size-fits-all product, both in terms of sizing, both in terms of exposure, and both in terms of product. So there's a lot of opportunity within the
bunch
FX
of different
space.
flavors.
Yeah.
Well,
All right.
let's hand it off.
Let's do it, my friend. Coming up next, Tom Sazoff. No. Coming up next is Tony Batista, Vanessa Logan, and I believe Nick Batista.
Yeah, that's
so.
Even better.
Thomas on the road to London. So, guys, have a great day. We'll see you back here tomorrow.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Life goes by fast, really fast. One day we're 25 and living large, and the next day we're 65 and hopefully still living large. It's the 40 years in between that are mostly a blur. When asked what they would do differently, most people confidently say, nothing. I have no regrets. As much as I want to believe them, I know better. I believe there's one common regret virtually everyone chooses not to remember. It's the taboo topic of not taking as much risk as possible every chance you get. Remember, the genesis behind Tasty Live was to encourage risk-taking. What were we thinking? Imagine the risk of building a business designed to encourage people to take risks. One of the things I've learned about taking risk, it's not personal. You can't let your ego dictate your decision-making. Unless, of course, you're the richest person in the world, then it's a death trade. Another thing about taking risks is that it's never obvious. There are no easy decisions. Risk-taking should be fun, engaging, and challenging. But if it ever seems apparent, success will not be easy. The great thing about the world of finance is that success does not require genius. In my opinion, the model for success, without a lot of complex math, is relatively straightforward. It's risk times longevity. Between academia and financial media, we have overly complicated embracing the paradox of risk. It's finally time to simplify the model behind success to risk-taking times duration. This definition should give everyone hope and a reason to hang in there.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Morning.
Hello, bats in studio.
Hey,
Should you guys be hanging from?
Batstards.
Shouldn't you? Hey, you said it. I did
You
not.
were thinking it.
No, I had not thought of that, but it is.
Totally.
It is
thinking. I
a
can see it in your
very
eyes.
clever moniker, though. I'm not mad at it. How are you guys doing today?
Amazing. It's a wonderful morning.
Yeah. It's
Just
something.
a little more traffic than normal this morning. A little bit more.
Was there from you coming from the North Shore?
The North
Or from
Woods,
the North
yeah.
Shore?
Yes, a little more traffic than usual. Might have to wake up a wee bit earlier. Like
Were you having problems getting your eyeliner even this morning too? That's why I was late. Sisters, not twins.
You lay out your clothes the night before?
I do lay out my clothes the night before,
do
so I had
too.
this all like headband, sweater, skirt.
I
Yeah.
think we're a lot more alike than you'd like.
Yeah.
on.
Yeah, but both my parents were military, so I don't make my bed every morning. I can't. I don't
Well, one
have
of
that
my
habit.
parents
But
was incarcerated. So yeah.
Nikki, do you lay your clothes out the night before?
No way.
No.
Tell you that right away.
But it's easier for you. You're just like, it's a shirt.
I usually make the bet though.
Oh, you do? Oh, that's interesting.
Yeah.
I don't have time for that. All of this, I don't have time to make the
I make sure
bed.
my wife makes my bed every day before. Well, if they make my bed, I don't want to start my day without my bed being made. You always should have somebody start your bed being made.
Do you know what I did pass though on the way in on Lake Street? And I was just like, what? It's too early for this. There's a full ass Christmas village, like on Lake, like there's some sort of empty lot.
Yeah, that's where they do the pickleball, I think.
I don't even know, but I drove past it and I was like, what is, it's too early.
It is. It shouldn't go up before Thanksgiving.
For a Christmas village, right? Yeah. I was like, oh, this is
I agree
weird.
with you.
I don't know.
I mean, that you're not a like Christmas Kindle type person.
I do. I love. You know, I love a decoration. You know, I love a theme. But I like the
Slaughter
order.
ingredients first, then we get to Christmas.
Yeah.
Come on. I mean,
Like the order of operations. Like, but because I deeply love Thanksgiving, and I get mad that it gets glossed over.
so Thanksgiving back in the day, you know this, was like my get together of favorite holidays. Remember, Randy used to come to our Thanksgiving
Yeah.
dinner.
But you hate turkey.
What's that?
You hate turkey.
I hate turkey.
Yeah, the Thanksgiving food is.
Thanksgiving food is
needs-
horrible.
it needs-
I had the chimney sweep guys come for Thanksgiving
I
one
don't
year.
remember that.
Yeah. Remember that?
Randy coming, and
Yeah.
he would hit his head on the chandelier.
Yes, he hit his head on the
He was like
chandelier.
6'7".
Yeah.
Wait, is this RN Delicious?
This is RN Delicious restaurant.
RN Delicious is 6'7"?
He's like
was-
6'4", but
Yeah.
yeah.
Okay, I am not mad at
I
RN
was little at
Delicious.
Yeah, you were
Looked
like,
a lot.
Yeah, of course.
Yeah.
You're probably my height.
He'd be a little sauced up though before
Yeah.
we got to Thanksgiving. He would be quite the trip. I got the chimney sweeper guys came.
Okay.
Made friends with the chimney sweep guys because I had like 4 chimneys, fireplace in my house that needed to be.
Chim chim chiroo. Yeah.
What's that?
You know, it's
Yeah, and I kept them, so they would come. I remember they asked if they could bring dates, and they were definitely women of the night. They were not.
Oh, the chimney sweep guys? Really?
Yeah.
Are you familiar with them or?
Well, I mean, they spent about 2 months in my house, and I really liked them. And it was coming around Thanksgiving.
Oh no, I meant the women of the night.
No, the women.
Excuse me,
not these.
they are female entrepreneurs.
They were working. They were a trip.
Uh-huh.
It was fun. They spent so much time in my bathroom. They never got out. And when I actually went in there, and my mirror was off of the wall.
Oh no, this is such an 80s story.
Yeah. But it happened in the 90s.
Okay, wow.
I was downstairs playing with my Legos.
Oh no, Nikki, no. This is like the worst after school special ever.
Yeah. It was funny. Anyway,
it's
good times.
good
I like
times.
Thanksgiving. Thanksgiving's fun.
Yeah, it's a good
Yep.
time.
Yeah.
Are you guys doing
For Thanksgiving one year.
Are you guys doing Thanksgiving together?
Yeah, remember?
Are you guys doing Thanksgiving together this year?
No, he's gonna go. He's gonna go see the other administration.
Yes.
Oh, you're gonna go see your mom. You're gonna go see your mom. Oh, that's wonderful.
Weather wins. That's all it takes. That's all. That's it. You know,
Yeah.
love.
I play golf.
Hitman.
The house is clean. You know,
Yeah.
there's
There's no,
food in the fridge.
there's no strangers.
Yeah,
eating at
there's
the
no
table.
strangers. You know.
Sure, yeah, because like at your dad's, there's babies. Yeah, there's literal babies.
Baby said he's 14. He's looking at the same things you're looking at.
No, but your grandson, your grandson's a literal baby.
Just
Yeah.
one last weekend.
Okay, that's still
There's not
an
like,
infant.
It's not like a freaking petting zoo.
Yeah,
You know?
yeah, I feel that.
Nice.
I mean, there's scorpions though.
Got a point. Got a point.
Yeah.
You're like, I'll take the scorpions.
What do you do for Thanksgiving?
Thanksgiving is like my Super Bowl. So like,
Oh,
like you and I both,
inspiration.
we watched the Martha Stewart documentary. First
Yep.
of all, she's a real one. She's an OG.
Yeah,
like
yeah,
I
right.
mad respect, put some respect on Miss Stewart's name. But no, Thanksgiving's like my Super Bowl. Like I make all the pies and I'll do the turkey and all the side dishes, like and all the prepping and the planning and the chopping and the mincing and the cooking and the baking and the glazing and all the.
You want an order?
Honey, you cannot afford me.
You never know. Give me a number. I
Cannot afford
might be
it, but
desperate.
but it's super just low key because it's just me, my mom, and my dad. So that's nice because it's
If you want an order, let
just
me know.
the three. It's just
know.
the three of us. So
All you gotta do is let me know by Wednesday.
well, did you
Not
guys
tomorrow either.
do anything fun last night?
Ooh, fun last night.
you have hockey?
Preparing for the Blues, the only team that beat us in the seeding round. We play them tomorrow.
The Winnetka Blues, like what blues are these?
I don't know where they're from. They're not the
Oh, okay.
Beacon Blues because we're
Okay.
going there the following
Yeah.
week. But yeah, I don't know where they're from. Maybe Northbrook. I'm not sure.
This is a grueling schedule. I don't know how he's doing
is.
this and like it's
is,
like
it is.
late night practices and it
Yeah,
seems like
we
a
got
lot.
Until 9:00 last night.
Whoa,
Yeah.
that's bonkers.
Yeah, and that was right after I told him. He went upstairs with his books. I go, "Where you going with your homework and your books?" He goes, "I'm gonna do my homework." Well, I talk to my friends on whatever he's playing. And
On
I go,
Xbox, yeah.
Right. I go, "Well, that's why you're a C student because you don't dedicate 45 minutes to getting your homework done."
Sure.
In which case, he looked at me, told his mom that Dad is extremely mean. Went upstairs in front of the
Cried, pouted.
upstairs, played on his computer while he was talking to his friend doing his homework.
Or you gotta harsh his vibes, man.
Yeah, I guess so.
What'd you do last night? Unpacked? Just
Yeah.
How's
Yeah.
the move going?
yeah.
Fantastic. It's
I
great.
hate moving. Like
Moving is tough.
I don't move a lot. I mean,
Everything make it in one piece and everything?
Pretty much. Yes.
Good.
Yes. I don't have that much, so
sure.
got everything new.
But it's still like you still gotta figure out like where you want stuff and like what you want to change and but that's fun.
Yes.
But it's hard though. You're like, where is the
got a-
thing?
you got a-
And
you
you
got a
can't
couch?
find all your stuff.
Got a couch.
You got a TV?
couch.
Got a couch, got a
bed,
TV?
TV. Yeah.
You have a bed?
You got a cardboard box for a cocktail table? That's all you need. That's all you need. You're good.
That is not all you need. Signed
Yeah.
the Women of America.
Yeah, a little higher standard than that, but yes,
Do you have a bed frame?
I do.
Okay, good. See, this is already elevated because no more
you're
no more
out there, you're
boys
out there.
mattresses on the floor. No more of that.
I appreciate that. I would like to let you know that I'm a little bit more advanced than
Yes, you have a bed frame.
I don't remember you ever having a
Yes.
match.
Yes.
No, I've never had a mattress on the floor. Come on, look at me. Okay, I know what needs to be in the bedroom, all right?
Okay. All right. There you go. Putting it down there. Have you heard from Tom Bat? Have you talked to him? Did you talk to him?
I have. He had a very nice show.
I saw him drink a beer after the show.
No, I don't think that's beer. That
Iron Brew is not beer. No, it's just sugary.
It's like a watery
Sugary
drink, like a
soda.
salsa,
Yeah.
soda.
Yeah. But he did have pints with people in the bar after.
Somebody wrote
sort of.
on the comments. I think it's the first time Tom didn't complisalt somebody because he said he tasted. He goes, "Ooh, what is this?" It says, "Oh, it's okay. It's a little sugary." He goes, "I don't drink sugary drinks."
Right, yeah.
I don't drink sugary drinks. And they said it's good. I give it a 7 out of 10 or a 7 or 8 out of 10. But when he was saying I don't drink sugary drinks, he really wanted to say something mean. He refrained. So he's learning. He's learning a little bit.
Yeah,
But he got to go to that restaurant that I did in Daily Dose with the.
Sucked.
Oh no.
Absolutely sucked.
That's fine. I'm fired.
He said it was horrible.
That's fine.
And he didn't even finish his food, allegedly. And he
Ah.
walked outside, and there was a line all they had was a full pig outside, in a window, and there was a line outside waiting for it. So they waited in that line.
To get free street pig?
No, not free. But they got some meal there, and he said it was outstanding.
Okay, then. That's
the
fine.
story I heard.
I will see myself out.
Yes.
I will see myself out.
But he's doing good. He's doing good. And he picked up some Sudafed. My wife is sick. And he picked up some, she likes this Sudafed from Europe that must have some, I don't know, cocaine in it or something like that.
Whoa, that escalated quickly.
Else, so
That escalated quickly. But he's
picked-
still not going to be back for like another week. Your wife
Yeah, I know. We had a few, but she says it's the only thing.
Oh, I got you.
There's almost none left. So.
Cool. So if you work customs at O'Hare, he's going to be arriving on this flight. No, I'm just kidding.
Brittany's going to have 2 in her purse, and he's going to have 2 in his purse, and they'll be fine. They'll be fine.
All right. Well, that is exciting. He's in Manchester, England today.
Yes.
The city of Manchester. So
yes.
if you are headed out to the show.
That should be one of the bigger shows, I believe. I think that was the one that had the most people showing up, so very cool.
Yeah, maybe he'll get like a Man U jersey or something, Manchester United or something. I don't know.
He does have your sweaters, though. He has 2, he said. I remember he told me that.
He got me a sweater? You're lying. You're lying.
I don't know. He's changed a little.
He is a changed man.
He's
He's not changed to where he's gonna fit something in his luggage. He'll buy me something at the airport if it's a bag of gummy bears.
Just mail it. I mean,
Yeah, that's true. You could ship it.
come on.
That's true. You could ship it.
Yeah.
Yeah.
My friend of mine got that European Sudafed that has speed in it. It's great for the whole week.
No, but you could get that here, but you just have to get it behind the counter. It's just pseudoephedrine.
Oh, all right.
But you just have to show your ID.
Yeah, show
We
your
got a big brain on Vanetta right now, the old pharmaceutical sales rep.
I know, because I get the allergy sinus, so but you can only, it's like more regulated than guns. Go figure.
Or I can have
But-
Sosnoff do like a walk-in and buy for me. You know what I mean? Like, do what you said, which means I have to do something. I can have Sam do it. Let Tom do it. Why not?
Yeah. All right.
Good.
Well, good times.
Probably sent Brittany, to be honest with you.
Anything going on in sports? I have not been following.
Well,
So the Dolphins played last night.
Dolphins played.
Yes.
One of Jim's 4 teams won last night, which
Did you see the state of Florida set a record? So prior to last night, the entire state of Florida, so college and all level teams were 0-11. So all the teams in Florida over the weekend, like no one won. Yeah, I like that for them. So yeah, I saw the Dolphins play. Tyreek Hill had a touchdown, like his first since like week 1.
yeah, no Tua for
Sure. That guy should hang it up.
yeah. I mean, it's love for the game.
Like he should at least wear one of those Guardian caps. I mean,
He's still
not a doctor,
He went to the
but-
Bears game on Sunday, so he's still,
Still a little salty.
I'm not gonna talk about it.
Yes.
my Chiefs are undefeated.
Okay, Dr. Jim.
Chiefs Kingdom. No, they're 9-0. No, there's a direct line. You know why I am a Chieftain.
I know.
If God forbid that relationship.
Nope, it's in game. No, I have
Would you
inside
still be a
information.
Chiefs fan, though?
Probably. I mean, I like the Chiefs. I mean, it's nice to watch a team that wins, and they're AFC. So, I'm invested. I'm invested in the stories and everything.
Yeah, no, that's fair.
Yeah.
I think that's okay. I'm actually, I'm looking for a second team to come.
Oh, AFC, come be a Chief team.
I might have to join the Tay squad.
Yay!
Yeah.
It's fun. We're annoying, but we love that about I will have Chiefs fans are very welcoming, and it's been nice. So it's good times all around. Hey, we got good times for you because we got a great show for you. I don't even know what day it is. It's a terrific Tuesday here on Tasty Live.
12th.
Tuesday, the 12th. And we got some great stuff headed your way at the top of the 8 o'clock hour. Or we're going to have an options jive. Is someone coming in for the options jive? Or,
No,
you
Tom
guys are
put a
flying
kibosh
solo.
on that.
Okay.
Yeah.
So efficient use of buying power for strangles and iron condors. You're going to break down what's the best way to use all of your buying power when it comes to undefined positions like strangles or more defined risk strategies like iron condors. I don't know where that accent's going today. And then we got Chris Vecchio in the house at 8:40. Let me explain.
Maybe it's a game day decision.
Does
The weather.
Oh, I was like, does another poll location need him? Is he going to Arizona to count votes? Where is Chris Vecchio?
Pole dancer needs him.
Yes, the poll. No, that's okay. I mean, he's got kids, so you're always under the weather because kids. Well, fingers crossed, game time decision if Chris is on the IR or not. That's at 8:40 the night.
Back in the day when I was a market maker on the floor of the CBOE.
I didn't take a bathroom break.
That's right,
my
1983 to 2005. Sleet, snow,
Everything.
sickness, the guy next to me puking, the guy next to me farting. Didn't matter. I didn't miss a day. You know why? Because I didn't make any money that day if I didn't come in. I didn't
Right.
make money either.
Excuse you, but Liz is the most gangster of all time because her water broke on the floor. She closed out her trades like a boss bitch.
She has an
Men
unfair
scattered,
finish. She
men
got knocked
scattered
out. I was
like
trying to get knocked
cockroaches. She put herself in a cab and went to the hospital. But I'm so glad you survived the sniffles of 87.
I actually pooped on the floor of the Chicago Board Options Exchange because I was sick so much. Okay,
Okay,
I thought I was farting. I was pooping. Okay,
Always
I had
a
to steal
dangerous
somebody
game.
else's sweatpants. Ask JJ. True
Okay.
story.
It's always a dangerous game. I don't know where this segment's going. 9:00 market measures.
I was gonna say if Vec is still sick, we're
Yes.
gonna do a little backtesting demo.
Oh, perfect. Oh, that'll be great. Yes.
Testing, we will show.
Yes, and we'll show you how to sign up for it. You and Dr. Data have been doing
I
wonderful
tell you about
work
when I
on
was
that.
at the CBOE from 1983 to 2005. God.
And then
Oh, I heard all those stories. Those were my stories. Oh, what'd you do today at school? And I would say, oh, nothing. And then he'd go, I stood in the pit all freaking day. You did nothing. Why'd you go? Why'd you go to school? Why'd you go?
Learn
You did
anything?
nothing?
Learn anything? You would say no. I didn't learn anything. Then why'd you go?
okay, well,
I used to say. And now Vinny gets to watch TV and talk to his friends while he does his.
this is super helpful.
I said,
I do tell him that I have mellowed. I do tell him.
oh, does he know? Does he?
I don't think he understands.
I don't think he grasps the
Yeah, I don't think he
concept
grasps.
of like,
Yeah.
This is a postmodern bat. Yeah, it's interesting. And then my favorite around 9:30 live from the trade desk, big boy Scotty ass Scott Sheridan counting down all the top trending tickers over at Tasty Trade. That's gonna be pretty good. And hey, if you missed it, yesterday, the debut, Katie McGarrigle is going to learn how to trade crypto. It's over for you, crypto bros. No, it was a great segment. Her and Ryan, and you also had Ryan on your show. But if you missed any of our crypto content yesterday, obviously crypto is getting hot. We have one of the most influential crypto thought leaders. He works here. His name's Ryan. And Katie is taking her crypto journey, her maiden crypto voyage. So, it's a wonderful new series, and if you missed it, you can check it out. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading
In
story.
today's
Breaking
headlines.
news.
Today's
Across the wire. Our leading
This
story.
just in.
Top story. Just in.
In today's headlines,
Our leading story.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's November the 12th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news? Can you imagine in Chicago, it's November 12th, and you're really just starting to need a jacket?
You don't even really need it. Like, I went to get my jacket this morning, and I was like, oh, crap, because I had left it here, because in the morning it's cool, but
Colder inside than outside.
Right, but in the afternoon you don't need a jacket. Also, yesterday, can I just tell you real fast, I got a flu shot, because I get a flu shot every year, and so it's like some new variation, because we were all wearing masks the last couple of years. We eradicated like one variant of influenza. And so they like reformulated like the flu shot this year. I was like, great, whatever. So I get the flu shot and I was like, ooh, that's spicy. And so I got tired. And so I took a nap and I swear to God, I time traveled. I was like, what is in this? But then
Probably that's from Europe.
and I was like, wow. But it was fine. I feel fine. But anyway, any earnings today, Mr. Bat?
There are like 60 or 70 stocks with earnings. Nothing that.
Okay, go ahead, break them down. I'm just kidding.
For a name if you're looking for one.
Hey, this headline says, this is always fun, S&P 500 seen reaching 10,000 by the end of the decade, spurred by animal spirits. I like when Wall Street analysts are on the same astrology voodoo than I'm on. They're like, look, if you were a fixed sign, what this means for the S&P right now. No, but all jokes aside, because we do have bat versus bat in here, what are your calls? Because we're getting close, less than 6 weeks till the end of the year now?
Yeah.
What are your calls for year-end finish?
Higher than where I expected in the beginning of the year. But you know what the median was for almost like all the.
It's like under like 5,000.
Like our guesses games? Our guessing games?
I think it was I think it was closer to 4,500, but you could be right.
Maybe it
I'm
was like within like it was right at the average. That's what happens every year. Is
We could end up back there. No one knows.
that's not out of the question.
Sure. No, I don't think we will, but
Yep.
but I'm just saying, like, what are you bullish into the year? Like, because it seems to me like the move that we've had like this last week, like, would eclipse any sort of Santa Claus rally.
Yes.
But I don't know. I don't have the experience that you guys have.
It was a Kris Kringle rally. Santa Claus rally is coming next. I asked you this question yesterday, and you were kind of, status quo going into the end of the year, probably, upward into the right? I think.
Yeah.
You were saying.
Yeah.
For me, I'm a little bit more indifferent, maybe a little bit sideways.
Okay.
I don't see us changing direction before the end of the year, personally. I think near the end of the year, maybe you have a little bit of tax difference, maybe a little selling going into the beginning.
Sure.
You have that until Trump gets in office when taxes go down.
75 days from now or something.
Yeah.
Well, one thing that hedge funds are keeping an eye on, they are piling their money into banks and they're dumping green energy post-election. This is according to Goldman Sachs. Hedge funds snapped up bank stocks at the quickest clip in 3 years while taking bets against renewable electricity producers. I want to talk more about the Russell here than like individual financial plays, unless you want to talk about specific individual financial plays. But what are you doing or not doing in the Russell?
Russell leading the last couple of days to the upside is basically unchanged today with the rest of the market. Tom DeLong, Russell, short ES. I mean, it's worked as of late. It had not worked for the other 360 days.
Nikki, do you trade the RUT or
I do not currently.
or IWM? I guess.
Like a little iron condor.
I got caught in some of the banks. Got caught short a little bit.
Yeah.
Not
Yeah,
the best performance there.
I haven't gotten whacked by any of the banks or the Russell.
Come on in. The water's fine.
I know.
Is
it
there-
might be a better place to.
Is there anything to do in like an XLF or not? Not really.
Not my. Not.
I'm trying.
Not my.
I mean, J.P. Morgan or Goldman Sachs.
Just to do it individually because they're so dominant.
Yeah, and
Yeah.
they're the bigger names. They have the most volatility of the bunch. So
Okay.
those are the ones that I would lean into, but just in general, they're second or even third tier stocks in my trading basket.
Yeah.
First tier being your like Amazon, Google, Nvidia. Second tier being your DraftKings and your PayPal's. And
That's your second tier is DraftKings.
I'm talking about that tier.
I'm just
stock, like
teasing.
the
I know.
First tier is like your super liquid 30 to 50 or 30 to 40 vol underlyings like an Amazon, an Apple, an Nvidia. Your second tier is like your lower priced 50 to 70 IV stocks like a
Gotcha.
DraftKings, a PayPal, something like that. And then your third and fourth tier is something like a JP Morgan where it's like a one-off trade.
Yeah.
You're in there where it's, a stock that's a $200, $250 stock that has 20% implied volatility. It's just like not
Not that interesting.
not that interesting.
Yep.
Well, something that might be interesting, Treasury yields continue to inch higher. U.S. Treasuries opened weaker as investors look to rekindle the sell-off spurred by last week. But yields on the 10-year benchmark rose 3 basis points to 4.33% in early Asian trading. Let's talk Treasury yields.
Yeah, you are correct. Yield is bonds are down. Also, bonds are down around 12 ticks, much to Tom's chagrin. If you're looking for the yield or you want to see that, you can just go to /10Y and you can get the yield right there in real time.
Those are
Ooh.
the yield products, and they trade in dollar ticks. So there's the 2YY or the 2YY and the 10Y. Those are 2 and 10 year yields.
That's correct.
Okay.
Tradable.
Yep.
That is helpful. Hey, let's talk about gold. Gold nearing a 1-month low. Oh no, gold tumbled on Monday, and bullion has been steadily sliding. The precious metal has declined more than 4% since the election last week. Let's talk metals.
I mean, it did wipe out the month of October, this most recent move over the last 10, 12 days.
Oh, okay.
You got to remember something. Gold or /GC started closer to 2,100 and change, and it's 2,600 and change. It's up $500
Yeah.
in that time frame from the beginning of the year. So gold is doing just fine, but it's unchanged this morning.
Do you have any active gold positions?
I do. I got caught like a rat in there. I am now. I'm basically flat, maybe even a skosh long. I played it from the short side for this most recent move. Made a little bit of money back. Made a decent amount of money back. I'm clawing my way.
Okay. How about you, Nikki? Any gold?
I'm long some silver.
Okay. How's silver doing?
It's up today. It's up about 0.4% here, but it got whacked with gold. It actually, you would expect silver to move with a higher beta than gold. Yesterday, it was actually down less as a percentage than gold was. So,
Interesting.
kind of it's I wouldn't call it a rare occurrence, but if you told me gold was down 2, 3, 4%, you would think silver would be down even more than that, and it wasn't. So maybe that's a good sign for my long gold or my long silver position, which I got in before yesterday. So I've still got some ways to go to the upside.
Well, enough with the losers like bonds and gold. Get out of here, losers. We only want winners. All I do is win, win, win. And that's Bitcoin. Bitcoin touches a new record high with 85,000. Adds almost 20,000 in a week. Bitcoin.
Bitcoin traded over 90,000. The future traded 90,725. I had a lot of emails about, should I have something in Bitcoin in my overall portfolio?
How are you responding?
It's a tough one to respond to after the move that it's had here from, basically, let's just call it, I don't know, we were hanging out at 60,000 a month and a half ago or so to 90,000 right now.
Yeah.
You do a lot of your own math on the percentage move there. It probably could wait a moment or two before I jump back in. I certainly understand if you're going to put, 2, 5, 10%, going that big in your portfolio to put, 1, 2, 3% sometime in the near future.
Sure.
And kind of stagger your way in from there. That would be my best.
Yeah, I don't know. It happens so.
Straight to 20.
Right, it happens so fast, but it seems that it's in because the administration changed. Maybe the rules are. So right now the rules are the same.
Buy the rumor, sell the news.
Right. Because right now the same people are in their same positions.
Yeah.
So, Gary Gensler still has a job. So let's all just calm down. Nikki, how about you? What are your thoughts on crypto and where it goes from here, I guess?
I have the pleasure and the honor to have Ryan on the show every Monday.
I just want to give him my money and be like, here, double it.
Yeah. So I was prepared for October and into November.
October, and what did you call, what was November?
November doesn't have one, but November is historically the strongest month for Bitcoin over the past.
Oh, really? Oh, I didn't know that. Okay.
What's it been around 18, whatever.
Yeah.
So, yes, I was prepared for this.
Okay.
Yes.
You're not new to this. You're true to this.
Yeah, no. I think it's an asymmetric bet, and it has high volatility. So, the upside swings are going to be and have been much more violent and in terms of like the velocity. And so if you think everything's going up, Bitcoin will go up in a magnitude more than that.
Yeah.
Like if you think prices of everything are going up, Bitcoin's going to go up more.
Can we just check on Coinbase?
Yes.
Ooh, coin, you got me. I did not look.
It's down $10, but sitting at highs. It's
Okay, gotta buy those dips.
It's 314. It started the week closer to 214. So
Yes.
Yeah, even actually under.
Yeah.
Got a scoopy.
Yes.
Hey, in other crypto exchange news, FTX is in a Sunday filing with the Delaware court. FTX is suing crypto exchange Binance, citing a 2021 transaction in which Binance and their CEO, CZ, exited their investment in FTX, selling a 20% stake in the platform and an 18.4% stake in the U.S.-based entity West Welm Shires. And then Alameda was insolvent at the time, so FTX is suing Binance for liquidating their position. And good luck with that. I think they're just mad that their founder is already already out of jail, and their founder is still going to be in jail for a long time. I don't know. I don't have a dog in this fight. So.
Our founder got out before you.
Yeah, neener. European Google rivals are partnering on a new search engine infrastructure that could counter America's big tech dominance. Ecosia and Quant are partnering to build a European search index and that would reduce their dependence on U.S. big tech firms. Is this a real threat to Google? Because Tom's always like, it's a free market, anyone can be a disruptor. My stance is like, at this point in time, it's very hard to disrupt like a Facebook or a Google or an Amazon because of how big they are. What do you guys think?
I commend them for their attempt.
I don't know.
I will see in 75 days. I don't know.
Do you ever watch like those TikTok videos, like the aesthetic, like the very beautiful ladies, and they're like, I'm going to make like goldfish crackers from scratch, and I'm like, ain't nobody got time for that. But like they're like, we're going to make Google from scratch. And so, well, good luck to you. What are you doing in Google, American Google?
Yeah,
Erica.
Go ahead.
I have some long delta in Google.
Low Ivy rank 17, stocks unchanged, maybe down 30 cents, something like that. The market's basically unchanged.
Sure.
Skosh lower. You would expect Google a high correlation to the overall market to move with the market. I think it's one of your diagonal plays here with the low
Agreed.
volatility or calendar spread or something like that, not premium selling.
All right, there you go. Well, hey, today's Tuesday.
Every Tuesday and Thursday, you know what that means? Option trades today, wherever you get your podcasts.
It's a bit that we do. It's fine.
It's good. That's
A couple of times a day.
Hey, Amazon, this is kind of cool. They're developing driver eyeglasses that could shave seconds off of deliveries. These smart eyeglasses would be an AR system for delivery drivers to guide them to, around, and within buildings as Amazon tries to smooth out the final stretch of an order's journey. If successful, the glasses would provide drivers with turn-by-turn navigation on a small embedded screen. I have a real-time story. I have a UPS box.
we call that data collection.
Right. I have
Highest
at the highest level.
Dude, literally, they're gonna get faces, they're gonna get corners, they're gonna be able to map your entire condo building. I mean,
And then all that information just goes to Jeff Bezos, and he's like, "Mwah."
oh, Bezos is he's out. He's selling at 200.
Yeah, I know. But
Still got a lot.
no, but I have a UPS box because I'm not home a lot. I just have a UPS box, so everything I get delivered, Amazon, FedEx, UPS, Post Service, it goes to the UPS box. And when I tell you, Amazon still cannot even figure out this is an actual business. So last night something was getting delivered, and I was like, oh, and you write the hours in there. You're like, okay, this is a business when they're open. They delivered my package to the sushi restaurant next door. So now I got to go to some place called Sushi Pink to try to find my package today, and I hate that for me.
Yeah, I don't know.
How's the sushi at that point?
I've never had it there.
I feel a little bad for those drivers because at every one of the like apartment buildings I've lived at, these guys, they come in with
Like a pallet.
a push cart
Sure.
filled, and
Sure.
you know, a lot of the places I've lived in have those Amazon
Kiosks. Or,
kiosks, and the guy must sit there for 2 hours every.
Oh, just plugging stuff in there. Oh, no, yeah.
You do beep, and it put the package in. And I'm thinking to myself, I mean, that's a tough.
Madness. Yeah.
That's a tough gig. That's why if I'm delivering somewhere on a street and it's this house, I'm like,
Yeah.
You know what I mean? Like,
he's like, oh, this one's closed.
he just spent 4 hours, typing in the numbers to get in a specific box, and now he's on his way home, and he's like, you know what, you can find your.
I know. Well, are you guys doing anything in Amazon, or is the IV too low?
IV rank is 12. You are correct. Again, another diagonal, maybe with directional bias. Calendar spread, if you don't have one, 208. It's actually up around a buck and change today. So Amazon catching a little strength.
Hey, here's a nice bright spot in the automotive market. GM is proving it's a standout among automakers this year as it continues to consistently outperform Wall Street earnings expectation and its competitors. Shares of the Detroit automaker have risen 54.7% at the start of the week, and I just thought I would point out GM. Obviously, it is not the astronomical rise of a Tesla, but in comparison, because we don't talk a ton about GM, I just thought I would mention it because I did not know that it was up 54%.
I still think a GM is a $35 stock, but it's 57.
Right, see?
Change near its highs. I mean, it's rivaling Bitcoin on its magnitude of move from 50 to 57.
How's the IV in there?
Not bad at 32.
See, I might have done something.
Did something.
See?
Earnings coming. IV ranks expanding. Ain't bad.
Ha-ha!
Yeah.
I'll take it.
He's brought me worse, so good.
Yeah, there you go.
Yeah, for sure.
Hey, Southwest is offering buyouts. Oh, no, Bat. To airport workers, and they're blaming Boeing for the job cuts. They're offering buyouts and extended leaves of absence to avoid what it calls overstaffing in certain locations. LUV is Southwest. A hedge fund is pressing Southwest to increase profits and boost the stock price, like the start of every Hallmark movie.
When does the
Hallmark season start?
No.
Oh.
When does it end?
Yeah. You
know they're doing a Travis Kelce, Taylor Swift, like Hallmark reimagined, like it's a pop star and a football player. And I'm so excited. I was like, I could have written this script. I would have written that script for free. I'm sorry, what were you going to say, Nikki?
I was going to say and ask when the pick your seating ends.
Oh,
Or has
for
that-
Southwest, I'm a United girly because I got status. So Liz and Jenny, Liz and Jenny are
That in
Southwesters.
there real quick.
I have status.
Another good thing.
Liz and Jenny fly Southwest, but I am.
Because they live right by, they're close.
Sure, they're closer to Midway. Yeah, I don't have anything against Southwest. I like to use like.
But my sister, who I met this weekend again with all the nieces that I met for the first time and nephews. For the
Oh, that's it. Oh, okay. So yeah, she works for South.
She works for Southwest. That's correct. That's why the Fort Myers Airport's ranked number 1. Southwest. She's been there 3 weeks. It's very good there. Love basically unchanged. 32 and change.
What about Boeing?
Basically unchanged.
Oh, unchanged.
Also
Okay.
40.
Boeing hasn't changed price in 2.5 years.
Did you see that a Spirit flight took on gunfire? It was tried to land in Haiti and then had to like reroute itself to another. I was like, what is?
Wild.
I was like, that's like Spirit is just bad, but like not that bad.
Yeah.
Yikes! Big yikes in aviation there. Blue Sky has added 700,000 new users in a week. A majority of the new users are from the U.S., indicating that people are searching for a new platform as an alternative to Twitter/X.
Sold.
Okay, I'm just literally reporting numbers.
Wait, wasn't this like a thing like
B Sky?
years ago?
I have a Blue Sky account.
Ugh.
Was it? It's not
Who's that?
publicly traded. I don't.
It is not. Blue Sky is not publicly traded. Twitter is not publicly traded, but you can trade Meta, so we can
What's
talk
the
about
differentiator? I don't remember.
Blue Sky is more open source, so it is part of the Fediverse. I'm gonna mess this up, but it just has more options and more ways to curate your community based on your interests and your likes. So that's it. Are you doing anything in Meta?
I put on a downward diagonal on my last podcast on Thursday. That's correct. We're in a buck in a couple of days on that downward diagonal. Please don't mention my Goldman Sachs trade and please don't mention my Morgan trade, which are terrible trades. But yes, Meta's been good. Meta's $5.85, up $2 right now. IV rank of 12 in there. You had to do something.
Yeah, I know. I got you.
Calendarize or diagonal.
Shifting gears to the health sector, Cigna says they are not pursuing a deal with rival Humana, sending shares soaring. Cigna is CI, and that was up around $23 yesterday. Humana, HUM, was around flat. But Cigna announced they are not pursuing a combination with rival Humana, the health insurer said Monday, days after the election, after they raised hopes that a merger would then be able to get past antitrust scrutiny. They're saying, the new administration would be good for M&A deals, but then Cigna was like, yeah, we're not going to do it, but then their stock went up. So I know you don't trade it a ton, but I thought I would mention it because it's financial news.
Beautiful.
Yes.
Beautiful. Okay, great.
Tough to trade those. Not a ton of liquidity in either one of those names. I mean,
I know.
it's a news event.
But you can do like an XLV. I know that there are pretty good components of that. So, it's pretty liquid.
Yeah.
I know Julia trades it, I think, sometimes.
Yes, she has.
Yes. So, 23andMe, cutting 40% of their workforce and discontinuing all therapy programs. It is not looking good for the company. The genetic testing firm said they're going to have to reduce their headcount by 40% or 200 employees. They are taking the difficult but necessary actions as we restructure 23andMe and focus on the long-term success of our core customer business, said CEO Susan Wojcicki.
I like 23andMe because it made me fine.
I know, but people only, their business plan is like you use it once and then it's like you don't need it anymore. And then they have literally all of your genetic information. It's a weird business model.
It is a weird business model. It is.
But I love that what it does for you, and it's really helped a lot of people.
I'm sure other people had horrible experiences.
Sure.
Family. I mean, family you didn't know about too. But Tom talks about this all the time about a business that has one point of entry.
Right.
It's very hard to sustain, or you open yourself up to that, that risk of that one person, or that one entity not making your business viable.
Sure.
That's what happened there.
That's what happened there. Hey, a couple of Chipotle stories here. Chipotle, first of all, naming a new CEO. Scott Boatwright will now be the permanent CEO. Monday, they named the interim boss as the permanent CEO of the burrito chain. And Chipotle shareholders are suing over fallout from skimping on portion sizes. Shareholders sue over the dumbest reasons, but they're being sued for shareholders for concealing how many of its restaurants were skimping on portions, forcing the chain to spend more on ingredients, thereby hurting the stock price, because a bunch of TikTokers with their cell phones, and their investigations, and then now it's a lawsuit. We're on the dumbest timeline. What are you doing in CMG?
Unchanged at $37, no earnings looming. This is one of the ones that has a higher IV rank with volatility contracting over the last week or two. So you might have done something.
Hey!
Look at the markets here, they're not bad either.
They're not bad.
10 cent wide.
And I'm a Chipotle girly there now. Like I eat there. I eat there every week now because it's all the line is always.
You have the brisket. The brisket's back.
I don't eat brisket.
I had the brisket too.
Your dad I just don't eat beef.
You eat meat?
I don't beef.
Sure.
Yeah.
I eat chicken though.
What did you have it?
No, I haven't.
I liked it.
He liked it. He liked it.
I hate to say that because I hate Chipotle. Everything's just warm in there. But
here's.
My rant about Chipotle is that it's just like.
Is there one close to you?
You used to love it as a child when you were a
You
teenager.
didn't have Chipotle.
Yeah, I would take you downtown on State Street.
Oh,
You
no.
had all the fun.
You're talking about Vinny.
No, I'm talking about you, son. You're the
Cats
first
in the
one I ever
cradle
went
and the
to
silver
Chipotle
spoon.
with. It was on State Street
Maybe
in
once
Division.
or twice.
It was every time you came down. See, this is what they forget.
Oh no, we did Wow Bao. Wow Bao.
That was Gina. Gina wanted Wild Bow.
You guys, I am not a licensed therapist. I am a comedian.
They forget. They forget everything.
But I'm a big fan of Chipotle. Like, it is like my renaissance now. And the line is always full of dudes in gray sweatpants, which I am not mad at.
Oh yeah.
Gray sweatpants season. Hey. Get it, girl. CMG. All right, well, let's put it on your list. Might have done something.
I already wrote it down.
Hey. This is something.
Uh-oh.
Telegram CEO Pavel Durov is offering free fertility services, so free IVF, but only to women who use his sperm. What are we doing? The wealthy tech executive is giving away his sperm to any would-be mom who wants it. He is the Oprah of insemination. You get a sperm, you get a sperm, you get a sperm. I hate everything about this. But IVF is expensive, but then you gotta have a baby with this weirdo, so pick your poison.
Isn't there enough sperm to go around?
He has previously stated that he's already fathered over 100 children in his giveaways. And he also plans to open source his DNA so all of his various and wayward children can find him.
Brings narcissism to a new level.
It's like a Black Mirror episode,
Yeah,
but
that is a Black Mirror episode.
you could go to a special bank and ask for the Durov. I'm not kidding.
I like the Durov load, please.
Okay, I got thoughts about this next story. So
Sick.
mathematicians claim to know the exact formula for the perfect female body, and it's not as exact as you thought. You might have thought 36, 24, 36, but mathematicians say it's really actually more about the S shape of a woman's body, and the new research questions the findings of a waist-to-hip ratio of 0.7%. This says that now this study finds that for larger body types, overall curviness is a more important factor. And to all mathematicians, I have to say, oh, we're measuring things now?
Yeah.
You want women to enter the chat? I was like, oh, you want, I was like, don't we have like diseases to solve or like moon, like aren't we trying to go to Mars? Like, why are there a bunch
That's
of
a clap back. That's a
Call that a penis?
why are there a bunch of nerds in the lab?
Penis only smaller.
Right. Why are a bunch of nerds in a lab being like, oh, well, you know what?
Yeah.
I don't find her hot. And they're like, hot, not hot. I'm like, what are we doing?
You see, this is why Howard Stern had it right.
Yeah.
Have them with a pointer and go, you see that little mark right there? They were absolutely beautiful. You see a little mark right there? It's about a millimeter. Yeah, that should be shaved off.
Can I tell you, Marilyn Monroe in today's sizing, she would be like a 14, 16 size.
Mm-hmm.
So, and she's flawless.
Yeah,
I'm
listen,
just
I'm
putting
not
it
gonna
out
touch
there.
this with a 10-foot.
I'm just saying, I was like,
all women are beautiful in my eyes. Yep. They're in your hands. They're real. It's all good.
hey, someone tweeted this at you yesterday. I don't know if you saw it, but Warner Brothers is selling 10 fully functional, but not street legal, Tumbler Batmobiles from the Dark Knight
How much you
films
think?
that were filmed here in Chicago.
Why?
So that up there.
I see it up there. Why is it not street legal? That's
Because nothing about this
Look
is
at
street.
it.
There's no side mirrors. There's no blinkers.
you put some mirrors on there. You put some airbags in the front.
You got a Cybertruck.
I mean, if you're buying it for $3 million, I'm sure you could figure out how to make it street legal for
just saying, it's
another
hard.
50,
I'm just
right?
saying,
I mean,
there are some there's some dirt bikes that are not street legal because they don't have mirrors or lights but you can buy kits to make those bikes street legal. I don't know about a Batmobile upgrade kit, but okay.
how do you buy that and not drive that around the city? That's my question.
Yeah,
How do you not double park that in front of Gibson's?
we should all pool our money together and then
Do what with it? Buy a tire?
yeah. Hey, this is interesting. Speaking of the rise of Bitcoin, a former NFL player, Russell Okung, took half his salary in Bitcoin in 2020.
Oh, I remember that.
So he's now turned 6.5 million into 45 million, and the haters are silent.
I think I laughed at him.
I think everyone did.
I might have admitted that I laughed at him because I would never look to put half of my salary into any one
Asset
thing,
class,
especially
right.
something that was as risky as Bitcoin
Sure.
in 2020. So good job out of you, young man.
Sure.
I stand corrected. You're the boss.
I think that's great all around. And finally today, from a viral video of the day, this is funny. It is going viral. Detroit, in a very exciting Sunday night game, was able to squeak out a win versus the Texans. But a bunch of passengers were watching the game live on a flight, and when the attendant came on for a message, they didn't want to hear it. Watch this.
1 sec.
Oh.
It's coming.
So she interrupted the game?
Yeah, they were gonna kick the field goal
At the most opportune
watch
time?
this.
Oh, that's great. That's great. I can't
This
wait.
poor lady.
I did not see
It's all in good fun.
It's been our absolute pleasure to have you on board tonight. So, congratulations, Lions. My apologies. I was good this whole night.
No.
You're like, stop talking, lady. You're just like, shut up.
Oh, they got to see it.
Yes! It would have been better if she continued. And it's like, stop now, please. You know, like you really gotta.
I thought it was
Thank
hoping
you,
that
Beth.
they pulled it down. That was great. That was
No. Flight attendants do so much. It was all in good fun. It was okay. But
Good
hey,
job.
that's the news for today. What's coming up next?
We're going to take a quick 90-second break and come back. We've got Confirm and Send next. We'll be back in 90 seconds with Tasty Live. Bye for now.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. all 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then they take every advantage of it in Australia. And
I welcome an Australian man to pounce all over me. Yeah, he could go down under,
Tom's gonna give me a hard time for this. Can't believe I'm gonna say this. I'm in a vulnerable state right now, so I'm gonna say it. Taking tap dancing lessons.
hold on, what? The two of you are doing tap dancing.
Yeah.
Oh my God! I want to come watch. Please, can I come watch? Don't make me come to your rehearsal. What do they call that? Not your rehearsal.
Oh yeah.
Oh yeah, you're coming.
Graduation, like his graduation.
When I recital.
Your recital.
Yeah, when I do my recital. Yeah, you're coming.
That's the freaking best thing you've ever said, son, though.
You're
I wanna
coming.
come.
You're coming. I'll tap in here one time. I'm gonna do it.
With your hair, you're gonna look like Borat.
I've seen you play golf. I think you should take up tap dancing.
Thank you. See, I knew you had to get a criticism in there some. I appreciate that.
TP refuses to adjust his webcam, so he does the show like this. And it's the most Bill Belichick camera angle I've ever seen.
It's, you know what? A couple times I asked him to change it because I thought it'd be better.
Everyone in production has asked him. Every single person.
I decided it looks great. I love it. Just leave it the way it is. If he can get away wearing that shirt with that pose, he deserves it.
Oh my God.
Like Chilean sea bass. It's actually toothfish or whatever, soft fish.
Ugly fish is what they call it.
Fish.
Yeah.
Right.
Yeah.
So it's Chilean sea bass. It sounds good.
I got a Chilean sea
$50
bass.
a slice. He just eats
What do
it
you
up.
mean? Well, hold on. What do you mean you got a Chilean sea bass? If you tell me that you bought one and it's sitting in your refrigerator or it's been in your freezer for a few years and you just uncovered it, what does it mean you got one?
Every time I go to Costco, I buy Chilean sea bass because I like it.
Ew.
And how do you cook them?
Oh, I have a system down. I cook them in.
Jesus, blessed. I can't. I almost tell you. I took your crap all freaking day long. I am not taking this. I want to get to Johnny Trades and I want to go.
Get the full scoop by checking out the archives at tastylive.com.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
My son, and you know what that means. Time for a little bit of confirm and send. Would you like to take a look at the market first? I asked.
Sure.
I think you just said a moment ago, and just like that, we are green. Even the S&Ps are still down $1.75, but the Nasdaq is up 5, basically still unchanged for the market. Russell down 12, and the Dow up 60, led by Home Depot. Right, Home Depot was up around $6 or so.
They have earnings.
It did. It looks like it's up.
Yeah, it's up $4 or $5.
You are correct, $5 or so. Bonds down 19. Bitcoin, after trading up to 90,700 on the futures, is back to 86,300. I say back to, but it's just off of all-time highs. You know what? I never mentioned Ethereum, so let's mention Ethereum here too, having another big day also. I know it is down 100, but it got up to just under 3,500. You can see here Bitcoin was closer to 2,500 last month. Oil, after selling off yesterday and the day before, is up small, 66 cents. It's still a 1% move to the upside. Gold basically unchanged. You know what? I'm going to leave it there unless you want to talk about the euro again. Euro a little bit lower. You can see here the last week or so sliding as Sazonov's dollar floods the market. The euro is a little bit lower in Europe.
Yeah, dollar way stronger today, up about a 0.1% here.
Yeah.
Against everything else.
Yeah,
So,
dollar continues its flight to dollar quality. Yep, keep going higher.
yes.
Confirm and send, my friend. Let's do it. Where we look at
How do you want to do them? You want to go one by one, or
whatever you
I don't want to steal your thunder. This is your time, so I didn't want to,
No, I
want to step on any toes here.
I'm a share. I read them to you yesterday. It worked out well. I'm going to read them to you again. Sound good to you?
Sure.
Okay. What is the difference between a synthetic trade in comparison to a regular defined risk trade?
So synthetic is a catch-all for just something that is replacing a stock position. So when I say like a synthetic stock position being a zebra trade, or a poor man's call being a synthetic covered call, it's just a way to phrase
Buy, call, sell, put is a
buy, call, sell, put synthetic stock position. It's just a way to say that you are using options as a way to gain a little bit of leverage versus a stock position. Stock in a cash account, you spend 10,000 on a stock, you put 10,000 up. You can be much more capital efficient doing it via in the money call option or a zebra. Though it's just a way to be more capital efficient, but have the same directional exposure and magnitude as a stock position.
Yeah, I think the emailer is confusing two terms that we use, because you just mentioned a couple of synthetic trades. Let's call them trades to make it to the email here. That have defined risk, like a zebra, or a covered call. So they do have defined risk, but a synthetic trade is just synthetic stock, long or short, it could be. And a defined risk trade is just something that has defined risk, usually 2 legs, could have 4 legs, but there's a defined risk. You got a set buying power, a set amount of money you could make or lose, and it's defined risk. Unlike stock or synthetic stock, which is also defined risk if it's on the long side, because it can only go down to 0. Now, I know we played a lot of liberties with what defined risk trades are on that, but I think you answered it very well.
Yes.
Next question, please. What happens to volatility when the market exceeds its expected move?
Well, so people get caught up in the idea that down means that volatility expands. So like if the market's down, vol should be up. That is a high correlation. Typically, when you see moves to the downside, they tend to be bigger and more volatile, and therefore volatility expands. But it's not always the case that you see that happen. And you can also see volatility expand into upside moves. So volatility is a representation of the expected price movement in the market as a whole, mainly the SPX. And if it moves greater to either side, you can see volatility stay bid. It doesn't necessarily have to go higher, but on a huge move higher in the market, you can see volatility stay where it is.
Yeah, I think you nailed it in the middle part of your answer there when you mentioned SPX for just a moment. Like anything that moves with the market, SPX, the Qs, IWM, the Dow, volatility gets pumped up when it goes lower, and it usually contracts when it goes higher. Now, you get stocks like Tesla where the magnitude of the move is to the upside. You're going to get volatility and IV rank expanding to the upside and more than likely contracting to the downside, completely the opposite to what they see here, market moves exceed. Like yesterday, did the market exceed its movement? No, it didn't. The market didn't.
Well,
Tesla did.
Yeah.
And volatility kind of was unchanged after getting whacked the last 3 or 4 days. So Tesla volatility went up because it exceeded its move to the upside.
Yes.
And volatility actually stayed unchanged, maybe a little bit lower one way or the other on the overall market.
Speaking of Tesla, it's down $9 this morning. $10.
It is.
Crashing.
A little bit of movement to the downside. Yes. Next question, please. Can you explain something?
I'll try.
With 3 rate cuts, But see, this is a great question for you to answer because I wouldn't have had answers. 3 rate cuts, bonds are lower, and the dollar's going through the roof, and it's still that way today. Is something off?
I mean, I don't think so. I think, the rate cut was well projected. I mean, I don't think there was I think it was 99% by the time Jay Powell was ready to take the stand. I mean, the dollar being stronger, I think, is just a reflection of our markets and obviously, what's going on with potential changes in the next couple of years. But yeah, it is contrary to the textbook definition of how markets work. There's a lot of things that go contrary to that. And in the short term, it doesn't necessarily mean that anything is wrong, but if you are a student of history, there's trades there.
Buy the rumors, sell the news. Once again, I mean, that's the only way that I can answer this. And it doesn't work all the time. It's so random. Like you said a moment ago, I mean, we all knew, they tell you what they say they're going to do. If the market projects that, then that's what's going to happen. If the market doesn't, then it's not going to. I mean, this was definitely a buy the rumor, sell the news kind of thing. It doesn't happen all the time, but it seems to happen more times than not. Next question, please. Whew, long one. I have a coin strangle on right now for December. Okay. I put it on originally at the 290, 170, rolled down calls when coin dropped to 175. And now I've gotten my face ripped off with the news. Currently, I am in an inverted strangle, 250, 240. And I'm going to let everybody know that coin is trading around 320 and change. That's where it closed. It's down $10.
315
today. So this is really not an inverted strangle. This is an in-the-money call and an out-of-the-money put. For it to be inverted, you want both strikes to be in the money. Now do you decide, how do you decide if you should get out or stay in a little longer for something like this?
I mean, that depends on what your risk tolerance is and how much capital you have. I mean, if you're trading strangles in Coinbase, it uses, a couple thousand minimum to put that position on. So I imagine that you have the capital to hold the position at some point. And this goes to, I think we talked about this on the close yesterday, but the fact that you've been sitting in the 250 call or the 240 call, 250 put, 240 call in December is an 85 delta and you got a 17 delta put.
You're short.
You're short. You're short the stock.
Assumption.
But even so, if it doesn't fit your assumption, you've watched the stock continue higher and you haven't rolled up the put, and you aren't rolling up the put because everybody's afraid of the whipsaw. What happens if the stock goes down $20 or $50?
But now you're $60.
But now you're $60, and nobody can time the best time to do the roll. It's just so happened that 3 days ago, when the stock was right at 300 or whatever it was trading at, that would be a better time. But the point being is that these stocks, typically when you see them come down after exploding higher, if they come down or when they come down, volatility contracts. So you should worry less about rolling up the puts. Same case in Tesla. The $30 down move that you see is going to be way better for your short call than the pain you feel on rolling up the put.
Yeah.
By a magnitude of 5 or 6.
Let's think about it from a logical standpoint of view here for just a quick second.
And then you get out for lesser of a loss.
Yeah.
Everybody is obsessed with
locking in the loss that they have now.
Who cares?
Right.
You're out $5,000 today. If you can exit for $1,000, isn't that a win?
Sure.
Or $2,000.
It's better. Yeah.
Yeah, but
no,
just
100%.
make the adjustment and move on, and then do something, and then say, you know what, I'm not trading coin again unless it's defined risk.
Yeah.
Change the game a little bit.
Yeah. I mean, you have 70 short deltas on a position that you put on as delta neutral. Yeah. I don't think, even though the stock is higher, I don't think you want to be short 70 deltas.
No.
I would be looking to reduce delta in here. I would probably at this point be looking to buy, even with the stock down today, I would have said this yesterday, I would have been looking to buy back this strangle and put on another trade that fit my bias on whether it be neutral, long, or short in coin. Next question, please.
Yes.
I learned from you guys that we should take our losses at 2 times the initial credit received. However, I've noticed that the figure is often reached even before my strikes are breached. Seems a bit premature for me to be closing this trade. Am I missing something here?
Yeah, I mean, I don't think that would be the case. I mean, that you would need a massive.
You would need a Tesla move.
Yeah.
You would need a Goldman Sachs move
Yeah.
that we just had recently. Yep.
You won't see that level of loss with a position that's still out of the money. So I think you're probably looking at something that's gone in the money, which can be the
Regardless,
case.
let's say
regardless, I think it's important to, I don't keep my mechanics this tight. I try to keep my position small enough to where I can manage positions and be in positions. If that's not the case, then you probably put yourself in a situation where you have to make this consideration. As for like positions becoming losers quickly, that's not out of especially small losers. You put something on for $1 and it marks it $1.05 an hour later. That's very normal. I mean, things move, and you got to be able to hold some risk.
Yeah, I don't know what else to add to it. I mean, 2 times the initial credit from the data that we've done was optimal. It was de minimis, to use a word that Tom hates me using. So for me, I don't keep it as tight as Nikki said on this, but if you can figure it out and do it, more power to you. Sure, go right ahead. Next question, please. I consistently look to exit positions at 50% of max profit or 21 days. Would taking profits at 30, 35% be a feasible long-term strategy, or is it better in your portfolio to try and get as close to 50% max profit as possible prior to reaching then 21 days till expiration?
Yeah, I think if it comes quickly, again, I mean, it's good to have mechanics and understand when around what time frame things should be working, around what time frame you should be managing positions, around what delta you should be managing positions. Those are all great things. If you get 35% in a quick, couple days, let's say, you're not you have to consider how fast that value comes in. Like, there's diminishing margins of returns. I'm not sitting there and waiting to 50% just because, that's the mechanics. If you're going to trade, you have to, have some flexibility. You got to be a trader.
Yeah, I often, on my podcast every Tuesday and Thursday, Lucky Few Days Tuesday, wherever you get your podcast, you'll see them before noon or right on our website if you want to wait till there, or be on the follow page of Tasty Trade immediately after I make the trade. You just won't get my whole little speech about why I made the trade, but you can watch that after you look at the trade I made. Anyway, I often take profits 25 to 35% in there. I just want to ring the register, show people that this can be done, but 50% is optimal. Again,
it's opportunity cost too. You have to. I mean,
you take that money and use it somewhere else. Yeah.
Yes, and you have to keep that flexibility. If you may, maybe even 25% in a period of time.
Everything we do is not written in stone. Like it's a guide for you to use and make it your own. Some people like to take profits a lot quicker and have that opportunity cost that you just mentioned. Next question, please. Good one.
That's it. Done. That's the last one.
Woo! Let's take a quick 90-second break and come back. We got more Tasty Live after this with an option jive. Even the S&P down tree.
Crashing
and burning.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide. Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
It's option jive.
Nicky, we are back, my son, and you know what that means? It's time for a little bit of an option jive.
E-midi's down 4, NASDAQ down 14. I'm getting choked up.
Crashing, but don't worry, the Dow is up by almost 40.
Oh.
You ready?
I'm ready. I'm always ready. Come on.
Effective use of buying power for strangles and iron condors.
Let's do it. Liquid markets operate pretty efficiently, and there is no inherent edge to one strategy over another, only trade-offs of risk and reward. However, certain strategies may have been a more efficient use of buying power compared to others. Historically, let's use SPY strangles and iron condors to investigate this. What's your pick?
I think it's going to all come down to size here. I think what they're going to end up probably showing here, that if you're going to match them up by buying power, if that's the direction that they're going, you're going to be taking on way too much risk with an iron condor than you would with a strangle. I mean, we've talked about this.
The hidden risks of narrow iron condor.
That is correct. And a lot of smaller traders will look at iron condor as the holy grail to getting larger and collecting the same amount of credit for a strangle or close to a strangle using significantly less buying power. What they are not understanding at that point is they've gotten too big for their overall portfolio. And plus, you're really closer to a 55% shot, you know what I mean? As opposed to 70 or 80%, 90% in strangle. But let's see. Next slide, please.
All right, when choosing to trade a strangle or an iron condor, we need to understand the impact of the buying power differences between the two. That was exactly what my dad was talking about. So you look at the buying power for a naked position, about $8,000, looking at about a $7 credit, defining the risk with 10 delta wings, uses about $1,800,
and gets a credit of $2.56. You're selling about a 20-point wide iron condor there, starting with the shorts at the 16 delta. So from the looks of it, it looks like you could just size that up 3 or 4 times and, get more efficient use.
Fat City, baby.
Yeah, Fat City, get an extra $200 or $300. But we're going to take a look at kind of the risks there. So let's jump to the next slide here. So comparing the risk and reward, the strangle and the iron condor scale at the same rate. The strangle carries roughly 3 times greater potential P&L and 3 times greater risk, and that's because you have a naked position, right? I mean,
sure. Anything can happen.
Yes, anything can happen, exactly.
With the stock price, yep.
So you can see here from just the median P&L, the win rates are very close. Median P&L is roughly, in line there. You see the bigger losses coming from the strangle itself, but I imagine we'll see some caveats here in the next couple.
Sure, when you're not managing here or doing anything else like that, you're just looking at straight math numbers.
Yes.
Perfect, let's go.
Getting on to the fourth slide, when looking at just the profitability relative to the buying power of the iron condor may seem like a better trade because the return on capital is roughly double the strangle. However,
here comes the hook.
Here comes the hook. Because the buying power does not account for tail risk in the same way between the strangle and the iron condor, it is not as good an idea to use buying power to compare returns on capital across strategies. And this is because the losses, your full $8,000 loss, occurs way closer to where the current stock price is, or in this case, SPY, relative to the strangle, where you need to have that tail risk occurrence to hit that same level of loss.
You need that crash-like scenario, really,
to get the full loss.
To get the full loss, that's what you need. If SPY has, a normal move, you're going to probably make money. If it goes outside by a standard deviation, you're probably going to lose a small amount of money. 2 standard deviations, you're going to lose a little bit more. That 3, 4, and 5 standard deviation moves is really what they're talking about here.
Yes.
Next slide, please. Whoa.
30 delta strangles tend to have a much higher median P&L per trade than wider strangles, such as the 16 delta strangles. That's because you're selling more premium with them. It's pretty easy. The median P&L per $100 of buying power increases with tighter strikes, but not as much as the P&L per trade because undefined risk strategies have comparable buying power requirements. So basically what it's saying is that moving the strikes closer is going to use relatively the same amount of buying power. You're going to be collecting a lot bigger credit, so the potential profits are much, much higher. And that's just because with naked positions, then the buying power change is negligible, regardless of whether you're at the 16, 20, or 30 deltas here.
Yeah.
On those positions.
I kind of default to the 20-ish delta here, maybe kind of, not too hot, not too cold kind of thing. I'm just giving my own kind of personal here. I will tell you, when I've bought the guts and sell the wings kind of thing, I usually do it closer to that 30-ish delta to collect a little bit more premium. So on entry, I like to go to the 20-ish delta if I'm starting a new trade. And when I'm buying the guts and selling the wings, I like to go a little bit closer, maybe here to give myself a little bit better chance to make some money back.
Yeah. And you can see through all these, they all have like roughly the same probability of profit. I mean, there's not a huge difference here. The median P&L per trade is roughly in the same realm. I mean, you're talking about $10, $20 difference here, which as a percentage is a lot.
Yes.
I think from the risk perspective, that's where the biggest, the reason I go towards that 20 delta is kind of in the middle of the two sort of upper and lower bound of where we typically trade. All right, so looking at the median P&L per $100 of buying power varies significantly more for iron condors of various wing widths. Because wing width greatly impacts the max loss of the position, the biggest issue with tighter iron condors is where the max loss is and where that comparable losses relative to a naked position. That's why, we typically allocate more capital towards naked positions, because the $200 or $300 or $400 loss on a 16 delta put is way, way further out of the money and lower probability than an at the money $10 wide spread losing $4 or $5. So it all comes down to where that risk is.
this is where the trading gurus online get you with their percentage. You know, like I put on this trade, I made 47%, you know, on this trade on the buying power that I use, you know, a little misleading. So you got to be careful here. And that's exactly what they're showing.
So with tighter iron condors, they are more efficient use of buying power interestingly, tighter iron condors are more efficient uses of buying power than wider iron condors. And that's when you're looking at these the deltas here of tail deltas. We're not talking about tighter iron condors right at the money. We're not talking about $1 wide 50-50 shot iron condors. We're looking at the deltas of a 5 or 10 or 13 delta. And that's because the other part of spreads and the problem with spreads is once you get to a certain point, like if you're at a 5 delta, there's no difference in value relative to the 4 delta or the 3 delta. You're not adding premium by moving your strike 1 or 2, you know, deltas out of the money. When you're looking at a 30 delta long option or a 25 delta long option, you are getting paid to move that to a 20 delta or a 15 delta or a 16 delta option. When you get further out of the money, there's a negligible difference. So at a certain point, it makes sense to start upping those contracts when you're in this, you know, 13 to 5 delta range, as opposed to when your long option is at a 20 or 25 delta.
Well said. Well said.
All right. So lastly, or we got 2 slides left. It's crucial to note that trying to make up for the lower median P&L of iron condors by trading more iron condors increases the portfolio risk substantially because there are more contracts that could potentially reach max loss. This is why we always say we widen out the spreads rather than up the contracts. In this case, if you're at a 5 delta or a 10 delta long option, it might make sense to just increase the contracts versus widening out. But if you're at a 30 delta short, 25 delta long, move the spread and make it wider versus upping the contracts. Rather to collect more on the position and use capital efficiently, traders can trade iron condors on more expensive underlying. So, you can, instead of looking at a $5 wide spread in something like a DraftKings, move to, and doing that multiple times, move to something like a Meta and do a wider spread.
Very good. Nothing to add, man.
One more slide.
Funded up pretty good.
Takeaways. Defined risk strategies offer higher median P&Ls per buying power unit, but lower P&Ls per trade compared to undefined risk strategies. Capital efficiency improves by trading defined risk positions on pricier or more volatile underlyings, hence why we look at these underlyings, not by increasing defined risk contracts. It is fair to say that iron condors have roughly 1/3 the exposure of risk along with defined risk, but you cannot scale up iron condors the same way because the tail risk is more prevalent and probability of max loss is much higher than that of short naked premium.
Good job out of you, son. You went through that very well. Nicely done. You know what? It's almost time for us to catch the opening bell here. So let's take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell. Back in 90 seconds.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know, he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Nicky, we are back, my son. You know what that means? The opening bell is imminent. Even the S&Ps, well, much like yesterday, although they were the upside yesterday, were unchanged, down 5. NASDAQ down 18, Russell down 14, and the Dow up 35. Volatility up by 5 cents, 1550, but you can see here volatility over the last 10 days. What's that? Exploding.
Exploding higher
and
by
we
a
need the
nickel.
plunge protection team.
Yes.
For sure. For the overall market. You need the plunge protection team for the bonds, though. Down 21 ticks, 117 again, trading just a tick or so off of their lows.
Not going to make Tommy happy.
Not going to make Tom happy at all. Bitcoin down 900, almost 1,000 to 86 and change. After trading up to 90,700, it's about $4,000 lower than where it was last night. Oil up $1.09, gold up $1.50. Silver up 22.5 cents, a little bit more. Nat gas, after having its big run to the upside, taking a small little breather to the downside, well off of its lows, only down 10 cents. Corn, wheat, and soybeans are a mixed bag of tricks. The euro continues to slide, which means the dollar is higher. For earnings, helping the Dow, you had Home Depot trading 414, closed at 408 and change. Home Depot catching a little bit of a bid. We've got about a minute and a half before
One little quick thing in that minute and a half before the open, if you haven't signed up to get our 6 must-know skills for active traders. It's our little live bash recording of the content that we did all year. We went to 8 different cities.
Look who's smiling faces up there.
If you missed it, you can get it. It's yours to own. You'll have it forever.
Even if you don't know
a little
what an
piece
NFT
of me
is. I mean, because most people don't know what an NFT is.
I know, but you can have a little piece of me forever.
You
and
can.
Tom, and
You can.
Jamal, and Pete, and Katie, and Mike.
You can. That's right.
So go
Sometimes
get
you
it. Sign
can't
up. It
afford
comes out on Saturday.
Saturday.
This Saturday.
I can sign up ahead of time.
Yeah,
Yes, you have to sign up ahead of time. Can't get it unless you sign up before Saturday. So you got time ticking.
And it's gone forever.
Come on.
It's gone forever.
Come on. Then it's gone forever.
Sometimes you can't afford free, but I promise you this you can afford for free.
And you could get the other one if you want it with like Jim and wasn't Jenny, but Julia. Yeah, it's good too. Sign up for that one too.
It's good too. Sign up for that.
E-Mini's only down one. We're rallying into the open. Here we go. Cancel crash.
I told you they needed the plunge protection team. It is certainly here.
Oh, I know.
So what do you think gets this market moving here? I mean, Sazonov is gone. We've done everything we could. We had two basically unchanged openings. I mean, that's the best we can do here in this market. If anybody's looking for any downside action, although you do have Tesla down around 9 today. Oh, it's been up 150 points. It's down 9. Let's talk about the down 9 points there. You want to?
Oh, yeah.
Probably not.
Down 9. It'll probably reverse in the next 3 minutes here and be green on the day.
I think we had our opening bell, but I didn't get no dings.
Ooh, sorry. I think
That's on you.
No, I know. I turned off the...
That's on you. You turned off your sound on your computer. That's okay. That's okay. It's okay. It's okay.
I'm sorry.
I could
I'm
probably...
sorry. I thought we had the bell like baked into it.
I probably could do it for you. Let me see if I can get you something here.
Yeah, like do a little ding.
Let me see what I have here.
This is not a low ding crew. I mean, there's
market open. I got you some class.
Oh, there you go. Okay,
that's the best I can do. That's the best I can do. Let's see what's moving this market to the downside. Coin down 13. Tesla down almost 11, 10.5. CBNA, I just had it up here, down two and change. UNH helping the Dow to the downside, also down. Baidu down $2.40. PDD, it looks like the Chinese stocks taking a little bit of a movement down. BABA down 2 and change. Let's see what's helping the market to the upside. Looks like Shop for earnings. I should have mentioned that.
Oh yeah, that was this
almost
morning.
$19.
Woo, that's going to be painful. That is going to be a painful.
Do you have a Shop trade on?
Yeah, I had a strangle to 80.95.
Oh, you're not going to like that. You're going to be
that's going to be a really tough one.
Yeah, you needed a little bit of movement to the downside, not to the upside.
20%. I mean, I guess why even hold short Delta?
Agreed. Hey, you start listening to yourself, son.
I know.
Meta up 8.5.
I learned too much from Tom. I enjoy the pain.
I told you, you listen to him for just for comedic.
Yes, that's
true.
That's true.
For your trading. Home Depot up 5, Netflix up 270, Nvidia up $1.50, JP Morgan continues to be up $1.25. Let's see what Goldman Sachs is doing since we're talking about those stocks. Goldman Sachs down $2.75. So you got a little bit of a mixed bag of tricks here in the overall market. Tesla down 12 or 13 now. I think even Tesla fan people are okay with it being down 13. They could buy the dip there, right?
I mean, this is a nothing burger.
Every day a little bit higher, a little bit higher. What else we've got?
Nvidia up $1 and change. I mean, Nvidia, it's been kind of chopping around this like 40. It obviously had a nice little rally higher, but it's been in this, 40-ish to 50-ish range for quite some time. You have earnings coming in the middle of next week. It's kind of like the next, big thing to push us higher, maybe.
Yep. Bill's trying to catch a falling knife in SMCI at down 76.
Oh, God, don't touch that.
Down 76 cents. I'm already getting the delisting emails about SMCI, so that's probably not going to happen.
Yeah, that's fair. But
I got the Bitcoin emails last night, about how much allocation should I have of Bitcoin in my overall portfolio and the likes of that. That's probably reached its pinnacle for a little time too. So anytime you start reading all the headlines, it's usually the opposite time to do something. Even the S&P down 3.5, NASDAQ down 23 and change, Russell down 10. The Dow is the bucker to the upside, up 86. Volatility /VX up 5 cents. I don't really read too much into that in this unchanged market. Even the S&P's had a low volume day yesterday with just around 900,000 futures trading. We'll see what happens. With
told you, nobody's trading E-minis when you could YOLO calls in Tesla, okay?
That's true.
And Coinbase.
That's true.
And watch them 5x in 35 minutes. I mean,
you are right.
When you got liquidity, always finds volatility. I mean, that's another reason why we're always looking for high volatility, is because that's always when liquidity is there.
Yep.
Obviously, you don't want to be on the wrong side of a realized volatility move like you saw in Tesla or Coinbase or MicroStrategy or any of those. But yeah, it seems to be taking some liquidity from some market.
If you see some of Tom's trades coming through the follow page, that means the creator is up. He does make all of his own trades.
A little bathroom break?
Say again?
A little bathroom break?
Do you need one?
No, him. That's why he's trading. It's like 1 in the morning.
Is it 1 in the morning there? Let's see.
Are they 8 hours ahead?
I don't think so.
No, they're 8 hours.
Yeah, it's 2:30 in the afternoon there.
Yeah.
No. This is not a bathroom take. He's just done with lunch right now. So he's catching the market.
What's he doing there? Buying a couple more bonds?
Right now it looks like he's just adjusting positions in Crowd and Baba, Baidu, AVGO. Probably some of the market movers that have reached him.
E-mini's up a quarter. Cancel crash. NASDAQ green.
Cancel crash.
Cancel crash. We are saved.
Cancel crash is right. Let's see how that Russell E-mini S&P trade that he has on, or Russell ES trade that he has on. You can see here it's probably in the mid-range for its most recent move. Bonds are going to be his big problem, down 16, although they are just off the lows. You got all 3 indices up. Only the Russell's down $6.40 right now. Plunge protection team doing its job. What do you think here for the rest of the day?
Oh man,
you can go to your economic news. You got CPI coming out tomorrow. You got initial jobless claims coming out on Thursday, and PPI. Maybe volatility stays a little bit. It is low at 15 and change, right? Down 12 cents. Maybe the market meanders around.
I don't know. The 15 vol gives me
gives you heebie-jeebies.
Yes, but it gives me flashbacks of like 2017 of the just constant like 10-point grind every day.
Yes.
And so I wouldn't be shocked to see just that continue until, something changes and you get a pop in volatility, and then you can kind of move in both directions. But that's what, remember those days we'd talk about the VIX being up 20 cents and we'd be like looking for opportunities because it went from 11 to 11.20.
Yes,
and it was that was our pop in volatility.
I remember those days like they were yesterday, because it usually is.
Yes.
Ain't that the truth?
Yes.
Yep, it sure is. All right, you ready to take a quick 90-second break? We can do that if you want to.
Sure.
We can take a quick 90-second break and come back. We got more Tasty Live after this. We've got Dr. Data coming in. You're going to show us all of both of you are going to show us all about this. What are you guys calling it? What is this? Backtesting?
The backtesting.
Backtesting.
Yes.
We'll be back in 90 Remember when we didn't do that. We'll be back in 90 seconds with Tasty Live.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all frickin' losers. There's no skill.
From the smart mouths at Tasty Live.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
Nikki, we are back, son, and you know what that means. Time for a little bit more tasty special here. We got Dr. Data in the house.
Well, good doctor.
Thank you. The good doctor. We're going to talk a little bit about backtesting, something, Dr. Data, I know you're familiar with because, I mean, you were instrumental in getting this to the platform. You forefronted it. You got it built with help from developers and stuff. So good job out of you. Completely free.
Completely free. You know, all you need is an account, and if you have an account, you can go in. You can log in.
It's already there. Whether it be web-based, whether it be the downloadable platform, it's everywhere.
It is.
You can't get away from it.
It's easy to use too.
Easy to use too. Well, let's figure that out right now.
Okay, so
to you.
Yeah, so here we have the backtesting.
I'm actually.
So
Tom,
let's show you how to pull it up.
Tom just texted me. He said he knows Chris is sick. We hope you get better, Chris. And he said if he needs to fill in, he can fill in a little bit. He can call in.
Who's Tom?
From Europe.
Who's Tom?
Who's Tom's a good question. Oh. But I'm writing him right now and telling him he should watch this segment because he can learn how to use the backtesting platform. So I'm gonna tell him that right now. So you follow. If you see me writing, that's what I'm doing. I'm telling Tom to watch.
So yes, you're using, what are you using, the desktop version?
So we're on the desktop version.
Okay.
On the left side menu at the bottom, we've added the button for backtesting. It's right below the follow button, so you can see it when you pull up this little menu here. You just click on backtesting. It'll bring you to the backtesting window. It's kind of cool because you can have all your other stuff up, your right side panel or your left side watch list, all that stuff together. But
that's right. And if this is the first time if this is the first time you're using it, it may look a little bit overwhelming at first, but I'd just suggest just kind of clicking on some things and just figuring it out through demonstration, right? You can choose different intervals. So first you choose the symbol. We have 50 plus symbols on the platform.
More coming.
Yeah, more coming. The most popular symbols that we have that we're trading at Tasty, and then you can look at the intervals. We have a lot of different intervals. And this is one of the things I'm going to talk about today, which is kind of stress testing. A lot of times people look at back testing and they're saying, okay, how much money can I make?
Yeah.
Another way to do it is you kind of flip it on its head and you say, how much am I actually risking on some of these trades? Historically, what are some worst case scenarios? So
that's
I like
that Sharpe ratio. That's that additional power of risk that you have there. I mean, I've always said trading is not about how much you can make. It's about the risk you take to make that money.
Exactly.
That's where people fail all the time. And this is some tool that can help you with that. And I wish more people used it that way than the latter.
Totally agree. Totally agree.
Good job.
So here we look at some different intervals, some different segments of time. One of the most popular is you're looking at 2 or 3 years. That's what I'd say if you're going to backtest.
Agreed.
You know, you can go all the way back to 10 plus years, but realistically, how likely are you going to just hold a strategy and just continuously do this?
And
strategy?
also the market greatly changes. So I think people get caught up in like looking back 10 years ago, the size of the market, let alone the size of stocks and what prices they were trading at were way different.
Oh yeah.
A $5 wide spread in Apple 10 years ago is the equivalent of a naked short put in Apple from a value perspective. The $5 wide was, when Apple was trading at pre all the splits that have happened in that time was way bigger.
So I recorded a video here, right, of using SPY.
Okay.
And now SPY is close to 600.
Yeah.
When I was doing the video of this, it was like 450.
Yeah.
And so I was like, when has it been 450? That was such a long time ago. Well, no, it was just a few months ago. You just kind of forget how much these products have moved.
Yes.
Right? So you choose a different scenario, a different interval. You can even choose like the COVID crash. You can choose the COVID, after COVID, post-COVID movement up. You can choose post-pandemic surge, the volatility spikes during these different scenarios, or you can choose all available data, like I said here. Let's just choose like the last 2 years.
2 years. Okay.
Yep.
I pick square. Does that work for you?
Yeah, that
Want
works.
Anything else? Okay, perfect.
Now, here you choose, either you choose your first leg, so you do like a short call or short put, something very boring, or you can choose more of a strategy where you're using multi-legged. You can choose like a strangle. What do you want to do for this? I don't look at square very often.
Should we do just a single leg, just like a short put?
Yeah, let's do a short put.
Okay.
Okay. Now, so here you can see at the very top, you can see, okay, I want to sell a put, one contract, 30 delta. Now, the strikes are chosen based off of deltas.
And that's, again, because of the strike selection.
Because of the strike selection, the stocks keeps on moving around.
Yeah, the strikes are way different. $5 wide on a $600 stock is way different than $5 wide on a $20 stock. I mean, so you have to do comparable delta, and that will make it more comparable to the risk.
Yeah.
When the stock was a different price.
Absolutely.
So 10 years ago, the $5 wide, again, might be 30 delta, 2 delta. Now it's 30 delta, 29 delta. It's a way different risk perspective because of where the stocks are trading. So you have to use delta. That's why we use delta.
That's right. Let's choose something different here. Let's, instead of saying expiration, 45 days till expiration, let's just show people how we can choose it to 30 days. 30 days is kind of nice because it's like once a month.
Yeah.
Basically, you're doing 12.
Let's do 14 days, 2 weeks.
Look at you.
Yeah, let's do it. Let's do it. Okay, 14 days.
A little short term. Yeah.
Feeling a little risky?
Yeah.
So yeah, the strikes, 30 delta is pretty good. I mean, you can go really far out, 16 delta, which is sometimes what we do, but that's kind of boring. We'd like to have risk in life.
That's right, Doc. We're opening up the floodgates here. We
Why
put
not?
risk on.
Okay.
Why not?
So entry conditions. Now this is really when you start determining how often you put this on. So one, you could say, I want to put this trade on every day, which is fine. Here's one of the things I like doing about every day, is it shows you every single scenario. Like your P&L, when you're looking at your P&L graphic, that's not very realistic. However, when you're looking at your total distribution of your profits and loss, that's kind of nice to be able to choose that. It gives you a lot of different observations. But let's just say every day, but then we'll limit it to the number of active trades. So we'll say, okay, we'll just keep it by default every day. Let's scroll down a little bit. And then let's say limit the number of active trades. Now this is realistic. Okay, how much money do you have in your account? Do you have enough to put on 30 trades, or do you have enough to put on 1? So maybe let's just say 1 trade for a smaller account.
I was going to go 2.
Okay, 2. Let's do 2.
We got a little vibration in the room here.
Somebody's
a train
got some
go by?
loud music outside or something.
My goodness.
Yeah.
Maybe
All
I
right,
was
so
hungry.
we're gonna
That's
do
my
one.
stomach.
Either that or the world's exploding outside
Yeah,
of us
it's
here,
just-
son.
Yeah. Okay, so we're looking at the number of active trades. You said 2, right?
Yeah,
Let's change that to 2.
Mm-hmm.
Okay. Now we look at the exit conditions. Let's not change this yet. Let's just say we're going to hold these until expiration. We're not going to have any stop loss, and then we can make modifications to it. Okay.
Okay.
Okay. So we have every day and 2 and square. Okay. I'm going to just write this down. Okay. Now you run the.
I moved it to 30 days.
Oh,
back
yeah,
to-
30 days.
We can do it 30 days.
30
Yes.
GTE. Okay. I love it. 2 times. Okay. Now you can run the back test.
All right.
Okay. Look at that. It's even quick. Okay. So this shows you the results of doing okay, so first the light gray line shows you the stock price. Okay. So that's pretty nice to see what's happened. And Square hasn't really moved around very much. It looks like that's not a stock I usually look at, but
It's at the higher end of its range. I mean, it's had good IV rank and everything like that. But you're right, it's gone more sideways-ish. I mean, if you had bought stock, let's not say at the bottom and not say at the top. If you had bought stock at around $75, you'd basically be unchanged.
Yeah, you'd be flat.
Most of this year. So
This is
is
actually-
a decent strategy to look at something that it's just a naked put, right? Like
It's one of the stocks I like to trade a lot. It's
Yep,
like
got it.
You know, something like this where it goes sideways, or
Yep.
I mean, obviously, can
yeah, of course.
lower price but high volatility, and it has basically gone nowhere.
Yeah, so Square looks like it was actually a pretty good one to use for selling a put in, or even selling a strangle in, probably.
Mhm.
So here we made historically we would have made $4,400. The average profit on the trade was 104, and the return on capital on that thing was 142%. Okay, now let's just look, and it did look like it outperformed buy and hold by quite a bit.
Mm-hmm.
Okay. Now we can go all the way up to the top. Let's scroll up a little bit. We can look at the details. Okay. This is something people sometimes forget is there. And these are some pretty valuable windows. So we had 42 trades, and this 32 were profitable. 76% were profitable. It shows you the largest individual profit on a trade was $320, which is not bad for a $60 stock. Average profit and loss, max drawdowns. Okay, let's see if we can make this maybe a little bit better. We can sometimes tweak things a little bit to see how well these things worked. And then you can look at the logs too. Nice thing with this, we have 4 different logs: trades, orders, transaction, daily settlements. Each one of these provides slightly different information. If you like to geek out on this stuff, a lot of our viewers do. They're always asking for, what would happen if I would have done this, or I would have done this? Well, you can do that. You can just pop this stuff in an Excel spreadsheet, and boom, that's your Saturday.
Mm-hmm.
And then you go to those cocktail parties, and then you can talk all about these.
Talk all about the back tests you did all day long.
the morning of that cocktail party, right?
Uh-huh.
So each one of those 4, it's a different spreadsheet.
Mm-hmm.
Okay, so let's go back to that. Let's go back and do a new back test.
All right.
We can make a little bit of modifications. So let's say we want to exit at. Okay, so here's one of the things with the profit and loss in the P&L that we observe here. It does show our assignment cost. So if it were to go down, the stock were to go down, and you were to get assigned in the position, you get hit with a little bit slightly higher commission of about $5.
Mm-hmm.
It also includes selling that put, and you pay the dollar, plus you also pay the exchange fees with that, the OCC clearing fees and whatnot. And so all those things are included in our back test. The fees are included. So let's say you want to exit at a specific days till expiration. We can say maybe 3 days or something. Yeah.
Oh, 3. I was going to just say halfway.
Okay, let's 14.
14, 15 days, 15
Okay.
days till expert.
And then let's just run it and see if it made adjustments to it, how it performed. Because sometimes the profit and the total P&L is not as much, but we're in the trade less often. We have more number of observations. And what we're trying to do here is not necessarily end up with the most amount of money over time. We're trying to end up with the most amount of money for the risk that we're trying to take, which is what Bat was saying. Okay, so here it looks like, so go back to that last screen. So
we had
here
a
we
lot
ended
more
up,
occurrences on this.
we end up with a lot more occurrences, but we end up with 1,341% return on capital. We end up with $13 of profit, whereas before, okay, so before we had $4,400 total P&L. Now we have 13. Average profit and loss per trade is $13 as opposed to before it was 104, 142% as opposed to 41. So maybe this is not something where I would necessarily, I would make modifications to the exiting at days till expiration to try to tweak those numbers a little bit to try to see how small adjustments will perform and cause my P&L to change.
I mean, it's still great. You're to 40% return on capital.
It's not bad.
Great. I mean, so very good. And not every one of these trades has to go in real life when you're trading. Doesn't go right back into the same trade. And this it's good to look at this and see, you know what? There were a couple, tail risks that I endured throughout this trade. But this trade, what's our win rate here was.
We had one $1,000 loss, several $500, $800 losses.
You hit this at a 65% over that time frame of, and that's a data point for you going forward. It's hard to look at this stuff and, extrapolate it out into the future.
So one of the things is that oftentimes your theta decay, your theta decay does increase as you get closer to expiration, but so does your gamma risk. Your gamma risk goes, it goes all the way up. So let's just say, let's make a small modification just to this test and say, what would happen if I got out one day before when that gamma risk really kind of increases on some of these things.
Okay.
So let's do a no back test. Let's make a modification, just say 1 DTE, and then we can run it. So what we're doing here, though, and then you can run it. What we're doing here is we're just making slight modifications to our testing to see how we can make the how we can change our outcomes. So look, this already looks better. It's $39 worth of P&L. We have about $2,000 worth of profit and loss, and profit, and 62%. So already this is looking to be a better scenario. And you can also make modifications too to say, okay, a lot of people like trading with stops. Nothing wrong with that.
Sure.
You can make modifications to that as well. So lots of things that you can do with this backtesting thing. We just
but be careful when you're backtesting. You are looking at the left side of the chart, for argument's sake. You don't know what the future is going to hold here.
100%.
And a lot of times we'll look at something and backtest it to fit the scenario that has happened in the past to maximize our return. And that's like, I always say, like, some things are good to know, other things make you money. That's a great thing to know.
Yeah.
And maybe you have to modify a little bit, and that maybe can make you money in the future if you think the market or the stock is going to continue on what it has done in the past in the future. Then this fits 100%.
Yeah.
If you're looking for more on how to lose less money when the market goes in the opposite direction that you want to go to, maybe take some money. How can I simulate the same type of position I have right now, especially if I am a stock trader, that mirrors exactly what would happen in the stock if I was just naked long stock, or maybe I only have 20 or 30 shares that I buy in stock. How can I simulate buying 100 shares of stock using the same money, ramping up your buying power, keeping your buying power the same, but ramping up the amount of units you have by doing still one contract, but yet controlling more. Go right ahead. You know where I'm going.
Yeah. I mean, I think that's a great point. You can modify, you can make adjustments so much to these things. And what I'm trying to say is that, like, that's what I was saying. Let's make small, little, tiny adjustments to see if we can have a trend. In other words, if you go from, let's say, you're managing at 15 days, okay? And then all of a sudden you manage at 14 and you see a huge spike and things look a lot better. Then you go to 13 and you lose money. And then you go to 12 and you have huge spikes in income. That, to me, that's overfitting to the scenario.
Yes.
What we're seeing here, though, is as you make those adjustments, you start to get linear with respect to the P&L. And so that to me is a trend that you could kind of observe, and you've observed in the left part of the chart. Perhaps you can observe it going forward to as well, because you are making slight adjustments to your risk parameters and therefore your performance. Let's look at, do we have enough time to look at one more?
Sure.
Okay.
You kidding me?
So let's look
you,
at,
We own this thing.
Yeah,
we own
this is our day. We can do whatever
That's
we
right.
want.
That's right. That's right.
That's right.
I like the way you guys think.
Can't stop, won't stop. I think it's very beneficial for people who've never even looked at it.
Yeah.
So.
Yeah. Let's look at SPY. So this is what you were talking about before, which is like making sure that we're not trying to overfit a scenario. Let's do a very boring SPY.
You want to do SPY?
Yeah, yeah. And the reason I'm saying that is because we have these intervals that are based on the S&P 500. Okay. Now you could also do a stress testing and choose a start date and an end date, the worst case scenario. So let's look at.
So how is it comparing against stocks? Is it the same buying power used? So if I'm using $500 on this strategy, it buys $500 worth of stock?
No.
Okay, so what does it do?
Yeah, so what we're doing here is we're doing one position. So at the very beginning of time, we're doing one position, or the equivalent of just a single, unless you have, well, here you have two. So you're putting on two strategies, and then you're continuously rolling those two positions until the very end.
So if it uses $10 or $10,000 in buying power to put the 2 lot on or the 1 lot on,
You may end up at the very end use $20,000 worth of buying power.
Sure.
Yeah, but at the start you're only looking at $10,000 worth of shares because you have to compare apples to apples.
Because the shares have gone higher.
The shares have gone higher.
If it was
That's
on
one
the
of the
other
reasons
direction, you would be using more.
That's one of the reasons why I say it's not.
There's
all,
no perfect
all back tests have these problems, and you wouldn't believe how many conversations we've had, Yuli and I and myself and Nick, as far as like arguing as far as the adjustments and how to do this as fair as possible. And every time we think we get it perfect, we're like, well, there's this other scenario here too, right?
Yeah.
It's very difficult. Go down to intervals here, and let's choose a stress testing where we're looking at like a bad scenario. Okay. Let's look at inflation. Can we look at that inflationary induced bear test or bear market? So this is about 10 months.
Okay.
I'd say usually when you're looking at a back test, 6 months or more. Okay. So this is in a very bad market for selling a put. So let's say selling a put, we know selling a put is going to perform very well in an upward moving market. It's not going to work very well in a downward moving market. Duh. It's a bullish strategy. So let's say same situation, we're looking at every day, but we're limiting it to the number of active trades of, let's just say 1 for this one.
And you want to keep the 30 delta 30 days.
Sure.
Cool.
And then let's not do exit at hit days till expiration. Okay. Then you can run the back test.
Cool.
Okay.
Nice.
So on this particular one here, one short put, it's not a very good sign that you did it. And you oftentimes hear options trading is very risky. You can lose a lot of money in it. Well, yeah, you are losing money in this position. The position didn't go in your favor.
Hey, sold puts in the
it's
market.
a bullish market. It's a bullish strategy, and you're doing it in a bear market during this time, right? This is when the product went from 480 down to 360. You lost 2,400. Now that's a lot, but it's not a tremendous amount for most or for many people. So that it's kind of up to you to decide. Okay,
and it's
can I
not much
afford
different
that kind
than
of a
just
loss?
holding shares. I mean, you
holding
lost 2,300 held shares in the equivalent buying power.
Yeah. So basically, I would say it's about the same, as far as. But you also got in that revenue, and you were in the trade less often. Now you can do modifications too in these type situations. You can even put in. A lot of people do like having stop losses on their positions. You can see how the modifications of those stop losses will work in the overall profitability of things. So again, if I could say there's a takeaway here to this talk, it's not just looking at, as Bat said, overfitting your position, trying to make modifications so that you get this perfect situation, because just because it worked historically, past results are not indicative of future, as they say. But also making sure that you can, not overfitting, but also making sure that the positions that you're putting on, you're stress testing them during scenarios that are maybe not as ideal for you.
Good job.
Fantastic, Doc.
Good job out of both you guys.
Thanks, y'all.
Very, very nice. Very proud of you.
That's my commander.
I know.
I'm just a grunt.
I know.
Around.
I know. It's how we're rolling life.
My fellow Cherry Picks editor, which, by the way, does come out today.
Dr. Data is working on it. He's got some good stuff coming, as always.
Both of us. It's a team effort, Nick.
Good job out of you, Dad. Thank you for coming on.
Thank you.
Nikki, great job running the driver there. We'll take a quick 90-second break and come back. We've got a market measure sponsored by your friends at the CBOE. Right after this, we'll be back in 90 seconds. Tasty Live.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, my son. And you know what that means? Time for a little bit more Tasty Live. Basically an unchanged market, down near the lows of our most recent move since we've been on the show for the last 2 hours or so. Even the S&P down 8, NASDAQ down 22, Russell down 8, and the Dow down 64. Volatility up by 10 cents, and bonds are down 13 ticks. But all that means nothing when you've got this market measure sponsored by your friends at the CBOE.
This might be the low we see in our lifetime. 7-point down move. This might be it.
It certainly seems to feel that way at times. I will give you that.
All right, so we're going to talk about premium decay today, part 1 of a series, I guess. I'm not sure how long this will go, but it's part 1. So we're going to talk about understanding premium decay. So we'll get into this.
Let's do it.
All right, so theoretically, in at-the-money options, premium decay looks like this, accelerating in the last 50 days. This is a slide that I've used for the content that you can sign up for that's coming this Saturday for the live bash recording. But basically, when you're looking at premium decay, it's not a linear curve. When you look further out in time, it's a lot slower decay. As you get to that 40 to 50-day time frame, premium decay starts to accelerate as you get closer to expiration. Of course, there is a point of risk reward baked into this. Of course, you have faster decay as you get closer to expiration, but that comes with a lot more risk versus something that's 40 or 50 days out in time. Jumping over to the next slide. So does this hold true in real trading? To test this, we need to separate the occurrences with and without directional movement. If the current stock price is close enough to the original stock price, then we can say the position's P&L is purely from premium time decay. So we're isolating the stock movement and the delta exposure that you get from short premium, and we're just looking at the data decay relative to sideways moves in the market. So getting to the next slide, we're looking at SPY. We're doing 2005 to present. We sold the at-the-money puts at a 50 delta. We recorded only the non-movement occurrences. So we're looking at the time where the stock, in this case SPY, was within 0.5% of the price on the previous day. So it's basically looking at quote unquote non-movements or inside moves in the market.
Okie-dokie.
So first, we're going to take a look at the distribution of non-movement occurrences in the 45-day to expiration cycles. And when we jump to the next one here, as expected, the longer duration, the lower the probability of the stock price coming back to...
Right, well, they're just talking about like expected moves. So if something moves $30 and it has a $3 expected move over a 6-month period of time, it's going to take it a lot longer to get back that price, even if it goes all in one direction. But now remember, from a volatility standpoint, you're talking more about being a lot more mean reverting. Now, we're not talking about volatility here, just talking about stock price itself.
Yes.
A lot of times people get to smoke hopium, and since we had this large move to the downside or to the upside so quickly that once it backs off, it certainly can go back there again. And again, it is a 50-50 shot on direction, but it's all about the implied volatility for an expected move, which is 100% correct 68% of the time.
That's good. Yeah, you had to add that one in. That was good. Jump into the next slide. So next, we isolate these non-movement occurrences to test how closely the actual daily premium decay matches the theoretical premium decay. So this will get, closer to that original slide. The first slide, that was a non-scientific slide. We're going to look at the actual curve of the realized premium decay. We'll jump to slide 7 here. So the curve of realized premium decay looks very close to the theoretical one, with the acceleration in decay approaching expiration. So as you get closer to expiration, of course, you're going to have faster premium decay. You only have a certain amount of time, especially when you're looking at these closer at the money options. This goes to the other slide of mean reversion of price being much closer on a day-to-day basis, or on a shorter duration, because it's more of a 50-50 shot versus a longer duration where, you don't have that same sort of coin flip.
Can I report on something else?
Sure.
Frank Caberna got in a little bit earlier than me today.
Have you been drinking his coffee? That's
He made the coffee. If I get in first, I make the coffee. He gets it for very bitter. Very bitter. Very bitter. A lot like Frank used to be early on.
He's never been bitter. That's not right.
There's a reason why we called him the indoor kid. He very
you were mean to him. That's why. That's why he was bitter. You guys were mean to him. Anyway, getting to slide 8 here. So we've known that obviously in the bull markets in the past years, tested the call side more often than the put side. If we control for the directional bias, does the call premium decay look similar to the put premium decay? And so again, we're looking at these sideways moves versus, a long period of time where we're only, we're looking at the total directional move. This whole study is looking at just those like inside move periods of time and days. So the actual premium decay for calls matches the put premium decay in the hypothetical curve. So again, when you take the directional move out of the equation, the decay on calls and puts are relatively the same. Is the takeaway.
Yes.
Here.
Yes. Agreed. Not too much more I can add to that. You are correct.
So takeaways here, delta is one of the largest risks when trading and can adversely impact traded performance. And this again goes to what we were just talking about here. We took delta out of the equation for this study and just looked at premium decay and tried to kind of compare calls versus puts. Delta, of course, has been the biggest directional or has been the biggest issue for positions over this period of time. When we control for delta, the changes in the underlying price, we clearly see where our returns come from. They come from premium decay. That's why we're always talking about looking at high volatility and mean reversion of volatility. Theoretical premium decay very closely matches actual premium decay. Since most traders sell out of money options, does actual out of the money option decay also follow the theoretical? That will be covered in part 2.
Ooh. Part 2 looming. Went through that pretty quickly. Really, it was just about price movement, right? I mean, you're looking at probability of pop on expected move. That's really what we're talking about here. Hey, plunge protection team is back. NASDAQ.
Of course, we got to save the market here.
Gotta
buy them. Get that cash out.
Yes. NASDAQ up $4 and change. E-mini S&Ps are down $6 and change. Russell is down 12. Really is a nothing burger here today. Dow down 83. I think the market taking a little bit of a breather after the elections and everything else, or maybe into some of these numbers coming later this week. Volatility hanging out at unchanged, up 8 cents. Bonds are down 14, more mid-range for the day. Good IV rank of 38, but you can see that has come down also. Bitcoin hanging in there at 87,800. Let's call it 88. You can see here it's off its highs of 90,000 and change. Oil up 72 cents. Gold down $1. Let's take a look at some of the bigger movers that we've had today. To the upside, you've got Netflix up $8. You got Meta up $7. Volatility pretty much contracting on anything that doesn't have earnings. Nvidia down, up $3.50. Slapped me in the face for saying it was down. Microsoft up $2. JP Morgan, a couple of the other stocks are also up on the AAPL, sorry. Apple unchanged, down 39 cents. On the downside, your bigger movers are Lilly down $16, Tesla down $13, UNH, that's what's hurting the Dow a little bit, down $8. First Solar down 7 and change. I think you were one of the first ones that got Tom into First Solar a couple months back. Was that?
No.
No, not you?
I'm not taking blame for that. No way.
You got too many other things to take blame for. PDD, a lot of Chinese stocks lower also. We're going to take a quick 90-second break. Something you want to add?
No, that's it. That's it.
Okay, we'll take a quick...
Volatility expanding a little bit. Tiny bit.
Tiny bit. Now. We'll take a quick 90-second break and come back. We got more Tasty Live after this with your friend and mine, Mr. Scott Sheridan, next. Tasty Trade World Headquarters.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. tastytrade. Make your move.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
time last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on, what did you want to do last night? I missed that.
Don't repeat that. No.
No, what did you want to do?
I do this every time I'm here.
I just want to know what he
every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
the
up.
The thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
Got the need for speed? No problem. On tastytrade, adjusting your option positions is a right click away. Rolling just got quicker. tastytrade, make your move.
Toma! Nikki!
That's the second time you've done that to me. You did that when we weren't in
14
studio.
years!
You smack him?
14 years!
Should I? Thank you.
14 years!
I'm here for you.
You know what? You know what? To help you, I got something for. Well, you won't be here tomorrow because you're 2 days a week.
14 years!
Next time you're here, I got something for you.
You could do it to me. I can take
That's
that.
bad.
You're not even in the room
I'm
yet. I'm not
family.
even talking to you. I haven't introduced you yet. You're not even in the room.
You can't do that to blood.
Twice. He's done that.
There you go.
Done that twice.
Tasty Trade World headquarters, your friend of mine, the very popular. Did you notice we never named the studios? But we've named them now, the Scott Sheridan Studios. Mr. Scott Sheridan, before we get to business, I watched the ending of Disclaimer. Oof.
Crazy, right?
Oof.
All right, no spoiler.
I'm not spoiling. I'm not spoiling.
Right in and be like,
I'm not spoiling it. But
Now,
your question was,
would you recommend it?
Can you recommend it?
Yes.
I would recommend it to anyone.
Would you?
Yes. My wife and I were watching it, and it was quiet. Like, we didn't talk. You know, usually you talk, oh my God, that's funny, this is cute, this is good. Oh, I saw that coming, I didn't see this coming. We were just quiet, and you were captivated, and you were compelled.
Because it was like a wow.
It was a wow. I saw it coming like 50 seconds into I didn't see it coming into the last show, but a minute into it, I called it.
Yeah.
But it is a great show. And I think you could recommend it to anybody of adult age. You don't think so?
Wow. So here's
Can
my
Nikki
thing.
watch it?
Huh?
Can Nikki watch it?
He's a Batista.
I think it's a little risque.
He's a Batista.
Did you watch it, Beth?
So
Not yet.
Here's my comment. When a show starts off with, there's a disclaimer about sexual content, explicit.
Yes. Oh, yeah, that's
right
I
there.
cheer.
Yeah, but how many? Right there.
Like when you get like Game of Thrones, when you see Game of Thrones and it says like excessive violence, nudity, and you see I'm like ready to write.
When there's not enough, you're disappointed.
Yeah.
Like, why did they put the disclaimer?
They can
We
have
didn't
a
need
slide
that.
that just says perfect for Batistas.
Okay, that's good.
Right?
That's good.
So
Tasteful nudity. Okay, tasteful.
Non-Batistas
might be a little.
It's intense. It's raw.
Can all your kids watch it? All your adult kids?
Could they watch it? Of course. Would I recommend it to them? I'll take this offline because I don't want to.
Half of them went to New York City to go to school.
Yeah,
they've seen and done everything.
They've seen a lot worse.
3 for 3. I'm sorry. All your kids went to New York City to go to school. They've seen and done everything.
Yes, no question about it. Now, off air, because I don't want to spoil this.
Sure.
I do want to talk about one thing which to me made this exceptional.
Okay.
But I can't say it because if I say it,
I got you. I got
right.
you.
So I'll leave it at that.
Disclaimer, ladies and gentlemen, if you like a good, captivating show and you don't mind to be twisted in the wind at the end, you'll love the program.
Correct.
It's a good one.
It's a good one. Okay, so now.
Different than Your Honor, which was great.
Wasn't Your Honor really good?
It was awesome.
He is
Do you guys like this? Because you don't have Tom here to poo-poo you and be like,
and Your Honor had murder and twists.
The thing that I like about doing this when Tom's here is that it drives him crazy because he doesn't have.
He goes
logins.
right into the platform and starts doing
he starts
emails
looking and
and
pretending he's trading, and he
pretending.
And then because he doesn't have logins to anything, so it drives him crazy. He's like, I can watch that if I want to. I'm like, no, you can't, because even if you had, how pathetic would it be to watch Tom try to log in to?
I've tried to.
Right.
I want to go to his house, hook up YouTube TV in all his rooms for him. I want to have
YouTube TV is hands down the best.
The best thing ever.
It's the best. I didn't realize because I've never used it for going archive stuff.
Mm-hmm.
So I went back. I wanted to see the Saturday Night Live because I didn't realize I only watch live. I don't go back.
Infinite. Yeah.
Yeah, it's unbelievable. So
You don't watch it on your VCR?
No.
Like Tom does? He watches it on his VCR?
No, I watch live. But I mean, if I want to watch something that's on demand, I'll go to a streaming service. And I'll say, okay, I want to watch this. So I'm sure Saturday Night Live is on some like Peacock or something. I'm sure it is. But you could go back. I don't know about all of them, but I wanted to see Bill Burr. Great.
Mm-hmm.
I didn't know he was on. He was great. But the beginning section, did you watch Saturday Night Live?
I did not.
Oh my God, just go back and watch the beginning.
I saw like some of it through Instagram.
Where they're all saying, we love Trump. And then College Justice.
You see, that's comedy. There's nothing wrong with that.
College
That's
Justice
good
saying,
stuff.
no. The one that did Michael Shea, CHE. Okay. It was great, but Bill Burr was great. I didn't watch the whole show, but Bill Burr was really good. So anyway,
Very
I just talked to
nice.
Tom.
Very Oh, did you? I talked to Tom. We just did a
Sound-
segment with Dr. Data at 8:40 and Nikki on backtesting, which is something Tom could use a little bit of brushing up on.
Yeah.
I told him he said he had an extra 40 minutes. He can call into the show. I said, please don't. We're doing a little backtesting, but watch the show so you learn how to use the backtesting tool. You know, sometimes Tom makes judgments and says things before he actually has done anything to it to actually use it. So he learned a little stuff. He wrote me back. He goes, I learned a little something today, which was nice.
I sell.
He didn't write that.
I was gonna say that.
I had you. He must have got you fragile.
You actually believe that?
I got you. You must be fragile.
He actually sounded good. Sounded rested.
Oh no, I think he's having a good time. He's having a good time. Monday of next week.
Can they keep him there?
No, Mondays.
We have an office there, right? Can we keep him?
Monday of next week into
Terrible.
Wednesday. By Wednesday afternoon, he might be recovering. He is going to be insufferable.
So I don't know if I should actually say this.
Please say it. That's what we like to do.
I'll be happy to if you want. I'll say it. So you know that plate of food?
Oh my God, the one with the 2 big penises on it?
That thing.
Yeah.
Omaha.
His comment? Do you know what his comment was?
Couldn't
So
eat it.
apparently
Couldn't
it's
eat it.
the top 4.
Vanetta told him about this place, and it just so happened to be like right around the corner from his hotel.
Top 4 what?
Have you?
Top
Oh,
4
so top 4 like gastropubs or something,
Fast
foodish. Fast food, Nike, upscale, whatever in the world.
In the world.
So he got bison sausage.
Is that what he had? Is that what that was?
I don't know what it was. He said it was bison. I don't know if it actually was bison. He ordered bison. He said it was bison. He said it was not edible.
He said he didn't eat it.
Didn't eat it. He
Which
said
I
it was,
find it a little hard to believe, but
no, I believe him.
Yeah.
But then he walked down the street.
He said there was a line outside.
And there's a pig in the window. And he said they're making just the craziest sandwiches. Okay. And he said it was lights out.
Said he waited in line.
I would do it. Like for food, I don't wait in
You
line.
wait in line for food.
For food,
Yeah.
I will.
Yeah.
I won't wait in line for anything else.
Yeah.
But for food, good food is worth it.
Yeah.
Right? Sometimes.
Saz said he would never wait in line, but I guess he's evolving.
When Brittany says we're waiting.
I don't think Brittany was waiting for the pig. I don't think she's.
Come on, let me go with it.
Okay.
But he said show was great.
There's a cool venue.
Cool
oh my
venue.
God, it looked like a cave. I mean,
Really, really cool
I
venue.
love those stone walls and those stone houses. I mean,
Yeah, gets you going.
what's that?
Gets you going.
A lot of things get me going, but no, that is not one of them. I'm not gonna lie, although I do appreciate it. I would like to live in one day. I like that. I don't know.
All right.
Seems rich to me.
All
You know,
right.
rich in history.
I appreciate it. Probably temperature controlled. It doesn't vary too much, right?
Yeah. I think it might be a little cool. No?
I like that.
That's what I kind of envision or feel.
Nice. Okay.
Yeah.
So I don't know what I was thinking about because I just looked at my fantasy. My fantasy football. So
okay.
You guys,
wow.
I haven't even. I'm been ice cold.
So
oh my God, is he horrible?
No. But what's amazing, we're week 10, right? So we're 6-4.
Okay.
Okay.
Oh, you're talking about your fantasy football.
Yeah, fantasy.
Okay,
what are we?
5 and 5.
But
5-5?
but you remember,
We have bets, you and I,
yeah,
against Nikki, straight up.
yeah.
I think
So
we played
Oh,
one.
for the season?
we
Or the
have
whole
straight up.
matchup.
We match up,
Matchup
which
and-
you beat us, and I paid
first
you.
time.
Yeah.
I think we play again, and then the overall.
Right.
Yes. So
Small gentleman bets. 20,
yeah.
20,
So if you remember, Levi and I missed. We had a outtrade.
Yes.
Yeah.
Outtrade.
Yes. Where you just auto picked and you had.
So
play
I
that wasn't
couldn't get
on or
in.
something.
He's sleeping. I couldn't get in. We missed the whole thing. Auto select. I'm like, okay, I'm never doing this again. It's pretty good being 6-4 on auto select. But our number one pick by the computer, not
Yes,
us. We had nothing
yes.
to do with this.
Right.
Was Jamar Chase, who put up 49.9.
Big
40,
number.
He's done that twice this year.
not 49.
He had like another,
30s,
40
like in his
yeah,
30s.
45,
Yeah.
something like that. He's got
So
two of the
if
highest.
I
scoring-
don't know if you know this, Nick. You'll probably remember. He was a holdout, right? But he didn't get a contract.
No, they didn't. He didn't get a contract.
He
That's coming.
paid.
So he had a 36.3
Where
point
did
game.
Chase go to LSU?
Two TDs, 190 yards, 10 receptions was his other game.
Did he go to LSU? Was
LSU.
with
He was
Burrow?
with Burrow.
With Burrow.
Yeah. It was Chase
And was
Justin
Jefferson?
Jefferson
That's
and
good.
Burrow.
That's a good team.
That's a pretty good offense.
And they
Not
they
bad.
won the national
Not bad.
championship. Yeah. Okay. Well, when you look at that team, you go.
Yeah, you say you got the two best receivers in the league and one of the best quarterbacks in the league.
So I was
bad.
watching. Talk about great receivers. Michael Irvin. was on. You're a little young for Michael Irvin.
No, I know Michael Irvin.
Okay, so he was on the sideline.
Cowboys.
Cowboys.
Yeah, Cowboys.
But he played the U.
Yes,
So,
of course. He would that documentary, the 30 for 30 or the
which one?
Whichever one. They've done so many of them.
Yeah, but he was on the team. I think he was on the team with Warren Sapp. Was he on the Warren? So he was on the team that won in the 80s. He won in the late 80s, early 90s.
Oh yeah, you're right.
Right? He wasn't the 2000s. He was the earlier one.
Yeah.
Those guys were crazy. I think he was on the team that came out in fatigues when they were playing. It was Catholics versus convicts when they were playing Notre Dame.
Yeah, that was years ago.
In the 80s, late 80s.
Yeah.
Was that the 80s?
Yeah, late 80s. Anyway, the point is having that guy on the sideline, having any of these guys on the sideline, like when you're in college, that's got to be just
the coolest thing ever.
Like you're looking,
if they even know who those people are,
they
know.
They know.
They.
I mean, it's like when Tom walks in and you go, "My boy," right? Like it just makes you feel good.
Yeah.
Maybe not.
Oh, my boy gonna be mad at me about something.
I'm trying.
You are. You're doing great. You're doing great. You're doing great. You're doing great.
Anyway,
no complaints.
What's for lunch today?
I like it. This is my favorite. I hope Tori's not listening.
If you like it, it's kind of a tough thing.
Soba rosa tacos. I like 5 rabanitos.
I do too.
And soba rosa. That's soba rosas today. I cannot stand Burrito Beach. I cannot stand Velvet Taco.
Yeah.
I cannot stand. Wait, there's one or two others that, as Tony would say,
Taco Tuesday, isn't it done?
I'll make you nachos. It's good. I'll make you a plate of nachos. You'll go, where's this been?
I'm excited. I'm getting food today.
You're excited because there's always food left over. Because you got another show to do at 11, right?
No.
Well,
you're out that. Oh, you pulled like the executive
I don't
order
know
or something like that.
if
Good
you've
job,
noticed
you.
this lately because you're over here, not on that side, so you probably don't get the memo. We've had 2 lunches that one arrived at 10:05 and one arrived at like.
I enjoyed that they came, but
I'm like 10:05. Would they make food last night?
I don't know the banh mi's. They're okay. They're okay.
Kind of prison food. It's kind of prison.
Give me
food.
a sauce.
A sauce. I agree with you.
Like none of them have sauces. Like
they used to. They used to have the little sauce, like the peanut sauce or something. I agree with you. It's like prison food. You go grab a bag. It's like end of the line.
Yeah, can we order sauce on the side for the next time we do that?
Ask.
Like some little
for you.
containers.
I will ask.
You got it.
I don't have. Other good news because the other one's not here, so he can't complain. I signed off on the soft serve ice cream machine getting repaired.
Oh, you did?
Oh my God!
It's coming back.
Have you heard about the conspiracy, the McDonald's conspiracy with the soft serve?
It wasn't a conspiracy. They sued the company, whatever.
Yeah. They
they said you're good. They can now get them fixed.
Fix them,
right?
Right. Yeah. I mean, they should be. I mean, they're independently owned. I mean, why can't they get
a freaking ice cream machine? Like,
wouldn't you think?
You get like a
I don't know. One of the Red Hen always works.
I know.
It's like the one at McDonald's.
Will he not deliver? I forgot about Red Hen. Will he not deliver down here?
Sure he will.
Yeah.
Sure he will. But, you got your administration up there. I don't think he does kickbacks.
Let me see what I can do.
You know what I mean?
I like Red Hat.
I know.
Maybe we get a kickback from
right.
I'm thinking I might call Jimmy myself. Say I got a deal for you.
And I would like you to try. I know you poo-pooed it.
Which one?
Lons. I would like you to try it.
Okay.
They do catering.
I know they opened the new one downtown.
Okay.
I went to it.
Oh, you went to that one?
The one right over the bridge.
First of all, that's not new. It's been
2
there.
years.
I was there pre-COVID.
I just talked to
No,
him.
you weren't.
2 years.
They closed the one in Old Town. It was on.
Okay, first of all, Lons, you don't remember. The 6 will tell many
Oh,
stories.
I remember Lons, okay?
Lons was
I've done a
on
lot of
Orleans.
things at Lons.
Lons was on Orleans.
I was on one of Orleans, glass door, up steps.
Back in the day when,
Yeah.
Yeah. right?
Yeah,
okay.
they still did
anyway,
that. They still did
then
that
they
10
moved,
years
Then they
ago,
moved on Armitage.
Yes, Armitage was there forever.
Ever. There's no way they're telling you it's 2 years because they're running something out of the back they don't even know about. It's been there way more than 2 years. Way more.
No,
It's pre-COVID. It might be during COVID. I picked up food from there. I walked in. I'm like, is this really actually a restaurant? The food was horrible.
No,
and
the food was excellent. I was just there. I'm telling you. You got to give it one more shot.
You know
Don't
what?
go for the ambiance. It looks like it's a barge. Got great parking right out front.
Mm-hmm.
Yeah, for people to come in, drop off, pick up, and leave. Okay? So clearly, well, like in Glenview, what do you got? Like,
we don't have good Chinese food.
There you go. See?
We got little Lons.
No, you got to go to Displains. That's what
I'm telling you, go. Next time you want to come.
Oh, the one that Kai told me about.
Yeah. Next time you come downtown, Ming Hin.
It is a good one.
Great. Ming Hin's great.
Yeah.
Yeah, it's great.
Mikey Butler loves that.
It's great.
Mikey Butler he has a good taste in food too.
Have you ever been there with them?
No.
I guess you're not that worthy, are you?
I order it sometimes though.
What's your go-to around the United Center? I didn't know you lived over there. So
For Chinese food, like if I order
Yeah,
Chinese,
can you
or
walk here?
for which one?
Can you walk here? Are you close enough to walk?
Yeah.
Okay. What's your go-to?
Do we have to dox? Like, do you want me to put my address out? If Vanetta's obsessed with it, he's obsessed
I
with
didn't
it.
ask.
I'm just looking for a place to sleep when it snows, and I'm
we have
snowed
to
in.
dox.
I can't
Is
get
this the
home.
only thing- where do you live, Scott?
You know where I live.
What's your address? Where's your house?
I don't give my address, but you know where
How
I live.
about you, Dad?
I'm in Glen.
Just
I'm
kidding.
in
Okay.
Glenview. Everybody knows that.
So where are we going?
There's no good Chinese food by you.
In here? No. In this area? No.
Have you ever been to?
Actually,
what's the
I take that
diner
back.
west on Madison? It's
Duck Goat.
No, old school diner.
But I've got my
west-
concealed carry, so I don't
west,
worry about
west
that.
of you. It's called like they have good corned beef sandwich. It's west of you called. I'll think of what it is. It's a good diner west of the United Center on Madison, I think. Let's look that up. If you told me the name of the diner, it's that. You like diner food, or is that below?
Yeah.
Okay.
I'll take that.
All right. Old school diner.
Yeah.
I always get breakfast at a diner.
That's fine. No judgment.
Or soup. Like they'll have like navy bean or something.
I like navy bean. Right. It's hard to find.
I know.
I do like a good navy bean.
I know.
Yeah. All right. Should we get to some business?
Sure.
All right. Are you doing giant trades today?
No, it's tomorrow, but I don't know if we can do that.
What, Johnny trades?
Yeah.
That was Tuesday.
Every Wednesday we do Johnny.
Wednesday. Come on.
I'm losing track of my days.
Yeah. Well,
We'll try. I'll try and do them. I'll try and pick some live.
because he does them intraday while we're doing the show. He looks for something to do, so he's on the show with me. It makes it a little bit more difficult.
Well, and then I do the recordings. You haven't been watching Life Cycle of a Trade?
I just got a message from somebody who loves it.
Yeah, it's
loves it.
Thanks, Scott. See,
and it's a woman.
It's our
Really?
old, it's
Yeah.
our old anatomy of a trade type scenario where he goes through all of the trades and
great.
the management of each one of the trades.
Thank you.
It's very, very cool. I think you learn a lot from the management of the trade.
You're
Just
wait, are you
applying the mechanics.
Talking to me?
I'm talking.
No, I've been trying to send them to Tom for weeks now. He won't even open the emails.
All right.
I've been trying to send him. I'm like, here's a strangle. This is how you manage a strangle, Tom. And he won't open the email.
Does it work?
No. He says GFY.
It's sad. It's sad. I know.
Okay.
Can't teach a new dog, old dog, new tricks. Sorry.
Think he's gonna get a new dog?
Do I think he's been talking about it?
He's been talking
for
about
2 years now.
Here's my concern.
I say no.
Here's my concern. If he gets the kind of dog he wants, that dog will own him on a walk.
What does he want?
Yeah, but he'll get it
King
trained.
Corso.
I mean, he ain't gonna do it.
He wants to do the Mastiff, right?
He's gonna get the King Corso. He's gonna get the dog trained. Here's his,
Oh, is that the
any
big, like-
idiot?
Yeah,
any idiot,
this is like an Italian Mastiff.
Any
They're
idiot
like,
can train a dog. That will be his answer.
yeah.
And you don't need to get a trainer. I can do this. He won't do it. He won't crate train. He won't do it. The dog will be completely out of control. And
Well, there's
Oh my God! Could you imagine him walking that massive dog and it sees like some little ratty dog
Right.
and just pulls him with it? It would be like a
I
cartoon.
use a gentle leader
Mm-hmm.
on Bolt, and Bolt's only this big, but he's strong.
Well, there's only one person in this room right now. Tom and I have shared a lot of things in life, but we shared a dog also. If you remember.
Yeah, he took it. Wouldn't give it back.
No, my Goose. Rest in peace, Goose. You loved Goose.
Goose. No, that was Case's Goose.
Case loved Goose.
No, it was our dog first for years.
Yeah.
And then after Gina was born, we had 2 kids.
You know that's why I'm still a grade 4 employee here.
I understand because of Goose.
That's why I can't move up the corporate ladder. Is
Yes.
that I stole Nick Batista stole
Personally.
Goose from Case.
Yes, because
that is how the story has been explained to me.
That's just what I know is that I was evil.
You can tell the story explained to you. Well, it was our dog for years after my
I'm
daughter
just
was
telling
born.
you how it was explained to me.
All right.
Stolen.
Stolen.
Literally. The Batistas, the evil Batistas broke in.
No.
Stole the dog.
Some
Stole the
mafia-
puppy.
I came into work
came
one
in
day.
and
I was
took it.
talking on the floor saying my wife's really complaining about the dog, taking care of the dog with 2 kids, 16 months apart, blah, blah, blah. He goes, well, our dog, his dog, I think had just bit somebody. He had like a golden that bit somebody, believe it or not. I think that's the way I remember the story. Maybe I'm telling a bad story here. But I said, well, listen, why don't you take my dog? Just like, the way I do, joke around. He goes, I would take your dog. I presented that to Nick's mom.
How do you do that to a dog?
What?
How old was the dog?
Our dog?
Yeah.
maybe 4.
How do you give up a dog at 4 years old?
Very easily. You say, here's the bowl, here's the leader, the leashes, everything else. You take the. But I said you take the dog for a period of time while I get everything, at home straightened out. Eventually I had to leave home, but I was trying to buy myself a little bit more time.
Leaving home was 13 years later. The dog would have been dead two times over by then.
Buy a little time. He took the dog for a couple of years, and then I said, time to give the dog back. He was very happy to give the dog back, and that's how the story went. Goose lived a nice long life with us, and that was the end of that. Case never forgave Nikki taking the dog back.
No. Okay.
Hold on.
Do you have a deer?
How do you do that to a dog? Like, I know I was not a dog person.
And if I remember,
now I have 2 dogs.
Wait a minute, time out. At this time of life, if I said to you, I'm getting a dog, you'd say, why would anybody want a dog? I can't stand dogs. I can't stand animals.
No, I love dogs.
Now you do.
I said I was not a dog person.
Yeah,
now
you
I
hated dogs.
am. I said that. I was not a dog person. Yeah. But now that I'm a dog person.
Build 1,000 bridges, now all of a sudden you're a dog person. Yeah, go ahead.
But to me, they're part of the family. Like, I couldn't give up on my dogs.
Yeah, okay. Well, listen, I didn't want to give up half the time.
Did you have another kid that you gave up on that we don't know about?
Was that? My father did. So I guess it's in my blood. He gave up 4.
Nikki, maybe you got a couple siblings you're not aware of.
No.
I'm a little scared.
No, his mother was smart. Got me snipped after.
Well, no, all I'm
Gina.
thinking is that the Batista,
Wait a minute, we do know there is another one running around, so.
Of me?
There's like hundreds of them. They're like freaking rabbits, and
Don't you
that's
have a
what I'm
hockey
afraid
player?
of. I'm thinking about all.
Don't you have a hockey player?
Well, the greatest thing was, and I can remember exactly where we were. I was
Wait,
dropped-
yes or no? Answer the question, sir.
Yeah, Vinny's mine. Yeah,
Okay,
yeah.
yours.
But I got
So-
my vasectomy reversed.
Okay.
Yeah. But I can remember it to this day. Nikki and Gina were both sitting in the back seat of the car, and I was in the front seat of the car. And I go, "Hey, listen, I got some news for you. I tell you, you're gonna have a baby brother." And he said to me, because I like to joke around a lot. He goes, "No, you're not. You slipped. You're clipped. You got no balls. You can't have any." That's exactly what he said to me. You can't have any kids. I go, "Well, they don't actually take your balls. Testicles. They operate in it. They come back. They switched it." He goes, "No way." He didn't believe me for the longest time. Like a week or whatever.
Well, I looked at my father who was 50, and I said, good joke, Dad.
48.
And my stepmom was what?
Yeah.
25. No.
Good answer, Nikki.
I'm not going to answer that.
Good answer.
But I look at them and I'm like, my God, you guys are like, you're about to croak and you're going to have a kid. Like, you're going to leave me with this. That's what I said. That's what I said to him.
Are you godfather?
That's what I said to my dad. I was like, Dad, is this the smartest thing to do?
Dad, you've done some dumb things in your life. This is the dumbest.
Is this the one?
It seemed like a good
But
idea.
we love Vinny. I love
It seemed
Vinny.
like a good
my brother.
idea
I
at
love
the
him.
time, right? There we go.
Absolutely. Well, it was supposed to happen 5 years earlier.
Yes. But I was just thinking, Scott, would you do a similar thing at 50 years old?
I got 2 dogs.
48. Never do it at 50.
48. 50, yeah.
I went with dogs.
Yeah.
With dogs.
So that was my one thing.
I'm very satisfied with 3. And I have to say that if my daughter was another boy, we for sure would have tried again.
But look,
and twins run in our family somehow. And then we would have had 5 boys and it would have been like.
Look how good I did raising you. Come on. I'm a natural.
True. Yeah. Grade 4. I might, as the chat says, I might get promoted to do the ice cream making.
We do need somebody to clean.
I know.
We do.
I think
Okay,
that's
so
grade 3. I think
I was going to look for somebody else. But if you want to volunteer.
Yeah, I might.
Oh, it's a volunteer position.
Yeah. Might get there. Yeah.
You do get control.
Nobody wants to clean the ice cream machine because it's a pain in the
You do get flavors. We're going to get toppings. I'll let you order toppings.
I thought that was a no-no. I thought Tom poo-pooed that.
When he's not here.
So what kind of flavors? So what are we going to do?
Well, last time, before we had to throw everything away, we had the pump. I don't know if it's Monin or whoever makes all the different pump. You pump it. So we had 4 or 5 different toppings. And then we had sprinkles and we had snickerdoodle.
Sprinkles or Jimmy's?
Oof. I don't know.
Sprinkles is the way I've always called them, but
Sprinkles.
Sprinkles?
Oh, okay. People call them Jimmy's.
I think Jimmy's is a brand. I think it's a brand of sprinkles.
Beth, you call them Sprinkles or Jimmy's?
Well, I say Sprinkles. My mom says Jimmy's.
But is Jimmy's a brand? I think it is.
Well, I think you're right.
I think it's a brand. It's like saying Kleenex. It's supposed to tissue.
Or Xerox.
Or Xerox or Windex.
It's a verb.
Yeah.
When you become a verb.
So I think.
That's what it is.
Where else would it come from? If it's not a brand, where else would that come
It's
from?
like being a Batista.
Now,
That's right. I got people saying there's 250 cc's of Batista in some freezer somewhere for contingency purposes.
There's some truth to that.
Yeah, between you and your dad and all that stuff, I'm worried about the things I did in college. Wasn't as safe back then.
Oof.
But I don't find those in my.
We're going to business.
23.
Ready?
I'm ready.
Yeah.
Top 15 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. On the off chance that Tom is listening, number 15, Amazon at a 12. For everybody else, Tesla at an 83, Nvidia at a 41, Shop at a 6, MSTR at a 75, Meta at a 14, Coin at an 82, PLTR at a 38, GLD at a 59, MU at a 32, AMD at a 29, Home Depot at a 19, Mara at a 37, Goog with an L at an 18, Microsoft at a 12, and number 15 for Tom, Amazon at a 12, rounding out the next 10, TLT at a 38, Boeing at a 51, SoFi at a 38, Intel at a 37, ENPH at a 38, Starbucks at a 31, and DJT at a 47.
Beautiful. Good job out of you.
Amazing.
Beautiful.
Listen, I got to look at this list because I've got option trades today every Tuesday and Thursday, and the market has not moved today. I mean, it's been, even the S&Ps are down 10. That's about as low as they've been. NASDAQ is up 6. Russell's down 19. The Dow's down 144. Russell and the Dow are the two weakest of the group, obviously.
News at 9.
What's that?
News at 9. Speaking of news at 9, so I guess the Bears fired the offensive coordinator.
I saw that.
So that's just Eberflus trying to hold on to a little bit of life that he has left. Because if that guy's not gone by the end of the year, although
if he loses this next game,
the 6 did show me something. It was great. How come men will get rid of their girlfriend or wife when they fall apart, aren't what they think they used to be, but a guy will stay with a team that loses for 30 straight years? Like, why do we stay with the Bears?
True.
Right?
That's deep. That's deep. That's deep right there, Scott. That's deep right there. I don't have enough therapy in me.
Why do we stay with the Bears? I think I need a new team.
I said that this morning when Venato was talking about.
It is amazing
the
how
Chiefs, but you have to be on the. You have to go AFC. You have to go AFC. Can't go on the same.
See, coming from New York, we're Chicagoans, but coming from New York, you can kind of like say, "Oh, I'm a New Yorker, but I'm a Chicagoan." Like Tom claims he's now pure Chicago.
But I am pure Chicago too.
Yeah.
Come to my teams.
So I just and now because it used to be you couldn't watch any other games. You can watch any game you want to watch now.
This is true.
Right?
Unless you live in Chicago and want to watch a Chicago sports team.
And then you can't watch it.
Then you can't watch.
Which to me, I don't
It
understand.
is unbelievable. They have
Unbelievable.
not settled this thing.
Unbelievable.
By now.
Yeah, it's crazy.
And like if you are a marketing partner, thank God.
I got one customer who sends me the scores of the Blackhawks.
Thank God we're not doing
as
the
they,
Bulls.
as they're happy. He goes, you ain't missing much. They're down 2-0.
We canceled the Bulls. We didn't renew.
Yeah.
I'd
be furious right now.
Yeah.
If we were still doing Bulls games.
Yeah, advertising with them. Yeah, right.
You know why we got out of that? Because we got great traders like you running this. So it's a good trade. It's a good trade.
He's really trying to get to grade 3. Are you 4A or B?
I don't know. About as low as it gets. I'm forgotten.
He's backfilling right now to make sure in case something. You got to go over the other side of the glass door over there.
Yeah. I clean the bathrooms.
Save us, will you?
I'll try.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Thank you for your time, everybody, and we will see you this afternoon, but stay tuned. Liz and Jenny next. Peace.
Peace.
Rock, paper,
scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know, he knows.
scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
In the 20 plus years you and I have been working together, our trading has really evolved.
Yeah, no question.
Completely.
Yeah.
And one of the things is that we're not married to a strategy.
Oh, of course, yeah.
If we can do something better, we will do it better. One of the misconceptions there is about being a professional trader is that we do such complex strategies, and that's just not the case. What we do are simple things very frequently every day. That might be taking 50% profits. That might be rolling a position to a different expiration or a different strike price. That might be selling some premium to improve the cost basis of a losing trade. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
I'm running snow leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just pictures of my fine self in photo booth. Face simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Hello, everybody, and welcome to the Liz and Jenny Show. Good to have you back, Liz.
Woohoo!
I'm wearing one of my birthday presents from Jenny. My first ever UK sweatshirt given to me by my best friend, Jenny Andrews.
The blue looks good on you. The blue looks good on you. You're gonna love having a child in college, and you could wear all the college gear and go to the college games. It's gonna be lots of fun.
It was so cute because John, our super producer, was asking me as we came in. He's like, "How's he liking it down there?" I was like, "Fun fact, he's not down there yet." So, but we were locked and loaded early. So he's going to UK next year.
I wonder when your orientation dates will be. When
I
you'll
already have
start.
it.
Oh, when do you go?
We are the first week in June.
Oh, okay. So it's summer.
We got to pick. We went to the first one. Yeah.
So fun. He's gonna love it.
I know. I'm excited.
And you know, they say that as they get closer and closer and closer to leaving for college, they start to like get into trouble and get on your nerves where you're almost like, get out. Time to get out.
Well, Jenny Andrews, I could have kicked him out this weekend because
I know.
And you got the earful of it because I was speed dialing you, being like, what do I do with this kid? So he was actually fine. He actually wasn't that bad. I'm glad I calmed down. There's a lot worse things that could have happened, but he was left alone while I took 5 singing girls to Disney World.
Oh, hey, yeah, we'll go. Let's jump into Twitter. Here they are.
Yeah, it was so much fun. We had the best weekend ever. When you take 5 theater girls to Disney, expect there to never be a moment of quiet. They sang from sun up to sundown. And that's why they ignored us. They ignored us and they were doing their own photo shoots. So Dan and I, every chance we got, we would do our own photo shoots. So they would pop into their
Oh, that's funny.
Reel every time they were looking. So they kept being, so I was like, meanwhile, they're there, we're over here. And I kept popping in certain things. It was super fun.
Super funny. Now, I love that they each have a character on their shirt. Did they buy those once they got there, or did they plan this ahead of time?
Oh, no, they got them when they got there because this was the 3rd outfit change of the day.
Okay.
They came as princesses.
Okay.
Yes.
So fun.
Yeah, it was super fun. We had a wonderful time. We had a wonderful, wonderful time. But I do know every lyric and every line of the upcoming Seussical musical they're in now. Every word I know now because I heard it at least 100 times. But it was fun. We had a wonderful time.
Oh, I mean, that was a nice thing to do. Take those good. That was when you won in your NFL pool, the $6,000. What did you do? Take these 5 girls to Disney. That was really sweet and a fun thing to do.
Yes. So, but meanwhile, my son was at home. He was not as bad as it seemed, but still causing more shenanigans that I wanted. But nonetheless, he is going to be 18. He's going to be 18 years old in 1 week.
So then he'll be an adult. Officially.
He's an adult. That's what I said. We got to let him go at some point. And for his 18th birthday, we're getting him a trading account. So you're going to hear tales from teenagers trading. We'll see how it goes.
Oh, yeah. TP loved talking about it. His daughter turned 21 recently. And I was asking him any good gifts for a 21-year-old. And then we started talking about what kind of gifts we could put in trading accounts. So he really loves that topic. Next time you have TP on, you'll have to bring it up.
Do you know I did that with your son? When he turned 18, I Zelled him money, but I demanded that he buy, I forget what stock it was.
What was it?
I want to say it was DraftKings.
It might be, and he has DraftKings, so it might be.
Yes.
It might have been.
I want to say it was DraftKings. I was like, I can't, I wish you could do it yourself. I wish if I deposited funds into someone's account, they would just wake up and there'd be a stock in there if it was fully paid for.
I know. Well, but then I think it's okay. If you send them the money and you say, put this in your trading account and buy the stock with it, I think that's a nice gift because who knows what it will be in a decade. You know, you never know.
Would you remember when I bought my nephew Under Armour and it went straight to 0?
Well, that happens. Speaking of things that have gone down, but Now, I posted this before it was in the news yesterday. I posted this today, but I took this before it was in the news because you were in Florida. I was in Florida. When I was leaving Florida, look at how busy the Spirit Airlines check-in is. It
doesn't look that busy.
It was. It was. So thank goodness, I hope all the people were okay on that Spirit flight. I'm not sure. I think a flight attendant might have been injured, but scary things yesterday, being shot at yesterday when they were trying to land in Haiti. But before
that, completely taken over. Like, it's insane to me. Haiti's completely under anarchy.
I don't know. I just think, I hope all the people on that flight were okay. And my post has nothing to do with that. It just has to do with the fact that how busy the Spirit check-in was. And while you were flying home, Liz, Spirit had a little bit of a takeoff.
It did, huh? Oh, it's down today. But
no, it's down today. Yes. So, okay, look at this move yesterday. Did you see that?
I do. It's woo! Look at that move.
Hey, it was big. It was big. It went from, 270 up to, how high did it get? 337.
Did you talk to TP about Save?
No, I try not to talk about it too much, but seeing the line at the airport on the heels of yesterday's move, and they have earnings this week, I think.
I thought they were last week.
I know, but then they.
14th.
I think they've been moved. I don't even know if it's the 14th for sure confirmed.
So the 14th would be Thursday, because today's the 12th.
And I think I read news. So when I was trying to see what was going on yesterday, I thought I also read news. Okay, so I thought I read news about JetBlue and Delta too. Where did it go? Is this all today? Well, something about, maybe there's not a deal with JetBlue and Delta. So that may have been why Spirit jumped up.
Oh, gotcha.
Oh, American Airlines loses U.S. appeal of ruling barring JetBlue alliance. So I don't know. I'm not sure. For something caused Spirit to jump up yesterday.
Okay, gotcha.
But talking about like giving doozies as gifts, I know that I had my son buy Spirit, and that was a long time ago.
Giving doozies as gifts. So I flew 2 different airlines down. I took Southwest there and United back. I think I'm officially a United fan. As for travel, it was just easier.
Because, okay, there are pros and cons to both. I have pros and cons to both. So if you're flying first class in United, great. Business class, great. If you are not, and you have to go to your seat and you have nowhere to put your luggage. You know this and I know this. We've been through this together. And your seat you're getting on later, but your seat's towards the front and there's nowhere to put your luggage and you have to walk all the way to the back to put your luggage to the back and then walk all the way back up to put to your seat. And then at the end, it's like, how do I get my luggage? I hate that about United.
Yeah, that is terrible. That is terrible. Well, that's going to happen with Southwest now too, because now they're going to have assigned seating.
I don't think it's happening for a while.
Oh, I thought it was December 1st.
No, because I have my parents booked on 2 flights in January and February, and it's still.
Oh, good. So they didn't. There's no assigned seat yet. Very good. Okay, now that being said, I want to give a big shout out to TP. He did a great job for 3 days filling in. I love the promo of him leaning back like this.
Oh my gosh, I love that promo. It's funny. It's funny.
He's an amazing fill-in. He is a wealth of information, and we are happy to have him. But that being said, it is very challenging to get in the account and manage, isn't it?
That's what I was going to say. I have not been in the account much. TP and I only got filled on one trade yesterday, selling a put spread in 6E. We tried to sell a put spread in ZB as well. Did not get filled on that. So the euro has been falling again today.
Wow.
Yeah.
Wow. Okay, so the euro's falling.
Just so people know, just to give you an idea of how big or small this is, because I wasn't even sure, honestly. I just thought, I wanted to see how much it moved, because I really didn't even know. I bought an M6E yesterday, and I'm down $56. So I bought it yesterday after the show, so probably when around here. And so this big of a move here, that M6E is down only $56. So not crazy, nothing terrible. I wasn't sure like how many to do because I didn't know how much it would move.
But I do like you vetting to see. I mean, that's right. I say thank you. Your dedication is duly noted because I like to know one versus the other. I do like to know that.
Yeah, and I guess maybe we should know it. And so Liz and I were on the phone today talking about some trades, and she was doing some trades that we don't usually do. And it's kind of like, how do you learn like how much this moves or what the tick sizes are, or your risk as this is moving around, like by doing. And I didn't really know how much I would make or lose if 60 had a little bit of a move. That's why I didn't know how many to do. So I thought I'll just throw in one to see, and then I'll decide like how many I want to do.
Yeah.
But
and I was scalping bonds. I bought ZB this morning and sold it out, and I put a GTC in, and Jenny asked me how much. How did I know what tick to put it in for? I was just guessing. But I scalped in and out of it this morning. So I bet you would have gotten out of your bond trade. My guess, put spread. What were the strikes were you trying to do?
ZB, let's take a look at it. You know what? I can't, now that I'm looking at this, I don't remember if he had us doing ZB or ZN.
Well, when I had him on, he said the risk reward was in the ZB because the volatility of the ZB was higher than the volatility of the ZN because it's more than double. Now, things change very quickly. In the words of, what's his name? The guy, Ferris Bueller, things move pretty quickly around here. So it might have changed in a day.
Okay, I can go to yesterday, and then it would be in canceled order. Okay, here we go. The 116.5, 115.5 for 17 ticks.
Okay.
116.5, 115.5. Let's go look at it. Because it's down today, so... and we, the weird thing is we were in the 17-day. He wanted to do the 24-day, but this is what was happening yesterday. I don't understand. We were very confused. Very confused. So the 24-day has no markets.
So 16.5, 15.5. It's pretty tight.
I know, we were close. 17 ticks, and today 21 ticks. If we loved it at 17, we really love it at 21.
Press that button, Jenny Andrews. I'm in.
Should I move it down one? So then we get the 116, 115 for 18.
Sure.
Looks better today.
Wait, what is your maximum profit on that? 281. Okay, I just wanted to.
281, max loss 718.
Yeah, that's fine.
You can see we have $20,000 in buying power.
Yeah, we're loaded.
So, so you did this morning, and I did this morning our SPX, and I feel bad. We've gotten some emails. I'm a little behind on emails. I know we've got an email on the Jajun trade that we have not yet responded to.
Or oh my God, did TP talk to you about the Jajun trade? Because it was hysterical.
No, we were so busy we never got to it.
Really?
Are you surprised when I say TP and I were so busy?
It's hard. But I bet he wanted to so bad. He loves it. I mean, to say he was like a little kid, it was the cutest thing I've ever seen in my entire life. Because, TP is very serious sometimes. We did the Jaju train. He did it bigger than we did it because he's, big by big. He's TP. And so literally he's halfway through a sentence and all of a sudden his thing goes off and he goes, Jaju! He was like the most excited I've ever seen him.
Oh my gosh. No, I wish I would have brought it up. I think I looked at the clock. I literally looked at the clock and it was 10:53.
I know. It's hard. I mean, he's a wealth of information and you got to pick his giant brain while you can,
So this morning, on the open, I took notes from our recent studies and I brought mine in. I used to do a $15 wide for just $2. I brought it in where I did a $15 wide for about $3.70.
Good.
So and it's interesting because we talk about, right at 8:30 where you get a little more juice in those options. Right at 8:30, put it on for 370. In like 30 seconds, it was 330. Like it dropped a lot in a very short amount of time.
That's if you can get filled right on the open, that typically happens. I've been doing just the put side. I did the put side this morning. I got out for my $100. I had to wait a little longer than I normally did, and thank God, because now I think if I wasn't out, I'd be tested.
I did not wait for $100. I did not wait for 50%. Again, I'm taking notes from Jacob's studies. I put in a GTC for 25%. And then I ended up, it was like $10 or $20 away, and I ended up just taking it off. So I took it off for about 20%. Yeah, right around 20%.
That makes sense, right?
So at least those came off pretty quickly today.
Yeah, for sure.
But mine wouldn't have come off for 50%. No way.
No, I don't think that. I agree with you. I don't think they're going to come off for 50. No, for sure.
Okay, so since we're working the ZB trade, and this is kind of what happened yesterday. We sat there. Now, if it drops a little, we'll get filled. I'm tempted to lower it down a tick.
17 is fine. That's what you're trying to do yesterday.
Right. Okay. And then I would think that should fill.
Let it sit for a minute.
Okay. And now I wanted to look at, there are a few things that we just haven't been able to get to because we have not been here. Weird turnaround because OKLO was up this morning, and so CCJ is still up, and so was you. That was you Energy Fuels. That was up earlier today too. They're all kind of not up like they were.
Well, oh, good. We're filled in bonds. Okay. You know what's crazy, Jenny, is you can actually run everything if you want, but OKLO has earnings on Thursday, and CCJ we already went through their earnings, didn't we?
Right. Yes.
Okay.
Yes. We did go through CCJ's earnings, and I think it went down on earnings, didn't it?
Yeah, I think it did.
No. Maybe it did go up. Maybe it went up.
I think it went down because I think I got hurt.
CCJ, I don't remember.
Not too bad, but hurt enough.
I don't remember. And you can't really tell from this chart.
No.
So when are OKLO's earnings?
No, I'm looking at Bob's chart. It's Thursday.
Okay.
So that's what I was going to say is this is going to be interesting because I do love OKLO and I'm in a good spot here because I'm ratcheted up where I can't lose in OKLO. But I'm going to.
I mean, you could lose like what you have, the value of what you have now.
No, but I can't lose on my position that I started with.
Like whatever the zebra's worth now, you could lose, but even if you lost that, you'd still be net profitable.
Yes. So I'm gonna make these numbers up, but say I am up $1,000 on my original trade that I've ratcheted up, I can only lose 400.
Right.
So, which would leave me still up 6. So can you lose the 4? Yes. I'm glad you are clarifying that. I don't want to be like, this is the greatest trade ever, but it is wonderful because you can lock in your profits if you're willing to give up just a little bit with the ratchet.
So what we have, and I just want to see what we have at risk here, $475. We have a diagonal where we bought the 15 in the money call, sold 21.5 call against it. It's worth $475. Now it's through that 21.5 call. We're in this 17-day. There's still $250 extrinsic value to come out of that. I think when we put that on, we knew we were going through earnings. Should we just leave that?
I'm cool with that for earnings.
No, you talk about
wait a minute. At least you can close that and reestablish.
We could.
Oh, no, Jenny. If you look at the days open, when I see a diagonal and I know there's profit in it, I know I can reestablish. This was a roll. We just rolled the call because look, it's 7 days, 21 days.
I know, but we rolled the call up. We removed the strikes. So let me just go to order chains here. Order chains. And then the last third, so you talk about, okay, in the last 60 days, we're up $421 in OKLO. If we lost this 470, well, then net be down. Maybe we change it to something where we have less risk.
I think you can reestablish that diagonal. Let's take some risk off the table. Let's go near term. Let's go near term and close for an up move in OKLO because then we know you're going to lock in a profit, hopefully.
Well, and let's have less at risk. Let's have less at risk than the 470.
Yeah.
So I'm going to make sure I get out of that.
Oh, yeah. Look, it's 450.
I mean, they're a little bit wide.
I know, but that's okay. I should get filled. There you go. Good job.
So when Liz talks about like short term, if we sell the 25 for 80 cents.
Sure.
And then in the 10-day, we could buy the 22. So then we only have $1.78 at risk.
That's not bad. And then after earnings, we'll reestablish.
Right. Sure. That sounds good. So that's one option. That's one option where that's $3 wide. We're paying $1.78. If it blows through it, we'll make about $1.20. I just want to look at TP and I were talking about a trade to be part of the bull run, but have less at risk is also, buying call spreads and then selling a put or put spreads to pay for it. So this is another way to, this has 22, 24, $200 in profit potential, but then selling this put to pay for it.
That's not bad either. I don't mind either of those. And that's less. So I mean, Jenny, I love this trade, not poking holes in it. That's not my intent right now. But I just want to say for every gimme, there's a gotcha. With that diagonal, all you can lose is 170. With this, you do have that naked put. So if OKLO decides to go to 10, you do have that risk. I like it. I actually think the risk in the trade makes sense, but I just want to be clear. With the other one, if we were up $400 and we pay 178, if OKL falls out of bed for earnings, we're still net up on the year.
Right. Now, here's when I tried to make the risk similar, where we're risking 200 to make 187 with
that's not bad.
A put spread. So it's just another alternative to those diagonals where limited profit, both scenarios, limited profit potential, defined risk, a way to stay in if you want to keep your bullish position going, but you're not going to lose too much if it falls down. The benefit of this is, it could go down a little and you wouldn't lose. The benefit of the diagonal is you have that long option for an extra period of time. So
yeah, I mean, I like all those, but I do like closing what we did to make it a less risky maneuver through earnings. Because say it with me, Jenny, raise your hand. Hi, Jenny and Liz, we're over traders.
Yes, I'm an over trader, absolutely over trader. Okay, I'm just going to give ourselves a little more profit potential. How about I'll get 60 cents on the 26th. So we have $4 in room instead of, because that's what I was kind of like, I want a little more than $120 in profit potential. So now we go 22, 26. We have a $4 wide for $2.
Right. Now, what I love about this is the Batista family did a great job this morning on the morning show, and they had a great question about synthetics. And it's such a hard general question. They did a wonderful job answering it. But I was thinking in my head, what's great here is if you wanted to, Jenny, you can layer your position. If you wanted to add a put spread into that, you can too.
Sure. No, and I honestly like having Nick and Tony on. Is it the morning show?
They did great.
They do a really good job.
They did great. I loved them.
They do a really good job. Speaking of Nick, him and his team have done an amazing, they had an amazing year on the road. And if you missed it, there's going to be a special coming out that you can sign up for. You can own the digital collectible of it. Have you signed up yet?
I'm signed up. I'm signed up for ours and theirs. And it is November 16th. It's going to air once, but you have to have you have to be signed up for the digital collectible before November 17th. And can we bring the art card up, John? Because we were told that there is one. But so there is a digital collectible that you can sign up for, and it's going to be aired once and only once, and it will not be archived unless you are signed up for the digital collectible. You cannot see it.
Okay, so hopefully John pulled up that art card for us.
I don't believe so, but that's okay. Like, we'll get it at some point.
I know we kind of put him on the spot, but
totally.
But I do want to make sure everyone signs up for those specials, signs up for the digital collectible. If they can't watch it live, then they'll have the digital collectible and they can watch it whenever they want to.
The art card is up now.
All right, read it to me.
I can't read it. I can just see it in the corner that it's up.
Oh, okay. All right. Well, all the information is up there for you to see how to sign up for the digital collectible. I love that we do this, and we film in such a cool space. It's
the only thing that my old eyes can read is stream them, own them. And it's very large. So you can stream them and you can own them. And there are two separate. The first one is coming out on November 16th. I believe that the one that we're in comes out in December.
Do you remember the extra stuff we had to film after?
Yes.
I'm anxious to see what they do with all that.
I hope this makes it in there so bad. And that's amazing. That was my favorite line you said. And they made you do it a couple times. I'm hoping that makes it in somewhere.
Oh my gosh. All right. So besides getting into our account, making some adjustments, looking at some positions, we are taking live tweets, and live tweets include the hashtag LAZJNY.
Yeah, you can go top down. We've got Jeff coming in, and then I want to go to Bob.
And I'll come back to Bob's earnings. So thank you, Bob on Fire, for sending these.
Oh, we can go to Bob. We can go to Jeff next. It's just Jeff coming in. But yes.
And Frank's economic calendar.
Wait, do we have anything, Frank? I'm asking you. I'm actually asking for tomorrow. I want to see if there can be anything while we're on the SIBO.
I think CPI is Thursday.
CPI is usually Wednesday.
I put it on my calendar. Let me look.
You usually look at how good we are. This is live breaking news. I think it's Wednesday.
Okay, on my calendar, I have CPI on Thursday.
Okay, then you're probably right if you wrote it down. But Frank, let us know. Let us know if anything's happening Wednesday during our show or that we should know about from the trading floor.
I think I was listening to some show, and they said CPI Thursday, and I put it on my phone calendar so I wouldn't forget.
Okay. You heard it here first, ladies and gentlemen.
And I don't have anything down for Wednesday, so I don't know. But okay, and so Jack Tucker, this came in yesterday. We never saw it. Let's see what he's doing. 0DT trades in SPX. First tranche was small. Last two were adjustments based on daily movement. Total premium collected 93.50. I mean, he's Jack. Talk about big by big. It's Jack Tucker.
Love it, Jack Tucker. I love the name Jack Tucker.
And this was perfect. I think this was perfect because I want to say we expired right in the middle of these two.
Ooh, congratulations, Jack Tucker.
59.95, 6,000, or maybe slightly over 6,000, but let me look. Yesterday's close in SPX, because I had the 59.95 put for mine, and I know that it ended up being above it, but at one point in the morning, I was nervous about it. Yesterday's close, 6,001.35. Slow clap for Jack Tucker. I can't hear you. Are you? Oh.
Jenny, CPI is tomorrow. PPI is Thursday.
I don't know how I heard that.
Thank you, Todd DeBella. PPI is Thursday.
All right, thank you. I guess I might need hearing aids. Maybe for Christmas.
CPI on Wednesday, PPI on Thursday.
So, in the in the Christmas, the Chevy Chase Christmas movie, the grandma is like the only one hearing the squirrel in the tree.
Yes.
This morning, my husband kept saying, "Do you hear the squirrels? Do you hear the squirrels? Do you hear the squirrels?" And I couldn't hear them at all. I was like, "You're out of your mind. Like, how did you, through the window of your office, hear the squirrels?"
Well, and Keith, she confuses C's and P's. So yes, you could hear the squirrels. I believe there's squirrels.
Well, my point is, when whoever said it on the news said CPI or PPI, I heard PPI or CPI when he said PPI. I put it on my calendar.
The only reason I think is it's the C is usually on Wednesdays when we're there. That's except for that one. I know they mixed it up on the what's it called? The election week.
I mean, look at the Jack Tucker. Those are big. He's got big, but again, we've seen a few of Jack Tucker's on here. They look amazing. And we're curious to hear how you're doing because he is big by big.
Yeah, he's doing a great job. I love when people share their results with us. That makes me happy.
Mm-hmm.
I like to see what other people are doing, so I appreciate that. Thank you, Jack Tucker.
All right, something else that I wanted us to look at, which now, help me out. This trade that says it's down $772 has been on for 53 days. If I go to order chains and go out 60 days, I go to McDonald's, order chain 60 days out, it says we're up $217.
We are. So go farther than what.
But that has been on for 53 days. So I'm beyond that. Like, it was an opening trade, sell to open.
No, so Jenny, let me refresh your memory because I remember exactly what this was. Okay, so I don't know why I remember this because I think it's just because it's McDonald's and you hate it. So we put on a bearish trade. McDonald's shot straight all the way up. And then on earnings, it crashed. And we're like, oh, look at this. We had a residual. So then instead of closing it and taking our profits, we kept selling things against it. This is our long.
Okay.
We made money on this trade.
So this was a diagonal, 300, 290, $7 debit.
Then I believe the one just rolled off, and then on earnings we were just left with the long, and then we sold something and then sold something again.
Oh, because then we were able to then sell to open for $6.15.
Yes.
And so we paid $7.
Yes.
$6.15, took in another $1.
Yes.
And now it's worth $2.
Yes.
Okay.
So we can just close that. That's a profitable trade.
Yeah, it's only 3 days to go. We might as well. It's worth $2. It's the 300 put. We're trading 300, so it's all extrinsic value there.
And take our cash and run like a thief in the night.
Yeah. That's it, Liz. I'm impressed. I'm impressed with your memory.
I know, right? Me too.
I see JD. Are all the Chinese stocks down?
I believe so. I believe that to be factually accurate. Hold on, I'm pushing things out.
PDD. Ooh, That hurts. I got extra long PDD yesterday. You know, when these didn't take too bad of a hit after the election, I thought like, okay, maybe it's safe to jump in.
I know. I did the same thing.
I doubled down in PDD yesterday. Nice.
It's funny.
What else? FXI down $1.11. Actually, I mean, this is the lowest we've seen it.
Okay, so it was
In a while.
FXI that I was talking to TP about. See that like green abandoned baby up there? I think we have our answer. When they abandon the baby, that means it goes in the opposite direction.
That's what I said. And then you said, no, they come back to get the baby.
No. I said if I abandon a baby, I think it should be they come back to get the baby. Yeah, opposite direction. There we go.
Crazy.
Okay, now can we go in? I'm just keeping an eye on the time. There we go. It's 10:30. Can we go to Bob's list? Because I know there's a couple things that are near and dear to my heart that have earnings tomorrow.
Sure, we can go to Bob's list. I just want to see if there's anything. You want to know what's crazy is we no longer have a scrolling amount of positions. It's just less than one page.
Yeah, so I on Friday, I forget it was Friday or Thursday, did not talk about the things that I closed live on the show because it's very hard to corral TP, but I did close a couple things on Friday or Thursday and pushed them out.
Here, and I just want to close a few things while we're in here. This is a December XHB Home Builders bearish trade. No, it's a Jade Lizard, 101 put, 120, and we're
1 penny away from our GTC.
Yeah,
let's get out of that. And that'll give you back quite a bit of capital too, $1,000 in XHB.
$1,000. Okay, so we're out of XHB. Just want to do a little cleanup. Ooh, and Walgreens down 37 cents. It was up yesterday.
You know what? Clearly Walgreens.
Yeah, I guess.
It's a crypto stock. It was up with the cryptos.
And this SMCI is getting killed.
Okay, so are we going to do the Jajun trade today?
Sure. I know you love it.
I just it's fun to scream Jajun. So I did it on Friday with TP. I did a $5 wide. I think he did a $15 wide, and he got out way quicker than us. I only took, I think when I closed it, I closed it for like a $40 win, maybe a $30 win. It was not a full 50, but I was leaving.
Now, you know me, I don't like to give up 290 because if it loses, then we're almost losing 300. I'd rather do this one.
Sure.
I'd rather, in case it doesn't, I think we could still get $50 just as fast. And I think that I don't want to lose 300 if it never comes up. So what do we do for it? 230.
It was a really interesting experiment. And honestly, we knew this. I mean, this is just an inherent knowledge that we have. If you take more risk, you can get $50 way quicker. And I'm not advocating that. I'm not saying, well, then widen it out to a $15 wide. Don't do that. But in full disclosure, when you do that, you can get $50 much more rapidly.
So how wide was TP's?
I think it was 15. It was either 10 or 15. And he got out quick.
So he paid about $7 for it.
I think so, yeah.
Yeah, so if you're paying $7 and you want 50 cents.
It's nothing.
Right.
Yeah.
Okay, so that's working. Now, anything else that looks like it had a big move one way or another?
How have our gold positions been? What did gold do? Gold was down. No, it was up yesterday, wasn't it?
No, I think gold has hit its month low is what I heard on the news.
Okay. Yeah, that looks like a month low because October hasn't been. We're not even that much in there. Oh, it's November.
This is September. So it's like you erased October.
Yeah.
And what do we have? We have just an iron condor, and it's probably through the puts. Oh, it's there. It's right there. It's at the put, but it's a December position.
But Jenny, take a look at this, and it's a scratch.
That's true. It's a scratch, and it's at our put. So
I would close that. We can look. We're going to be back into gold. Maybe today, maybe it's another day, but I would rather recenter.
I agree. If this is a scratch, then I'd rather have something else on. If gold erased 6 weeks of gains, maybe we do something like a Jade Lizard where, and I know it's expensive. It would be, this is so hard with the skew. With the call skew, it's so hard.
It is hard with the call skew. The Jade Lizards are very hard with the call skew. Very hard. Did you put the closing order in for the Jajun trade?
Yeah.
Okay, good. Sorry.
So I was going to say, sometimes when you're looking for 70 cents, you can find it by having, making 2 put spreads. So 2 put spreads will give you 70 cents. It's not bad. And then, so I only want one of these. So here you're getting almost $1. You have this $1 call spread. You have 2 put spreads. You're only risking $300.
I love it.
We learned this from a really young viewer who was like, hey, I don't want the naked put for 70 cents, so I'm doing 2 put spreads for 35 cents.
And if you wanted 70 cents, you're only going down to the 228, and it's going to be thousands of dollars instead of $400 in risk.
Right. So here we're risking 300. We have no risk to the upside, and I know that'll make you happy.
I love it all. I love everything about this trade, Jenny Andrews.
I'm going to go 95 cents. We're only risking 300.
Yeah.
All right. I left that on. That's working. So that's gold. Nothing's looking good today. Disney's down. We have 195 call in the weekly.
Okay, so Disney, if you go to Bob's list, go back to Twitter real quick and go to Bob's list, because I want to talk to you a little bit about this, only because Disney's on my brain. I want to go back to Disney World so bad. I love it there. It's my happy place. Love it, love it, love it. So I want to be bullish Disney, but look at that. Disney has earnings on Wednesday. So tomorrow we will have, that's why I know we have that long call in there because of their earnings, which we're going to do something about there. So Disney, JD both have earnings tomorrow.
All right, then we'll just leave Disney for now. It was funny because I was talking to TP about my trip, and I said we, just kind of relaxed, went on walks, hung out at the pool, and our most exciting part of our trip was when our friends came, you and your husband, and we got to get dressed up and meet you for dinner. Or meet you for drinks.
And it was so funny, Jenny, when I was talking about this. I wish I would have seen you more, because I, in my infinite wisdom, thought the 16-year-old girls would want to hang out with me, but they didn't.
Yeah.
And that's okay. You live and learn, right?
I saw the video they made. You made quite an appearance in the video.
I wasn't in it. My husband was.
Oh, well, the two of you, at least they put you in their video.
I wasn't in the video.
Well, your husband, at least they were with you enough to include you in their video.
When they posted the video, and I'll post it, it's a Susical video, it's cute. But when they posted the video, I was like, what the heck? I left Dan for 2 minutes and you interviewed him. I was like, where was I? Dan's like, oh, remember when you walked up to that kiosk and talked to that person for a minute and a half? That's when they interviewed me. I was like, you gotta be kidding me. Yeah.
Oh. Well, I was impressed that Dan made it to the video.
Yeah, you made it in the video. He's funny. Okay, so today, this is what's near and dear to my heart. I have a cart position.
Oh, I thought you were going to say Mara. I thought you have maybe Mara. I didn't know of this list. I didn't know what was going to be near and dear to your heart, but you do love Instacart, so it does make sense.
And I got to tell you, I've got Instacart down to a science. The second we landed in the plane, I order Instacart, I order pizza. I order one Instacart with liquor in it, one Instacart without liquor in it, so it can just be dropped to 2 different locations. And then I ordered pizza. My timing on this is flawless when we're in Florida.
That's what I was going to ask. To get to your Florida house or to get to your house here when you're coming back home?
Oh, I did it on both sides. So everything's delivered to the Florida house by the time we get there, which was, I'm chef's kiss flawless with my timing. And then I did the same thing when we landed here. So our groceries were delivered here when we got home.
Now, I do shipped and have my groceries delivered home when I'm coming back home, usually. But again, I'm still on the Shipped app, and I don't think they deliver alcohol.
Instacart does.
I know, but does Instacart go everywhere?
Yeah. I got my groceries from Pete's. Okay, that being said, this is what happened at Instacart, and I don't know how I feel about this, but I'm not going to complain that much because I like it. I ordered 1 jalapeno because I like them in my salads. 1 jalapeno. I think I have 20 jalapenos in the house right now. Like, what am I supposed to do with those?
Oh, did they just bring you 1 bag?
I think they brought me a pound.
Oh. Make some salsa?
I don't know. I'm going to drop them off at Trunk's house. She loves to make salsa.
Yeah. Yeah.
But yes, so I now have a pound of jalapenos that no one eats but me.
Okay, speaking of our friends, do you think, because this weekend we were supposed to go visit Michigan, and I was going to go up to the condo. I have a few things to do at the condo up on the lake, and then continue on to Michigan. That whole trip got canceled.
She's talking about the University of Michigan.
That whole trip got canceled. I canceled that whole trip. But so now I have all these reservations. I had all these dinner reservations made at nice restaurants. What do you think if I threw out on the Fun Club friend group, hey, who wants to go up for the weekend? Would anyone go up this weekend?
To Michigan City?
Yeah.
Like just to your house, not to your. So your reservations are not in the University of Michigan.
They're just all in Michigan City. Would anyone go up? What do you?
I think you're gonna get one Mandy, and that's it.
That's right. I'm like, I'm not even gonna send it if I'm only gonna get. Not that I need more than one person, but
it's my son's birthday. It's my son's 18th birthday weekend, and once again, please keep in mind, I'm never leaving him alone. So if you'd like him to come with, then maybe.
Well, that's right. You're never leaving him alone again. Big game tonight. Go big blue.
Yes, that's right, Jeff. I love it.
And Frank, thank you. Wednesday, 8:30 Eastern time, 7:30 our time.
CPI.
Yeah.
It is fun. It is super fun, Jeff. I will tell you that, having somebody, and Jenny too, having somebody to root for. Like, I'd never rooted for Kentucky before.
No, it's fun. It'll be fun to have someone to root for.
Ooh,
yeah.
Did you see whoever was playing the Bears? I don't know who played the Bears yesterday. Shame on me. I know, shame on me. I'm sorry. I'm a bad Chicagoan. Got 19 points.
Who had it in your pool?
I don't know. I got to look it up, but I know somebody got 19. It wasn't me because I think I had Atlanta.
Okay. All right. Well, I wonder who won. So someone won your pool. So then it resets it back to so the pool won't be as big the next couple weeks.
Correct.
Got it.
Correct.
Got it. Okay. So let's take a look. Let's go jump back and look at the Instacart. Spoos down 23.
I know.
This is the first down move we've had since the election. So we had the election, we had rally. Yesterday was like a nothing day. Today's our first down day.
Is the cryptos were carrying the market on its back yesterday. Otherwise, I think it would have been a down day.
I mean, the Russell, it was like a lot of the little Russell stocks were still up.
Oh, okay.
Because the Russell, yeah.
I mean, you did have some outliers. Like DraftKings was up $3 yesterday for no reason.
So if you look at IWM yesterday, look at the move it had yesterday.
Yeah, that's pretty big.
Right. Okay, here's what we're going to do. Instacart, CART.
Yep. Now, what would you do if you were me?
What do you have?
Long stock.
And
I just kind of waited because I figured I would do something. I mean, I'm sure I had calls against it. I think I bought my calls back or something at some point. Being like, I'm just going to wait for the earnings announcement. In my infinite wisdom, that's what I did. So I've been sitting on stock for a couple days.
If I had long stock.
But it's up so much. What do you think about...
If I had long stock, I might do something like... I don't know. If it goes up, you can still make money on your stock. But if it goes down, you can make some money back. Do you see what I'm saying? Like, you can make money up to 52, but if it goes down, you could recoup a little bit.
That's not bad. I thought you had a downside ratio spread in there. So my go-to move would be make the downside ratio spread as wide as I possibly can, which is actually adding risk to risk. But
Right.
you buy one, sell two. Can you do that on there?
Buy one, sell two, and then instead of taking in $1 credit, make it as wide as you can.
Yeah.
Yeah.
I might do something like that. Now, granted, I know you're adding risk because the risk is to the downside and it is to the downside. But if it goes down, you capture some. That's what I did in DraftKings on earnings when I had stock.
Yeah, and if you don't want it to blow through, in case it does go way higher.
I mean, if it goes way higher, great. It's a high-class problem. I've made money. This isn't something that I'm like attached to. Do you know what I mean?
Yeah. So if I have long stock, that's usually I would do something like that. And I'm more likely to
do the debit spread than the ratio spread.
Right. Unless I want to get longer.
And it's interesting here because it's if you start small, I have no problem. It's not adding a lot of capital to it.
Mm-hmm.
Because CART has been very generous with its margining. It's not like.
Oh, okay. So it's not a lot of margin. No.
Do we want to trade anything in Instacart?
I've been in this market. There's been so much to do. I have not really been doing earnings trades. Not too many.
No. Did you see Shopify was up a ton today? That had earnings last night. So at one point that's a big move for it.
Yeah.
At one point in my infinite wisdom, I had wound up, I'm taking risk off the table, and I had shop positions in, and I took them all off. I didn't have anything on for earnings last night. Which is fine, but I was just conscious of it. But do you think, I don't know what the earnings move was yesterday, but I'm going to assume this was outside the expected move. Don't you think?
It was a $90 product. I can almost guarantee you the expected move wasn't $22.
Right.
So that's one of the reasons I've been staying away from earnings trades, because I think a lot of them have been, kind of big moves. We've seen some big moves. So I have just been waiting till I'm kind of like Tony Batista now. I'll do an after earnings trade.
Yeah, I don't mind the after earnings. No, but what would you do here after earnings? Like with something like Shop, would you put it
Shop, I wouldn't even bother with it.
Yeah. Yeah.
And I don't know that Shop is that liquid either.
Well, today it is 39 million shares traded today.
It's weird. So when we were talking about the kids accounts and TP brought up NVIDIA, and I said NVIDIA was kind of expensive for Logan, so we bought this NVDY, but he went in here to trade this and to sell puts in here, and it said, and currently set to closing only.
So you bought NVDY? Why is this not up as much as NVIDIA?
So this is like and someone wrote to us yesterday, this is like an NVIDIA covered call fund.
That doesn't look right. Because if
you're selling calls against it, if you keep selling calls against it, if you're selling calls against something, you're not participating on like a huge rally, because it's like a slow churn.
It's a slow churn, but don't you think it should be up? If you look at the NVIDIA chart, it went up like this. This looks like it's down a ton.
So from September until now, it's gone up 25% from September till now.
I'm going to say something, and I know we can't do it, but I'd love to have the chart on top of a chart. I would love to see NVIDIA on top of this, because that doesn't look right.
So from September till now, it went up 25%. So, and this has gone up 50%. Mm-hmm. But they say it's a covered call fund, where if you're selling calls against it, you're not going to make 50%.
No, you're not. That's true. And you shouldn't. I agree with that. It was just interesting when we were looking at the charts.
It was just a cheaper way. Now, okay, and this is another question I had for TP, which I'm going to ask you because you've got JD coming up.
Okay.
Now, with these smaller accounts for the kids, like I said, for Logan, as far as crypto goes, he just has one Ethereum coin because it was much more affordable. He just has one Ethereum coin. That's it. Nothing else.
Which is basically almost 40% of his account.
Well, his account's $10,000. So
yeah. So
when he bought the Ethereum coin, it was like $2,200. So it's like 20% of his. It's like 20% of his account now.
Okay, because that's expensive. Yeah.
So anyway, I have been better off, and maybe in the long run, we would have been putting that money into Bitcoin instead of an Ethereum coin. I don't know.
Well, hindsight is always 20/20. It is.
Yeah.
So you have to, if you're doing it that way, you have to pick the winning horse, right? You could have taken $1,000 in Bitcoin and $1,000 in Ethereum if you were going to put 20% of your account in, because you can do that.
Right. And TP said, maybe just sell put spreads in coin, which that's also an option.
Right. It's hard. So does Logan understand selling put spreads, or are you managing the account?
No, he's only good at yeah, he doesn't. He can only do it all when he's home with me. When he's at school by himself, like he doesn't. I feel like he's gonna make a mess of something.
So right. No, I think derivatives are a little bit tricky. That's what my whole mantra, which I know is going to be bad, is I'm just going to let him gather assets until he's ready to understand derivatives. Right. So I'm not going to there is no, in my opinion, I don't necessarily know that I'm going to be selling put spreads in coin. So it's going to be more like buy something, like if you want to be in coin, you're buying one Coinbase. You know what I mean?
Right. Where I agree with you for them, if they can't do it, if they don't have time to do it and they can't do it, gathering some assets instead. And so when he sells puts, and that is kind of what I taught him, when he sells puts, it's only in products he could afford to take. So he would sell puts in like $10 products where if he gets assigned on that product, he can afford it if it happens.
Right. I get it. Because I want him to learn. I don't want to manage this. That was my ultimate goal. And I kind of talked about that with my husband. I want him to do it. I'm never going to press the button for him. I want him always to be the one doing it. And I want him doing it when he's in school. I want to be like, hey, look at DraftKings. I want to buy DraftKings. Hey, look at Penn Gaming. I want to buy Penn Gaming. I think we're going to be locked and loaded with gaming, but that's okay.
And he can do all of that. He can do all of that.
If it just stopped. Yeah.
But I never. The hard thing with spreads, and this is like a challenge in small accounts in my mind. The one thing, if you buy something, you have it. If you sell a put in something and it gets below it and you can afford to take it, then you have that underlying. If you sell a put spread, if you sell a $3 wide put spread for $1 and it ends up all in the money and you take that $200 loss and it expires, you don't have anything. And I think that's hard for some of these young kids to wrap their head around. Like, oh, well, I just lost $200 on that and now I have nothing.
Right.
Where if it were like he's got a lot of Walgreens boots and he's like, well, I lost money in Walgreens boots, but I have that stock.
Do you have that stock? And it can go to zero.
And it can. Yeah, sure.
It can. One of my ones, did you see Vanetta this morning with 23andMe? One of my ones that's going to zero.
But did you see, this was one of my favorite put sellers, and did you see SoFi went up to almost $15?
I saw that. SoFi to the moon, Alice.
So then it's like, then it becomes more of a challenge.
Then it's hard to jump in and sell puts here.
Yeah, I guess I don't mind the 12 puts here, but it was easier at $7.
Okay, so let me ask you this question. It is now 10:50. Let's take a look at where, I know we put Jajun on. We took less risk, which means it's even farther away from ours.
Well, but we're down less than what, I guess. So this is down $80.
Where is our short strike? 90?
59.90, 59.95.
Okay.
59.90, 59.95. And you could see the other one would have been this one.
Yeah.
And that 205 was 290.
I wasn't poking holes in it. I was just saying, because it's down, it's got to come up a little bit more than it would have if you have the other one. But it's the same concept.
They're both down. That would have been down $80. This is down $75, $80. They're both down about the same. My point is, like, if it really gets away from you, you've got I'd rather take a $230 hit than a $290 hit.
Yeah,
I don't like I'm close to $3.
I agree.
So I guess the question is, do we close it? It's 10 to 11. Do we close and take the $50 loss or leave it till the end of the day? The jury's still out on that.
The jury is still out on that. And we have to decide what we're going to do with this account. And part of me says, well, let's give it till 11.
Okay.
Whatever we do, we should do like either at the end of the show, even when it's over, we can just say, we're not taking this risk through. You know what I mean?
Well, and we have had a viewer saying, you buy those for 50 cents net over the long haul. It didn't like that trade wasn't good, but I think taking that $200, $300 loss, it takes too many wins to make up for it. So I almost think you need to set okay, I'm going to try to take $50 out of this, or have like a mental stop loss of if it gets to $100 loss, I'm out of it.
Right. And I kind of like that, especially for us. Or we can do the timing issue, being like, if we get out, great. If not, we're going to take our little loss.
Right. I think so.
Yeah.
Because it's easy to come back from a $37, $40 loss with a couple wins in a row. It's hard to come back from a $300 loss when you're only making 50.
Right.
So I kind of agree with that.
But let's give it at least until 11.
Sure.
And what we're saying on air is, even if we close it immediately after the show, it'll be pushed out. Do you know what I mean?
Did you push it out when we did it?
Oh yeah, I'm on it. Quick on the trigger.
Just back from vacation, and I mean, you were only gone one day.
I know, I was gone one day.
And honestly, the crazy thing is, the two of us, we don't have a vacation or time off on the books until spring break.
Yep, true story.
Yeah, so we're here. You've got me from now until spring break.
Locked and loaded.
We're not going anywhere over the holidays. Are you?
No, we are going. No, oh my gosh, no, we're not going anywhere. But I might take one day off after the wedding that I'm having at my house, which we'll talk about at a later date. But I'm having a wedding on a Sunday at my house, so I might be off on Monday.
Yeah, I would say so. I I would take the Monday. If I were hosting a wedding, I'd take the next day off.
And I would just like to say for the record, it is none of my kids. It is a cousin of mine that is coming in that is getting married at my house.
And it's a second, isn't it a second marriage?
Second
like
wedding.
small wedding, like small wedding.
Second
Yeah.
wedding, yeah.
Yeah, it's not like 300 people.
No, nobody's giving me a head count. Nobody's telling me anything. Just throw in a random wedding. It's gonna be great.
Oh, I have to show you. Mikey posted this yesterday.
Oh, Mikey, he did get my first Christmas card because I just got him in and I sent his cheesecake tins back.
Yeah, so Mikey made us amazing cheesecakes. They were delicious. And Liz mailed back his cheesecake. I don't even know what they're. Yeah.
You want to see, you know what? I should post it. The back of my Christmas card's pretty funny because and then I have like 4 other pictures on there that are like just our family screwing around. And it says in the back, it's all fun and games until Santa puts you on the naughty list. I thought it was super cute.
Yeah, that is cute. That's a cute picture.
Yeah, so I'll post the back because I actually like the back better than the front.
So fun.
I don't know which is the back, which is the front. You can't tell.
Oh, let's see what Mikey has to say. Happy Tuesday, ladies. Can you hook a brother up with an autographed picture of Jajun? Also, yeah. And now Jajun's away at college, but I'm sure we'll see him again. Maybe over Christmas break.
Oh my goodness, this is going to be the greatest ever.
Also, platform idea. Add the Jajun sound for closing trades.
Yes, when it hits, we go Jajun.
Yeah. All right, what else did Mikey have to say?
You have to read it because when it's that small.
Okay. You can chart 2 symbols. Oh, when you were talking about put one chart on top of the other, you can chart 2 symbols on top of each other on the web version of the platform after the show. Go get Scott to add that to the desktop platform. Mikey, you know everything.
Scott, we love you. I'm only saying this because I said I can't read this. Jenny, you're going to find this funny. It's not funny because it's true. We had to fill out a survey that you're going to do after the show. But one of the questions is, are you living with a disability? And I said yes, because I am right now with my 6-year palsy.
Yeah, I mean, right. You have a vision.
I'm visually impaired. I'm visually impaired. So.
You're visually impaired. You is technically a disability. If you ever decide to leave me, you could file for disability.
I got to tell you, Disney World was bonkers. It was fun, and I'm fine because I know what I'm doing. But like at some point, it looked like you would have hated this. It would look like Dan and I were total lovebirds. We had to hold hands most of the time because of my vision. I was like, Dan, I gotcha.
Liz, I know with your vision when you're in crowds how it can be for you because you can you see five of everyone out of this one side. And so, I always offer to hold your hand or hold your arm when we're walking out of the train station. So I get it. I was wondering, what about going on a ride?
So Rock and Roller Coaster totally messed me up, and I was like, I would still get on it just because I know it comes back, but I was totally discombobulated for like 10 minutes.
I can't believe you even got on that.
Love it. I love rides.
So did you go on? What about Toy Story Mania?
Somebody is saying that they got out of their Jajun trade.
Well, ours might be close.
Let's see.
No,
we'll have to look.
They may have done it at a slightly different time.
And you can do it in reverse. You can do whichever side you want. You might say it goes down.
Yeah, sure. You could pick your side. 10:56, almost out of time.
What are we at? We're down $25.
I don't know what to think.
Okay, is there anything else we need to close? We'll close this immediately after the show.
Just to compare, just so we keep seeing, because we always talk about the 2. So that was $290. Now it's $255.
So they're close. It's you're out $25, $50. Like they're close.
Yeah, they're close. They're
close.
They're close. I don't know. I don't know what to think. I'd like to say leave it for the win, but I think taking a $42 loss.
I think we take the loss because then it's 1 for 1.
Right. I kind of think we put them on at 10:30, and if we don't get filled by the end of the show, we close it.
I agree.
So
do it. You can close it. I mean, that's safe. We're up in the year. We're protecting our profits. It's all good.
175 credit.
You're so sad.
Wah, 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 wah.
That makes me even happier.
I don't even know if this is going to hit.
We'll take a look at it. We're going to make sure it closes. I kind of think that's what we do with the show account. You got to figure out a price point, your out point. Maybe it's one-time loss and call it a day, because then it's 1 for 1. If it moves, great. If it doesn't, great.
Yeah, we give it 30 minutes. It's supposed to be a scalp, right? It's supposed to be a quick scalp. So if it's a quick scalp and we haven't gotten what we wanted in 30 minutes, maybe we just close it. I feel like that's fair.
It seems
that's fair. So now that you're scalping ZB, that's your new thing. Do you have a set like out loss for that?
I mean, I think I would have had a real quick mental stop loss if it went the opposite direction. Just because I'm scared of it. I mean, I'm not scared. I'm new to it, right?
Yeah, you're not used to it.
Yeah, I probably would have been like 250 out.
Mm-hmm.
And I don't know even how much that has to move to get me 250. But I think that's what my mental stop would have been.
Hey, you know what? I kind of like it because you know me. I've been using the 0 days in TLT or to do quick in and out, and I'll just buy, I'll buy these that have like 2 cents, 3 cents, and I've been using these, and then I kind of set my size. Well, I'll do 5 of these and take a quick 30, 40, 50 bucks out of them.
And that's the same thing. It's the exact same concept, and it's defined risk.
And you can set your limit. Like, okay, you can actually set your limit of, okay, I don't want to lose more than $1,000 because if things change, it's defined risk.
Right, for sure.
So I don't mind those. So we've got TLT down $1 today.
That's a big move in TLT.
Yeah.
All right, but we are out of time, Jenny. I'm just looking at it's 11 o'clock.
All right, and did we get to everybody on Twitter? I hope we did. Hopefully we got to everyone on Twitter. Thanks for your tweets. And that's it. Oh, yes. Frank, the Jajun long call spread worked only if you bought in and sold out.
All right. Thank you, Frank.
So,
great.
Thanks, Frank. I guess you got to spend more. So maybe I don't know what to say. Then I guess I don't have a problem with the $300 if we're going to close it at the end of the show. I just hate the $300 hit.
If you're letting it go and it's a $300 hit. I know what you mean.
Yeah.
But hey, you live and learn, right?
Yeah.
And we're going to live to trade another day.
All right, everybody. Thanks for watching. Everyone remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you tomorrow.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
If you have any questions, feel free to toss them in the chat.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
What's up, everyone? Welcome back to the show. My name is Mike. This is Options Trading Concepts Live, and it is a little bit of an ominous day in the markets. We're seeing a red day for the first time, and I don't recall when we haven't seen that. Bitcoin, though, continuing to rally even just a little bit, sitting pretty at 87,870. Interesting. We are trying to get up to that 90,000 level. I'm seeing lots of bullish reports. I'm seeing lots of people celebrating their wins in the Bitcoin and crypto space. I'm seeing tweets about NFL players that took half their salary in crypto 4 years ago, and now they've multiplied their NFL salary. Just crazy stuff. You love to see it, though. But we've got a couple of earnings on deck. This week, we've got Disney coming out in a couple days. I'm writing an earnings preview there on the News and Insights tab on tastylive.com, so check that out. We had Shopify report this morning, up $23. Big move there. We have Spotify also coming out after the close today. Pretty huge expected move here. Almost 40 points for the weekly cycle on a $400 stock. Pretty big. And especially when you compare a 40-point move over 3 days versus a 46-point move over December, or at least almost through the end of the year, that's a big expected move there. So lots of volatility being priced in there. So we'll see what happens. Maybe we'll get some fireworks there. But yeah, it's been a crazy couple of weeks. Ever since the election results, we've seen some crazy moves in some very specific stocks like Tesla, you name it. Tesla actually coming down a little bit today. Coinbase is actually the craziest, I think. Coinbase and Tesla obviously are the craziest, but just seeing massive and rapid gap ups and down. So kind of interesting to see. It's kind of speaks to the speed at which the market has been moving recently. We've seen some volatile periods in the E-minis, but those volatile periods specifically to the downside were immediately bought back up. We haven't really had a period of time where the market was trudging to the downside consistently or consecutively. And even if it did, it seems to have reversed every single time this year. We've had a really strong bullish year. So, and that's amid all the interest rate questions and inflation questions. So just wild times. And we haven't even reached the Santa Claus rally. We'll see if that happens this year. And where we end up, but we are well over 6,000 in E-minis. It's a wild time to be alive and involved in the markets. We're going to walk through my portfolio today, but let me continue on. Let's get you guys a quick market update, see if anything else is moving. I like to look at percentage change. This is basically what I do every single day. Pull up the futures list, see what's moving to the downside, see what's moving to the upside, see if I can glean any info from that. But seeing a big increase in the 10-year and 2-year. Interesting. How's that compare to TLT? TLT moving to the downside. Wild. That goes against my position, but that's neither here nor there. What else is moving to the upside? Oil. Love that. Lean hog futures. Love that. Yeah, heating oil, natty gas, all moving to the upside. Anything that's under 1%, I kind of ignore. It's kind of your average chop, your expected chop. So I'm looking for big moves, something that's over 1%. We're seeing big moves well under 1% or 1% to the downside in some of these other products. Ethereum making a big move to the downside. Wheat futures making a big move to the downside. Copper copper's interesting. We had our last Westwater Wednesday with Thomas. We were talking about copper futures and potentially shorting this big rally. And this has been a really nice move. I believe the data said that after any 4% move or greater than 4% move to the upside, you typically see a little bit of a rebound, and that's especially true over the course of a couple days. So we're absolutely seeing that here, and we're seeing a continuation to the downside there. So let's see if that continues. I know we placed a couple of bearish trades in HG. This one was a $100 winner that I took off. I did a 45455 short call spread in December and then caught that reversal into the rally. That's what we were talking about. A 4% sell-off usually results in a little bit of a bid, but a continuation to the downside thereafter. And we're seeing exactly that. So love when that happens. We'll have Thomas on tomorrow for some more futures insights, of course. But yeah, not too much moving. 23 points up or down is now a fraction of the E-minis, considering the surge we've seen this year. So we should expect to see this move. Looking at volatility, continuing to get crushed a little bit, sitting around 14.8. We've seen that, of course, really just take a nosedive if we look at the VIX specifically. Looking at VIX futures, same story here, but this is to be expected, right? We know that this is how this behaves. We see spikes to the upside. How high that spike goes depends on, of course, the factors that are contributing to that volatility spike. But shortly after, and especially this year, we've seen spikes, but we've also seen almost immediate drops. And again, I think that speaks to the speed at which the market has been moving this year specifically. We are streaming live on the YouTube channel. If you want to join me there, just go to tastylive. You can see this video right in the homepage, and you can pop in your trade ideas, questions along the right-hand side chat. I appreciate you all joining me already. I've got the Cherry Picks newsletter link pinned to the top of the YouTube chat, so go get that for free. And if you missed yesterday's segment, we did a deep dive with Ryan, tastycrypto.com. Check them out as well. We've also got a newsletter coming from them every Saturday, so get that for free as well. But yeah, we really broke down the Bitcoin move. It was very timely because Bitcoin was surging, just ripping to the upside. And we talked about, how this is a crazy move for sure, but it's not outside of the realm of implied volatility really that we've been seeing. We've seen many 20% moves before within a week in Bitcoin, and I'm sure we'll continue to see those big moves. That's kind of what you sign up for when you have this new-ish product that everyone is now focusing on, and you're seeing volatile moves in either direction. All right, let's pop out all of these positions here, shall we? There's actually not too much to talk about in this portfolio. I do want to focus on a couple of things here. E-mini Iron Condor, 59.50, 59.75. This was one I put on with Katie. Sold it for 487. It's trading for close to max loss right now. We've got a couple $100 left in extrinsic value to come out of this thing over the next 3 days. But this is one I'm just going to hold on to because even though it's completely in the money on the call side, we can actually pull it up here and show you curve analysis. Here we go. So really the question is, when this thing was ripping higher, I didn't want to move up this put spread because the put spread, while it was worth pretty significant value at first, it became worthless pretty quickly. And moving the put spread up into a big rally would have given me a little bit of relief in terms of credit received, offset some of that pain that I'm feeling on the call side. But when you look at this chart, if I would have moved up this relatively narrow put spread up to like 57.70 or 58.50, something like that, I'm creating a very narrow range of profitability. Now, with only 3 days to go, that probably wouldn't have been too much of a problem because with 3 days to go, you still just need it to be within a range. But keeping the put spread down here and really just kind of treating this as a set it, forget it trade, because when I set up this trade, it was a risk one to make one trade. It was already relatively narrow. It was right at or just slightly within the expected move. So making sure that I have the ability to absorb a pretty big downside move. Like right now, the spread's in the money, but if we get a 50-point sell-off in the E-minis, which is really not all that improbable, if we look at the 3-day expected move, you can see that my short option on the call side is actually within the expected move. If I were to bring up the put spread, again, it would reduce some of that heat that I'm taking on the call side. I mean, I guess if I wanted to move it to like 5,900, 58.75, that's certainly something I could do. But what's the value there? 77 cents. And it removes my ability to absorb a 100-point sell-off. So when it comes to risk reward with iron condors, I'm usually just going to let them go. Or if I'm going to hedge it, I'm going to roll this spread out in time and then just close the untested side. I didn't do it this time because I wasn't expecting this massive continuation to the upside. I was expecting a little bit more chop. And we're still, not out of the woods. We can certainly get that over the next 3 days. And again, that is exemplified in the fact that we have the expected move at our short option. So if we get any kind of sell-off here, 50 points, 100 points, any kind of large profit-taking event where we see, a little bit of movement to the downside, we're going to be just fine with this trade. It's going to be a quick moving trade, so going to keep my eye on it, but just a little explainer with iron condors and why these days I would rather roll the call spread out and get rid of the put spread and give myself that unlimited ability to make money to the downside versus picking up a few pennies in terms of credit received. 70 cents is not pennies, but still, I want to give myself the ability to absorb a big downside move and not have it hurt me in this case. So just going to leave this on. It's cash settled, the E-minis, the product is, but I still need to keep my eye on this because the short call spread, if one of these options expires in the money and the other does not, my option is going to turn into an E-mini futures contract. So even though the E-mini futures contract expires to cash, you have to realize that when you have an option contract that speaks to a futures contract, the ESZ4 in this case, it will expire to the contract itself. So need to keep my eye on this. I'll end up closing this position or rolling it. And again, what's nice about the ability to hold this all the way to expiration, because it's a cash settled product, you can't be assigned to anything really on this position. If we get a move to, let's say, 59.60 or 59.57, which is really not that far away, I can probably roll this out for a small credit, maybe a scratch, but we'll cross that bridge when we come to it. Ideally, we get a continuation to the downside here, and I'm able to close this position. And again, it's going to be a fast-moving position. AMD, Celsius, Chipotle, all of these are in the same boat. We've got a long call option without a short option with it. All of these positions were from diagonal spreads or calendar spreads from earnings. The 32.5 call in Celsius at 25.80, it's trading for 55 cents. So I don't even have to pull up the order chain here. I know that if I have a long option with 40 days to go, that's only trading for 55 cents, there's nothing that I'm going to be able to sell against it that's really going to make too much sense. So this is one I'm just holding on to. If we get a move from 25.80 back to 30 in the next couple of days, maybe the next week, then I can revisit selling something against it, because this 56 cents is going to turn into $2, $3, which means short options above that strike are going to all of a sudden be valuable. So Celsius, holding on to that, not much to do there. Chipotle is an interesting one because Chipotle, seeing a nice rally today, picking up some value here, only down 75 cents on this naked long option. And this is a scenario that I'm hoping for Celsius. I had this long call from an earnings trade. I can pull up the order chains here. Had the 65 call for November 1st. So I bought this for $3.10, a small earnings trade, $5 wide diagonal spread, bought it for $3. The 65 short call fell off. There wasn't much value in rolling that 65 out in time at that point in time, or even rolling to a calendar spread. So left that on. And when Chipotle sold off, it really didn't sell off too far below 60. It was at like 56 or 57, as you can see here. The low was 55. It closed at 55.70, but it opened at 57. So wasn't too far off from the stock price. So I decided, you know what? I really only need like a $2 or $3 move to the upside before I'm at a scratch here. And we're seeing that today. So let's explore this, because this one might have some value in terms of selling an option against it. Because again, it's trading for $240 versus 55 cents. So let's see. Does it make sense? Okay, so the 3-day cycle, there's not much value here. I'm not going to create a $1 wide diagonal spread for 30 cents. I'm also not going to create a $2, $3, $4, $5 wide. These are all worthless. What about going to a weekly cycle? I don't want to go too close to my long option because that kind of kills the ability to make money on both sides of the trade if that's going to happen. The closer I get to my long option, the more it turns into a vertical spread. And that's even true if I'm in like the December 13th cycle, right? If I have a short option 1 week prior to my long option, it's basically a vertical spread. It's not technically a vertical spread, but it's going to have that same feel where if Chipotle continues to rally, I'm going to see losses on the short option and gains in the long, and I'm not going to realize full intrinsic value until much closer to expiration. If I have a short option on with 10 days to go and Chipotle continues to rally, let's say I sell the 65 strike for an example. If I sell the 65 strike for 10 cents, not something I'm going to do, but this gives me the ability to make money on both sides of this trade. Because if Chipotle continues to rally to 65 over the course of the next 10 days, that short option can still expire worthless and my long option can still appreciate in value. So that's what we're looking for with diagonal spreads. We're trying to give ourselves the ability to make money on both legs. Ideally, it's not always the case, but the further away we can keep that long option from the sale of the short option, the more probable that event can be. So that's how I think about diagonal spreads. I always want to keep as much space between the short option and the long option as possible. So in this case, do I want to sell this 10-day 2-point wide, 3-point wide strike? Not really. We're seeing a dollar rally today. I don't want to sell something that's 3 points out for 20 cents. Because what if we get a 2-point rally or 3-point rally? All of a sudden, that 20-cent option I sold is now trading for over $1, most likely. 17 days out, that's probably the furthest I would go. Cutting this days to expiration on the long option in half, we're right around 17 days. And even here, there's nothing really yet that I'm willing to sell. So yes, the 63 strike would create a $3 wide diagonal spread. I could sell that for 50 cents. My cost basis, if I were to do this, would reduce from 310 down to 260, and I have a $3 wide diagonal spread. So if Chipotle continued to rally, this trade would likely be profitable. However, 50 cents to cap my upside profit potential is pretty low, all things considered, especially when you look at a 90-cent move to the upside today, which is well within the expectation of realized and implied volatility. I'm making 50 cents just on the long option by itself. If we get another, and also this 60 call is gaining delta into this rally. So if we see a continuation in Chipotle, let's say it gets to 62 or even 63 by the end of this week, I'm going to be well into the profitability on this trade, and I don't have to worry about the short option. So in this case, still 38 days to go. I can still be pretty aggressive here with this decision. If this was like 25 days or 20 days, maybe I would do something different. Maybe I would close this position. But 38 days brings us into that Christmas realm. We've seen the market rally before around that time. I'm going to take a little shot here and kind of lean into this position that's down a little bit, but still a very small trade nonetheless. It's only worth $235. Even if this expires worthless, I have other positions that are much more meaty in this case. Celsius, again, just going to hold on to that one. AMD, this one's a little tougher. Much bigger loss here with the sell-off in AMD. Kind of surprising to see such a fall from grace here. And we have NVIDIA earnings coming up too. NVIDIA sitting near highs, sitting here at 147. AMD, not so much. So when people ask us, how do you find trades? How do you find products that you believe will follow a certain sector or maybe catch up to other products within a sector? AMD is certainly on the radar for a bullish position for me, given the fact that the markets are ripping to all-time highs, tech is ripping higher, NVIDIA is ripping higher, but AMD's not. So why? Maybe I look into that, see if there's a glaring reason why not. But we've seen AMD show us volatility. We've seen AMD show us the catch-up trade before. So this one's certainly on my radar, especially into a downside move of $5. So I've got the 165 strike here. There's things we can consider. We could close out of this position, retain $160 and just restructure a new position into the sell-off. So something like going to January, maybe a 145, 155, or 165, long January, short December. We could certainly explore something like this, especially if you believe that, let's say you think NVIDIA is going to rally on earnings and you think AMD is going to follow suit. This could kind of hold on to the coattails of NVIDIA for earnings if you believe something like that would happen. January options in here are not that expensive. $900 for an at-the-money option, 66 days out. 145, 155. Okay, so this is a $10 wide diagonal spread. I think what I'm going to do is I'm going to make this adjustment. I'm going to get rid of this long option that really needs a big move in AMD for this to really gain any kind of value. And I say that because this 165 option is well outside of the expected move. So even if you get a 10-point rally in AMD, this option goes from $1.60 to $3.40. Still a great move from a percentage standpoint, but from a nominal standpoint, I can make 3 times as much back by getting rid of this option and going into something like a 145 long January, short the 155 in December. Yes, it does increase my monetary risk. However, I'm getting into a situation where my long option that has much more time is trading for $9, and I'm able to sell a 155 against it for about a third of that value with about half the amount of time. So that's what I'm going to do. I'm going to get out of this. Let's close this, see if we can scrape a couple pennies out of this and restructure this trade. Get a little bit more time on our sides, reduce that decay in the long option, and still reduce basis with the sale of a short. Okay, so I just exited that position for $1.60. I'm going to sell the 155 in December and buy the 145 in January. All right, 598 filled. So just looking at the analysis of this new position, we can see, let's just push this to like the end of the month. Let's go to December 12th. And let's keep IV the same. And let's go to the theoretical P&L here. Let's get rid of the expiration zone. Okay. So here you go. This new position, if we push it to December 2nd, don't change IV at all. If we get a move to 155, the theoretical P&L is $300 and change. Again, that's about 3 times as much as what we can expect to get back if we have this 165 option in December. We're basically simulating a 10-point move. If we look at what it's trading for here, 165, and we look at what it's trading for at the 155 level, 10 points lower, it is about twice as much, or $1.60. So again, just getting a little bit more delta exposure closer to the stock price. And we're still hedging. If AMD were to continue to sell, this $3 option is going to hedge significant value of this $9 option that I've purchased here. So I like the adjustment. It moves you out of needing a huge move in AMD, gets you closer to the stock price, and gets you more time on your side. So let's see if we can get a rally here after that adjustment. DraftKings, year-long trade. This one has been nice. We finally tamed the beast that is DraftKings. I started this trade all the way back in December of 2023, sold a 35 straddle in February cycle. I wanted to just pick up as much premium as possible. So I went with a straddle instead of a strangle. I think the strangle was offering like $1.50, something like that. But I knew that I was going to be in this trade the whole year. I knew that I was going to be making adjustments, as you see here, plenty of adjustments. So I just wanted to start with the biggest credit possible. I've started this 35 straddle with $4 in credit. I've rolled many times for credits all along the way. I was assigned eventually at the 43 strike, but I've picked up $1,800.42 or $1,842 total extrinsic value all the way from the end of last year to now. So when you think about how volatile DraftKings has been and how many adjustments I've made, it's pretty crazy to consider the fact that I've rolled or I've accumulated a total of $1,400 extra dollars from this starting position that was already in February when I placed that trade. So $4 up to $1,800 just means that I can absorb plus minus 18 points from my current position rather than plus minus 4 points from the current position that existed back in the day. So DraftKings is a nice year-long trading vehicle for this reason. If you're looking for an equity to consistently sell premium in, it doesn't have to be downside and upside premium, but of course, if you're taking risk on both sides of the market, you're going to increase your total premium collected over time. You just need to avoid the huge gap ups and gap downs that a lot of these equities can exhibit. DraftKings, again, has been really tame. We've seen this thing rip around, of course. This is not just a sideways chart, but when you look at where it started at the beginning of the year, it opened at 34.60 and we're trading at 42. This is well within the implied volatility of this product. It's only up 6 points. When you look at the implied move for the next 60 days, 100 days, it's over 6 points. So we could even extrapolate, like we're at the November monthly here. If we look at the December for 2025, you're looking at a 15-point projected move. And right now we are up about 6 points from start of the year to now. So just an example of being well within the implied volatility of this product. And that has really resulted in why this trade has been so profitable. But right now we're looking at a P&L open of almost $1,100 and this trade's pretty much done. I took those shares at 42. I continued to sell premium against it in the form of a covered call. And we got the rally from where I was assigned and from the lows well below 30 all the way up to where we are now to 42. But I didn't really need it to go this high. I just needed it to get to 36 for my optimal max profit because my short call is at 36. Any profit above here is capped. But again, I've been rolling and collecting premium all along the way, picking up $1 here, $1 there, just rolling that short call out in time. So yeah, we'll do an anatomy of a trade on this thing and it'll be a nice review. The visual break evens widening out will be really powerful to see just because we've seen DraftKings fly around and we've been able to capture premium on both sides of the market for that one. So that's a nice one. Stay tuned for an annual anatomy of a trade for DraftKings, probably mid-December. We'll do that. Unless I get called away earlier, then we'll do it. Because I'm not going to really touch this position. I need it to stay above 36. There's 50 cents of extrinsic left. So if I were assigned on the short call, the shares would go away, position would be done. And if that happens before mid-December, we'll do the anatomy at that point. FedEx, worthless long call. This is, sometimes this happens where you have nice trades in here, and then all of a sudden you have this loser. This was if we look at this, where is it? This must have been, was this really that long ago? Wow. Yeah, this was a 310 calendar spread from earnings. Oh yeah, because after earnings, I've put on some new trades, threw on some new trades. But yeah, this is from all the way back in September 19th. So did the 310 calendar spread. The stock dropped. Nothing you can really do there. Held on to the long call, hoping for a rally. Didn't get it. But we saw it go from 310-ish or just under 300 to where it is now, 286. We've seen some pretty volatile movements. There we go. Had the 310 calendar, dropped to 250 overnight. Massive move. And then that was really a complete reversal of this earnings report. This was a crazy report to the upside, crazy fall to the downside. So FedEx has been nothing but volatile this year, even though the implied volatility is in the low 30s. So it's been a tough trading vehicle for short premium, especially strangle straddles, things like that. GLD. I've got the 250, 260 long call diagonal spread. Very similar setup to one we just put on an AMD. Long January, short December. Pretty cookie cutter setup here. The 260 short call, sold it for $1.60. It's trading for 42 cents. Could I do something with this trade? Like moving the 260 down to the 250? Maybe. Let's check it out. If we buy this back at 260 and sell the 250, I would pick up $1.12. I would turn this into a calendar spread, and the expected move in December is right at that 250 strike. This downside move today certainly doesn't help. You can see if I made this roll yesterday, this option has lost 60 cents. This option has lost 17 cents. So I cost myself about a 50-cent credit by not rolling yesterday, but you never know where the market's going to go. If gold had rallied today, this credit would be significantly higher than yesterday's. So you never know, but just to show you, you can see kind of what you cost yourself based on certain moves if you're looking at the net change of that day. Do I want to roll to a calendar spread for $1? I think that depends on how much I paid for this thing, right? Because this diagonal spread I put on for $5. If I convert this to a calendar spread, long January, short December, I would reduce this basis to $3.90. So I'd pick up $1.12. The question is, if I get the rally in gold up to my long option or at the money option, what is it trading for? I need it to be trading for more than $3. So how can we synthesize that? Well, let's just look at what the at the money current calendar is trading for. Long January, short December. Okay, so you can see here, even if we got a move up in GLD and we look at the current value of these options, long January, short December at the 240 strike, it's trading for $1.60. So there is still significant value in the December option relative to January. You can see there's a little bit of an IV increase here, differential in December relative to January. And there's a significant expected move differential, plus minus 880 relative to $11. So with all of this said, I'm not going to make this move. I would rather make this move into a rally, and I'd rather keep this a diagonal spread. If we get a rally of, let's say, 4 or 5 points from here, I could then roll my 260 call that's relatively worthless into a 255 call. I could roll this down in the December cycle, maybe pick up a similar credit, and still have a diagonal nature to this trade where I can make a lot more if it continues to rally. GLD in the December cycle, or sorry, the January cycle, we're kind of at the expected move with the 250 strike. So in looking at a chart here, we've seen a significant sell-off in GLD. So do I really want to hedge myself into the sell-off, or do I want to lean a little bit long? I think I would lean towards the latter. I would rather lean a little bit long here into this big sell-off in GLD, given the fact also that this is a $500 debit, and I still have 60 days for this thing to work out. We've seen this sell-off from 250, well above 250, down to 240 in a matter of a week. So going to lean, be more aggressive here, just stick with it. I'm not going to roll that short call down into a sell-off here. I'd rather roll to like a 255 into a rally, but we'll see if we get that in the next couple of days. TLT, 3-day option here. This is basically worthless. I need a massive rally in TLT over the next 3 days. This one was, we were trying to play for bonds increasing here, and we have not gotten that. The 93.95, we got there a couple of weeks ago, but kind of fell out of bed. This trade was never really too profitable. It was always kind of a scratch or a small loss. So looking for a big move there, not expecting it. Market's not telling us we should expect it with this trade being $11. So we'll see. Under Armour back down to 860. This is 100 shares of stock I've had for many, many years. Had that spike, but wasn't expecting to see it just completely reverse. But again, this is 100 shares of stock. My basis is at like 16, 17. It's just there. I'm just going to hold on to it. We'll see what happens with UA. They have earnings tomorrow, potentially. We'll see. I could have sworn they just released earnings there, but we'll see. But yeah, not going to do anything there. XLU, the 8077 put zebra. So I've got the long 80 strike in December twice, and then short one of the 77s. Basically picking up a strong delta here with very little extrinsic value. We're down a little bit, down 180 bucks, picking up a dollar today into this dollar sell-off. So you can see my zebra is working as it should, where I'm basically picking up 1-for-1 movement in this price here. But this is one I'm looking for a little bit more selling here. And this is kind of a portfolio hedge, if you will. But with a zebra, technically, you could sell an extra short call against your two longs because this has a remaining long call, which is how you get that 100 delta. But XLU, 17% IV, no chance I'm doing that. I reserve that kind of strategy for higher IV products where you can create the zebra to get the delta, and then you can sell an out-of-the-money option against it for $1, $2, something like that, where it makes sense to create this kind of synthetic covered call with a stop. That's kind of how I think of it. If you do a zebra and then you sell an extra option against it, that's pretty much what you're doing. You're creating a synthetic covered call with a stop loss. But in a 17% IV product, not even going to consider it. There's nothing to sell here. So let's see if we get the move. And that's it. Hopefully that helped. But yeah, going to pop over to the YouTube chat now. Let's get some trade ideas, questions on the board. Let's start with Maja. Hello. How to play Palantir bullish with a calendar or diagonal? Let's check it out, shall we? I actually got a text from one of my family members about Palantir this morning. So that's when you know that people are paying attention. All right, Palantir bullish with a calendar or diagonal. Well, we're in this range where I'm definitely going to January. Do we have earnings coming up? Doesn't look like it. Let me double check this. Palantir earnings. Okay, they reported November 4th. They had strong earnings November 4th. So we're out of the earnings realm. So with that said, I would just go to a traditional January, December. You can see you're still picking up plenty of implied volatility relative to January with the sale of the option in December if you're buying January. So let's see how this sets up here. Yeah, I like something like this. So the at the money option would be the 60 strike in January. I like to go at the money just to get that gamma exposure and not have a lot of monetary risk on the table. Just in case Palantir sells off aggressively, I would rather have the 60 option than the 50 option that's twice as much. My max profit on this 60-65 is probably like $300, something like that, maybe a little bit more. The max profit on a 50-65 would be, let's see, it would be more for sure. But you're putting on a lot more risk for the same idea. So I kind of like this, the 60-65. I think if you wanted to be more bullish, selling the 70 instead of the 65 is certainly within the realm of possibility. Paying $380 for this 10-point wide diagonal spread. That's really cheap when you consider that normally you're going to pay around half the width for something like this. The 60-65 for 280 or the 60-70 for 380. This thing is ripping to the moon. So that's why it's so cheap, because you're getting a ton of call skew here. When you look at the value of the 70 strike option, let's just do this. What's the value of the 70 strike between the two options? It is more than 50% of the value in December with half the amount of time compared to January. So you're picking up a lot of value there. You know what? I think I'm gonna go with the 60-70 diagonal spread. Although we have seen this thing absolutely skyrocket here, it's only $1 more to get significantly more max profit if this thing actually does continue to rip to the moon. And you're not really, you are reducing your cost basis, you're not giving up too much cost basis reduction by going to the 65 relative to the 70. Yes, it's worth $1 more, but your 70 will actually decay much more quickly than the 65, I should say. So starting with the 60-70 and then having the intention to roll from the 70 down to the 65, if you get a sell-off from here, you're still going to be well under your debit paid. So I kind of like that. Start with the 60-70, and then my intention here would be to roll to the 65 if we get a sell-off, pick up another $1 or so, and just stick with that trade. But let's see if this thing can go. Who am I to stop the train? All right, I'm going to route this. 380, let's leave it there. We're going to leave it at 380. Filled at 380. You know what's baking in the market? An uptick in CPI for an overreaction sell-off. H. Montero, you might be onto something here. Okay, so we've got CPI and PPI this week. And what's crazy is the market is not really caring, to say the least. I mean, we've got 3 days left of the week. November 15th, PM settled is the end of the week. And we've got a 55-point expected move in SPX that's sitting at 6,000. And historically, we've seen big moves on CPI and PPI reports. So, yeah, I mean, we'll see what happens, but implied volatility is, we're seeing a little bit in implied volatility because we checked this yesterday and it was like 60 points. It's now 55, but a whole day has passed. So yeah, seeing a little uptick in IV because the expected move is staying pretty bid, even though time is passing. But yeah, we'll see if we get a big move. If we get a big move to the downside, I'm already there for it. With this E-mini Iron Condor. So I think I'm synthetically already playing a downside move for the CPI PPI with this trade. So we'll see. We shall see. How would you trade Tesla coin Palantir at this level, and what strategies do you prefer? I like diagonal spreads. Calendar spreads can also work as long as the short option is in a really near-term cycle. Diagonal spreads, you don't have to do that because you have the delta. So like going back to Palantir, how would I set up a calendar spread? I might go to January or December, but I would be selling the option in this cycle. So let's just say, let's say I'm bullish Palantir. The 61 doesn't exist in December or January. So we'd have to go to the 60. If you're neutral to bullish here, I might do something like this, like buying the 60 in December, selling the 60 in the 3-day cycle. I mean, look at that value. You're collecting $1 for a 3-day option relative to $3.75 that you're buying. I still like to diagonalize these just because these products have had huge moves, and you don't want to really get stuck with a calendar spread by trying to reduce basis and not having delta. So I still prefer to have the diagonal nature in this trade. And that also enables you to pick up a lot more premium, right? Like the one I'm routing, or the one I've got filled in, the 60-70, 10 points wide for 380. So if Palantir just explodes 5 points tomorrow, like this will be a significant winner. Even if the value of the 70 call increases dramatically, the 60 call will also, because it'll have intrinsic value. So I like diagonal spreads, and it also keeps your risk defined, right? You can play the upside here or downside and not risk a lot of value. You can have this thing fall completely out of bed, and the 60 strike will still be worth something. The 70 strike would probably be pretty worthless, but I'm not, this $3.80 debit is not going to go to zero anytime soon, unless Palantir goes to like 20 or 30, which is possible. But risk defined diagonal spreads allow you to take advantage of the implied volatility structure, especially to the upside in these products. If you're playing to the downside, like let's see, Palantir, can I set up the same trade to the downside? Probably not. I mean, I can, but it's not going to be as cheap. Long January, short the 40. See, look at that. So long the 60 in January, short the 40 in the December cycle. The 40 is basically worthless. So this just exhibits the call skew that's baked into here. I'm sorry, the 60-50 is where we need to go. 60-50. But still, the 50 is trading for 75 cents, 80 cents. The 70 to the upside is trading for $1.20. So you're getting a significant call skew boost. So you can still do this to the downside if you want to fade this move. It's going to be a little bit more expensive, but still well under that 10-point wide diagonal spread. So I think for all of these products, Palantir, Coinbase, Tesla, that's where I'd be going. Coinbase, Tesla, they're of course more expensive products. So I might be forced to lean into more of a calendar spread there. But because they're more expensive, you're picking up plenty of value with the sale of a short option. So like, let's just go here, the 310. Like let's say you're bullish or bearish Tesla for this week. The 310 short and the 310 long, it's still a pretty penny, don't get me wrong, but you're able to reduce the value of the option you're buying. With 38 days to go, you're paying $1,500. You're able to sell an option for $400 against that with 3 days to go. So the disparity of value relative to time, like this, if you were to just divide the days to expiration, 38 divided by 3 is just over 1, or 1/10. We're getting 40% of the value, not 1/10 of the value. So that shows you how much implied volatility is pumped into these near-term cycles. So regardless of what is done, I think it's a short option makes sense to sell against it, especially in the case of a calendar and diagonal spread. Is there a feature on the platform where I can find the P&L on closed positions? So far, I've checked the history tab and order chains. Good question. I think the history tab shows you your net value. The percentage I don't think is on there, but I can pass that along as a suggestion for the future. But you can go through the order chains. It might be on here if you just click these arrows. You can see different values there along the top right corner. Love Spotify. When are they splitting? Good question. Maybe if they reach 1,000, we'll see what they do after the close today. Expected moves 40 points. Expected move for the rest of the year is 47, 50 points. Crazy move. So this is very similar to Disney too. That was something I noticed with Disney. I'm writing that earnings preview for Disney. It should be out later today. But $6 expected move on a $90 product, pretty high. But when you consider $6 expected move in the weekly relative to a $7 expected move for December, it's crazy. It's like they're saying, we don't care about the rest of the movement for the year. It's all being priced into this earnings trade. So I will definitely be trading Disney tomorrow. Tomorrow's the 13th. They report 14th before the open. So tomorrow is the day to put on a trade if you're trying to create symmetry around the most active stock price. So I'll wait for tomorrow and we'll throw something on there. Do I see a calendar spread on NVIDIA, possibly combining earnings and December Fed meeting. Might be a long shot, but I don't know. Still new to calendar spreads. Yeah. NVIDIA's $150. Earnings November 20th. $14 expected move on a $140 product. That's 10% of the notional value. And for me, that's a high expected move. Normally, we'll see 5 to 10% of the notional value of the stock price be priced into the earnings cycle. Now, this number is going to probably decrease because we still have another week before we get into the earnings cycle. But yeah, calendar spread, diagonal spread. The December Fed meeting is the December 7th, if I'm not mistaken. Let's see, December 18th. Okay, so yeah, so you'd have to go to the December cycle. So either way, like if you're doing a calendar spread or a diagonal spread in NVIDIA, I'm going to December or January anyways. So that would entail or that would include the Fed announcement. But yeah, if you're playing it to the upside or downside, I would still do something like this, like long January, either to the upside or downside, and then I would just sell this 10-day cycle. So like a 150 at the money, 160. This gets you into the earnings cycle. And the nice thing is, if this fails, or if it doesn't move and you want to roll it out in time, you can roll this short option that has the earnings premium into the December cycle and pick up some more value. You can see here, the short option in December is trading for almost $6. The short option for the 10-day is trading for $3. So assuming that 10-day option goes to 0, your December short gets crushed from an IV crush a little bit, which it will. 57% is going to come down to the low 50s, if not lower. So you can make that roll for $1, $1.50, something like that. So kind of gives you an out if you're incorrect on your first trade. But yeah, we're in the time where I'm going to January for long options and I'm selling the weekly, or I'm selling December for more standard diagonal spreads or calendar spreads. Same story. How would you trade a 10K Johnny account? What number of positions would you open? Target risk reward, buying power, any specific strategies for a smaller account? Yeah, smaller accounts are tough to be really small in because what you'll find if you sign up for our digital collectible is that I talked about trading small and using statistics in all forms of trading. So regardless of whether you're trading options, futures, stock, you need to just understand that if you're consistently involved in the markets, you will have positions that go against you in a small way, in a big way. You'll have winners that are big, small. So you need to account for this fact that you will run into problems and you'll have moments of glory. But you need to trade small all throughout, because if you don't and you have a really bad period, whether it's a week, month, whatever, if you're trading too large, it's gonna be really problematic. So 10K account, it's harder to get really small because even with defined risk trades, you're probably doing like 5-point wide spreads, 3-point wide spreads, something like that. To trade undefined risk in a 10K account, you really need to have like a $20 stock or a $15 stock, $25 stock, because 10K account using 5% of buying power or less is less than $500. So that's a 5-point wide spread maximum, or a buying power of $500 or less. So even DraftKings, I think, is a little bit higher than that. But DraftKings is a tough sell for a 10K account because this thing flies around. So I would say I would probably be in mostly 5-point wide spreads, and just picking my spots, being more patient, waiting for big sell-offs to throw in a put spread, waiting for high implied volatility environments for iron condors, waiting for products that have high implied volatility to create really wide ranges, because defined risk trades don't have a lot of defense that you can deploy. So, you can roll that spread out in time. That's pretty much it. So picking my spots, being more patient. I probably wouldn't have more than 3 or 4 positions on at any point in time. If the VIX explodes, maybe I would go more than that. But with defined risk trades, because I know that if it goes completely in the money, there's really nothing I can do, I'm going to be more lenient on keeping more capital on the side and just picking my spots. Where an undefined risk trade, you can absorb that, you can roll through it. So it's easier to trade in a larger account. It's harder to trade in a smaller account. Yes, Shane Waldron is out. We'll see what the rest of the team does. Wouldn't that be funny? Shane Waldron out and we just start smoking everyone. Ugh. When you prefer a ratio call diagonal to straight, I prefer straight diagonals almost always. I would say the times that Nick does ratio diagonals is when implied volatility is super high. So like in Palantir, $60 stock, like if you convert this, the long 60 and then short 2 of the 70s, your break even here, if we were to just look at the one we have on, your break even is still significantly higher than your spread, right? Because you have, with a ratio spread, you have this embedded intrinsic value. So when you look at the extrinsic value or the expiration risk, you're sitting around, 78, because you have to take into consideration that this is a debit cost and not a credit. But you can see your break even is all the way up closer to 80 with the stock trading at 60. So I would say high IV products is when I would deploy the ratio, but I like to just keep it simple because, like, again, what happens if you get a big gap up and you're ratioed and now you have losses where you would have had a big profit? So I like to just keep it straight, keep it simple, but high IV products, high IV environments is when I would deploy that. One last one here. Did my first vertical MSTU. Sold the 98 call, 95 call. It says there's max profit. If I buy to close the option and keep the long call, does it become unlimited profit again? Yes, it would. But let me just double check here. Wait. This is a $140 product. I think we need new strikes, or maybe you bought the 95 call and sold the 98. Yeah, okay. So you're deep in the money. So, I mean, even though this is deep in the money, it's $3 wide. You're probably able to sell out of it for close to that. These markets are really wide though, so I would not leg out of this. The problem is, if you buy to close this short position and keep the long call. So if you buy to close the 98 call, you are buying that call for $6,000 and you have a long call that's worth $6,000. So let's say you buy to close the 98 and then MSTU falls 10 points tomorrow. Your spread that you probably bought for $100 is now at $1,000 loss. So these spreads, we don't do that for, especially deep in the money spreads. If we're going to do anything, like let's say you bought this call spread and the MSTU dropped below 95, then we can buy back the 98 that's worthless because we don't add any risk to that position except for the debit we pay. In this case, you would be multiplying your risk in a huge way. So I would just close this position and just deploy a new one if you want to stay in it. All right, that's it. Thanks for tuning in. Hopefully this was helpful. We'll be back same time, same place, 11 a.m. Central tomorrow for some more content for you. We'll have Thomas on. We'll take a look at some futures. But yeah, if you want to reach me, you can find me on Twitter. I'm at Trader Mikey B. My colleagues, Nick at Trader Nicky Bat and Katie's at Trader Katie. If you want to sign up for those cherry picks, tastylive.com/newsletters. They'll be coming out shortly here. But yeah, stay tuned for some more content on tastylive.com as well as the YouTube channel. We'll see you tomorrow. Peace.
Your eyes do not deceive you. You do not see Chris Vecchio on the screen, and that is because he is out today, but you're in trouble because you've got me here steering the ship. Lord only knows what can happen now. And Mr. Jamal Chandler sitting in. Sir, happy Monday. How goes it?
Happy Monday, my friend. Folks, you are in trouble. That's right. Ilya and I have controlled the ship. It's our ship. He's the captain now. You know what I'm saying? And I'm assistant captain. So we're here. We're about to have a little bit of fun today. I'm hyped up, man. Weekend was good. Pretty chill. Like I said, low key, as we were talking about off air and heading into the show. I'm kind of like, since you asked, I'm starting to fall back into the world of kid sports once again. My youngest kid now.
Here we go.
I know, dude. I know. And we've like, look, I've done it before. I got a kid, my older son who's a junior in college now. So we've been through this once before, 10 plus years ago. I have taken my time, but it's been inevitable. And now he's back into it. So we went to a couple of basketball games and he did his thing, but it's the process is starting all over again. And, I'm not really looking forward to it, but I know a lot more. I know a lot more this time around. It's kind of interesting. I'll just say that.
I haven't quite started that deep down the lane yet. They're still a little young, but we took them to their first big concert this weekend. We went to go see this great kids musician called Danny Go, and they had a blast. They were in there. It was a packed house in Oakland. They were going crazy.
That's awesome. And were they all dancing in the aisles and whatnot?
Dancing in the aisles, jumping in the seats, the whole thing. Place was packed.
Ah, that's pretty cool, man. It's even cooler that you have Oaktown so close by to be able to do that as well. That's dope, man. I love it.
It's awesome. It was a great venue. Hat tip to the Paramount Theater. It's an amazing spot.
That's cool. I never heard of that one. I'll have to check that out sometime. But that's dope, man. I love it. Definitely. I'm starting them young. You got to, man. Dude, what do you make of the last, I guess it's going on a week. It'll be a week tomorrow. The last week of trading. I mean, it's been bananas. What do you make of all of this so far? And
that's the right way to describe it. Last week was absolutely crazy. And if we got the platform up here, we can take a look. I mean, the week sort of broke down as everything before Tuesday, and then everything after that. So if we have a look here, I mean, you can clearly see where the election is. I mean, that much is directly on the chart. and then after you have this kind of interesting rounding out, which if you're a follower of candlesticks and you see one like this today, it sort of makes you go, It doesn't get you fully on board with saying, oh, this is something I'm going to fade. I don't think we have all that here, but this, especially on shorter term time frames with the momentum, and this is, by the way, RSI down here, if you're keeping score, the simplest of all the oscillators, just the way I like it, that this is setting higher highs and this is fading. It doesn't necessarily mean it's going to turn, but it does mean that it's slowing. Just from an arithmetic perspective, just the way that indicator is counted, it suggests momentum is fading. So what does it mean? I guess it doesn't completely fall outside the realm that after such a wild move last week, you'd have a little bit of rethink, a little bit of digestion, but I'm certainly not looking at this as anything to fade. I'm a little bit skittish to buy in. I don't have any direct exposure to it. I was leaning a little bit short into the election, and obviously that did not work out. Thank God for vertical spreads and
for defined risk spreads.
For defined risk spreads and hedges and other things. So the gold short worked, which we'll get to. The bonds short worked, which we'll get to. The dollar long worked, which we'll get to, and all of that was just enough to offset the pain in equities because, good Lord.
Yeah, I mean, this says it all. You're right. Like it's been volume, right? Days of markets moving higher, and obviously this one stands out among the other ones. There's a ton of markets that are some of this were doing this as well, which we'll get to. But just equities alone. So I have had for the last it was since I guess it's about 2 months, going back to September. I had on long MES contract, long MNQ contract. And I was short call spreads and SPY and in Qs. That was kind of my trade. It was kind of like a quasi covered call, if you will, right? And it worked out really well, actually. And I even held it through the last couple of days. This move higher even worked. Now, of course, my short call spreads were pretty much in the money at this point, but it was fine. Like it ended up working out well because of the offset of the futures contracts. Now, it's interesting because I was trying to decide late last week, what do I want to do with this position? And I eventually even did the similar thing with the Dow. I was long MYM and short DIA call spreads on the upside. And again, a nice winning trade for me. I was just trying to decide, what do I want to do with this? How do I feel? And ultimately I had to come to the realization that, when I put this on like 2 months ago, the landscape has fundamentally changed in a very big way, just even in the past week. And so I just decided to take it all off today. It's like just going to start fresh from here. To your point, I don't feel the need to get long any of those futures contracts. The ones that I just was long, I decided to just take those off, just take the whole entire trade and spread off. I don't feel the need to dive into this right now in a FOMO way. We'll just, let this ride out for a little bit and we'll figure out what we're going to do from here. But things have definitely changed big time. When you talk about what's going on with equities, you see what's going on with a lot of the banks. It seems like a lot of banks are still continuing to see some upside. Healthcare a little bit. You see some changes going on in there. The whole idea of what they talk about, that sector rotation, right? When you get after an election, it's happening, bro. Like it's happening.
Oh, for sure.
Now. You know what I mean? And so I'm just trying to figure out what's next.
I mean, if we look at just the sector breakdown today, consumer discretionary seemingly leading the way, and financials right behind it. So just real pro-cyclical. The weak spots, such as they are, and there's not many, but actually tech, of all things, is the heaviest. Real estate behind it, materials behind that, but that one's minor. So let's call it real estate and tech. And those are the interest rate sensitive, or some of the interest rate sensitive pockets of the space here, which is a perfect segue into looking at the one of these that's probably the most interesting in terms of forming some kind of a setup that may become something here. So the NASDAQ has been soggy basically since July, right? Dow hit new highs. S&P hit new highs. This did not. And now this is sitting right at that July high. And the price action here is starting to get curious. If we zoom in here, and I was looking at this earlier, and it was a little unconfirmed for my taste yet, but this is starting to look like maybe it's beginning to form a little something. So if we take a look back at the daily, and I'll just put this line in here to orient us. There's the high. And if we go back into the shorter time frame chart, this is an interesting failure here. So we get up to it, we hold it, we poke above, and then break back down. That's an interesting kind of misstep here, even on an 8-hour. So I'm sort of looking at this down here and going, are you going to give me a little pullback confirmation? And then can I maybe look at a put vertical into here? And then we'll see. And maybe that's it.
Yeah, no, I like that idea. And it's, you know what, you make me realize too, when I look at this, you can even go take it a step further back. I mean, the last time we saw some serious red was that week of all those earnings, right? Like just even that week before the election, right? Like that's where we saw the Google did well, but I mean Meta and Apple and the like did not do so well on earnings. And of course, it's almost like it's forgotten about after the election, right? Like it's totally just forgotten about. This is what I mean. Like things have changed, and so whatever we were thinking a couple of weeks ago definitely has changed a little bit. So you're right. I'm looking at this near-term action and trying to figure out what's going to be next. Is there going to be some failure before they try to take out those highs in a meaningful way, or are we just going to dance on this line for a little bit as everybody's just not as interested in tech right now? They're a lot more interested in, like you said, banks and consumer discretionary, right? I mean, you see the way Tesla's been flying, of course, the last couple of days, and that's a whole nother story. But I'm trying to figure out too, will this thing give us an opportunity? Will there be even any vol anymore this year, Ilya? I feel
It'd be nice to have some vol.
I know, and I almost feel like on the one hand, we might have seen like the last bit of high vol for the rest of this year. I'm not exactly sure what brings that back in. I don't even know if the last Fed meeting is going to do that or what's it going to be. I don't think it's going to necessarily be CPI this week. Like what brings any vol back for the rest of the year? We might be done in the way of that, and we might have to look to 2025 to be able to sell some vol again. We'll see.
Yeah, I mean, for me at this point, there's so little vol out there that if you're going to do a thing, and in fairness, this is up my alley, I like this better, but it's a directional sort of thing out there. It's difficult to be just a passive premium seller out there just going, everybody's freaked out. No, they're not. No.
Yeah. No, they're not.
It's just not there. It's just not there. Which I'm always kind of pulled to think about it in two ways. On the one hand, you can't ignore the fact that vol is low and you have to look directionally. But then when you start to look directionally, you go, okay, but vol is low, which means that the path of least resistance is for it to expand back out, because we're pretty downbeat here. Just in terms of the recent kind of places where it's been, we're basically toward the lower end of where we've seen it since the middle of August. So if you're going to look for something, I suppose it would be for vol expansion. My thing on this, and you mentioned CPI, I think that's exactly the segue here. This, for me, is the story of where vol is going to go eventually, because now that a lot of the stage is set, the election's out of the way, that uncertainty's gotten squeezed out. Now it's look at the economic data, listen to the Fed. Will they now follow the data? Because there's been a whole lot of interest rates going up. I mean, if we look at where this top is, this is the last Fed meeting right here. That's it.
Mm-hmm.
And, for those of us that like to play the home game and say the Fed doesn't matter, it's already priced in by the time it occurs. Right. There's that top. And so either they were waiting for confirmation or they really heard something. Either way, the trigger's there. And so when you look at what they did since then, right, Fed comes out, cuts 50 basis points, gives them everything in the forecast they could possibly imagine. Here's 100 basis points for this year. Here's 100 basis points for next year. What else do you want? There you go. And the market goes right, yields higher. And that just tells you, the economy is fine. You're cutting into an economy that's going to overheat or at least is going to get hotter, because it's not like you're easing into an issue. The economy is not weak. Last GDP numbers, 2.8%. The PMIs are basically hovering at the same 12-month high that they hit back in May and just sitting there. So the economy is growing fine. Obviously, there's pockets here and there, but there's always pockets here and there. And so the market seems like it said, right, you want to ease into an economy growing between 2.8 and 3%. Got it. Okay. This is going to be inflationary. Let's go ahead and take up yields. Let's take up the dollar. Let's take up break-even rates. Let's steepen the curve. That, to me, now is pretty much the only thing left to talk about. Because now that we know what the election is, and we get the sense that policy-wise, it's more inflationary again, because it's tax cuts, that's inflationary, that's fiscal stimulus. again, on top of an economy that's already not cold. And of course, if we see some big adjustments on the immigration side of things, that's labor supply. That's again inflationary. So it makes for an interesting thing as we go into that December Fed. But in the meantime, I'm watching this bond and going, if these yields break out of this election range, that's where the ball is. If we get a hot CPI number and we get back into here somewhere and we start to push this, let's take a look at the continuous contract just to get a sense of where we've been here. It's not like we would be in uncharted territory or anything like that. So if we went from here, let's say, and started to get back into here because CPI is hot, that would be a very interesting thing to see, even just to see if the market swallows it and goes, yeah, okay, that's fine. Whatever. The economy is growing. Okay, so we're going to have higher yields, but it's against better growth. Or not.
It wouldn't be interesting. It would suck, Ilya. It would suck for me because I'm long bonds. No, I mean it's fine. I mean I've been long them. Probably about a solid almost 2 months. Probably around the same time as I put on the other trade in March, and I've kind of rolled down a lot actually. And I was rolling down on election night. And I'm sure I'm in the majority, and we're wrong. A lot of us are. And that's why I'm curious to ask you, like, how long have you been short bonds, or was it just an election night thing, or is this kind of a thesis you've had for a while because you were, appreciative and understanding of like the fact that we're going to possibly have a lot of this inflationary stuff coming in with the new administration?
So I was long the bonds ahead of this breakout. And once this breakout happened, I got out right around here as it stalled. So I missed this little bit of it. I then missed this little bit of it and started to get short right here. So this little pop, I was actually looking for the bounce here as well. It took me for a little seesaw, as markets do. It breaks down here through these former highs. You go, oh, it's a short. Wait, no, it's a long. Nope, still a short. And so it took me for a little back and forth here. But ultimately, it resolved lower. And so I've been holding it from about here. And so this is the ride I've taken on it so far. I'm looking at this and thinking, really, election this, election that. We have an economy that's hot. We have a Fed that just cut 50 basis points and put itself on autopilot, and last week followed through and cut the 25 basis points that they said they were going to do back mid-September. And so I was just looking at it and going, well, the market thinks this is going to be inflationary, all of this, election or no election. And that's what got me in the bonds. Just saying, you know what, the dollar is rallying, yields are going up, the curve is steepening, gold is going up at the time. And actually, that's a short that's bailed me out of my stock market sins in the past 2 weeks as well. So looking at that in just a second, but that was really the idea that for whatever reason, the market has decided and you can see it in the data, that the economy is not bad, that there's not a sign of the sort of recessionary type of tilt that people were afraid of, let's say in June, July, August, as the data was turning the wrong way. And I mean, it makes sense. There's a great index from Citigroup that measures economic surprises. And it told you a story of deteriorating U.S. economic data relative to forecasts from April into the end of August. And it made sense then. Then the markets went, oh, the Fed is reluctant to cut. They're going to be late. The economy is turning. They're going to miss this thing. What soft landing? Okay, that makes sense. And then in July, that's why when Powell comes out in July and goes, okay, it's on, we're cutting, that's why the market falls. I mean, if we look at how you might have expected them to react, you wouldn't think. But here is Powell saying we're going to start to cut. And the market goes, oh, no.
I know. So weird. I remember, yeah.
Because, I mean, the way I read that is they look to mid-April onward. The data is fading. And they go, oh, now you want to cut? You've seen the pain. Now you've recognized you're late again. And you're chasing again. And we're going to be in recession by the time we get to this election, maybe. But then by end of August, everything turns and the data heats up. And it's a different story. My biggest question for you in this context, because I'm wrestling with this and I think I have an answer, but given what stocks have been doing to me lately, I'm not sure it's the right answer. We saw this movie at the beginning of last year. U.S. economic data started to get better, and people started the year with 6 cuts in the forecast.
Yeah.
And as the data started to get better, they're like, wait a minute, this makes no sense. What do you mean? And so you can see it in the structure of this, where at the beginning of the year, they go, wait, no. Take that away.
Yeah.
There's no 6 cuts here. And the way you read this, folks, is 100 minus the quote. So if you look up here, just intuitively, these numbers are higher, these numbers are lower. 100 minus a higher number is lower rates. 100 minus a smaller number is higher rates. So just think of this inversely. So this is rates going up. At the beginning of the year, the market said the economy is getting better, there's not going to be as many cuts, and stocks rose. It didn't bother them. Are we going to see that again here? Because for me, the difference is at that time, there was a synchronized global acceleration. US was doing better, Europe was starting to do a little better, China was starting to do a little bit better, and there was a positive overall global story. That's not the case now. Now the US stands alone. China can't seem to get out of bed still since COVID, and Europe is slipping back into recession. So can we get away with another one of these here?
I think we could see something like this again. At least that's kind of what I'm betting on to some degree. I mean, there's a lot of different narratives and we can spin them all day long, but the fact remains is nobody has any clue how this administration is going to end up acting out and how things are going to play out overall. I mean,
that's right.
There's look, there's a lot of different things. We go into the immigration issue as far as what's going to happen with that. We can go into, many other things, but I do think we're going to see some ebb and flow, and I think you're right. I think the bonds is actually the area where we're going to see some decent volatility. Honestly, it's been like a 4-year type of trade when you look at it. Going back to 2022, you saw what happened then. 23, of course, the end of 23, I think, is the thing we remember the most. And beginning of this year, like you just showed, because bonds really took off on this idea that we were going to have all these different cuts. So I think at some point, again, we're probably going to get a little bit of that. I don't think it's going to be, as wild as it was at the end of last year and the beginning of this year. I don't think it's going to be that wild, but I think at some point or another, they're going to turn these machines on bonds. This is one of the largest things in the world. I think the big bear market that we had already happened in 2022. And I think at some point or another, this is going to start to reprice itself. Now, will we see, the levels that we saw in 2021 and prior to that is the real question. I do think there is sort of a ceiling on bonds. I just feel like there is, right? And again, there are a lot. There's some truth to a lot of things that are probably going to end up happening with the new administration. But I do think as a result of that, there's a little bit of a ceiling on bonds, but I don't know. I think this is one of the better trades out there, honestly, more so than equities these days. I think the bond trade is.
I mean, it makes sense, right? Because you have really clear levels here where you say, okay, which thing of these things is the right thing, right? You had this long decline, which of course makes sense, right? This is the easing giving way to tightening, right? This is where the Fed essentially says, okay, we're done. The bias is now to start to hike because this inflation is sticky. You already see the bonds start to anticipate that before anything actually starts to happen with tightening. The tightening doesn't start until here.
Mm-hmm.
And then we keep going and going. And if you look at this now in context, if this was just sort of in the most simplistic possible way, the trend as it is defined, right? Lower highs and lower lows. A trend lower by definition. Okay? Do you believe this? Maybe, because clearly the thing has changed. It is no longer setting lower highs. It's made a higher high here. Something's different. And then it's been a little soggy. Obviously, we've had an election.
Right.
And so this sort of becomes the bogey for me. I could see it extend down here and find support here. I could see it invalidate all of that and end up here and tell a different story. But here it's kind of in no man's land. And there doesn't really seem to be enough IV to do anything like a condor or any kind of range bound strategy. Since you're in the middle of a range, that doesn't look like it's going to work here or have any juice to squeeze. So looking at it, I'm sort of begrudgingly short, but very begrudgingly at this point. Like, I'm looking at this and going, all right, would you just invalidate this thing already so that I can stop freaking out about holding something in the 9th inning of a move? Because it does look like there's not much room at this point. And I get why it could keep running down, but it doesn't have a lot of space. So I'm looking at it stall here, watching these momentum readings kind of level out and start to correct a little and thinking, is this thing just going to correct in time, end up here somewhere, and then take another big leg lower before it goes? Or is this actually the bottom? Is this fading of downside momentum that we see here, is this it? Unclear. But I think CPI this week is where maybe that gets, if not clarity, then at least a little bit of a shaking of the snow globe to see what comes out.
Yeah, the one thing I don't want to do as of yet, and I think I kind of talked about this with equities too, is sort of make last week's move be the end all be all, right? Especially with the bonds right now. I don't really want that to be the end all be all and me to make the decision on my position. I still want to stay long. I still want to see how this shakes out. I mean, and across a couple of different things, I think that's the case. So I still believe that we're close to a bounce here. Again, it would have to be, if it takes out 112s in a meaningful way. I mean, first of all, I'm going to be, my position is going to really be hurting. And that's in the area where I really have to sort of decide and think like, okay, maybe I'm wrong on this one and it's time to close up shop. But I guess until then, again, like we'll see what CPI brings this week, at least the thought process around what's going on with that, if we see a little bump in inflation or not. I mean, it's been a bumpy ride to the bottom, right? Or 2% potentially, but we'll see, man. I mean, for now, like I said, I'm fine with the last week or so. And again, I think that's, it's fluctuated quite a bit, but I'm fine with that move because again, I know it was mostly on the back of the election, but if we start to take out some of those lows down there, then it gets a little hairy and then I really have to make a new decision.
And in fairness, I mean, my finger is on the trigger here. I'm going to be getting out at the first sign that this thing is showing meaningful signs of bottoming and probably flipping back the other way. Because to your point, we've just gotten through the election. There's been a big wave of pricing in what that means. But we're not going to have concrete proposals that have some sort of a clear path that we can score and that markets can score and say this means X for inflation or this means Y for rates, basically for a few months at least. And at some point, speculation reaches as much as it can know until there's more details. And that's where this thing probably stalls. So we'll see if the economy can give us some heat outside of the policy speculations side of it, which actually is an interesting thing in the context of what's going on here, because you'd think if the bonds were relatively steady, you'd see something similar in gold and you'd see something similar in the dollar. And you don't. So you look at the bonds and you go, which one of you knows a thing and which one of you is asleep at the wheel? Because gold is getting cooked here. What are your thoughts on this?
I was a little afraid about this one. Again, I think this is another post-election move. I was a little afraid that this could happen because of the fact that I am long gold. This is one where, Ilya, I'm telling you, this is one where I reverted back to some of the old momentum days. Chris and I have talked about this a lot. This is one where I just went straight up upside call spread. Now, I have played with gold a couple of times throughout the years. As a matter of fact, back in March, I was still attempting to try to get short sometimes using MGC or something like that. But that stopped in August, got long call spread. That worked out well, took it off. Got back in, I think, in September, did another long call spread. That worked out well, took it off. I just got back in the beginning of last week, maybe, or the end of the week before. I mean, it was just before the election. I got back in and I got long.
So like right here.
Yeah, somewhere in there. I'd have to look specific. It doesn't even matter. But I got long, and I actually went further out. I went to the December expiration, so over 45 plus days. And again, this is the opposite of a tasty trade, right? But I think gold deserves that. I think silver deserves that. I think you got to treat them a little bit differently. They're not, a lot of our mechanics, to be honest with you, a lot of them have to probably work best with like equity or equity related type names, not necessarily commodities, even though we use them for commodities, but this is just my opinion. But anyway, we used the long call spread. I went really far up this time, 2,900 to 3K. So, of course, I'm getting waxed over the last couple of days with this move here. But it's all good. It's further out. It's duration. It is what it is. I mean, I do have other positions that have kind of helped offset the loss, not in gold per se, but just across the board. But to answer your question, I'm still trying to figure this one out too. Now part of it is like the dollar's been firm and the dollar's been strong because the idea of again the idea of what's going to happen with the administration and the protectionist, the ideas for the dollar. So dollar moving in such a strong way more recently, I guess you could argue that that's affecting gold. To your point about gold and bonds, I mean, that was actually something I used to hang my hat on. You could pretty much watch the 30-year bond and watch gold, and they would move together for the longest time. This year has not been that case, right? Gold has just done its own thing. And so I've been playing it like it's doing its own thing. But I'm again, this is another one. This is why I mentioned this with bonds, and it's the same thing here. I'm trying to figure out, is this a new regime? Or is just a little bit of a pullback, and it's going to resume what we've seen throughout the year? And I tell you, dude, this is part of the reason I almost thought about taking like everything off as of last Friday, just to sort of approach this whole market right now with new, fresh set of eyes, because things have definitely fundamentally changed. You're just not sure what 100% is real and what's not yet. And I feel like I remember this after the last election, and definitely in 2016 as well. So, there's a couple of week period, maybe even a month and change, where things are sort of recalibrating. I think you got to give them a little bit of room to do that. So for the timing, I'm giving gold that room, and luckily my position is well over 40 plus days out. I should have gone to the January, damn it, when I put it on, just to kind of get around all this, But for now, I still believe long gold is the way. Until proven otherwise, more than just, 2 big down days. I got to see some sustained movement to the downside.
I'm with you. I sort of reverted back to first fundamentals of tape reading and like the simplest technical analysis you could possibly imagine. Because when I was looking at this from a macro lens going into the election, this up move was happening as the dollar was rallying and as yields were going up, which makes no sense. You look at this and you go, okay, so you're telling me that an asset that yields nothing and an asset that is quintessentially a foil to fiat currency is going up with rates and with fiat currency. What?
Doesn't make sense. Yeah.
What world are we in?
Right.
What is this? This almost never happens. At the beginning of the year, we obviously, in retrospect, looked at those Chinese reserve figures and said, oh, there was a non-economic buyer basically backing up the truck to buy everything. Okay, fine.
I want to party with that guy, by the way.
They're sitting on some serious reserves.
They got gold toilets. You know what I mean?
It's crazy. It's crazy. At the end of last year, going into the first quarter of this year, their gold reserves were growing at 11% year on year. Each quarter. Each quarter. It's crazy. It's crazy. So, but then they stopped at some point mid-year. All of a sudden, the data just leveled out and they backed off. And so I was looking at this going into the election going, either they're buying again or there's some sort of weirdness here. This thing, it makes no sense that it's going up, so I don't know. I have no clue what's going on. I'm just going to go back to watching the tape. And when you looked at the tape, this is all by way of justifying my insanity here. I looked at this and said, higher high, higher high. Whoop. That's weird. It broke this. This was a former high. This is now a lower low. Sell. And so I got into a little put vertical right here. Risk defined, going, you know what? I don't know why this thing is going to go down. I don't know why it's up. But the price action seems to be telling me it's tilted. I can take a decent risk-defined bet. Let's see. And boy, is it bailing me out of what I did in NASDAQ last week. So this is going great.
You need those. You need those.
Sometimes you need a little help. And so as I look at this now, it's basically sitting where you might expect it to find a little bit of support, or at least a little bit of a pause. So right here, we can clearly see that this was, for whatever reason, a level of friction. So I'm going to be looking at this now closely and basically seeing if this finds some kind of a reason to stop right around here. And this, I suppose this violent snapback sort of makes sense in the context of this kind of weird period we were just talking about. If this was uncertainty about the election, if this was essentially people going, you know what, if this is a 2020 situation again, maybe we won't even find out right away. Maybe there's going to be all kinds of contesting of this thing. Everybody's going to argue. Somebody's going to riot somewhere. Who knows? The last time we did this, it was crazy. And so maybe this is the market saying, you know what? Not that. That didn't happen. Take the risk that would happen back out of it.
Yeah.
And basically get back to, okay, realign with yields, realign with the dollar, because this is, in a sense, a kind of, oh, whoops, I was drunk. It turns out the dollar is up and yields are up. I don't belong up here.
Yeah.
It sort of looks like that, but now it feels like decision time, and I wonder if it does basically nothing tomorrow and into CPI and just waits for that to be the next shoe.
No, all that is very pertinent to this discussion about gold, I think, because, again, like you said, leading into the election, it was doing things that didn't exactly make sense. And I would venture to say there was a lot of that because everybody was trying to pile into the thing that they thought was going to make sense based off of how the election was going to react, right? And I think this is definitely one of those where people were like, oh, let's, get obviously gold has been bought all year, but I think there are a lot of people who decided to pile into gold because this is the play for maybe the election, something going wrong or something not taking too long to figure out where things are going to wind up. And once it didn't happen, it's like, okay, no, we're out. We're getting out. And that's why I just don't want to make the decision based off of just the last week or so of action, because I think there's still a lot of money moving around in a lot of different corners of the market right now. And I don't think a lot of the narratives have made sense per se. So I'm trying to figure out what makes sense. And I don't feel the need to abandon gold just yet. It's been, it's been pretty reliable throughout the year. I will say I'm looking at the chart and just remembering, like, there's been a couple of times here where we've seen some big sell-offs.
Yeah.
You know, that August, the beginning of August was clearly a time period. You can see that sell-off in May there was a strong one. So, you know, we've had a couple of these throughout the year. I do wonder if, like you said, if after this sell-off, it just gets quiet and hangs in there for a while, because, you know, we forget. I mean, after the big, strong move up for a while there, between late April and August, it was fairly quiet to some degree, right? We got a few pops here and there, but it was really after August where we saw some of the strongest moves.
Yeah, I mean, this was that sort of China piling in bit, and you see these, to your point, you see these long pauses on the way higher. See if we can look a little bit further back.
That's why I'm thinking, like, I'm a little annoyed at myself. I should have done January. I didn't, you know, because again, being long an upside call spread, this is going to take more than 10 days. And by that time, we're going to be at 30 something. And I don't want to be long. And even if it's gold, I don't want to be a long an upside call spread with like less than 30 days to go. And I'm going to have to probably roll this thing out to January just to give more time, even though right now it's beaten up, but I might have to.
Yeah, I mean, I'm sort of, and we'll get to crude in just a second. I'm sort of in that boat in crude where I need to either roll out or call it a day. Over here, I mean, you can see you have this long quiet, and then at the start of this year is when you get that explosive buying from China, and then you're basically asleep after that once they stop until the Fed announces right here it's go time. And then you have the pricing in of rate cuts. And all of this makes sense up until like here, where yields turn and the dollar turns. And this thing keeps going for some odd reason. And now it seems like we've reset that part of it. We're back to where the Fed left us. This is the week of the Fed cut right here. So we're essentially reset from the election back to where the Fed would have had us were this weird thing not there. And so now, show me CPI that's hot, and maybe we get back into here, maybe into here, and if we don't, into here. But that to me is the next thing. And in this context, because this is the third face of this story, the dollar. So here's the euro, and I'll go back to a daily chart just to give a sense. This thing, I was getting a little concerned about it here, holding this thing short. I started to sell it up here. And when this started to happen, I got out. And then obviously after the election, we had this massive move. And so on this retest of the underside here, I got back in reluctantly. And as it was sitting at these levels, I'm thinking, you're chasing. It's near the previous lows. You're going to rue the day that you did this. It's always not enough dollars to buy for me. And I get back in, and sometimes it's a little late. But this thing just wants to keep going.
It does.
What do you make of it here now that it's basically come down? I mean, essentially back to where April was, and that baking in of rate cuts started. We've basically undone all of it.
Yeah, I'm glad. One thing that we have exposed here today is that I've been a terrible trader in 3 asset classes so far, because it's been bonds. Bonds I was already long, but gold in this euro trade, getting short the dollar is actually something that I just got back, and I had to look at the exact dates. I did it on Halloween of all days, both of those trades. Yeah, awesome by me. Very scary so far. But I was interested in getting, long this, i.e. short the dollar, just because it's a contrarian trade, and
sure,
I just wanted to try, to see if I could fade it, and so. I do wonder, how this is going to all play out. Again, are we going to be returning back to the times where the dollar was really ruling the market here? And the interesting thing is markets don't seem to be as scared of the dollar this time around, right? We saw how that narrative played out 2022, early 2023.
Yes.
And I'm just figuring, one of these, I guess, has to be wrong, right? Either the dollar or the market. I'm not exactly sure which one. But I still feel it's worth fading. Again, I still feel like it's again, until we see how the administration is exactly going to approach things, until we confirm that whether we're going to get this inflation, that's magically expected to appear in our economy, which, again, that could happen. But in the meantime, I just feel like this is a pretty good, sort of, if you do it risk defined wise, and again, I'm doing it risk defined. I actually am short kind of in the money. Yeah, I think you have to. I mean, because this is one that can get out of control before you even know it, especially even overnight, et cetera. So this is one where I'm short a put spread in here, and I'm going to give it a little bit of time. I've had some luck at times with the euro this year. But this time around, I'm kind of on the wrong side as the dollar's just been really strong over the last couple of weeks.
I mean, obviously, not shocking that CPI is going to be a big one here as well. There's not a whole lot of event risk from the European side this week. There's some stuff out of the UK, which I suppose might make sense that when we look at the pound, it's not doing as badly here. It's still down against the dollar, but much less dramatically.
Yeah.
The euro is really getting cooked here. But there's not really a whole lot of data out of the Eurozone this week to really point a finger and say, here's a catalyst. There's a little bit, but nothing that would sort of get you focused away from, first off, the CPI numbers, and then because we don't have enough event risk on the monetary policy side in the U.S. for 1 week, the next day after that, Powell is speaking. So first we're going to get the data, and then he's going to come out the next day and tell us what to think about it. So this could be an interesting seesaw, and if they diverge, and if they don't, it could be a move with some legs. So for me, at this point, I'm just kind of taking the Hippocratic Oath approach. And first things first, do no harm. So I'm not adding, not taking things away.
Yeah.
I'm just gonna step aside here and let this thing do what it's gonna do. I have no idea whether this is a level it wants to break or not. I'm tempted to think that because we've sort of taken out this underside here, which was tested multiple times, sort of gave you the sense that the market sees that there is something along this path here, that now this is a level where maybe we're done, or maybe we get back down here and that's the next kind of big moment to think about things. But for now, I'm just going to let this thing sit. The one that really interests me here in particular, because I jumped out the window and said all manner of disparaging things about China's economy last week, is the Aussie dollar. So last week, China had, I'm sure you saw, these explosive export numbers.
Mm-hmm.
And the Aussie roared higher and copper jumped. Here's for context.
I remember, yeah.
Here's copper if it loads. Fingers crossed at some point. There we go. So there it is. I mean, here was the election. So just ignore that. That was a massive WTF all over markets. But here's what we're talking about. The massive jump in copper. And that was a near 13% year-on-year jump in Chinese exports, strongest numbers since basically the middle of 2022. And everybody said, oh, yes, the stimulus. At least people have believed. There's confidence. And then you looked under the surface of the numbers. And you looked at the PMIs that came out a couple days before that were also the strongest in 4 months and also pinned that on exports. Then you started to read between the lines and go, wait a minute. a pickup in U.S. demand. Why? And how does this make sense? Neither. We're about to go into an election, and both of these candidates are flavors of a China hawk. So what difference does it make? Why are people optimistic? And you go, oh, well, if it starts to tilt in the more combative version of the China hawk, and you see tariffs in one case and not the other, things are going to get expensive if it goes that way. Buy things now. Stock up now. Build inventory now. And so you get this massive surge in exports, but it all looks like smoke and mirrors. It all looks like front running for higher tariffs downwind. And so I did this whole thing on Macro Money last week saying, don't believe the hype. It's not going to work. They need to do fiscal stimulus because the monetary thing hasn't worked for 3 years already. They need to do something different, and that's what the markets want. And so because I didn't want to take that bet in stocks because they can will those higher, Xi Jinping can just say, hear ye, the domestic stock market must go up, and so it goes. I instead did this in the Aussie, and this is the one I'm
You don't get
watching.
me doing the flavor over here, man. Don't believe the hype.
That's right. That's right. That's right. Public Enemy. I love it. So as I was looking at this and thinking, okay, no. And thankfully it seems to have agreed so far, but now it's at one of those levels that scares the hell out of you. Because you go, okay, yeah, I mean, it did the thing I wanted, but why didn't it keep going?
Yeah.
In the last couple minutes here, because time is flying by, what do you make of this China story? Do you think it's going to work? Do you like things tied to it? Be it the Aussie, be it copper, all of it.
The thing I do like is the fact that they are tied to the China story, right? Like, at least you can hang your hat on that when you're trading this. And so really it boils down to, how do you believe, things are going to progress in China? Are they really turning the corner here, and we're starting to see are we going to start to see the Chinese economy start to expand again, that huge expansion that we saw for so many years, or not, right? But I do like the fact that it's tied to the story, but that's actually what scares the hell out of me, whether it's this or copper. Like, that's the part that scares the hell out of me about that trade, because a lot of their determination, their move is made a lot of times overnight, right? And it all is tied to China. So I think that's good. Because again, we've been talking about a couple of different things that we know how they've traded throughout the year, but they've been thrown off in the last week or so just because, something else sort of pulled and tugged at them. Whereas this, at least it's still China. I mean, even though we saw election influence here, obviously because of the way the dollar moved, but at least this is still tied to China, as is copper. And I think that's at least something you can hang your hat on the trade.
And in fairness, I mean, we saw how the dollar ran against the euro, certainly against the yen. It didn't do that here. It tried, but it ultimately reverted to what is sort of the underpinning macro, more so than in the euro, more so than in the pound. Interesting. And I'm going to be watching this really closely this week. There's a bit more data out of China, but again, it's all hanging on this U.S. monetary policy story for me this week, and what the markets are going to do with it. On the one hand, if I'm China and I see the tariffs coming, do I do the big fiscal stimulus now?
You think so, right?
Maybe I do it now. Maybe I wait and let the impact happen, or at least let the announcement come, let the fear come, get a sense of what it is, and then push back and keep my powder dry until then. It's tough to read. So I'm going to be watching the Aussie dollar here almost, I mean, I have the trade on, but almost as an indicator, and going, okay, is this thing caving?
Yeah.
Because if if the Aussie dollar is caving, then maybe this is not the first quarter of this year. Maybe it matters that the U.S. is growing, but it's not spilling over elsewhere. And the global economy itself is actually grinding down. And the U.S. has kind of walked off its own direction. But everybody else is stuck. Maybe that's a key difference. We'll see.
No, I'm with you on that. I'm holding on to my big box trades, like I said, whether it's euro, whether it's dollar, whether it's gold, you know, and actually one more to add to that is oil. And I mean, I know we're not going to get into it, but I just got long oil again today. Usually anytime below, you know, anytime below 70, I'm interested. It's at 68. I got interested again. Again, that's another global growth story, right? We'll see how that ends up playing out too.
Absolutely. Real quick, I'm waiting for this thing to let me out of my short from 72. I got short on the retest of this little axis here. Just let me get back down here. That's all. I'm not greedy. Just let me get back down there, and then I'll get out and then have your rally. It's all good.
Love it.
And that takes it for us. Everybody stick around. We're, of course, going to have Dr. Jim here with From Theory to Practice after. For Mr. Jamal Chandler, I'm Ilya Spivak. Chris will hopefully be back with us tomorrow. There's a whole day of Tasty Live stuff ahead. I'll be back later for overtime and macro money. Don't go anywhere. We'll be right back.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Tuesday edition of what it is that we are trying to do. I hope that we figure it out today, but I would say it is pretty close to a zero delta then we will do so. Show off to a very, very rocky start as we're now 30 to 45 seconds in. But thank you guys for being here and sharing in the rockiness that is today's program, because without you, we would not be able to do what it is that we do. So thank you guys so much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube, because you can join the conversation, you can join the discussion. It's right there on the Tasty Live YouTube channel. You can communicate with your brethren that are also watching the show, and you guys can all get ready together for the most important CPI print of our lifetimes, set to drop tomorrow morning at 8:30 Eastern time. So let's go. Let's pop in. Let's see how the market's doing today. Man, I don't know. It's been, it's been a little different today. We see a little red on the screen here. Even the S&P is down 12 on the day. Got the risk-free instrument now down 34 on the day. Also known as the NASDAQ futures, extremely high-risk product. Not at all in the risk-free category. Got the boomers down 170. Got the Russell 2000 getting shellacked, down 37 on the day. And so the market giveth and the market taketh away. And by taketh away, I mean we are still 20 basis points away from all-time highs. And so ZB down a point on the day. You got notes down a little bit. You got oil catching a little bit of a bid, not much. I think it was up higher earlier, up 14 cents. You've got your UBs are down a little over a point. You got gold down 10. Where's silver at though? I need to get silver on my watch list here, because it's kind of a pain in the rear to keep going in here and saying, oh, look at silver. Silver up today. Interesting. So gold down, silver up. Huh. So the shifts in the world getting kind of hammered. The Hunt brothers in the world kind of celebrating a little bit, up 23 cents on the day. And then, of course, you've got volatility is down on the day, which is a little bit odd given the market weakness. You have volatility futures down 15 cents, and then you have the spot volatility. The VIX, the cash volatility index, is down 21 cents on the day. So again, this is another example where, yes, it is a reliably inverse relationship, market prices and market volatility, but it doesn't have to be that way every single time. It doesn't have to be that way, 100% of the occurrences. Like, you're going to have days where you have, market down, volatility down. You're also going to have days where you have, market up and volatility up. And so I'm a little bit surprised that volatility is down today with volatility being so low. When you've got the VIX at 17, 18, 19, 20, that to me is more ripe for market down, volatility down type of day, because the VIX is a calculation that's just based off of, out of the money SPX options. And so there needs to be demand. There needs to be a flow of, buyers on those options to keep the prices up, to keep the VIX elevated. If those things begin to collapse in any way, then the VIX is going to follow suit. Like, if that demand dries up, if the buyers just aren't there, then you're going to see the VIX kind of collapse under its own weight. It's kind of hard for the VIX to collapse under its own weight when the VIX is, 14 or 13 or 15. And so it's a little bit different when it's 18, 19, 20. But alas, man, I am surprised again by this market. I mean, this market just continues to surprise me day in and day out. So, all right, so if you are watching live on the YouTube channel, and you have a question for me, drop it in the chat box. I'll get to as many as I can. We usually get over to the Q&A section around the halfway mark of the show. And so, yeah, drop them in the chat box. We'll get to as many as we can. But before we do that, let's go ahead and let's talk about a couple of the current positions. And then I don't know if I want to trade CPI tomorrow, because I'm more interested in getting the bunker set up, getting the batteries, getting the flashlights all situated, for tomorrow morning at 8:30. So I don't know if we're going to do a CPI trade, but I do want to do, I was kind of taking a look at, the earnings coming on down the rest of the week. And, it's slim pickings now. Like, we've gotten through your heavy hitters, right? Your Apples, your Teslas, your Amazons, your Chipotles, right? They've all reported they're all kind of over and done with. But now you've got some stragglers. Like, now you got kind of the B team starts to roll in. You got like your Home Depot, I think was this morning. You got your Walmarts, which I think is later this week or next week. But Thursday, coming up in just a couple of days, man, take a look at that. Disney is reporting earnings, I should say, on Thursday morning before the bell. And so if I click on Disney, and you can see right there, November 14th before the bell, Boom, there you go. Earnings call, earnings release Thursday morning. Now, it's a Tuesday, obviously, so if you're going to trade this, the best time to trade this would be tomorrow, would be Wednesday. But I'm with Errol on Wednesdays for today's assignment, so we're not trading the From Theory to Practice portfolio. So if I'm going to do anything for a Thursday earnings call, Thursday morning earnings call, I should say, I'm going to want to do that today. So that is indeed what we're going to do. And we're going to have a little fun with it. We're going to do something that I've never done before for an earnings trade. We're going to try to get super strategic and see if we can't play both sides of the market using two of our favorite strategies. Well, one of our favorite strategies for a long, long time, and now one of our newly minted favorite strategies that we've just recently discovered. So, all right, that's what we're going to do for the next couple of minutes. But first, let's take a look at, these stocks. Let's take a look at these positions. So number one, let's look at MNQ. So MNQ, man, it rallied back in just the last like 30 minutes or 20 minutes. I mean, before the show, I want to say the NASDAQ, I mean, it was down a cool hundo. Like this thing was down a crisp honey, and this strangle was looking mighty nice. We were actually green on the P&L open just a few minutes ago. And now, the market has rallied back significantly. In just the last couple of within the last hour, I think. If I go to, let's see, if I go into the charts here, this is in my daily chart, I believe. Let me do like just give me like a week to date, and then give me like a 30-minute chart. Yeah, there it is right there. So the last 30 minutes, the last two 30-minute bars. I mean, look at that. Look at that quick little zipper off the bottom there. What is that? That's a total of, I have to get my measured move calculator out. This is, we went from 21,060 up to 21,187. And so that's a quick little 130, just kind of, obviously on top of the previous 19.5% the last couple of trading days. And so, yeah, it looked like we had a little something going. Like it looked like, the bottom was going to, not necessarily fall out, but maybe it wouldn't be every single day higher. But now, I don't know. I think this was just a little, the market took a tiny little slowdown before obviously that happens. And so it looks like ES green, NQ green. I don't know if the Russell's going to get there. They got kind of their work cut out for them for the rest of today at least. But yeah, this appears to be, just very basic. Elliott wave stuff. I mean, you've got A, you've got B, this whole, this double coupling is C, right? Then obviously this is D, and then boom, that's E right there. So there you go. There's your fifth wave right there. I mean, that's it. You've got your fifth element, and now here is your fifth wave. And so there it is, A, B, C, D, E. Boom, there you go. So you're welcome. So with MNQ, we'll have to see what happens. But man, a little bit of strength in the last hour. I don't know what came out. Maybe it was that, man, you want to talk about being reliable. It was that Canadian durable goods print that drops at 12 Eastern every Tuesday. I can't believe I missed it this week. That must have been the market mover in the last the last little bit. But anyway, the MNQ trade, it was doing better a little while ago when, the NASDAQ was down 100. But now that the NASDAQ's only down 30, 35, it's not doing quite as well. But still, we're right at about a scratch on this position. So I wanted to bring that up first. And then secondly, I wanted to take a look at Qualcomm just briefly, because if we take a look at Qualcomm, I mean, look at this thing. Qualcomm is just getting absolutely steamrolled today, which is quite a surprise from the standpoint of, not tracking with the NASDAQ, right? So if you take a look at, the NASDAQ being down that's a titch. That's half a titch. The NASDAQ being down there. And so, we're in a situation where you've got Qualcomm down, 3.5%? Yeah, almost a little over 3%. So between 3 and 3.5. That's pretty crazy, man. That's pretty wild. I mean, Qualcomm, again, I wasn't quite sure they were still solvent, as of just a couple of days ago, but I think they've been around for a while. Like, I think they're going on 3, 4, 5 decades at this point. And so you would kind of expect them to be able to follow suit with, with the overall index. In fact, I bet you Qualcomm, because Qualcomm has been around for a long time, I think, right? Like I can't have time or the resources to look up. When was Qualcomm? What is the IPO date of Qualcomm? Somebody let me know. I'm going to say it's before 2000. Like when I think of Qualcomm, I'm thinking 80s. I'm thinking 80s, 90s, right? And so am I totally missing the market? Was this thing IPO'd like 3 years ago? Because I think that this is kind of, the heavy growth, the high growth days are over for Qualcomm, right? Again, the fact it's still in business, I think, is a pretty big victory for the company. And so when I go to look at this company and look at the overview, I'm expecting to see a nice dividend payment. Yeah, here you go. I mean, it's not quite as high as I thought, but yeah, I mean, you've got a nice little 85-cent dividend. So there's your little 2% dividend yield from my drip investors out there. Boom, there you go. I mean, I don't know what more I can do for you. I mean, this is pretty much the top. 85-cent dividend for Qualcomm, 1.99%. And so in the tech space, that's not bad. Like, I mean, you go to Microsoft. What does Microsoft pay for dividend? Hold on. Now I'm curious. Now we're going to go down this little drip rabbit hole. Yeah, look at Microsoft. Wow. So Microsoft only they're paying less than 1%. Now, a lot of this is going to be a product of just the huge run higher for all these stocks, right? So when the price goes up, then the dividend yield is going to shrink because you're now taking the dividend and you're dividing it up against a higher denominator, a higher price. And so the resulting dividend yield has to go down. But Microsoft is less than 1%. What is Apple? Apple, I think, is going to be like less than 1%, right? Yeah, look at Apple's 44 basis points. That's crazy. It's like, don't even do it at that point. Now, again, of course, you got to do it. This is a product of the run-up, but that's crazy. Microsoft, less than 1%. Apple, less than 0.5%. Let me think of another big tech company that probably pays a dividend. I don't think Netflix pays a dividend. I'm pretty sure Amazon doesn't. Well, actually, did Amazon just recently announce one? Like a penny or something? No, they didn't. So Amazon, no. Netflix, I don't think they do. Give me another. Let's look at what about Cisco? Okay, here you go. Now, here's a company that's been around forever. There you go. You get almost 3% dividend on Cisco. So anyway, Qualcomm, right? With Qualcomm being down today, I'm pretty surprised. Like, I'm pretty surprised given the fact that the index hasn't been that weak and it's about to be green here in just the next little bit. But if you look at our calendar spread, we've still got some work to do, man. Like, the stock being at 162 is a great start. But, man, we now have a calendar spread on, and the same rules apply. It doesn't matter how you got here. It doesn't matter how you arrived. If you have finally found yourself in a calendar spread, get ready because it's going to be slow. Get ready because you're not going anywhere. Like, it's going to take some time. Like, I mean, if the stock hits your strike, that's good, but you really need a lot more time to come off. So right now, when I'm looking at this trade here, you can see, we've got 17 days in the front month and 38 days in the back month. That is an eternity in the world of calendar spreads. So I don't really, I have very low hopes for this Qualcomm position right now. Now, if Qualcomm stays around 160, 161, 162 for the next 8 or 9 or 10 days, then it's going to be a little bit different. I think we're going to see the profitability on the position actually tick up significantly. And so right now, we've still missed the mark on the Qualcomm trade. We're still down on that trade by probably at least a couple of bucks, but that's okay. Again, I mean, I'm happy with where the stock is now, but we really need time to go off now. So, all right. So let's now go into, man, let's do a couple of Disney trades. I'm excited. I'm so excited to do this because we're going to do something totally different. Man, I see you guys in the house. I see Dav's in the house. I see Kimberly's in the house. Strategy and opportunity in the house, bringing us hopefully both strategies and opportunities. And Sergio's in the house, man. Paul's in the house. Anka's in the house. E-Machine's in the house. Of course, Theta Trader's in the house, and Manny TP is in the house. Man, I just appreciate you guys. It's so funny. Yesterday, you guys said, or yesterday on the show, I said that I was caught up on emails, and you guys just blasted me. So I'm a little bit behind. I felt behind. I was caught up for like a half a day, and so that was pretty much it. But anyway, let's go into Disney. But I'll do it quickly. And so getting caught up on the emails. So DIS. So we've got the stock at 100. You've got earnings on Thursday morning, right? So I'm thinking. So let's play both sides. So I'm so let's think about two strategies that we've been using regularly for these binary events: expected move butterflies and crab strategies. What's interesting about both is they're very, very different. So they're both butterflies at the core, but the way that they're set up and like the adjustment opportunities and obviously the calendarization of the crabs, I mean, it's completely different. With an expected move butterfly, you really need to get the direction of move correct. And by really need, I mean really need. Like you're not going to finagle a winner out of that trade if you don't get the direction of move correct. Okay. With the crab strategy, that's not necessarily the case. Like, now, yes, we had the McDonald's trade. We got the move right. It was an easy winner. And I think the next one we did, it may have been Netflix. I can't remember, but or Microsoft or whatever. But the next one we did was also an easy winner. Now we've got Google and we've got Qualcomm that are both not winners at all. And then we've still got our work cut out for us. But all hope is not lost either. We still have time and we still have adjustment opportunities. And now there's different ways that we're utilizing that flexibility. Like with Qualcomm, we've been a bit more active with selling more premium against the long and kind of keeping it on. With Google, we sold it the once in the diagonal spread. I went through all this yesterday. So if you're brand new to the show, welcome aboard. If you're totally confused about what I'm talking about right now, go back and watch yesterday's show. I actually unpacked all of the adjustments for both of these strategies in fine detail. So you'll get completely caught up to speed with both of these positions if you just go back one day in the archives and watch yesterday's program. But with Google, it's been a little bit different. We did the diagonal spread, and then that short put dried up pretty quick. We bought it back, and now we're just riding solo, like Jason Derulo style, with this 170 long put, and we're just gonna see what happens. And so it's interesting that we can do some different things. Expecting a butterfly, it's like a musket, man. You got one shot. You got one shot. If you don't hit your mark, then it's over. Like it's not gonna work out. So with Disney, I thought, I don't know where Disney is gonna go. Nobody knows where Disney is gonna go. Not that I ever know where any stock is gonna go, but I think just to do a little something different, we're gonna do an expected move butterfly to the upside in the front week, and we're going to pair that with a crab strategy to the downside. That is not necessarily in the front week. It's a combination of the front week and the back month. And so I am kind of thinking, all right, most likely scenario, we lose both. But potentially, possibly, maybe we could find a way to snag both of these guys, especially if I'm thinking Disney rallies. Let's say Disney rallies, right? Disney comes out Thursday morning and just basically says, we're still Disney. Market loves it. Stock shoots up. Everybody's happy, right? We cash in on the expected move butterfly to the upside. We buy back all the risk, all the extreme risk, and, the ratio spread portion of the crab strategy that's actually positioned to the downside. And then we're going to have that long put situation similar to what we have in Google right now. We can decide what to do. But we're still going to have a ton of time left. And so I don't know, guys. In my head, it's working out. It's working out okay. Now, is it going to be the same on paper? It doesn't usually go that way, but we'll see. We're going to give it the old college try. So if I open up 3 days to go, here's what I'm thinking. What if we do? Let's see what Amelia May has got for us. If you are brand new to the show, I do have an intern. I have a trading assistant. She does all of my analysis for me. She's been phenomenal. She's been with me now for, we're going on almost 5 years. She's been with me. Amelia May is my intern and my trading assistant for the show. She is also my 4.5, almost 5-year-old daughter. And so she does a phenomenal job. She's overachieving at this point. And so let's go ahead and what if we do a 100 call, a 107 call, and then a 114. That's what she wants to do. This is our expected move butterfly to the upside. We're doing a 100, 107, 114, where obviously we're doubling up on the 107. We buy at 100, we sell to a 107s, and then we buy at 114. $7 wide, it's $1.60. $1.60. And so that's a pretty cheap expected move butterfly. Now, this is only a $100 stock. So, you go $7 wide, that's 7% on either side of where the stock is right now. So you don't necessarily need to do, super wide butterflies, $10 wide, $15 wide, $20 wide, whatever. Like you can get away with, just, $7, $8 wide and still have a fighter's chance to go ahead and catch this guy. Speaking of fighters' chances, where are you guys at on Friday night? Where's my Tyson crowd? Where's my Paul crowd? Like, let me know. Where are you guys at on Friday night? I'm all in on Tyson. All in on Tyson. When I was just a kid, I was born in 81. So, growing up in the 80s and 90s, I remember, my dad and my uncles all coming over, for pay-per-view to watch, all these Tyson fights. And, I just remember as a kid, I'm like, this guy is, he's dangerous, man. This guy, I was terrified of him. He was just going to show up, on the street one day and just knock me down to the ground, right? That's what I was assuming. That's what I assumed was going to happen. Watching him in the ring, being 7, 8, 9 years old, I'm like, man, I don't want nothing to do with Iron Mike. But I'm all in on Tyson, man. Let me know where you guys are at on the fight on Friday night. I think it's Friday night. On Friday night. So, all right, let's do Disney. Let's go ahead and push out this expected move butterfly, and we'll see if we can get filled. here real quick, and then we're going to do the second piece of this. This is a little two-parter here on this Tuesday program. Let's try $1.59. All right, so we got Phil at $1.59. Beautiful. All right, let's now go in. We'll stay in the same thing. Well, no, hold on. I don't want to do the 3-day first. Let me go ahead. I'm going to go 38 days away in December. So now we're going to do a put crab strategy. So this is playing the downside. We're going to buy the at the money or slightly out of the money strike, and then we're going to sell options against it in the front week, and then buy some junk to define the risk and limit buying power also in the front week. When it comes to which option to buy in this December monthly cycle, I really want to stay in the monthly. I don't really want to get into the weeklies. The liquidity is going to be a little bit less than desirable, let's say. I think we stay in this monthly. Let's just go right to the 100 strike. You're basically at the money, but you're a little bit out of the money, I suppose, technically. For all of my moneyness bros that might be watching the show, welcome to the program. We're going to buy the 100 put. You've got the stock at 137. And so that's setting up pretty well. So we buy a 100 put in the 38-day cycle. That is in December. Then we minimize that. We go back to the 3-day. Man, it really feels like we're going to burn up both of these stacks of cash. Like can you smell the smoke? I mean, I smell the smoke, and it's even getting in my eyes a little bit. It's already that strong. If I go into the front week, though, let's see here. I could sell a couple of 94s. Yeah, that looks pretty good. I can sell a couple 94s. And then I buy, so that's going to be what, $6 wide? Then I buy an 88. Just pure junk, man. Just straight junk. I mean, look at this thing. We're only paying $2.31 for a $6 wide crab strategy. So, okay, so let's kind of recap kind of the gimmies and the gotchas, right? The gotcha is we're going to lose both these trades. The gimme is we're only looking at $1.60 on one and $2.30 on the other. So that's only $4. That's just barely over 1% of the account for both trades together. So whenever you're trying something new, I talked about this with Errol, I think just last week when we were talking about going through drawdowns and handling things like that. It's like, man, shrink down your size. There's no reason. You don't need to be a hero. Like you don't need to knock one out of the park, on this very trade. It's like, man, if you're trying something new and experimenting with some different things, just shrink your size way down. And so that's exactly what we're going to do here with this expected move butterfly crab strategy combo. And man, let's do it. Let me push this guy out, and then we'll get on over to y'all's questions. We're right at the halfway mark of the show. We did it. We stayed on schedule today, which does not usually happen. But every once in a while, we'll kind of keep you guys guessing. So I can't get filled at 2:30. Let me try. Look at the market, man. It's going to be green. Look at this thing. You can't keep it down. You can't keep it down for more than a couple seconds. You had the morning, right? So for my bearish friends out there, like y'all can't complain anymore. We gave you a morning, right? They gave you a morning because I'm on your side actually. So they gave you a morning. They gave us a morning. We had a morning. We even had a little overnight action last night with some red. And so it's like, man, beggars can't be choosers. What more do you want? Like, what more do you need? We gave you 30 points in the S&Ps to the downside. That's 0.5%. Right? Yeah, of course, you're still working through the 14% higher that you've had to endure the last 3.5 weeks, but we gave you 50 bips to the downside. And so I don't know what more they can do. And so anyway, there is Disney Thursday, a little two-parter, expecting a butterfly crab strategy. Where are you guys at? Man, I see you guys in the house. I see Justin Martin's in the house. Howie Egg's in the house. Man, let's go. Let me see where you guys are at. Let's see Brandon R's in the house. Wait a second. Yes, Brandon R is in the house. What's going on there, Brandon R? Hey, Dr. J, can you talk a little bit about wash sales? I really can't. Is this something you are thinking about when trading? It is not. And so I am not a tax guy. I know that wash sales are a thing. It's not really something that I worry about in my day-to-day trading. I've never really, to be perfectly Frankie Walsh with you all, just to be straight frank with you guys, I've never taken the time, and this is a shortcoming. I'm not suggesting that you should do this. I've never taken the time to optimize my tax situation when it comes to trading. I've never done it. I don't think I'm doing anything illegal. I'm pretty sure I'm not. I'm 80 delta, 85 delta. But to optimize it and to figure out like what is the best way to do these things to kind of reduce the burden or increase the the refund or whatever it might be. It's not something I've ever really tried to do. It is actually on my list of things that I want to do to grow as a person, like to maintain a growth mindset in my life. I'm like, let me do some things that I really don't want to do. Like number one, barbell rows would be one. I hate barbell rows. And I'm talking about just straight barbell rows right out of the Arnold Encyclopedia of Bodybuilding. Those things just torch my lumbar region. It makes absolutely no sense. But it's like, man, sometimes you just got to man up. Sometimes you just got to challenge yourself. I feel the same way about like going all in on taxes and trying to figure out, where to zig and where to zag and all these kinds of things. I usually just have somebody else do it for me, and then that's the end of that. But one of these years, it could be this year, I may go ahead and try to figure it out myself. I mean, it probably won't be, but it could be. So Brandon R., I am not the person to ask. Yeah, sorry about that. I wish I had more for you on that. So Dav's in the house. What's going on there, Dav? Strategy and Opportunities in the house. Strategy and Opportunity says, I see now it is sprinting from the lows. I knew it. Previous conversation that I'm stepping right into the middle of. And there you go. So let's see. Kimberly saying Tesla is a buy on a dip. There you go, man. You got to buy them low and sell them high. That is, I mean, even people that don't trade and don't invest know that that's what you're supposed to do. Like that's stock market. That's not even 101. That's like stock market 100. That's like a stock market survey class, right? You buy low and you sell high, right? Or if you're Tom Sosnoff, you sell low and you buy high. Like that's kind of the way he likes to do it. Just kind of keep him guessing. And so Don721 says, hey, Dr. J, what are your thoughts on using synthetic strangles, 50-point wide iron contours over naked strangles? It's a great question. I don't love it. And let me elaborate on that. There's a time and a place for it, though, right? There's almost always, the thing about, the world of trading options, derivatives, fill in the blank, when it comes to the financial markets, there's always exceptions. There's always caveats. There's always instances where it's like, okay, that might make some sense. It's pretty rare that you come up against something, Don, that is like, all right, you should never do that, or you should always do that. Like, it's pretty rare that is the case. I mean, the only one that I can think of in my head, and this may still not even be a never situation, but for me, it's a never situation. When I'm buying a diagonal spread, I never want to pay more than the width of the spread. That does not register with me. It does not make sense to me. Now, there are opportunities to reduce basis and whatever, and you could still, maybe make some money if you get the direction to move right. But, man, you're making it so hard on yourself. So if I'm buying a $10 wide diagonal, I'm not going to pay $12 for it. Like, I'm just not going to do it. Now, some of you out there might think, Jim, that's kind of crazy. Like, why would you ever do that? That probably doesn't happen that often. It happens all the time. In fact, here, let me show you. Don, I'll come back to your question really quick. But, if I go into I'm just picking a stock at random. I did not look at this beforehand. I have no idea. I bet you if we set up a $10 wide diagonal right now on Microsoft, you're going to be overpaying for this. So if I go in, I'll buy January and I'll sell December, right? Very standard, plain vanilla Betty Crocker diagonal spread setup. I go into January, I'm buying a 430. I buy a 430 put, right? I'm a couple strikes in the money. I'm going to set up a $10 wide. This thing's going to cost like $12. It's going to be crazy, right? I buy a 430 in January, and then I go into December and I sell a 420. All right, so this one actually worked, but sometimes I won't do this anymore because I'm gonna keep finding ones that work. I promise you. Now let's do one more. Hold on, these never work. They never work in the Megatron stocks. I actually get a good one in Microsoft. Wait a second. Let me go into Netflix. Oh, now it's personal. Like you've got revenge trading, right? I've got revenge diagonal spread finding. Let's go into Netflix. January, 66 days to go. Oh yeah, there's no way this is gonna work. This is perfect. So, and I won't even do $10 wide because that's too obvious. I'll do $20 wide to give Netflix a fighting chance. Netflix is at $8.15. I'm gonna buy. What if I buy an $8.25 in January? I'm paying $37 for it, and then I go into December, and I sell an $8.05. Look at that. It's not exactly what I wanted, but it's close enough. This one we will go ahead and put as a winner in our books in terms of finding what we were looking for. So I'm paying $20 for a $20 wide diagonal spread. Remember, when we're trying to figure out what the most you can make on a diagonal spread is, you take the width minus the cost. So you're looking at this, you're like, man, my best case scenario is a scratch. I mean, it's more complicated than that because you have, multiple opportunities to reduce basis, and you can kind of weasel your way into some profitability. But it's hard, man. It's difficult. This is something that I just don't really think makes a lot of sense. Anyway, I digress. Don, back to your question. Such a good question. It did not deserve that long of a tangent. When it comes to synthetic strangles, you've got to remember that, when you are buying wings, like when you are adding those long options, those are dragging down your profitability over time. They just are. Now, when you're doing like a standard vertical spread, $5 wide, $10 wide, whatever, when you're doing like a standard iron condor, $5 wide, $10 wide, whatever, you're like, well, wait a minute, Jim. Those long options, yes, they're dragging down profitability, but they're serving a very important purpose of, limiting my risk, of defining my risk on the strategy. Well, you, sir or madam, are 100% correct. But once you move out into a synthetic strangle strategy that's 40 points wide, 50 points wide, I've seen some 100-pointers in SPXs that, people like to do. It's like, that's not really a defined risk strategy anymore. Like, you're not thinking these long legs are going to save me from catastrophe. You're probably thinking, if this hits my long legs, that's catastrophic. That is a catastrophe, right? And so you're not thinking about it in that way. If you're doing those type of strategies, you're probably doing it as a buying power, efficiency play. And so I don't hate it from that standpoint. But personally, if you're in a margin account, standard margin account where you get the buying power relief and things like that, I would much prefer to see you go ahead and do regular strangles, just pure options. If that's what you're trying to tap into anyway, right? If you're thinking about a synthetic strangle, then you're thinking, all right, I want strangle exposure. Well, then go get strangle exposure, right? Just use a smaller priced index or use a smaller priced product so that you can fit the buying power into whatever you need to fit it in, rather than trying to, get in the sandbox with all the Shooter McGavins and the SPXs and the price lines and the whatevers, right? And so I wouldn't do it in a margin account. Where I would do it though, and where I would absolutely consider it, is when you're in something like an IRA. So when you're in an IRA, it's very different because yes, you can do naked options, in tasty trade IRAs. You can do short puts and you can do short calls, but they're going to basically be margined like 100%. So there's no buying power relief. There's none. Except, of course, if we use futures options, which we've learned here on this very program. But I digress. We're digressing off of digressions now at this point. But if you go in with a synthetic strangle in an IRA, that can have a lot of savings because now it's not as simple as just finding a lower priced product. You get the buying power savings, whatever. You don't really have any buying power savings to begin with. And so using the synthetic strangles in something like an IRA makes sense. Using it in a margin account, in my opinion, makes less sense. Down 721. So hopefully that helps a little bit. But Strategy and Opportunity says she agrees with Kimberly. Be careful with the shorts. That is correct. Kimberly says new puppies smell so good. That is also a previous conversation that I'm just going to go ahead and insert myself into. We are in the process of potentially getting a new kitten. So if you guys have been following the show for a long time, then you know that a couple months ago, maybe 3 or 4 months ago now, we had to put Biscuit down. So Biscuit was, Autumn and I got Biscuit. We got 2 cats together, Biscuit and Barry. And Barry's she's a female, so it's Berry, not Barry like Barry Sanders or Barry White. It's more like, Blueberry or Blackberry. And so we got Biscuit and Barry together. And we had only been married like a year or two. And so it brought back a lot of memories, and it was very, very hard. And so for Christmas, we are going to get Penelope, my oldest daughter. She'll be 10 in January. We're going to let her get a new kitten. I don't know if we're going to let her pick him out or if we're going to surprise her. We're still trying to figure out the logistics with all of that stuff. But yeah, pretty excited about that. And Penelope's excited too. She kind of knows it's probably going to happen. She's very difficult to fool at all about anything, and it's very, very annoying. But Sergio says, Dr. Jim, thank you for your advice, man. I appreciate you. You saved me a lot of money yesterday on my Shopify positions. Where do I send the Starbucks gift card? Oh man, I appreciate you. That makes me feel so good. I'm so glad that it was valuable. I'm so glad. I remember the discussion. I don't remember exactly what we decided to do, but I think it was something where you had it on and they had earnings coming up and I said, hey, get out of it. It's not worth it. So maybe I guess Shopify had a crazy move today. Let's see. Yeah. Wow. That's a move. Man, I don't remember what your strikes were, but there's not a whole lot you could do here to, kind of work against this. A $23 move in Shopify. Man, that's really something. And so, wow, that's crazy. And so that's awesome, man. I'm so glad that it was helpful, and you're welcome. And don't even worry about the Starbucks, man. next month anniversary is on me. Don't even worry about it. I got it covered. I appreciate you there, Sturgio. So Dav is in the house. Let's see, strategy and opportunity. Paul's in the house. What's going on there, Paul? I appreciate you, my friend. Thank you so much for being here and just being a regular part of the show. And just you're part of the foundation, man. You're part of the rock at this point. And so I appreciate you. Let's see. Let's see. Kimberly says we're still in a lockout rally bull market. I don't know what that means. Kimberly's using some inside terms, some jargon that I don't quite understand. But if I just try to use context clues, a lockout rally bull market, that sounds like Stone Cold Steve Austin certified. Like that's what that sounds like to me. And so I'm putting it in my own terms. And so Kimberly is saying that the bull market is intact. So there you go, man. ES, I mean, again, it's going to be green by the end of the day. It's got plenty of time, got an hour and a half left. And so 6,100, 6,140, like it is written. And so, man, I can't wait for tomorrow morning, though. I mean, y'all thought FOMC, you guys thought the election was a big deal? This is going to make the election look like peanuts. The CPI print tomorrow morning, man, 10 basis points. 5 basis points in either direction, right? 1 basis point in either direction. That's it. All the forecasts, all the estimates, all the revisions, they all are tied to, 3 bips in either direction. So I can't wait. It's gonna be fun. And so Anka's in the house. What's going on there, Anka? I appreciate you so much, my friend. Dave S in the house. Hey, Dr. Jim. I just closed my first short call, covered call with Neo. Man, is he still making music? I mean, look, you can hate on Neo, and I'm not hating on Neo, because I mean, his peak's right up there with a lot of peaks. I mean, he came out with, let me think, So Sick of Love Songs absolutely is Neo. I'm trying to think of the other one though, because there's only 2. So Sick of Love Songs is one of them though, and that, I mean, I got the jingle in my head right now. I'll save you the I'll save you the misery of hearing me actually, tune a couple of chords for you. But yeah, he had a real peak, man. Like he maybe didn't have the staying power, of a Chains or the staying power, of a Nickelback, right? But he's up there. He's 100% up there. But anyway, Dave S says, I want to enter another covered call. Would you have any recommendations? Yeah, I mean, let's see. You closed your first short call, covered call. Yeah. So, without knowing the strikes, and I mean, we can go into Neo right now. It's a pretty, $5 stock. I mean, one of the things about it is if this is and I'm reading your question, and I kind of think this is a longer term play for you, and I could be wrong, right? But if you're kind of getting out and then looking to get back in, that's kind of a longer term type of thing. A day like today, with the stock down ton, maybe you closed out the call just today and you still have the long shares. You don't want to sell a call today. You want to sell a call when the market's rallying. You want to sell a call on up days or a series of up days, an up week, if you will. Now, again, it's not that simple because it may not come. Like you may see Neo in the 3 handle here pretty soon, and then he's just going to stay there. Because again, I mean, it's been 7-9 years since we've heard from him. So I mean, he might very well kind of make his way down to that 3 handle. But if he pokes his head up above 5, 6, 7, 480, I mean, this could be a really, really good time to sell another call against those long shares. And so the basic idea is, you always want to think about what is your advantage. Again, if I could go back to chess, this beautiful game that I'm learning, I'm awful at this game, but I have cracked above 400 now. I've taken my ELO. My ELO was, I was hanging between 250 and 300. It's atrocious. It's embarrassing for me to say it publicly. But I've now risen or increased my ELO up over 400. I'm at about 425. And some dude hung a checkmate on me earlier. I wasn't even looking. He had the bishop queen battery, and he caught me napping, man. And so I'm really frustrated about that. But I'm going to find him on chess.com, and I'm going to take him down later tonight. But anyway, when you have an advantage, let me step back. You always want to look at the board and say, what is my advantage? Do I have an advantage? Right? Sometimes you don't have an advantage. Sometimes you're at a disadvantage, which is frequently the case for me after just the first couple of moves. But from time to time, I'm able to get an advantage in the game. Well, for you in this Neo position, like you need to ask yourself, what is your advantage? One of your advantages is you have long shares. And now, again, I'm superimposing this on you. This may not be how you feel, but I'm trying to kind of extrapolate where you're at from the questions down. If you have shares that you're willing to hold for a long time, that is a huge advantage because you can just hold them. And you can say, hey, I'm no better off than I would be if I didn't consider a covered call. So I'm just going to hold them. I'm just going to sit tight, right? And so then you have, the power of patience on your side. That's a big advantage for longer term positions that are kind of more like passively earmarked. That you're like, all right, I'm not exactly sure what I want to do with this. Maybe I'll bring in some premium, maybe I won't. But now I've gotten interested in these covered calls. Hey, use that to your advantage, Dave. And just don't be in a hurry to get premium coming in against it, no matter what Tom Sosnoff says. No matter what Tony Batista says, don't do it. Don't do it. Just wait, sit tight, and do nothing. And I think that's the way to play. So E Machine's in the house. Says, can you explain the meaning and relevance of the IV percentage on the right hand of the options chain and how that relates to IV rank, how it relates to the next expiration or month? Yes. So let's take a look at this. So I think what you're referring to, if I go into the chain here, you're referring to, I don't think you mean the chain. I think you mean the overview. I'm assuming you're referring to this number, and I hope that I'm right. I think I'm probably right. I would say I'm a higher delta on this than I am on my not doing my trading taxes illegally. So I feel much better about this. I think this is probably, did I say that out loud? No, we don't record these episodes. We're good. So if we've got an IV index of 88.5, what does that mean? Well, when you look at any stock over any, period of time, so you can see here, I just open up like NEO, for example. You can see there's all kinds of implied volatility. So each expiration has an implied volatility. And then each strike within the expiration has an implied volatility. So when you're thinking about, what is the implied volatility for NEO, Disney, Chipotle, etc., it's kind of a misnomer. It's kind of the wrong question because, stocks always have a plethora of IVs. They have a basket, a bucket of IVs. And so to make it a bit simpler, what Tasty Trade has done is they've created like an IV index, which is essentially, I'm not even sure what the formula is, but it's, looking at, basically in the more active months where, a lot of the trades are happening, looking most likely with the around the money strikes, I believe. Don't quote me on that though. They're going to give us just one number that gives kind of a quick and dirty representation of what the IV is like, the implied volatility is like for that stock. So is it high implied volatility? Is it low implied volatility? Like, what am I signing up for in terms of like the movement of this stock, the fluctuations of this stock? Like, if I look at NEO with an IV index of 88.5%, it's like, okay, that's going to be quite a big mover. Because if I go into like Procter & Gamble, you're going to see, look at this. Procter & Gamble, its IV is 1/6 of what we just saw in NEO, right? Procter & Gamble's up 36 cents today. This is the biggest daily move in the last 4 years for Procter & Gamble. It's happening right now. And so the IV of 15%, that's quite different than 88, 89%. So that just gives you a feel for, how volatile is the stock. The IV rank, which is over here, this actually tells you, where is that IV relative to where it itself has been over the last 12 months. Think of it like a standardized test. It's like a 0 to 100 scale. You can go above 100 and below 0, but for right now, just to simplify it, if you have an IV rank of 38, which is where we are with Procter & Gamble right now, that tells me that we're on the 38th percentile of the distribution of all the IVs over the last 12 months. This IV index of 15.3%. So it's on the lower end of the range. It's lower than the 50th percentile, but it's also not like 5, 10, or 15. And so that's how you think about IV ranks. Just think about it like a standardized test. It's basically the same thing. And so, man, I'm like out of time. I can't believe it. This is so fast. You guys don't even know. You don't even know. But Theta Trader says, Dr. Jim, it's your unlicensed street dentist. I'm just lurking, making sure you haven't been swindled by any of those traditional dentists with their fancy offices and sanitized instruments. No, I even told my wife. Because our kids go to the dentist and they had some stuff wrong with their teeth recently, like cavity, nothing major, but just cavities and whatever. And my wife was like, should we get these filled? I said, no. She's like, why not? I said, I got a guy. She's like, you got a guy? I said, I got a guy in my YouTube chat. I said, I got a guy. He does these back alley root canals. He's giving people great prices and he's just getting the work done. And he told me, in confidence that we should not do this. This is not a good use of our money, so we don't do it. And then that's going to be that. So I appreciate you though, Theta Trader. Man, I see the rest of you, Howie Egg, Manny TP. I see Justin Martin. Man, look at you guys. If I didn't get to your question, please come back. Come back on Thursday. We can lament our Disney trades together and drop it early in the stream, and there'll be a much greater chance that I will get to that question. But I got to run. I got to get you guys to Jamal. I appreciate you guys. If I can ever help you in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf30. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
What's going on, everybody? The dollar is exploding higher, and good Lord, it looks like there's no signs of slowing down. So we'll talk about all the things that's going on with the dollar. Speaking of going higher, yields, bond yields just keep on rising. Of course, we got CPI reports, so we'll talk a little bit about that and what to expect. And then finally, all three of these things kind of run together. You got dollar, you got yields, obviously bonds. The one last thing to check off on that is the December rate cut odds. That might be one of the most important numbers we're going to be hinging on for quite some time. So we'll talk about those three things and more. We'll take a look around at some of the other earnings that are going on and assess what the kind of opportunities we're seeing in this market. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. Last night, I kind of forgot what I was... I've been tired recently. I don't know what it is. I think it's the weather change, But last night, me and the wife were just chilling, looking for something to watch. Eventually, I turned on Netflix. They got a bunch of new things coming up recently. Some things are already out. As a matter of fact, the thing we ended up settling in on was the hype up video, for the fight. That's right, the fight's this weekend. Can you believe it? We were supposed to already have it, right? The fight between Jake Paul and Mike Tyson. And took a little bit of time, but it's here. And it is interesting when you look at their past, the two different people. I mean, very different, couldn't come up in different ways. And, it is going to be a spectacle. As a matter of fact, I heard there's like a, I don't even know the correct term. I mean, dwarf, I know I'm not supposed to say midget, but there's a fight of that caliber with like two guys that look like them ahead of this fight. And then there's two women fighting as well who are, I guess it's supposed to be a pretty good fight. It's hyping up. I think Jake Paul is making a ton of money off of all of this because I think he promotes the women. So this is going to be quite the spectacle, man. It should be interesting. I got to tell you, I'm excited to potentially watch. I say potentially because I'm going to be floating around. I'm going to be my son, his frat has a dad's weekend, so I'm going to be hanging out with that in Madison this weekend. I'm sure we'll be watching it though, like knowing all those dudes I think those dudes, some of them are similar to me. They don't mind gambling a little bit. I'm sure we're all going to be finding a way to watch that fight. It's going to be fascinating, man. I really think so, because boxing has changed so much. It used to be that you had, the way Tyson came up, right? I mean, there was a certain protocol. You went about it. You trained forever. You learned, and then eventually you boxed in the Olympics, and then, so on and so forth. And Jake Paul's done none of that, right? But he got famous in a very different way. Well known. Kudos to him for starting this boxing thing. And, he has a lot on the line because he wants to be taken seriously as a boxer. And what better way to do it than to fight Mike Tyson, even though there's like a 30-year difference in age or something like that. It might not be 30. Actually, it might be. But whatever. It's going to be, I know it's funny. Theta Trader's just like Dusty Rhodes, the American Dream, WWF style. I just hope it's not a fake fight. You know what I mean? I hope it's a real thing. There's betting markets, so that means it's got to be real, right? I don't know. Let's pull up some slides. Let's talk a little bit about the day and continue to talk about the Tyson fight and Jake Paul. Speaking of a fight, I'm in the fight of my life for the dollar. Dollar's kicking my ass, man. I am long the euro and trying to be short the dollar. I don't know if it's the best time, but the dollar is showing no signs of slowing down. Dollar is at 6 months highs. It's up 6% since that last Fed meeting. If you don't know how currencies work, 6% is a lot, even if it's taken 2 months. And obviously, a lot of it has to do with, it's actually, it's taking control of a lot of different things when you look across the landscape. It's affected, obviously, not only other currencies, it's affected the move in gold. You see gold's getting smacked more recently. And what else? Obviously, silver along with that. But, it's certainly not affecting cryptos, that's for sure. But it's affecting a couple of different things. And obviously, there's this idea that, it gets to the idea of some of the inflation that we're expecting. It's getting to some of this protectionist ideas that's going on, with regard to China. And so the dollar, I just don't know if the move is so strong at this point that it's not necessarily time to jump and go along with it. I would rather not have a position. So for the time being, I'm still attempting to be short the dollar, even though it's just running into oblivion at this point in time. But I really think there's a lot of scenarios and themes that are playing out over the last 2 weeks that might start to. But I just don't want to play FOMO yet and jump on board. So because I just don't know what to make of it. As a matter of fact, I've lightened up on trading in the last few days here and just kind of watching. Now I still have the bond trade on. I still have the gold trade on. Those are further out and those have some duration to them. But when you see the dollar running like this, and it's been 6% in this short amount of time, probably 3 of that percent, half of it has barely been in the last 2 weeks. It's you don't add to it, but you don't jump on board yet neither. It's one of those things. Similar with yields. Yields are up. Of course, we got CPI coming up tomorrow and then PPI on Thursday. And you can see that yields are running in anticipation of a potential slight uptick in inflation. And if that's the case, then people are really going to jump even more on board with this idea that, potential tariffs that are coming. And again, potential, we don't even know. As a matter of fact, a lot of economists are saying that it could raise inflation. Now, why wouldn't they say it 100% will? Because I guess there's just a lot of moving parts, right? And there's a lot of different other levers you can pull. So that's another one where I don't want to give up on bonds yet just because yields have been running the way that they have more recently. The interesting thing is this time around, we're not inverted, right? You can't be inverted given the fact that we're starting to raise rates at the lower end. So, of course, 10-year is going to be a little bit higher. And so for those of you who have been in the 10-2 spread for the longest, I think you can feel reasonably comfortable staying in that trade. But if you're just in bonds, treasuries, long those like I am, you're probably suffering as we see, the long bond right here down 1% on the day. Again, another big move when you're talking about what's going on with bonds and whatnot. But I tell you, these are things that are, kind of a result of the last 2 weeks and the change post-election. And you just have to kind of go with it for now. But I shouldn't say go with it. I'm not going along with it. I'm in the opposite position in both of these, but I just think you have to sort of sit and watch, not necessarily add to the position as it gets worse, just kind of sit and watch and see how this ends up playing out. Finally, December Fed rate cut. I think this is one of the most important numbers of the next for the rest of the year for sure, and going forward. And the reason why I think so is because, again, you got dollar running on potential protectionist ideas. What's going to go on with the U.S. You got yields staying bid because they're anticipating not only inflation coming up in these CPI and PPI reports, but also inflation coming as a result of potential tariffs. That's going to be blanket tariffs, theoretically. I say theoretically because they haven't happened yet, right? But yes, the thought process, there's this ideology out there that Trump's going to lever a bunch of tariffs on a lot of other countries. And if that's the case, obviously it's going to make things expensive that we end up importing quite a bit. So I think we got to watch this December Fed rate cut number, because if the Fed really feels that inflation is coming back into our economy and it's going to be in a meaningful and big way, they won't cut. And right now it's about the CME FedWatch tool says it's about a 63.5%, right? Is that what I saw earlier? 60. Oh, well, it's dropping. Jeez. Literally, it was like 63% this morning. Now it's 58.7. And so you see what I'm saying? All of this stuff is currently changing. You got dollars going up. You got, bond yields going up. And now this is beginning to change this idea of, well, is the Fed going to cut or not? Even though, it just seems as though it's starting to be a new thing for them to have to think about now with regard to whether or not they can cut rates if we're going to have this inflationary stuff coming in our society. So it's a trying time, folks. I think it's a trying time with regard to the bond trade. Obviously, everything else in the world is fine. But with regard to the bond trade, I think it's a trying time, because if this number gets below 50% for the Fed rate cut for December, bonds are in a lot of trouble, I think. And there might be other repercussions from there on out. Speaking of leftovers, what are America's main imports? Let's move to the next slide. It's very relevant right about now, right? Passenger cars. Back up. This is the value of the top 10 U.S. goods imports in 2023, okay? So you got passenger cars. I'm assuming, well, we don't import Chinese cars, but we do import Japanese cars and a lot of other cars across the world. 203.6 billion are imports. You know what, though? There is, and correct me if I'm wrong, I would think in this number, I heard once upon a time, we do a lot of, we do a lot of manufacturing in Mexico with cars, I believe. This used to be the case. I thought Ford and GM and a lot of them did a lot of manufacturing with plants in Mexico. And I don't think those count as imports, but I can't really remember how that plays out. I'm not exactly sure where this number is fully derived from. I would like to see the breakdown in countries for this passenger car import. I'm sure you could look it up. But passenger cars are number one. These are the things that we mostly import, passenger cars. Next is pharmaceutical stuff, $203.2 billion. That's right, $1 billion on that. Crude oil, $164.9 billion. Auto parts, $140.9 billion. So already you got two things related to cars. Three things, honestly, when you're talking about crude oil and pharma. There's a lot that goes into cars. No wonder these damn cars cost so much money these days. I mean, I'm looking at the idea of a new car, but golly, it's ridiculous, isn't it? Well, a lot of it is because we import. Now imagine if we put tariffs on all of those. You see what I'm saying here? You see what we're getting at? This is why everybody's been talking about this more recently. Cell phones and house goods, $117.1 billion. You think those iPhones are expensive now? We put tariffs out. Those iPhones are going to be twice that. Electrical equipment, $97 billion. Who would import that much electrical equipment? Computers, $88.4 billion. Start to get down the list now. Get a little lower. But you have 1, 2, 3, 4, 5 things over $100 billion in cell phones, auto parts, oil, pharmaceutical stuff, and passenger cars. 5 things. After that, like we said, telecom, 78.7, other industrial, 75.9 billion, and then semiconductors, 72.5 billion. So, yeah, this potential change here, or potential rise in tariffs, is definitely going to impact everybody's pockets and wallets. You know what I mean? Just by the manner of which this may go into. But it's a far cry from where we were at the beginning of the year, where they were talking about all those rate cuts, right? Theta Trader, they were talking about 5, 6, 7, a whole lot. And that has really changed. I tell you, let's move to the next slide. I got a lot of charts here. Manny, Manny TP, I see your question. I'll come back to that once we get to the platform. Real quick, looking at the vol curve, there is no vol in this market. It's gone. That's right. They took it away. That's right. It is gone. The VIX forward curve shows that November, December. As a matter of fact, December was the lowest point on the curve for a while, but now Nova is. So you got, matter of fact, I got them right here in my face. Nova at 15.3. December at December at 15.75. You got January at 16.6. This is VIX futures, and then you got February at 17.15 here, the actual numbers. But yeah, we're in strong contango. Let's move to the next slide. We always like to look at the difference between forward vol and backward-looking vol. VIX minus historical vol difference gives you an idea of how good of a selling opportunity it is. Obviously, if it's above 10, that means VIX is, implied vol is a lot higher than historical, which is always what we're trying to take advantage of. Well, there's really not much to take advantage of right now for a lot of different names. Sure, there's some names out there, but the market is better when you have SPX or NDX or SPY or Qs or IWM, those heavy ranks in the 30s and 40s, just like we saw a couple weeks ago. When it's not like that, this is where we are, like where we are right now. And you can't really sell any vol. It is what it is. Let's move to the next slide. You could take directional shots, using futures, et cetera. But again, big drops in vols here. Look at SPY. SPY is, this is implied vols. SPY is 15. You got Qs at around 19. And you got IWM at around 23, 24. That's like fair for those guys. That's literally fair. When you're talking a 15 implied vol for SPY, that's just a fair vol. Like, you're not really making much off of that. And I just wanted to show it to you compared to the last 2 years. You can see how things have been. 3 years, 22, 23, 24. Again, a lot of it was bonds vol. A lot when we started raising rates, of course, the rate hike cycle in 2022, and we kept it there, kept going in 23, and kind of started to pause at the end of 23, and then 24 we started talking about cutting. Then we finally cut. And now we don't know what the hell we're going to do. Might cut, might not. Let's move to the next slide because things are changing just that fast. And part of this, you got to say, you got to look at an environment. I know, a lot of it is that Trump is very favorable on Bitcoin. But when you add to the fact that we've already cut a little bit and the environment is a little bit, muddled up, cryptos have been completely soaring higher, and Bitcoin was obviously, as many of you know, touched 92 times a day. Just touched 90K a little while ago too. Ether, though, when you look at the ratio between the two, Ether has actually been moving on a percentage basis just a little bit more. You can see that this chart, obviously when this is going higher, Bitcoin is outpacing, but the last couple of days here, it looks like Ether's outpacing a little bit, as you would kind of expect a little bit sometimes. Just like percentage base, we see silver sometimes outpace gold. I think that's kind of what you're seeing here. We'll see how much further this goes. All the cryptos, a lot of cryptos, all the whatever, trash even coming out of the woodwork nowadays starting to move forward. I've seen, Bitcoin, Ether, I'm not calling those trash. I'm just saying I've seen those move higher. But then you see some of these other ones that I don't even name move higher. Crazy. Let's move to the next slide. Another thing to look at more recently, you've seen how financials have been really strong. Again, I think people are anticipating some deregulation in the financial space, and they've really outpaced real estate, which again might be a little bogged down from what's going on with rates right now. So that's another fascinating area, and I think that's a trend that might continue if you want to jump on a trend. This, the difference between this spread, financials and real estate. Let's move to the next slide. Back on this rates thing, the 10-year and 3-month yield. So still looking at this inversion in this neighborhood. Again, 2s and 10s are fine, but 10-year and 3-month yield has been inverted for 744 consecutive days, longest in history. The other ones are here on the screen here. 470 days in the 60s, 414 days in the early 80s, and then 315 days prior to the major point of the global financial crisis, actually. So really long inversion here. And 3 months, it's going to change at some point. You wonder if, I do wonder how if you're going to be able to still park money, right, and CDs and treasuries of that sort. If near-term rates are going to stay elevated, if they're not going to cut, I don't know, or not cut as much as we thought. Let's move to the next slide. So you got some earnings here. SoundHound, I do remember that name. I played that at one point in time. It was an AI-related name. Has earnings. Spotify, of course, is the big dog here for tonight. Mara has earnings. Now, this is an interesting time for Mara to have earnings, given everything that's going on with crypto, right? Kava. I still have not been to a Kava. Heard a lot about this restaurant. Mediterranean restaurant, right? I've heard a lot about it. So I haven't been to one. Rocket Lab, Oxy, Rocket Companies. Got Instacart that has earnings as well tonight. And then you got Hut, another interesting name to have earnings during the Bitcoin time period. I can tell you right now, I would play them, Hut and Mara. I'd play them to the upside for no other reason than the fact that Bitcoin is doing what it's doing right now. Why the hell not? Why wouldn't you? CPI, but that's just me. I thrive off of momentum. I can recognize the momentum trade. CPI report, of course, is on Wednesday. I thought CPI reports were dying down in interest, but I think this one might be a little bit, it might be worth watching and trading because inflation and all of that is coming back into play, or at least, through word of mouth. PPI is on Thursday. You got Powell also speaking on Thursday at 2 p.m. Central, 3 p.m. Eastern. So that actually might be interesting as well. You might make a trading week out of this anyway, man. And then November is options expiration. Number of SP 500 stocks above the 50-day moving average is 314, only 62%. Let's move to the platform. I almost said next slide. So who asked me a question? Manny TP asked me a question. Question on credit spreads. How sensitive are they to IVR? Bad idea to sell SPX put credit spreads on a 12 IVR day like today. Yeah, I mean, why should you? Right? Low IVR, I just told you what the implied vol is. It's 15 and change or somewhere there about at least 30 days out. These are even lower, 11, 12. 30 days out, it's should be in that 15 range, I would imagine. Oh, it's 11 here too. Who knew? Yeah, I mean, this is low vol, buddy. You don't really, if you're selling it, you're just doing it, you're trying to convert a 1231 XPX 650, 60, 75 call spread into an iron condor. Gotcha. The 1231. Gotcha. Yeah, I mean, you're not selling, it's not really, high vol, right? I understand if you want to offset your risk. That makes sense. I understand that if you're worried about it. Or just close the position, one of the two, right? If this thing is, which again, I'm sure you have to eat a little bit of crow if you did that, but you're not selling that for vol. You're just selling that to offset some of your risk, and I understand that. But just know, it's not. I wouldn't say it's a bad idea to offset your iron condor risk if you're worried about your upside. It's just you're not selling high vol. Just know that. But if you just want to do it because you don't feel like closing your call side for a loss, trust me, I understand it, but sometimes it doesn't, doesn't hurt. It doesn't hurt if you want to close out an idea that's going against you. I feel you. Yeah, Mara, what is this thing going to do on earnings? I don't even know. I don't even trade these for earnings, but again, I wouldn't fault you for trading them at all. You know what I mean? Look, the type of person I am, I would do these for $300, just $300 in premium. If it's going to explode, it's going to explode higher, $7. Why not? You know what I mean? And that's $3, like big deal. $300. It's like, but that's just how I roll. I'm not suggesting you guys do that. You do whatever you want. You do what makes sense. Yeah, the gold trade. I mean, look at gold here. Last couple of days. This is concerning now because now it's broken through the 50-day moving average, which it was holding until yesterday. And now we've had some follow through to the downside. This makes a little bit of worry. Now, what does that mean for me? Well, I have a call spread out here, and it's really far out of the money now. And again, I did it for that reason, basically with proceeds that I had from the year, but there's no chance that this is going to do anything now. So do I roll? I'm not rolling down. I'm just leaving that position on, and I'm not going to touch it. It is what it is. Bonds. These are the things that are being affected by yields and by the dollar, right? Gold, of course, is the dollar. Yields, obviously, trade inversely the bonds. And this call spread was looking really nice. Now, I know this doesn't look like it's getting beat up. It's basically around where I bought it. But the narrative sucks right now. And it's really challenging to hold on to this call spread in the face of yields exploding higher. Again, you're looking at the 10-year yield. It's been on the march. Matter of fact, let's broaden this out, /10Y $. Let's broaden this out. And you're looking at, like we said, going back to July. It's the last time you saw it this high before the breakdown in July, actually. I wish somebody could have telegraphed that one for me. That was a nice one. But you're seeing this kind of play out here, 4 months highs. I think it's really going to be fascinating to see how this reacts to tomorrow's number. What does CPI do? How does that end up playing out? And of course, we got about about 5 weeks time before we get to the FOMC report. And again, you're starting to see that number come down. The chance of a 25 point basis cut. It's a little concerning. We'll see. AMD pump would be great, huh? AMD, yeah. These names. It's interesting. Nvidia was still strong today, but I noticed there's a couple of names that semi names that took it on the chin. AMD, Micron, Qualcomm, and I know Qualcomm came out with some news this morning. I don't know exactly what they said, but it clearly wasn't that good. And that's kind of fascinating to see most of those names kind of down, but Netflix up. When you do a look across the landscape, you see, some of the big Mag 7 names are up today. Google, Meta, Apple, Amazon, Tesla. I mean, that's a de facto pullback, of course. Microsoft. Palantir is another name. I tell you what, this thing, talk about momentum. This thing has been crazy. I'm starting to wonder if this company they use a lot of data. And I think it's something we need to be fearful of what they do. But at the same time, I kind of wonder if it's going to be like the next NVIDIA. You do wonder because it's been just you see what's been happening in there. That's how NVIDIA started out. NVIDIA's chart looked just like that. And people are like, oh, this thing is stupid. It's time to fade it. Next thing you know. Bitcoin, I thought about fading this, but I just don't think I want to. I don't really want that smoke. And micro Bitcoin, it's feasible. It's very tradable, obviously very liquid, and pretty good product. And I don't think you lose too badly. But the way that the Bitcoin's jumping between $2,000 and $5,000 right now. I mean, that's on one contract, that's a couple of $100 loss, and I don't feel like dealing with that. But that's where I am, folks. I'm not trading a whole bunch of stuff in this market. I'm still trying to let things get figured out. I still haven't figured out how I want to approach it. I did take a small scalp today in ES when it was below 6,000. I bought one contract, closed it out at 60.25, 25-point move. But other than that, I'm really kind of just starting to look and see. Again, my main positions right now are I am short the dollar. Via being short this put spread. So it's a long delta trade in the euro, underwater on that right now. 52 days to go. I guess I'm long gold, but it's 44 days to go, and it's a very out of the money call spread. Nothing's happening there. And then I am long bonds. I'm long bonds. How about that? ZB and ZN call spreads right now, and looking for a move in those. So those are my main trades. Those are my big box trades right now. Really not too many equity trades on. I do have a Tesla Iron Condor, but that's really not moving the needle for me. It's basically in the money. I needed this type of pullback, but there's really not much I can do. So just sitting on that. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. I'll see you.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
Hello, everybody. Tim Knight here, and it's a red day for a change, and it's a great day for the charts because we're down 0.19% on the ES and 0.17% on the NQ, but my lovingly chosen shorts are doing terrific, much better than those numbers would indicate. In recent days, during this post-election mayhem, as I described it in a video I made earlier, my portfolio has put its fists on its hips and has stared defiantly at this insane rally and hasn't budged. So not losing money is good enough. And today we're making up for some lost ground. The insanity continues. We got above 90,000 on Bitcoin futures last night. But things are starting to look a little frazzled. Tesla dropped like $40 last night out of the blue for no particular reason. And, the Bitcoin rally, strong as it is looking a little bit raspy. So I've got some charts loaded as always, and let's kind of walk them through and catch up with each other with the knowledge that tomorrow morning we'll get a nice, fresh economic indicator in the way of the CPI. Here's the spider. Lifetime high was yesterday. We're near it right now. We did some dipping earlier, but that's been shaken off to some degree. But big old meh on that one. Here's the diamond. Likewise, lifetime high yesterday. Bearish engulfing pattern on it right now. And I love this market because prices are so high that it's just like, geez, kid in a candy store. Should I get one with a PE of 400 or a PE of 500 or 1200 or 5,000? They're out there. They are out there. EEM, the emerging markets, shows that worldwide markets outside the US continue to sink away. They had this weird diluted reaction last Wednesday to pop, just like ours did, and then realized, oh, wait a second, this is not pop worthy for us outside the US, and so they've been dropping. And in particular, of course, China continuing to sink. My affection for Chinese shorting had sort of dissipated, but it's kind of a shame because China is, these stocks just have continued to sink. This is FXI. Like I said last week, weirdly and inappropriately, China stocks rallied. Why? Why on earth would Chinese stocks be like, yay, huge tariffs? And, kind of an anti-Chinese disposition. That's great. Wait a second. No, it's not. And then it plunges after that. And remember, this is in spite of a stimulus package measured in the trillions of US dollars over there. So that's done a whole heck of a lot of good, plunging them deeper into debt still. And individual stocks in China withering away. PDD down about 3%. BABA down about 3.5%. JD, not ours, but theirs, is down 7.27%. And YUMC, Yum China, down also about 2.3%. So, yeah, pretty red across the board, which I guess is fitting. As I said, the crypto insanity continues. We're just about 90,000. As we zoom in here, you can see right up here, the cash market did in fact get $2 above the $90,000 level just to do it. It's kind of like Mount Everest, Edmund Hillary, why? Well, because it's there. Well, why 90,000? Well, because it's there. I'm sure 100,000 will be the same disposition. If it does start falling, key support will be way down here, about $17,000 from now. One must believe that at some point it'll sell off, and that is a crucial support level to prove that this wasn't just some last gasp or something like that. So crypto doing very, very well. And of course, anything related to crypto, whether it's the dozens of ETFs that were introduced last year or any of the mining stocks, MicroStrategy up again. And actually, this is just curious if this is at a lifetime high. 333, very holy number there. That was the peak back on March 10, 2000. March 10, of course, famously the absolute tippity top of the NASDAQ bubble. I actually don't know. I haven't checked. Let's find out today. The high, we beat it handily, way above 357. So for the first time, let's see, yesterday, got above it yesterday. So we busted it yesterday for the first time in 14 years and 7 months. Beat that high. It took a while. And then yesterday, besting that too. So pretty stunning stuff over in Michael Saylor land. Tesla, Fibonacci's, as always, amazing. I mean, if you ever wrote a book about Fibonacci's, you could just use one stock to talk about it. Look at what's going on here. Last night, it continued to rally. And like I said, there was a sharp sell-off at one point of about $40, which recovered. And then it resumed again. But look at this. Just look at this one bar. Today's high, almost to the penny, right to that pink fib there. Today's low, a little more than a penny, but got a little below this fib. Range bound right here, like so. So just fib to fib we go. This chunk jumped higher, hit resistance here. The next day, blasted right above it. Support here, what used to be resistance, and then up again, almost to the penny. And then same. So in other words, today's low is roughly the same as Friday's high. All these lines continuing to work very, very well. And, well, that's cute. What's next? I imagine between now and the end of the year, we will sink back down to this zone here, as hard as it may seem to believe. At some point, I believe that'll happen. It will be healthy, very healthy if it does that. Going up 10% a day, no. It really needs to ease back and affirm an important level of support down there. So somewhere, I don't have a precise figure. Well, obviously I don't have a precise figure. It's a guess, but somewhere around here, maybe the low 270s, something like that. So today's a step in the right direction. We're off $20, almost 6% on Tesla right now. And I've got to say, I wander over to Wall Street Bets from time to time just to kind of take its temperature. And there are way too many posts saying some variant of, I took $600 last week and now it's $126,000. There's a few folks that took incredibly aggressive sequential bets and just, hit the Powerball every time. And that is the allure of gambling, of course, because, look at lotto ads or anything else. Basically, it's this is a survivorship bias, and there are a handful of people that point to their accounts, and they're not lying or anything. It is true. And everyone else goes, oh, I want to be that guy, and then in they go. I guarantee you a bunch of people yesterday went like, I want to be like him, and bought a whole bunch of short-dated calls on Tesla, and today they're like, wait, what happened? It's down $20. I get a negative 99% return. That's not supposed to go like that. You got sucked in. So, yeah. Anyway, not a shocker that Tesla's weakening there. Palantir, kind of the same boat in terms of the fast ascent post-election. And the peak was yesterday so far, and as with Tesla, I really do believe it's got to at least ease back to around here, if not more. Look how sharp this ascent is. This is bonkers. Down here, what were we at? This was in August, $21, and we're at about 60. 200%. August, September, October, part of November, 200% in 3.5 months on, and this isn't some, $5 million market cap biotech stock that found the cure for cancer. This is a very large, established, well-known company. 200% in 3.5 months. A little fast. The dollar stores continue to sink. Dollar General down again quite substantially, and then Dollar Tree up a little bit, but you see the long-term trend is pretty ugly on those. And as far as DJT goes, which has been kind of left out in the cold relative to the Teslas and the Palantirs, this one blasted higher the day after the election, and it opened near the high for the day, and it's been kind of just flopping around like a fish in a bass boat ever since. So here we are at this convergence of these trend lines. I think people will quickly become disinterested in this because it ain't acting like those other beasts, like your private prisons and your tasers and all the rest of it. Adjunct to this, an even worse stock, was Funware. You probably don't remember those, but when Truth Social was first a thing, Funware was pointed out as like their ad platform, and so it enjoyed the ride as well. And it did too this time, but it's already sunk again. It's gone from $14.40 down to about $5. So post-election stuff is definitely ruling the roost. Big Pharma, not liking the RFK vibe. Here's AbbVie, which plummeted yesterday and is adding to that today. This had peaked, not surprisingly, before the election at over $200. It's down to $172 now, so about 15% drop, very short amount of time. Eli Lilly, zooming on here, it was up about $1,000 weeks ago, and it's at around 823 right now. And then my own personal interest, because I actually have a position in it, is Novo Nordisk, NVO, which is down about 2% today after a beautiful Head and Shoulders reversal top on that. We're all over the place. That's the Bula Boss of charts for you today. Another oft-mentioned short idea, in-phase energy, just keeps on keeping on. This having another good day, off almost 7% today alone, below the beautiful big brother and little brother of reversal patterns right there. So very nice to see. And with interest rates rising, housing, home building, real estate, all feeling the heat. For instance, Alexandria Real Estate, ARE, is off about 2.5% and completing a honkin' big pattern here. This is a half-decade wide pattern on ARE, much bigger than this sucker back here. And this was, of course, the housing crisis, which pipsqueak compared to what we're in right now. And then VNO, which I've mentioned many times, but never bothered with because the options on it just stink out loud. But this is reversing away nicely from that peak yesterday. Boeing, which has had its share of PR problems and union troubles and whistleblowers and all that, continues to slip in spite of record highs on the Dow and so forth. This broke its own multi-decade trend line, and this is a real odd man out because this has gone from over $400 down to about a quarter of that. And this isn't some junky. This is Boeing, missile maker, weapons of war, planes that are more or less stay in the sky. So this is a big deal for it to fall 70% plus in a market like this, in which everything is virtually guaranteed to go up. So that's Boeing. As far as precious metals go, looking still kind of sickly. GLD is down. Gold itself today down, not terribly, but about $12, $13 or so. Silver, bless it, it's trying to shore up, and I maintain still here on SLV 27.47. I think is a very proper stop loss level for that, because it is within the realm of possibility. I'm still crossing my fingers on this, that this will brush itself off and start the kind of rally that I would like to see, in which, if it transpires, is ideally has the target way up there. And in the final moments, Little told you so, TLT, behaving itself beautifully. You may remember last week, up, having found perfect support at this trend line. Up Wednesday, up Thursday, up Friday, on dasher on. And so up here, what did I say about this line? This represented resistance, and goodness gracious me, it sunk yesterday and really sunk today. So this is beckoning, and the CPI is coming out an hour before the open tomorrow. So I would not fall over backwards of shock if the bonds kept sinking. So, all right, great. Well, I will see you post CPI. Thanks for coming by, and I hope you're doing all right. See you Wednesday.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. You know, that's what I do.
Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Nicky, we are back, my son. You know what that means. It's time for the last call. Thank you for filling in for Tom Sosnoff, who had a wonderful show over across the pond. He just got done about an hour or so ago. He wooed them. He worked them. A little bit of hiccups with some of the technology, but they were able to overcome that too, which was nice. So kiss the babies. Now it's on to the next city. But you're still here. That's the good
Of course. It's my great honor to fill this seat. Something I dreamt about as a young child, as a young bat, filling the Sosnoff seat.
Most kids wanted to be like an athlete or a baseball player or a fireman or something.
Yes.
Or heaven forbid, maybe a trader on the floor of the CBOE. You wanted to fill Tom Sosnoff's seat, and I'm glad I was able to get it done.
Happy to be here.
NASDAQ down 32. Even the S&P's down 16. That's usually the relationship you should get, 1 to 2. Russell down 46. The Dow down 335. And volatility in all day by 5 to 10 cents, trading 1540. Bonds, I don't know if you saw them. They had a little bit of a rally in the middle of the day. They got up to 118, 118.05. Back down under 117, flirting with 116. 116.04. They are the big mover to the downside with the Russell. Bitcoin to the upside, son. Back to 90,000 and change. Look at this, 90,185. Now 90,200. Can't keep a good Bitcoin down. Ethereum hanging in there, down $44. Oil unchanged after trying to stage a little bit of a rally today. Up 6 cents. Gold down $13.40. Silver up 18. Those two going in the opposite direction. Natty gas approaching $3. Got over it today. Is 2.91. I don't have a nat gas position. Corn, wheat, and soybeans are lower. Wheat being down by 2%. So commodities taking it a little bit on the chin. The euro is still lower. You can see here the euro continues to go lower. That's like a spike lower, but really. Something about the equities a little bit today. On the downside, you had Tesla down 23 after its huge run to the upside. I don't even consider this a downtick. Look at the volatility, up 12%. It was up even more, about 17% earlier in the day. Goldman Sachs down $10. It too has had a huge run to the upside. I do want to talk a little bit about coin down $5.70 with Bitcoin being a lot higher right now. The little bit of a I'm not going to say a decoupling because look at here, coin's been going up the same thing with Bitcoin, but they don't run hand in hand all the time, right? Yeah. They could be uncorrelated at times. But I do want to mention, because I got a lot of emails about it. Somebody must have tweeted out something or said something about BITO. The most emails I've gotten about a product in a long time was BITO. Is it a good long-term hold? Is it something that we should look to buy, look to sell, and why with Bitcoin at all-time highs? If this ProShare Trust Bitcoin ETF not anywhere near all-time highs of $34, is it undervalued? A lot of questions in there.
Well, it has it's a funky product. It tracks the future, so it trades the Bitcoin, the CME Big Boy futures contracts, 5 coin notional, equal to I think.
So it doesn't invest directly in Bitcoin. It invests directly in Bitcoin futures.
So there's a little bit of drag there, but that's not an issue because the way it's structured is that it's notionally equivalent to whatever the net flows are of the product. So it's exposed to Bitcoin. Mm-hmm. The leverage that it gets, it invests in short-term treasuries, which is why it pays this dividend. So the reason it's down, quote unquote, is because it's paid, dividends throughout the last year and a half, which have been, real income, 5%, short-term rates.
Sure.
And so that's been part of the story here.
Right. Its year-to-date return is about 70%.
Yeah.
So it's up about 70%. About 70%. Yeah.
Yeah.
3-year return is only 2.5%.
Yeah, but that's not including the dividends.
That is correct.
That's just the gains in.
Yes. You're 100% correct. Yeah. You're 100% correct. So is it a good investment if you wanted to invest in Bitcoin? It doesn't always have to have all of its money in Bitcoin too. Like you said, it can have.
Correct. It's leveraged. The risk with it is
there's a personal question, like your opinion. You're allowed to have an opinion on if it's a long-term or long-term hold or not. Yeah. I have my own thoughts on it. You have yours.
I mean, yes, it's just you're the dividend that you get, like this is not like a dividend paying stock. It's based on, it is right now based on treasury yields. So that is something that can go away, and that dynamic of it is priced into.
I paid almost $1.99 dividend back on the first of
Yes,
this month.
but it's also incorporating the Bitcoin futures roll month to month. So you get paid out based on the treasury yield of the cash that they have invested in short-term treasuries.
Yield, call it risk there.
Yes. So so that would, but if rates come down significantly, that will come out of the price of.
It will hurt BITO.
BITO.
Rates go higher, it would help BITO, even if Bitcoin and futures don't do anything.
Yes. If Bitcoin so the futures roll and that cash value is closed out and paid out. So if Bitcoin is up on the month for the roll, you get paid out.
Yep.
That sum of that value. So the dividend here is a combination of the short-term rates plus whatever the gain is in Bitcoin. If there is no gain in Bitcoin, that will offset, so if Bitcoin's down 10%, there's going to be no dividend on BITO and that's for the month. That's for when the contracts roll.
Sure.
So there's no, we've just happened to have, straight up basically month over month in Bitcoin. And so that's why it's been constant dividends. It is not guaranteed to pay a dividend. It will offset some of the losses, but those are cash losses.
That's correct.
So that's another part of the equation. It's not, spot. If you buy Bitcoin and it goes down 10%, you're marked at down 10%, but you're not cashed out at 10%.
That's correct.
So that's another part of it. So if you understand what it is, then
there's some nuances to it.
There are some nuances
I think if you want to buy Bitcoin, just buy the cash, and you can buy as little or as much as you want to. That would be my answer to it. Plus, there's I think it's almost a 1% expense ratio too in BITO. That would be the other side of the coin too. There's some management fee in there too. All right, I'm glad we kind of talked about that. I know I threw that on you. We really didn't prepare for that. You did an excellent job. You actually went a little bit deeper than.
Yeah, I didn't think you'd go that deep. I came to save you. I mean, it's young blood. I know a couple things. I've learned a couple things along the way.
You're a learned young man, and that's what I like. That's what I like about you. You bring a new something different to the show. That's good.
I thought I was going to be a hero midday today. You talked about the bonds rallying. You had the E-minis down like 40, 50 points at one point. NASDAQ was down, I think, about 100.
And volatility never crept up. It was
never.
I think by about 10 cents at one point.
I closed out of that UVXY that I put on yesterday with you.
Oh, good.
Took like 70 cents out of that, so it was a nice little.
There was another trade you did that made some money.
The Tesla crab trade.
The crab trade, yeah.
I actually want to highlight this because
Sure.
Can you pull up the order chains?
Yeah, what do you want me to put up?
Just pull up the order chains, there for like December, and then go to the column on the left side and put change where either one,
volume?
delta or implied volume,
Change?
anything, whatever. Yeah, either one of those. So this is kind of what I was talking about yesterday, and we were talking about with rolling up the put and how it sucks to have to roll up the put. And how you always get scared of the whipsaw and you always think, oh my God, the stock's going to drop as soon as I roll this put up and I'm going to get whipsawed on this trade. I had tons of emails about people getting their face ripped off on the upside. And what I was trying to explain was obviously the stock can go higher. And everybody's email was the stock's never going down again.
That is correct.
So I was trying to explain just Tesla in general and like NVIDIA and some of the other not meme stocks, but stocks that have upside skew and velocity.
Yep.
You get this massive pump in volatility on the way up. On the way down, you get a huge volatility contraction. If you look at the 5-day IV change, if you have that column on your left side watch list, do you have that there? You don't have that there.
I don't.
I'm operating with the boomers here. It's okay.
5-day
IV change when
I'll give you this, my son. There you go, right there. 5-day change. That's a 12.5%.
Yesterday,
17%
Yes. So you got 5 to probably more than 5.
Ivy rank was closer to 80 at 68 now too.
So go back to the option chain there.
Don't mess with a boomer. We got our.
All right.
Go ahead.
The point I was trying to make is, yes, it stinks, and you'll miss out on a little bit of value if you roll up the put. If the stock were to open 20 points higher, you would have got back $2 or $3 or $4, whatever your roll up put is. The stock drops 20 points, and that put cost you 50 cents. Right. And you make back $20 on your short call that's at the money. The person I had the 335 call, which is right at the money now. If you look at that call,
it's down $15 today.
It doesn't matter where you rolled your put up to, whether you rolled to the 325 or if you rolled up to the 350 and you went in the money or right at the money, you made money back today on this 20-point down move. Yes. And that's the whole point I was trying to make, was that volatility here is so high that you have to make the adjustment that you think stinks, which does stink into a 20-point move, but it doesn't hurt you here.
Yeah, you're 100% correct. You look here, let's just say.
Any call you had, you made money back.
Even look at the straddle, which would have had the 345, 350 straddle would have no delta to it yesterday. We're talking about yesterday when the stock was, $21 higher. You lose, a little over $13 on the calls, $8 come back in the put. You make $5 on a strangle that now has long delta to it on the way down.
And that's all vol.
It's all vol. And that's vol because the stock went lower, as we talked about yesterday and today, and SPY, when something goes lower, volatility goes higher. But in these high flyers, volatility gets crushed on the way down.
Yeah.
You just need a small little downtick.
And 20 points we were up what, 50?
150.
We've been up 150 over the last week. We were up 50 yesterday. It's been $50 a day.
Right.
You can't manage on the way up like that.
No,
but what you can do here today is you look at that position and you say, you know what? I got my face ripped off. I was out 10 grand and now I'm out 5 grand.
Yep.
And maybe you take that. What do you want to do?
Now you got at least something to do. You didn't have to.
I wrote that.
Rolling up the put or rolling up the untested side allows you to do. You get a day where you kind of get what you need, or at least what you played for, or what you asked for.
Yeah. Yes. And now you have a decision to make, whether you hold the position or you close it.
Right.
And sometimes, everybody's so focused on making this a winning trade, and what do I do to get back? Sometimes you can't get it back. Sometimes you just stink and you lose on the trade. That happens to everybody.
It does. And I can remember back in bat versus bat long time ago, me telling you that same thing. Took you a little time of learning and doing to get it. But yeah, you're 100% correct.
Yeah.
Right.
So now
that is the difference between trading and just hoping things work out for you.
Yeah.
Sometimes you make the wrong decision. You stay in the trade, you would have done even better. But you know what? You can't look back. You got to keep moving forward, and that's the only thing you can do.
Yeah. And you got to take it as it is. You can't be married to positions and try and,
It's not personal.
It's not personal. Sometimes, and you should expect, this isn't the last time this sort of move is going to happen to you.
Unfortunately.
This sort of 3, 4, 5 standard deviation move, you're going to see 1 a year, 2 a year, 3 a year, 4 a year, depending on what stocks you're trading. So, you lick your wounds and move on.
Yes, this is one of the bigger moves, though. I will say that.
Yeah, but then
I don't want to go back in the day, but trillion-dollar companies, which I never traded back in the day, but the equivalent of trillion-dollar companies didn't double in.
Well, trillion's the new billion, or you had billions, we have trillions.
Right.
That's what it is.
It usually didn't double though in a month. You know what I mean, or 2 weeks.
Well, things move fast now.
Things move fast now.
Yeah.
News moves fast.
There's way more liquidity. The market it's a different animal.
A lot of money chasing things. Yeah.
But you look at this trade, and yesterday you were 100 points in the money, and now you're 50 points in the money, and you made back half your loss. Mm-hmm. And still it blew 100 points in in your face.
Yep.
It's a win.
Yep. Oxy Spot didn't have earnings.
Spot has earnings after the close today.
Yeah, after the close. You are correct.
Done nothing but go up. It's a triple
$8
this year. What do you want to do?
No, I don't want to do anything.
I know, I'm joking.
Oxy Spot Kava. You like Kava?
I mean, I think the stock is through
Not
the
the stock, the food.
stratosphere.
Forget about that.
Yeah, the food's pretty good.
Okay. Coffee
You know,
down $3.
You want to talk about price to earnings? Old man over there, 391.
That would be a little frothy if I was.
What's your play?
If I was an older man.
No, I know. I saw after their last earnings, I saw some tweet that was like every one of their franchises is like valued at like 55 million or something. It's like unbelievable. Whatever. Who knows? Price is price.
Very, very good. You are correct, my friend. You are correct. How was your day today? Did you? For me, it was all about Tesla, a little bit about gold. I got a Baidu position that I could use just 1 day of uptick. I've been fighting it. I could really use 1 day of uptick here. IV rank is 61 in Baidu with the earnings coming November 21st. If I can get like a $3 up move, I think I can be out with a green scratch. Can you make that happen for tomorrow? Usually when the market goes lower, they'll come for the pigs, like these stocks, but they have not come for them at all.
Yeah,
Not one time.
I don't think there's any rhyme or reason to where, why, or when the China stocks will move anywhere. I think you take your money and run.
Yeah, I blame Sosnoff on that one, so it's okay. It's not even, it's not my loss if I have it. So I'll be all right with it. I'll be definitely all right with it.
Too good.
Did you trade any commodities today? Anything in oil or anything else?
I didn't really do a ton. I did a long vol play, a new one. I closed out the short duration one that we did yesterday. I did a new one for the end of the month that came out in the cherry picks, which we could pull up if we want to do that.
Maybe they can. There we go. Yeah,
I also
cherry
did
picks up there. Yeah, go give it to me.
I also did an iron condor in Coinbase, which I don't think has moved.
Coinbase is only down 6.5. I don't know when you did it. It was down around
middle of the day. But I did a 20-point wide put spread, 10-point wide call spread. So
what did you get here in the cherry picks? What's going on?
So this was a Dr. Data special. Shout out to him for working on this while I was.
And he came on the show today. He did a little special at 8:40 for the.
Very good content on the back test.
On the backtesting. Yes.
So this is just kind of a recap of what we've been through over the last week or so since the election, showing just the magnitude of the market move. We also put the Bitcoin move in there, as well as our link to the cherry picks from last week that we put together that had a ton of info on Bitcoin seasonality. Ryan came with some just incredible information that could not have been better timed, to be completely honest. So literally the day before the election. So that was some good stuff. If you want to read that, it's linked there. We looked at like the euro. Obviously, the US dollar has been super, super strong across the board throughout the last week or so. So every currency is getting killed, but really the euro is, at a yearly low, if not below that. We also looked at some of the sectors that have been moving. Obviously, the banking sector. I know you have your problem child in Goldman Sachs, and JP Morgan has been going nuts, and just the banking sector in general.
Hey, I know my positions. You don't have to tell me them.
I'm just adding some color. I'm a color guy. So we talked about the banking sector. You can look at some of the other sectors, oil having another good one. And then you got all the gold miners, which don't totally move with gold. They're not near highs, but they're getting killed over the last week or so. We also took a look at volatility. So you got IV rank of all the major indices there. We got our little link to the backtesting segment we did today. So you can get that down below as well. And then 2 trade ideas. I did one in Coinbase, I did one in NVIDIA and one in UVXY. NVIDIA has earnings tomorrow or next week on the 20th.
Mm-hmm. And UVXY trade that I took a look at it while you were just talking just a moment ago. If you have a portfolio that's leaning a little bit long,
it's a cheapie.
Cheap little shot to get basically a 1-to-1.
It looked like I was going to bottom ticket. Middle of the day today. I thought I was going to be somebody.
You're going to be somebody.
I was going to be somebody. And then market said no. It gave me the Dikembe finger. No.
No. Not for you, son. Not for you.
Not today. It's okay.
Nope. We've got one more housekeeping to do, if you don't mind. Sure. We've got what's your assumption?
Yes.
We do it every Wednesday where we ask you to submit your assumptions to tastylive. So all you have to do is go to tastylive.com/assumption. Love to hear everything you have to say. And then Nick and I will put those trades on in Tom's account. And then
I was going to
sometime
say,
in the-
is that we got the keys?
We got the keys. We got
Good, good, good.
And sometime 2 or 3 weeks from now, he'll say, I don't know who put this trade on, but it's a loser.
But it stinks. Whoever did that trade.
But he doesn't remember any of the other trades that you'll do. So please, I would love your assumption. Please submit them to tastylive.com/assumption.
Mm-hmm.
Very easy. Good to do. Good to go. Have you traded any DJT? I'm looking at my emails and
God, I haven't even looked at it since. I mean,
down about 8.5% today, down $2.80, hanging out at that $30 number.
yeah, that's another good example and lesson in volatility. If you look at like December puts, they traded at $10, and long puts. I mean, like look at it, just like right click on the 30 strike put.
Sure, you want me to?
A little option price.
Mm-hmm.
So DJT, in the middle of the election, these were trading at $11.
I'll come up.
DJT was at 50.
I might have to go to do I have to go to a daily?
1 year daily is usually what I look at.
Yeah, because it probably haven't been around. So let's go.
But either way, it doesn't matter. I give you the numbers.
So here you go. They trade up to about $20.
That was in September. If you look a week.
Here, go a week ago.
Yeah,
There you go.
that's what I'm saying. Is right for the election with DJT trading at 45.50-ish. These were trading at $10, $12. The stock's now down $15, and they're trading at $6, and that's another lesson.
You got the direction correct, and you were.
You got the direction correct by 30% in the stock price, and you lost 50% of your value.
Yeah.
So that's
what makes it tough. And then the call spreads will trade so cheaply. You can't sell these call spreads. Even if you do a wide call spread, and then by wide call spread, I'm just going, you go $5 wide, you get $1, and you're basically at the money.
Yep.
That's really what you're doing there. So just a tough place to play. You know what you got to do in there? If you wanted to do something in there, you could do some sort of grab trade in it. You could do some sort of, buy, call, sell, put. If you're bullish, the opposite. If you're bearish, just do a stock substitution trade. Very hard to do anything else in there in DJT. So not the best. Coin I put on a 1/2 ratio spread today.
Ooh.
Trying to take advantage of your whole thing about if the stock goes a little bit lower.
Gets killed.
I mean, when you take a look at here, and actually vol is back up. It got down into the 70s here. It's IV rank of 84. I did the 500, 550, 1/2. You could probably do it better than I did it earlier today. I think I did it for about $1.90 or something like that. Looks like it's about $2 and change on the screen. I don't know. Break even over $600. Stock is trading around $300 and change. Anything can happen. It's got a high IV of 93% for the month, but I need a downtick in there, and volatility will contract. I'll make $2 in there pretty quickly. That's what at least I'm hoping for. And hey, everything has to go to parity by expiration. And if we're at 550, you make yourself 5 G's on the trade. It's a very capital intensive trade though. Yeah. Use a lot of buying power. No way around it. You can't make it a smaller trade.
Certainly not.
Mm-hmm. All right, we got about a minute and a half here before the market closes here, son. Even the S&Ps are down 20. I said we were going to be down on Monday. We were down small on Monday. We're down on Tuesday. Have we seen the downturn? Are you buying this dip?
I would like to.
Kind of a loaded question. I mean, I was really being tongue in cheek.
The ideal situation would be to get a 2 or 3% down move, a nice pop in volatility. That would be when you load the float total.
Mm-hmm.
That's it. I think it's a tough buy right now with volatility this slow. That's just, and we're at highs. I think that's tough. I would like to see a little bit of a pullback, a little bit of a pop in volatility, and you go sell some putties.
Very nice.
You bank in the next 2 weeks.
Very nice.
Afterwards.
Very nice. We're 6,013 right now. We got as high as 6,036. Do we see 6,050 or 6,000 first? Meaning, do we? So
in E-minis, we saw 6,000 today. We saw below 6,000. We got 59.86.
I meant see it again is what I meant. I'm sorry. Is this?
Yeah, I think we see 6,000. I think we get 6,000 tomorrow. You got
by the-
CPI.
so
you got
you're
a
almost
little
there on either side. Again, a little bit of a loaded question, but I just wanted to get your feel on what you think the more volatility never percolated today. I said it on my podcast. It looks like volatility. When we were down around 25 on the E-mini S&P, you know what? This vol isn't moving.
Vol's dead. R.I.P.
Rest in peace.
I hope not. It's no fun trading without vol.
I hope you're right too. Bitcoin 100,000.
Almost, but guaranteed. I think so. I told you that. There's E-minis down 19. They didn't get the 10-point rally into the close.
No, they did.
I was ready for it. It's like part of the show.
And Tom likes to say you are right.
But yeah, I think Bitcoin is a given for 100,000.
I hate all this optimism. We're gonna take a quick 90-second break and come back tomorrow. We got
maybe not tomorrow, but end of year.
We got overtime right after this. See what those guys have to say. Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah, as you should be, brother. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
He's a senior in high school.
Okay, cool.
He has $25,000 from working. That's amazing. Do you think it's best for him to stick with defined risk or undefined risk strategies?
The term undefined risk is a really crappy term. Undefined risk strategies have a higher probability of success. Defined risk strategies have maybe less risk. I prefer undefined risk. He should mix them up.
Any percentage, like weighting, like 60-40, 70-30? Like,
I mean, I'm 75-25, undefined over defined. He can be whatever he feels comfortable with. He can be 75-25 defined or 75-25 undefined, or he can be 50-50, anything he wants.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
And it is a duo once again. Chris Vecchio still in and around the New York area somewhere, but we're here. I'm Ilya Spivak from San Francisco. That's Dylan Radigan broadcasting from Milan. We're overtime. We're going to try to make sense of what's going on in these markets here as we get into the close. Dylan, thoughts?
I mean,
very different day today.
My thought is that, you know, the market obviously is on pause. We had a massive event. Everybody knows what the event was. We had a price adjustment in response to that event. Everybody knows what that was. And the advantage of such a clear result is a very clear response, but it was also a very rapid response. And now we've gone into full pause, almost to the sense where, okay, here's the new price level at least in the short/intermediate term context of the political transition in the United States. And so now we go into a full, basically freeze in place, awaiting CPI. Inflation becomes, especially when you look at the Kashkari comment, which is not that Kashkari is such a big deal, but he's a Fed governor and he's in the room. And when he says that the December rate cut is not a sure thing, it basically implies that it's not a sure thing. I don't want to put words in his mouth, but as I read his comments, I didn't listen to him, so forgive me. But in reading his comments, it was the December rate cut is a sure thing, comma, as long as inflation data makes it possible. And so with that sort of caveat of as long as inflation data makes it possible, it recenters what you and I have been saying all year, is the primary boogeyman or one of the two boogeymen, which is labor market versus inflation. And people seem to have dismissed the November jobs report despite its abominable characteristics because of whatever reason, strikes and hurricanes, whatever. And so we'll have to see what happens in December with the labor market. But for sure, heated CPI will not be viewed favorably. And, you know, it's not just the stock market that's on pause. The yields continue to creep higher. You know, that may be a combination of preemptive inflation anxiety plus tariff/deportation inflation. You know, I think that the tariff/deportation inflation is a stretch. You know, I mean, obviously they are going to try to do these things. They're not even in control yet. How much are they going to be able to do, et cetera, et cetera. But on the margin, it's an additional inflation threat, if nothing else. And so, you know, it's almost like we're no longer involved with the obsession with the American political dynamic or American political leadership. And we're back into the business of inflation, the labor market, and earnings, which are both, on the one hand, you know, can feel tedious or redundant or sort of repetitive, but also inflation, labor market, and earnings are the wheels around which the global financial markets turn, decade after decade, year after year, month after month, week after week. And so if anything, I would say this is a nice pause as we shift from some version of hysteria or mania tied to who's going to win and what are they going to do and all the things I don't even want to relive right now that we all lived through the last 9 months, certainly the last 3 months. And the market is basically pinned now on macroeconomic data. Full stop. That's my interpretation anyway. Certainly with a yield creep on the margins relative to anticipation of more risk of inflation than not, or more risk of inflation than not just in CPI, marginal, but also because of the incoming administration's potentially inflationary proclivities.
And to your point, I think when you look at the price action today, it's very difficult to come to a different conclusion. Because when you look at what's happening here, obviously here's the S&P. It's basically treading water here. It's a little bit lower, off by about 0.4%, a little bit less. And we can see that much of what this is, I mean, it's not the world's biggest move, but when we break down where the weakness is and look at the sectors, we can see that the NASDAQ is really the winner here of the bunch. It's only down about 14 bips, so about 0.1415%. So it's significantly better here than elsewhere, and still kind of hovering at this high that we were looking at back in July. The real sort of pain points are in the small caps, where the Russell is getting shellacked, and then the Dow, where we are likewise seeing a negative response that's much more sort of pronounced and setting lower lows relative to yesterday, and obviously heading into the close that way. So the weakness there sort of showing up in the sector rotation. If we look at where the weakness is most acute, consumer discretionary, healthcare, materials, real estate, not the biggest decline in financials, but they are down, healthcare, industrials. The places where we see a little bit of green, the super glide, as it were, the technology side of things, communications, that's where things are holding up a little bit better. And against the backdrop of all of this, because all of this sort of looks like the cyclically sensitive names, the ones that might have a hard time were interest rates to end up higher, be they small caps or, for that matter, the industrial oriented blue chips, they're weaker. It's the sort of impervious, even if we have a really bad slowdown, services spending continues, and tech will be probably okay, at least if the COVID example of shutting down the entire global economy and seeing what happens is any indication. And so tech is doing a little bit better here. What's interesting is, against all of this backdrop, to your point here, the bonds are down back near the lows. So if you look at what's going on here with rates, they are unmistakably marching higher. So is the dollar. So is the perspective on the curve in terms of the slope, which we'll take a look in just a second. But here's the bonds here. This is the long end of the curve, obviously, and we can see we sort of recovered after this election shock, and I would argue the election shock itself very much along the lines of what you were describing, sort of the idea that an unmistakable, convincing Trump victory means probably more inflationary risk because of tariffs and labor market disruption and all these things. And so yields surge. They subsequently come back after a few days, but now we're back on those election lows. And when you look at what's going on at the front of the curve here too, we'll just zoom in here on the most recent price action. Rates are going higher here too. Obviously, these are the notes, so when they go down, rates are going higher, and you can see it across the curve. It's showing up everywhere. Here's the 10-year. The most interesting thing here, seemingly, is that the curve itself is actually steepening, and so what you're getting isn't just a situation where what you're seeing is only happening across this maturity and that maturity. The long end is actually going higher than what's happening at the short end. And you're ending up with sort of this kind of inherently hawkish minded setup where the 2 to 10-year curve is up by a good 4 basis points today. It was actually, interestingly, yesterday down to the lowest since early October and is now rebounding. So all of this is kind of creating this perception that whatever is coming with this CPI number, it's going to be more hawkish in its implications. And that means higher rates. And higher rates need not be an issue, but the market seems to think that they could be here. And the difference-making bit, in my mind, I mean, certainly the Kashkari comments didn't hurt, but the big difference maker seems to be that when we had this conversation at the beginning of 2024, we also had a melt-up in U.S. economic growth. We also had 6 expected rate cuts become 3 expected rate cuts because of that adjustment in growth. And stock markets were doing fine. They managed to rise through all of that, seemingly because global growth was firming everywhere. And so higher rates were not an issue. What we're seeing now is that the global economy has become bifurcated, where the U.S. is going in one direction and everywhere else is going lower. Europe is anemic. China is anemic. The global economy is near the slowest growth rate in 8 months. If you look at the Purchasing Manager Index data, it bounced a little bit in October. September was the 8-month low, but that's a far cry from what's going on in the U.S., where growth is surging. So you have this weird thing where if rates go up now, they're going to go up everywhere, because a more hawkish Fed means a higher cost of credit the world over, not just in the U.S. And that's a breath now that maybe the world economy can't stomach.
Yeah. So what I was sort of reflecting on, and I share your analysis. You didn't say anything that I don't concur with, or at least don't understand. But I am perplexed by the idea that maybe there's an opportunity in Europe, even in the European bond market, just on a relative basis, or because the dollar strength is such a thing that it is right now, that I feel like it's more likely that the euro gets stronger the next 6 months than weaker. I could be wrong, but it just strikes me that this is more likely a low point for the euro. Look at this move. I mean, it's intense. Even if it continues for another month or something. And that the odds that the U.S. bond market and U.S. rates, I guess what I'm getting at is because I perceive the U.S. bond market and U.S. rates to be pricing in higher for longer more than ever now, at the same time that the euro is weaker than it's been in a long time, that the pot odds on more rate cuts sooner relative to the current price and a strengthening euro over the next 6 months if you're forced me to make a wager on the next 6 months, I would rather be long the euro and long European bonds even relative to the dollar and American bonds. But I don't know, that's more of a sort of reflexive, that's not based on any sort of analysis so much as it is really just looking at the euro chart and the US bond chart, and then it really a question I wanted to ask you. I was thinking about you earlier today, relative to any potential opportunity of both European equities, European bonds in and of themselves, and with the additional component of being a euro-denominated asset. Or is it too murky and sloppy and impossible? There's probably 2 reasonable answers there. But
well, so let's do European bonds last. Because that's probably the more kind of the murkier part of the story. But before we go to European bonds, let's sort of start with just fundamentally the interest in euro denominated assets and look at the euro here. I mean, obviously it's getting shellacked. It's down at this point to the lowest level since April, which interestingly makes sense, right? This was the place where U.S. economic data started getting worse, and you started to get more of a Fed rate cut path expected. Whereas this was the beginning of the year. We just talked about, we mentioned that at the beginning of the year, U.S. economic growth was a little bit better. And so rate cut expectations went from 6 to 3 between the beginning of the year and sort of late March, early April. That's this move right here. That's the dollar getting stronger here as those rates expectations adjust. This is them adjusting the other way. We're now back basically to the bottom of this range where this whole thing starts. And this is really a very important, I would think, and very sort of pivotal moment. You can either hold this level or not. And if ever there was sort of an obvious spot where you would look for at least some kind of a reactionary bounce, just on the idea that you've hit a level that was a barrier before, and now the markets have to essentially go out and test if it's a barrier again. So you'd expect, one would think, at least a reaction into here somewhere as a retest, and perhaps even higher if you sort of play this out. The obvious inflection levels show up initially here just above 107 and then at 108, and you sort of stair step your way higher were you to bounce here. So at least from a technical perspective, this is a really sort of logical spot to maybe find a bottom. And then if you don't, because obviously maybe you don't, and you get a close through this, then it's not that far down to sort of 105 and change, and just under 105. That's what, about 104.80, that low.
Mm-hmm.
So this basically becomes your line in the sand, and it's not that far. So even if you take this out, it's not that far of a way to this major range support that's held all the way back from March of 2023. So you're definitely near some kind of a level near the euro where you're getting to prices that have refused to give way for quite a while. And so there is perhaps something there. Now, I'm still short, but I'm short from quite a while ago. So rather than kind of press the point, I'm more so looking at where is the exit? Where do you get out so you keep your gains? I mean, I started getting in short back up here. So once this consolidation gave way, I was short through this, got out somewhere here, missed this big thing because of the election, and then got back in like here. So I'm still in it, but it looks like maybe
you can see why there's reason to at least contemplate.
Oh, absolutely.
A blowout bottom here of some kind in the euro. What about buying European equities in any form?
That's the perfect transition, because actually that's exactly my next step here. And when you look at what's going on there, it's not terribly encouraging. So here's the MSCI Eurozone ETF, so a kind of benchmark. It's aggressively declining. And if you look at what this lines up to overall, here's a weekly chart here if it loads. And you can see this thing is kind of tilting over. So it established a sort of double top up here and is now kind of keeling over. Now, you could make the argument that that there's a logical kind of area of support that it's come in to here. Somewhere here, perhaps. You could argue that this is some sort of an important inflection zone. But so far, this thing is sinking. And if you look at FEZ, which is the ETF that literally has as its underlying the Euro Stocks 50 index, which is the Eurozone benchmark, you kind of get a sense that maybe this right here is some kind of an area of consideration where the market might stop and go, okay, what am I doing down here? Is this it? And so, again, you get the sense that maybe you're reaching some level of exhaustion on the second.
I just feel like I could get
this as well.
Where I get equity, I get an equity advance, modest or otherwise. At the same time, I get a currency appreciation.
Well, one would think, because if what you have is a generally greater interest in euro-denominated assets, the flowing of money into the region would then give you a lift for the currency. And so maybe that's what you end up with. Now, this is where things get even more interesting, and see if we can put this up. So this is not what we're looking for. Let's try that again. See if we can get a Eurozone bonds ETF here. While we do that, the overall setup here, even just to sort of consider why this would be going on, why it is that you might see a bounce in the euro, why it is you might get a bounce in the bonds. If you have this sort of weaker situation in the Eurozone and the US is looking tighter, and that's giving you a sense that, okay, maybe you're in a situation where the Fed is having to cut less, which means the Eurozone has to cut more because their growth has now been shrinking for 2 months, and they don't need rates that are higher. They need rates that are lower. That this is ultimately going to be a stimulus to regional growth. Now, that should be negative for the euro, except if it inspires capital to rotate into Eurozone assets and you get a situation where things have evened out. So my sense is that if you are going to get some kind of a bounce here, then the reason it might happen would be on the US side. You don't really want to see a situation where you have a weakening of the Eurozone outlook. The ECB has to cut more because then the euro wouldn't fit into our transition into Europe and into European stocks kind of narrative from these levels. But it is important to point out the way that Eurozone economic data has behaved relative to expectations, that's actually creating a situation where we have seemingly improvement in Eurozone data outcomes. So whatever this upswell is in the US, it's not necessarily showing up in a strong Europe, but the degree of weakness in Europe is, at least recently in the past several weeks, seemingly less acute than people thought. And that may be enough unto itself to basically say, okay, there's maybe a rebalancing here. The reason I would not take this as an actionable setup is it's not being telegraphed in the price action as it presents itself here. So if you were to just sort of immediately look at the near-term price action, I mean, what in the world says that this has to hold?
I mean,
if it had to hold,
in my mind,
this would
parity is always kind of the end of the line in my mind. I know we're nowhere near parity right now, but we're heading in that direction.
Mm-hmm.
I mean, I think to answer your question, I'm not saying this has to hold, but I feel like 1-to-1 has to hold.
Right.
Just like, but there's a lot of room. There's a lot of real estate between here and there as well. So,
well, and if we look at sort of the way that these dynamics have played out, and looking at sort of the underlying euro cash as a kind of benchmark for general interest in euro denominated assets in general. Here's a swing low, and we sort of watch the reactions and the price action here once these levels are tested. So we come in, we see, oh, we bounced here before. Okay, we'll bounce here again. Then you get the breakthrough, and on a retest of this level, we fail. Notice we stop right there. And then break back down, set a lower low here. Again, this low, where do we hold on this initial move? Right there. Bounce, retest, then stair step down. So it's very feasible in my mind that you have another sort of stair step here. And if you then get it to move up here and close up here, that's your signal. That essentially, if you get back somewhere into this area here, you will have fundamentally kind of violated the price dynamics of the decline. And that's your signal to say, okay, something different is going on.
Not to whiplash us, but coming back to the United States, in the event of a hotter than expected CPI, do you believe that the action we've seen coming into the CPI, stronger dollar, weaker bond, higher rates, in other words, is there, it seems like there's a scenario where we get a stronger than expected CPI and the market does basically nothing because of all these charts?
I think
these charts are already saying stronger CPI or not, and inflation is the risk, capital T, capital R, now or later, and we're pricing it in as such, full stop.
I think that makes a lot of sense. And in fact, one of the reasons that I'm a little bit skittish here today, because I have all of these reflation, higher rates bets on. I'm short the euro, I'm short the pound, I'm short the Aussie, I'm short European stocks, both in the UK and in the Eurozone. So not only do I have this on, we were just looking at it short, but also this. So this is EWU, the MSCI UK ETF, which is also falling off a cliff here. So I have all of this stuff on, and to kind of add still more one-sided exposure, because I'm kind of the Stan Druckenmiller school of, when they tell you don't put all your eggs in one basket, I put them all in one basket and then watch the basket very carefully, as Stan likes to opine. I'm sort of that school, and we see it here in gold as well. I mean, gold is sinking. All of it is of a kind. And the thing that has me worried is that the move has already occurred. That the big adjustment for a hot CPI number is what we're seeing here now. And that when the numbers ultimately come out, as long as they're kind of in line with expectations and not terribly worse, that is to say, not terribly hotter than anticipated, that the move has already been had. And that the next thing that happens is actually a correction the other way for a kind of buy the rumor, sell the fact sort of situation.
Yeah, I mean, I feel like the market, if you were to sort of simplify it, has priced in higher, longer, and more inflation.
Yes.
And that it's not waiting for this particular CPI to confirm that.
It's not.
And so I guess my question would be, the opportunity theoretical is for either places where inflation hasn't been priced in to the degree to which it's always been priced in the bond or even the dollar, or a contrarian opinion on the price extreme in anticipation of the inflation.
Well, and herein I think is kind of the meat of the question. I mean, obviously the markets have had all kinds of reasons to price in a hotter U.S. economy and to price in, from sort of following on from that, a more circumspect Fed that's not quite as ready to cut as even the Fed themselves thought next year. And that's before you get into the election or what the election means. And obviously the election's outcome more so reinforce than countervail that idea, at least in the near term. Now, of course, over the past 24, 48 hours, people have loudly trotted out the argument that, oh, well, if the tariffs hurt growth, that's going to be disinflationary. It was like, well, yeah, but then it's hurting growth. That's sort of the second derivative of movement here. The first derivative is you get the inflation that then hurts the growth. So step one, inflation. Step two, the Fed cuts less and less and less, at least looking at the expected outlook. And that's what hurts growth, the squeeze from rates. Why should the squeeze from rates matter this time when it didn't matter in January? Because this time the global economy is not accelerating in earnest. It's slowing. It's just the U.S. is having an incredibly robust service sector that's powering it higher, basically disconnected from everywhere else. So I guess the question that I think I'm wrestling with and you're wrestling with is the degree to which CPI tomorrow will reinforce this, is that priced in already? Or does it have...
One, is CPI priced in already? I'm going to say yes. Two, is there a price extreme move in anticipating inflation, i.e. buy the bond? Or three, is there another, or is inflation more real than anybody wants to admit in other places, like at the bank stocks or in real estate or oil, where it's not being reflected to the same degree and it's actually an opportunity to buy it?
Well, right. So, I mean, at least while we're on the subject of oil, to take a look at what oil is doing here, it's kind of slinked back into the bottom of its range. There's an interesting sort of...
And do you think that's geopolitics, growth expectations? Why do you think that is?
It doesn't seem like this is a very clean reflection of any kind of singular catalyst. It seems more like we've once again hit this kind of middle layer at 72, and we've come back down again. I mean, I think the upshot near term is that, okay, so we've had this election. This is not an election where I think the question of energy production was really a big differentiator between these candidates. I mean, obviously, U.S. energy output hit the absolute record high levels in the Biden administration. So, and was in fact a very important pillar of their sort of broader policy objectives, what with Ukraine and the need for energy there and the need for the world to be well supplied while Russia is under sanctions. So it's not like I think that there's a big election reaction here, but we can kind of see that this is election day. We zoom in here. This is election day right here. This is sort of the initial first blush reaction, as though the market basically goes, well, they said to drill, so that must mean more supply. But How much of a differentiator that is really, I mean, we're drilling a lot already. So it's unclear. But what's interesting is that this record output that we have now, it's occurred with a tremendous improvement in efficiency. So our output is at record levels, but the number of operating rotary rigs and the number of working fracking sites has actually come down. There's a whole set of data on sort of rigs in operation and fracking sites in operation. All of those things have been in decline, even as output has grown. So ostensibly, there is room for the new administration to basically say, go turn those things back on. I mean, obviously, they can't necessarily mandate them and force them. This isn't China. You can't just sort of call out from on high and say, hear ye, private sector, turn on the spigot. But it does sort of give you at least some kind of a sense that maybe what's coming is a little bit more so bearish than otherwise. But I don't really see a whole lot of conviction here. And frankly, I'm a little bit itchy in my short, because it seems like we've hit some kind of a bound here. And with that, seemingly have a situation where maybe we're getting ready for some kind of an adjustment back into this 72 area. Now, would I short it here? Again, no, not unless it broke down into here. And would I buy it into this bounce? No, there's no indication that it's actually attempting to make that move yet. I don't really see how geopolitics would be much of a change of pace, at least following on from the administration, if only to think that perhaps a tougher line on Iran out of this administration means that they have things to do other than stage managed missile strikes with Israel.
Yeah, I mean, I can't even imagine choosing a direction on oil at this point in time. What about gold as a indication of the inflation debate?
Well, I think that's actually one of the most interesting moves for me in markets basically over the past week or so. Because if you look at what gold has done, it is as if gold sort of took a drunk detour down the wrong alley, and then in the wake of the election has kind of sobered up and found its way home. So this right here is the Fed. And it makes sense, of course, that the Fed cuts 50 basis points. The market anticipates it, so gold kind of levels up into it. But the Fed's right here. And what's interesting is when the Fed occurs, gold has a little blip and then just continues marching higher. Now, that seems to be very much disconnected from what gold usually does. And that's because while this happens, I mean, take a look at interest rates. Here's the Fed here. At the same turning point, interest rates start marching higher because ostensibly the Fed is cutting and the economy isn't cool, so the cutting is going to be inflationary. Obviously, we see the very same turn for the dollar, and we'll use the euro as a stand-in, but here's the Fed right here. Once the dollar sort of digests the Fed, it goes higher. An environment in which the dollar is higher and you have a higher interest rate regime, that should not be an environment in which an asset like gold, which yields nothing and is a natural foil for paper currency, that is not how it typically behaves. in those environments, gold typically declines. And yet it diverges completely up and until the immediate run-up to the election where it sort of stalls, and then the election itself when it craters. Which leads me to suspect, now that we've come back exactly to where the Fed left this thing, that this entire divergence was about election uncertainty. That basically the entire rally in gold from, let's call it 26.15 up to 2800 and now all the way back down, that all of this is, we don't know what the election is going to do. Okay, we know what the election is going to do. And so in my mind, this is once again now a story about rates, a story about the dollar, a story about CPI. So in my mind, if CPI comes out warm and it's meaningfully warmer than expected, which I think is a meaningful risk, gold gets cooked. It seems like it's going to go lower.
If you had to put a new position in gold, the bond, stocks, I mean, this is a parlor game as old as time, but ahead of CPI, where would you have the most confidence?
So we mentioned earlier, I don't have the greatest amount of confidence in my euro short. My pound short is a little bit better. Euro short's kind of getting to extreme levels here, and it might be time to jump ship here soon. The pound seems to be making a little bit more headway and may have a little bit more room, but it's sort of close to levels of significance here as well. Similarly, the Aussie, again, down, but sort of, again, near levels where it's found some barriers before. This is sort of famous last words for me this year, but I think the yen is actually one of the interesting spots. Because here,
don't say.
Here you have a little bit more clarity. Now, you do have to be pretty careful here, because it does look like maybe the move is slowing a bit on the way down, but the break through these levels is pretty clear cut. So right here is where you want that confirmation, in my mind. This is a intraday 8-hour chart here. So I'm looking at this low here. I'm seeing it stall right there, right on that swing low. We look back at the daily, that's this right here. So if you get a close under this that holds, if you get a break that looks to be confirmed, which, by the way, you're already starting to kind of see on higher frequency charts, you see kind of the attempt. Here was sort of closing bottom. You've taken that out. We're trying to take this out. Maybe you'll correct into here somewhere before the thing is confirmed, much like occurred here, kind of little correction before the extension lower. But this, I think, is what you're looking for. If this gives you a more convincing close through this support, the place may be the yen, because the yen should strengthen in the event that yields come down. It should weaken in the event that yields rise. And if CPI is going to give us rates in the US that aren't going to go down as far, even after all of this adjustment that we've made, if there's more juice here and this actually closes through that support, then there's quite a bit of room down there.
For the yen to get weaker, though, is what you're ultimately saying.
That's right.
In U.S. inflation confirmation equals opportunity for yen weakness, more so than anything else in the U.S. market, one way or the other, because of the anticipation of the data, basically. Or for
yes, and I would think that this gives you kind of the this gives you something that hasn't reached levels of significance, like, for example, the bonds, which are sitting right at the deciding line. And by the way, this does not look dissimilar from what's going on in the bonds. There's a very similar kind of structure here, even just intuitively. But with the yen, you're trying to break it. Here, you're sort of right at this supporting line, attempting to figure out what's next. This former low right there. You're sort of sitting right on it.
Mm-hmm.
So, and you can see the way that the market is responding to these lows when it tests them. So here, stalls. This is the election, obviously, so it's messy. Resolves itself, retests to here, fails right there, comes back down. This is now the level. If you get a close, this is the extension. This is the extension. Maybe that's a move, but you need more confirmation there. A lot of the other dollar moves have already hit important exhaustion levels. Obviously, we've looked at the euro here. It's sitting on some kind of a line as well. So for me, the yen is the place where you have a little bit more action, in the sense that it seems like it's actually trying to make a breakout happen. And of course, lest we forget, there's stocks. If all of the readjusting in yields today, the more hawkish view, et cetera, if all of that giving us a soggy-ish stock market, if there's anything to be made of that, then if CPI is hot, then maybe this thing cracks. And it's a tough thing to look at as a selling opportunity, but at least you have clear levels. This is your line in the sand for the S&P. Former resistance, now holding as support. You get a close through here, we can see we sort of very demonstrably held it here on today's session. We tried emphatically to get not only under that, but even under this here, and very pointedly failed. But if we can get under that, then back to the upper fives is not at all far-fetched. And it's the same thing with NASDAQ here. This structure, I know Chris and I like to quibble about the definitions of technical patterns, but this is as clean of a head and shoulders pattern as you could really imagine. Now, it's on the 4-hour chart, which isn't sort of the most convincing. You'd kind of want it on a daily chart or something higher frequency, but this is a very kind of textbook topping setup. Shoulder, head, shoulder. And again, if you get a breakthrough here, it's not difficult to then envision that this extrapolates down to here somewhere. So as an initial sort of, let's come and retest this former level. But again, you need confirmation. So I would think the yen is the one that gives you the most convincing setup as of right now. Though you're still waiting to confirm, you're closer to seeing that than you are probably anywhere else.
What about on the micro side, or at least on the sector side? Banks, real estate. I mean, is there something in this for the financials, for instance, because of the adjustment in rate expectations, or for that matter in real estate?
So if we take a look at the financial sector ETF here, what's interesting is, I mean, of course, we've had this massive jump on the election. But what you're seeing now is a bit interesting. You're setting higher highs here, but when you look at momentum studies down here, and this is RSI, if you're if you're keeping score, the basic relative strength index. When this kind of dramatic thing happens, you have a massive gap, the thing is running away, and then the candle structure becomes this sort of shooting star looking thing with a long wick into the high and then a small body followed by indigestion.
Mm-hmm.
And then you get the indicator failing to make higher highs as the price itself is doing that. The upshot is there's some kind of loss of momentum here. And so you sort of start to think, okay, if you were to have a situation where the markets interpreted higher CPI and then higher rates, not in terms of the banks have better margins against which to price their transaction costs. Instead, what they have is a headwind to growth, and that's a headwind to economic activity and therefore to everything that the banks generate fees from. There could be a rethink here, even just to close this gap, even just to come in here and sort of reset to maybe here. Now, you don't have confirmation, but this starts to look like maybe it's a little bit over its skis. And looking at real estate, certainly soggier than the banks, but it is at a similar kind of make or break moment where this becomes essentially your area of interest right here. If you can crack through this, there's not a whole lot on the bottom here. You have a lot of room to come back, even just down here. Again, this level. There's quite a lot of room. So,
but don't you find it interesting that interest rate has that real estate has not sold off more in the face of the push back up in yields?
It seems to me that a lot of the story here might be sort of about incremental damage, which is to say how much incremental damage is there to be had from rates being higher, considering the market is already locked. You already have a situation where buyers don't want to buy, sellers don't want to sell, inventory is really low. How much incremental adjustment is there here? So, I mean, I think a lot of people looked at expectations for Fed easing and said, okay, if the Fed is going to be expected to ease, then there should be some unlocking of this that should create a level of activity. And you saw that here. I mean, this is the build out of Fed rate cut expectations earlier in the year. This is where U.S. economic data starts getting worse. I mean, name a chart. It has an inflection point in the middle of April and then another one in July. Here's all of that is to say, pay attention to what the Fed is doing relative to economic data, or at least what the economic data says the Fed should be doing, and you get insight into almost every major asset class. Here's mid-April. This is where U.S. economic data starts to say you will need to cut. Here is July, right there, where finally the Fed says, yes, it's go time. And then as you get into, you get the 50 basis points, that's right here. And once you get the 50 basis points, what happens with yields? This is the place where the bond turns down. This is the place where the dollar turns up. This is where the markets go, oh, reflation. This is going to be something that actually gives us higher rates and steepens the curve. And so this comes back down. So you get a hot CPI number, you might break through this support here at let's call it 42.50, 42.60. And then you have room, maybe all the way down to 41, 40.50 as an initial kind of way down.
Well, I mean, I guess the headline for me, I guess the way to wrap this up today would be your sort of the one to watch, if you will, going into CPI tomorrow. Yeah, I mean, I'm sure that's what your show will be about anyway.
Yeah, I mean, I think we're looking to see what the yen is going to do here. If it's going to take out this thing, especially overnight, FX markets are, of course, liquid around the clock. And so if overnight here, as APAC takes a crack at positioning for the CPI number, as Europe takes a crack before the numbers come out, if looking at a 4-hour chart, an 8-hour chart of yen here overnight, if you get a close through this, that would start to tell you, okay, maybe you have greater legs. So if you're going to look for a setup, I would look here first. Even though I'm not currently long dollars against yen in this expression, if I was going to get more long dollars, it would probably be here.
We shall see.
We shall see. And with that, overtime is out of time. Book it. We'll be back tomorrow, again, right around the Wall Street close to try to figure out what happened after CPI and how the dust has settled. Don't go anywhere. I'll be back with macro money to delve even deeper into CPI right after this. For Dylan Radigan in Milan, I'm Ilya Spivak in San Francisco. Stay tuned.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got the need for speed? No problem! On Tasty Trade, adjusting your option positions is a right-click away. Rolling just got quicker. Tasty Trade, make your move.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Move with the rhythm, shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So
started.
He was my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to tastylive Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
Macro. It's all back. The election dust is settling, and the focus is once again on the main story that has been with us for months and quarters in the macro world, the Fed, interest rates, and where that will take financial markets. Appropriately enough, this is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is look at the next big inflection point in this story, which comes to us in less than 24 hours by way of U.S. inflation data. This will be the timelier of the two, the CPI report, the Consumer Price Index, and how the markets are already positioning for it is perhaps suggesting where we are going to go next, or at least how this is setting up going forward. And the implications don't look particularly rosy. So what we're going to do here is take a look at what is expected, take a look at how that fits into the narrative as it presents itself, and then figure out how these markets might respond if they haven't done so already. And if they have, what does that mean? So here's what we are looking at in baseline forecast. The headline inflation rate is expected to inch up to 2.6% year on year in October. That would be the first uptick since March. The core rate, which excludes volatile food and energy, and of course is the focal point for the Fed because they can't very well hope to influence global food and energy costs. Indeed, we can see that all of the inflation at this point is pretty much baked into core services. That rate is expected to hold steady here for a second consecutive month at 3.3%. Now, that somewhat obfuscates that we've actually seen the grinding to a halt of the disinflation process. If we get this 3.3% broadly as expected, we'd be looking at the fourth consecutive month that prices have not gone down. Now, the last time they went down was in June from 3.4 to 3.3. They went down again in July to 3.2, and since then, progress has been arrested. June was a repeat, August rather was a repeat of July, 3.2. We went up to 3.3 in September, and if we stay at 3.3 this go round, well, then we've stopped to progress for a fourth month. And from the perspective of the Fed, this, of course, represents a potent risk to perhaps missing, or at least to getting off course, relative to their inflation target. And so, in so much as we've seen this movie before, we heard from the Fed in similar circumstances at the beginning of the year, when an upswell in the U.S. economy gave us a shift in rate cut expectations to a more hawkish setting. And the Fed in May bemoaned that there were 3 months of consecutive standstill and a lack of progress in their own words. We saw that in June, the Fed watered down their estimates from 3 cuts in 2024, which of course in practice have already been delivered now. But at the time, the Fed was unsure and cut it back from 3 to 1. So this is exactly the kind of set of conditions that might give the Fed some pause. And indeed, the priced in probability that we are going to get a further rate cut in December, which as recently as a week ago looked like pretty much a done deal. A week ago, the markets priced in the probability of that cut at 77%. A month ago, it was even higher, 84%. Today, it's 58. And so we've seemingly gone to a place here where the market didn't quite revert to 50-50, but is increasingly approaching it. 58% chance that we don't, or that we do have a cut, and 42% chance that we don't. So still narrowly in favor of that cut, but certainly a lot less conviction in it. And that lines up because, of course, what we've seen out of the U.S. economy before we start a conversation about the election, before we start a conversation about its inflationary implications that the markets have been toying with already, we see that since late August, U.S. economic data has increasingly improved relative to forecasts, which in simple terms means that whatever baseline market economists had for the path of growth, for the path of economic activity, was weaker than reality has endorsed. Moreover, not only has reality endorsed a stronger vision, the gap has actually accelerated. So we can see here, on this index, 0 is the dividing line between tending to surprise lower and tending to surprise higher on realized outcomes compared with expectations. The quotient for downside surprises begins narrowing first until you get to 0. And the economy shows itself to be about in line with expectations. But then it starts to accelerate and power higher. So not only are we in a place where the U.S. economy is telling us that the markets expect weaker conditions than they're getting, but the gap is widening, which is to say the economy is pulling further and further away, and expectations are struggling to keep pace. The models that economists use to generate economic forecasts are not being adjusted adequately, as it were, to capture the level of vigor and the level of momentum in the economy. So it seems hardly surprising that rate cut expectations are falling away. Indeed, if we look at the way things are calibrated now, we are looking for 2 cuts next year. That's, of course, a far cry from the Fed's own expectation of 4 when it gave us the policy update and the forecast update in September. The view for the rest of this year is only 12 basis points being baked in, implying that we are right around that 50-50 mark on whether we're going to get another 25 basis point cut in December. It's basically a coin toss here. About half of it is baked in, give or take. And so we have very clearly seen that the outlook has grown progressively less dovish. In fact, if we take a look right here where we are on the outlook for next year, the last time that we were this shallow was actually all the way back here. Now, of course, this is where the tail end of this these yellow bars are. Needless to say, this is cuts, so this axis is going negative. So the reference point for this is all the way back here. We are essentially reset to where the outlook for U.S. monetary policy was before this wave of dovish readjustment back in mid-April or so. Now, this is a very interesting spot because, of course, that's also right here where we saw an upswell in U.S. economic activity at the start of the year. That gave us this readjustment where we went from looking at maybe as many as 6 rate cuts down to 3, with some perhaps erring in the direction of 4. We've basically reset to that now before what then became a turn down in U.S. economic activity here, this move here, that gave us this dovish readjustment. So we've basically come full circle. Now, the U.S. economy certainly looks chipper, and fewer rate cuts against that backdrop do seem to make sense. Here's the latest set of U.S. PMI numbers from S&P Global. We can see that for the composite index, which takes together services and manufacturing, the strength in services has been strong enough, not surprisingly, by the way, all of the inflation is in services. It gives you a sense of where the demand is. All of the strength in services has given us how the economy is basically holding at a 12-month high established back in May. It hit this 12-month high then and has since idled right here, essentially suggesting the economy is keeping at a brisk pace and sustaining it. The ISM version of PMI data is even more dramatic. We can see this latest set of numbers from ISM, especially on the service sector. Both versions, the S&P Global version and the ISM version, give us anemic manufacturing, but it's services, again, where the boom is. And here, since mid-2022 is the reference point for how strong at this point the service sector looks. So it does seem to make sense that in this environment, there is a degree of readjustment in Fed policy expectations to a less accommodative vision. And indeed, if the data surprise dynamics we've seen, if these dynamics that we've seen set us up for any kind of surprise risk, it is that these numbers actually end up hotter than expected. And if they do, then certainly for the Fed, this is already a moving issue. If we look at the annualized rates of inflation that the Fed looks at to get a sense of sequencing, consider here that the 3-month annualized CPI rate has been going up since July. In July is where it hit its lowest, and since then has actually ticked the wrong way. If we look at the core 3-month, and again, this is the higher frequency reading annualized, this is what the Fed looks like it seems to evaluate. They don't obviously make it transparent and clear saying we're looking at this one number, but they seem to reference these things both directly and indirectly quite a bit. The 3-month annualized rate in the yellow here for the core, likewise, since July, starting to go higher. And indeed, in September, hits the highest level that we've seen since back here in May. Again, referencing that mid-year shift in the economic regime that we just saw. All of which is to say that the Fed, when it looks at higher frequency numbers, is saying the pace of inflation is trending in the wrong direction. The 6-month core rate has stopped declining. That's the green bars here. And the higher frequency 3-month one is going up. At the headline, the 3-month rate is going in the wrong direction. The headline is still declining. You can see these red bars are still inching lower. But that, looking at the makeup here, seems more to do with the downdraft from goods and even more so the downdraft from energy. And isn't the kind of thing that the Fed would hang its hat on. So the question then becomes, well, let's say we do get an upside surprise in this data in line with how things have behaved recently. What does that mean for the markets, which have already taken some steps today with higher yields and a stronger dollar and weaker gold to signal that they're starting to position for a hotter inflation number? Well, if we look at the way that the Cleveland Fed's nowcast model has performed recently, we can see that even just in the most recent set of numbers from August into September, a little bit of regime change. The model for headline inflation was running a bit hotter than realized results until September. Same thing with the core. The model was running a bit hotter than realized results, that's in the red here, until September. Both models envision an uptick. So that much is probably not a source of concern for markets, and perhaps they've already made their move with today's adjustments on that basis. But if this continues to run hotter than what is basically the market's loose benchmark, if we continue to get these surprises on the top side, as we apparently seem to be liable to see, again, right here, then a still further dilution of rate cut expectations into next year seems likely, where these yellow bars get even shallower and even more dovish intent is factored out. Where this is the most clear seems to be the US dollar. In the green here is the US dollar's average value against its major counterparts. And you can see here we're shifting very clearly in line with sort of the ebb and flow of policy expectations. There's a bit of a disconnect right here, but we snap back quickly. And as the speculation grows hawkish, or in relative terms, of course, another way to say it might be less dovish, the dollar gains, and of course it has been a key beneficiary of this change as well. So if we do get a hotter than expected CPI number, this probably has another bit of upward momentum in it. But the big question, not surprisingly, of course, is stocks, which have had periods where they're impervious. That period at the beginning of the year, you'll notice, has rate cuts falling away, but stocks are able to march higher all the same. Incidentally, as a disconnect from where the two things moved inversely toward the end of last year, seemingly suggesting you could convince stock markets that as long as growth were all right, higher rates and fewer rate cuts need not be detrimental. We saw something similar here. Stocks are going up. This is getting less dovish, but momentum is maintained. The real question is, have we arrived at some kind of a breaking point? Because whereas here, the global economy as a whole was accelerating, here, only the U.S. economy is accelerating, whereas the global one is growing at some of the slowest rates in 8 months because Europe is anemic and China can't get off the mat since exiting COVID restrictions. Higher U.S. rates mean higher rates globally because of the ubiquity of the U.S. dollar and global commerce. And if global economy conditions are deteriorating on the whole, higher rates is not what's needed. And risk aversion may come even if the U.S. looks robust. So this may well be a critical and decisive point for stock markets. If we get a hot CPI number that gives us a stronger view on rates going forward and stocks do decline, well, then a very important regime change will have been signaled. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm on The Price of Truth with Victor Jones. I'm on Futures Power Hour with Chris. I'm on First Call with Victor and Tom throughout the week. I'm likewise writing for the News and Insights portion of tastylive.com and commenting sporadically on the platform formerly known as Twitter at Ilya Spivak. Thanks very much for watching. Happy trading. Macro Money's back tomorrow.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then they take every advantage of it in Australia. And
I welcome an Australian man to pounce all over me. Yeah, he could go down under,
Tom's gonna give me a hard time for this. Can't believe I'm gonna say this. I'm in a vulnerable state right now, so I'm gonna say it. Taking tap dancing lessons.
Hold on, what? The two of you are doing tap dancing.
Yeah.
Oh my God! I want to come watch. Please, can I come watch?
Don't maybe come to your rehearsal. What do they call that? Not rehearsal.
Oh yeah.
Oh yeah, you're coming.
Graduation, like his graduation.
When I drop my recital.
Your recital.
Yeah, when I do my recital. Yeah, you're coming.
That's the freaking best thing you've ever said.
You're coming.
Come.
You're coming. I'll tap in here one time. Just I'm gonna do it
with your hair. You're gonna look like Borat.
I've seen you play golf. I think you should take up tap dancing.
Thank you. See, I knew you had to get a criticism in there, so I appreciate that.
I cook them in.
Jesus, blessed. I can't. I almost tell you. I took your crap all freaking day long. I am not taking this. I want to get to Johnny Trades and I want to go.
Get the full scoop by checking out the archives at tastylive.com.
What is going on, and welcome back to the Bad Taste segment. Today's Tuesday. We got crypto going off. We got MSTR, coin, some of these other assets, Julia. But how are we doing today?
Damn, dude, we got everything going off today.
A weird day. I had to close quite a few positions on Monday. I had a position on the Russell. We're just seeing, we saw a little bit of a reversal today, but financials have just been taking off since the election results. So that condor needed to get closed, needed the peace of mind. I had a gold put spread on as well. Gold had a terrible day yesterday. Today was down a little bit as well. So closing some stuff out. And I don't know, kind of just watching with popcorn at the moment, staying a little bit responsible if possible.
I got you.
How about
pretty
you?
much just managing for the most part.
For the most part, yeah.
I got you. Yeah, I mean, I managed a lot of my positions from last week, but I mean, recently I did get into MSTR. I know you probably saw MSTR and coin.
I did see MSTR.
Yeah, going absolutely ballistic. That's a stonk. I know it wasn't earnings, but that's a stonk if I've ever seen one, Julia. So yesterday I decided to sell a call spread, an out of the money call spread. I just couldn't pass it up. I was like, this thing could keep going up. And I mean, the levels that I was at, I was like, you know what? Defined risk. I'm comfortable doing it. So sitting, I mean, pretty much break even right now. We were up a good amount yesterday to overnight, but I mean, the rally continues. So we'll see what happens there. We'll see if Bitcoin wants to slow down a little bit and then make higher highs. If that's the case, MSTR will most likely follow a little bit in coin, and then I'll have to think about managing the position there. But as of recent, that's what I've been looking at. I was debating between MSTR and coin, ended up going with MSTR, but coin is looking identical to MSTR as well. But I know MSTR had some news on buying Bitcoin. And then I think they have an average price of about 40,000 on Bitcoin. And I believe they have about 260, 70 something thousand Bitcoins with an average price of 40,000. So MSTR is doing really well. I guess it was a great decision to, get in Bitcoin. That's a massive position, but that's what's been going on my end. I mean, I sold a call spread in QQQ as well. I have one that's in the money, and then I sold another one that's further out of the money. So those are the two positions that really have my attention, Julia. And, hopefully we get some type of reversal. I got the short position on MSTR and QQQ, so I would appreciate it if you could unload some shares and make this go down for me a little bit.
Nice, my hoard of MicroStrategy shares. Yeah, this has been on everybody's mind since Bitcoin passed 90,000. Now like 100,000. Like a month ago, like 3 months ago, that would have been insane. Like, what do you mean Bitcoin at 100,000? And now it just seems more and more likely. And MicroStrategy makes sense. I'm pretty sure they just buy Bitcoin. Like, that's the whole thing. There's a couple of Bitcoin ETFs. Like Bito is one that I've touched before, like traded before a little bit. But their dividends are like 70%. So they're just like lagging behind Bito. Their performance basically, even though it's up quite a bit, just like in the long term is just lagging behind, just so its dividend payments are quite large. There's also IBIT, whatever this is.
I don't think I've looked at that one. I know familiar with Bito, but not that one. What is that?
It's another Bitcoin ETF. It's cheaper. And also I think someone in chat mentioned this today, that options just got approved on this, which is exciting because I mean, normally, at least myself, don't pay a ton of attention to dividends risk, because in many cases, I'd say in a lot of cases, like it depends on like what you're holding and if the position's in the money, out of the money, any of that. But a lot of the time, for me at least, the dividend payment is like small enough that I'm not really paying so much attention to it. But when your dividends are 70%, like at that point, dividend risk becomes, I think, a little bit more concerning. I'm not sure what their dividend payments on IBIT are. I think their expense rate's a little bit lower. But exciting to see this expansion of some crypto products that aren't, like Coinbase. Mara actually, I believe, was supposed to report earnings today after the close. So we can check in on them real quick and take a look. But good luck on your MicroStrategy position. Good on you for sizing appropriately, going to find risk. We like to see it.
I don't think I would have had a choice otherwise. It's a pretty expensive underlying, but it makes me feel a little comfortable. You did bring up Mara. Was Mara not heavily correlated to crypto like a few years ago? I think there's not as much of a correlation, but I believe Mara was one of those underlyings that was really following crypto. So either way, I'm curious to see how they perform with earnings.
So it's Marathon, which is in the mining space, I believe.
Yeah.
I believe Marathon, and then Hut, which is also in the mining space.
And because I know it's not technically the crypto space, but I could have swore like Riot and Mara were other underlyings that were following some type of hype with crypto, but maybe not.
Yeah, so for Mara, Mara, Riot, and then Hut's another one that I know that kind of are more operates a digital asset technology company that mines digital assets with focus on a Bitcoin ecosystem in the United States. So yeah, they reported, and then Hut's actually another mining company, so they are going to report tomorrow before the open. Looks like Mara didn't do especially well for their earnings. They're down about $2, about 1.5. Kava blasted off. If you want to talk about like sleeper builds, man, this one's been crazy.
Doesn't surprise me. What are your thoughts on that? Was the Kava hype real out there in Chicago as well? Like what is the perception of Kava over there?
I'm gonna be honest, I haven't been to a Kava once.
Okay.
I haven't been to a Kava once. I think I've seen a Kava. I think they might be a little bit more popular on the West Coast. I'm getting I don't know, like Chipotle vibes. Like when Chipotle was popping off, this is just like, I don't know, Chipotle speculation is kind of what this reminds me of. I mean, they're up like 250% year to date. And that's not taking this new earnings move into account, although we don't know how it's going to open. But they've just been, as far as I know, Luis tends to look at them a little bit more. They've just had some really solid sales numbers from what I understand.
Yeah, I mean, again, that really doesn't surprise me. I know over where I'm at, Kava has just blown up in popularity. I've had it a few times and I'm kind of sick of it now. Like Chipotle is something that I could eat weekly. Kava is something I feel you get tired of, but it's like a more polished feel of Chipotle. But I guess those earnings aren't too surprising based off of how popular it's been, at least.
Yeah. So I don't know. Have you been to Kava?
I have. I've been there a few times. Again, like I went there consecutively, like 2 weeks in a row, or maybe 3, and then I haven't been back since. I got tired of it.
I think that's a good thing. Like if you keep going back enough to get tired of it, that's pretty impressive. Evidently, it's reflected in their post-earnings move, looking pretty impressive. You could give me 3 guesses. I have no idea what Kava would serve. Never seen or heard of them, except for here from Theta Trader. I think it's like Mediterranean food, but Chipotle style, right?
Yeah, 100%.
Yeah, so I mean, and it's evidently pretty good. We also had Spotify. They also took off, which is a little annoying because they keep raising prices. But Spotify also took off. Instacart also reported. Looks like they're down a bit. I'm not sure if you have earnings plays on in any of these. I'm kind of not touching them. I thought Kava was cars.
Carvana.
Carvana is very similar, but Kava is a little bit different. Carvana, they do the car vending machine thing, right?
Yeah.
Is it the Carvana? I think it's another Luis favorite.
That's what I was going to say. I think Luis has been bullish. When he brought it up the other day, I was like, people still trade that? I saw one volume, and I think it was Luis himself.
Yeah, I'm not surprised.
They've been doing well, though. Yeah, they've been doing well.
It's surprising to me, honestly, but because I think they average like Luis was showing me the numbers. They average like $7,000 in profit per car or something like that, which is up from a $400 loss per car in like 10 years. So they evidently moved quickly.
So again, that takes away the car salesman, right? Having some type of vending machine.
It's like, right? It's also just flashy.
Yeah, flashy. But maybe they're cutting out the middleman with the vending machine. So maybe then the car salesman doesn't get any of the commission. So maybe the company itself, I don't know if that's the business model, but it seems like it so far.
It's definitely techified from what I understand.
Yeah.
And then reporting earlier today, we had Shopify up 20%. Oh my God, ended on the day. Plug Power also reported, man, they're cheap. They were down 4% today. This is kind of one of those Wall Street bets stocks that I see come up every now and then. Home Depot reported down 1.3%, and then Hertz up 8.61%. Talk about coming back from the grave a little bit. Surprising, honestly.
Hertz, that's still I could have swore Hertz was going bankrupt.
Didn't they file for bankruptcy?
I believe they did. I don't know if any of their news. Bankruptcy? Yeah, I don't know when the tables turned there, but I could have swore they did.
They filed for Chapter 11 on May 22, 2020, according to Hertz Car Rental from the newsroom. That being said, it's not like a death sentence necessarily. It just means you have the opportunity to like restructure your debt. But it's definitely not a good look when you're filing for Chapter 11. And that being said, it's still, I mean, it's got to be not too far off from all-time lows. But nice little pop today, up 8.6% for anyone who's out there trading.
This is what we call looking at the glass half full. At least there's a little pop. There's something.
Spotify missed on earnings. Thank you, organic farming. And still they're up $40. Oh man. Someday the markets might make sense. I don't know what day that's going to be though.
Who knows? I'm an Apple Music kind of guy, so
we've
I don't
talked
have
about
much
this
info.
before.
Yeah. I give Spotify its flowers though.
Yeah, they can have it all. You know, I like Spotify.
I like it too, honestly, the times I've used it, but I just am so hooked into that ecosystem with Apple and just the simple user interface. So that's really the only reason, but they definitely have better features, no doubt.
Spotify?
Yeah.
I like some features on Spotify. I also, someone maybe can correct me if I'm wrong. I feel like it's easier to get your stuff on Spotify. Like it's like somewhere in between like SoundCloud and Apple Music.
Yeah.
Where it's like almost too easy to get stuff on SoundCloud.
Yeah.
So that's really the point, right? So.
Well, one little detail I ran across was like, for example, if you're scrolling on TikTok, let's say you find a song that you like, if you click the sound button, there's a button where you can just automatically add it to your Apple Music playlist. I don't know if that's a thing for Spotify too, but it's like little things like newer features like that where I'm like, that's really convenient. And then it builds a playlist when you go into your library already, and it'll say the downloads that you downloaded from TikTok. Yeah.
How does that even work? Because if I'm using a copyrighted song, you're telling me if someone's using a copyrighted song on TikTok, I can just put that into my Apple playlist.
So I've noticed certain ones that you click on. I think there are some that are copyrighted and some that aren't. But the ones that are copyrighted, I think they probably did some type of deal with the licensing to allow you to download it straight from the platform. That's just the logic that I go through when I think of it, because I don't think they would allow it. But it even shows the little Apple Music logo symbol whenever you press add to playlist. So maybe they did some type of deal that credits the both the platforms and the artist in some way, but that's all I could think of right now.
I gotta look into that. That's really interesting. Just from like a DMCA copyright, whatever you want to call it, perspective. Super interesting. From Theta Trader, I'm locked into this YouTube platform. Music is actually pretty decent. Dude, I do a lot of YouTube. Mostly for video content.
Is it paying for it? Yeah. The ads are so annoying, I will admit.
They're terrible. There are browsers that have ad blocking capabilities kind of built into them, which I don't know how that goes into like YouTube's terms of service, all that kind of stuff. Or if that violates it, if it's like built into the browser. Like Firefox, Brave is another one that I think just has like built-in content blockers.
I like Brave.
I've heard really good things about it. I've never used it myself.
That's the Web3 browser, I believe.
Yeah, which like I heard about Brave
yeah, Meta's
7 years ago.
Google and Facebook's worst enemy, because there's no middleman. The user gets paid for them to see ads, and then there's no middleman like Facebook or Google. So they're probably lobbying somewhere to not make that go through and be successful.
Brave for the win, organic farming approves. But what I will say is when I don't when I'm not on a device with one of those browsers on it, it's impossible to watch YouTube or listen to anything. If I have a music playlist or something on YouTube, and it's compared to other streaming services, not that expensive. I think it's just it's dumb rationale probably, but they waited for so long to crack down on the ad blockers that by the time that they did it, so many people, myself included, were paying for so many other ad-free services like Hulu and Netflix, and I'm like, no, it's just another one. If they had done it 5 years ago, I would have jumped on it probably a lot sooner.
Same. And you know what they're kind of doing now? With cable, we have the commercials in between, 90-second commercials. Netflix and YouTube have so much attention, almost more than cable once had. They've almost became the new cable, because now you sit through commercials on YouTube and Netflix. So it's once they have the bulk of the attention and they realize they have more of the leverage, then they introduce the commercials style that the cable was doing, which is interesting to see too.
That is interesting. I feel like if anyone was probably worth it, YouTube, of all of the services that I pay for, YouTube's probably the one that makes the most sense. And then we all, of course, have Luis joining us, giving us some Kava numbers over in chat. 353 restaurants, their current market cap of $19 billion. Each one is worth $52 million each restaurant. Crazy numbers, absolutely bananas. And Kava is new fast, healthy food. Really excited to see where it winds up on the open.
Yeah.
Also, Theta Trader, apparently Nikki Bat gave an explanation earlier about why Bito's dividends are so high. I'd love to go take a look at that. If you want to give a synopsis, feel free to do that over in chat while we hop on over to trivia. Are we ready?
Yeah, let's get into it. We got a couple ones for today. It's crypto related. Just because, crypto's popping up, I thought it was fitting.
That is fitting. Let's see how well we know our crypto.
Cool.
And then if we have time, we could maybe do a trade. I think that'd be fun. Okay. Let's get into it. First things first. We have our heat map is on there. We have some sick updates coming out that should be within the next week or two. So if you want to go download the app, it's a pretty sick app. We got some cool features on there. You can, log in with your Tasty account and submit orders that way. It's over in the App Store and the Google Play Store. We would love to have you. And then as well, if you want to come throw your trivia answers into chat, you can find us on Tasty Live's YouTube channel at Tasty Live Show. If you want to follow us on Twitter, at Bad Trader App is our handle. Luis digs up some really interesting information to show on there. So I've been really enjoying it so far. But crypto is the theme of this trivia.
Is the thing. This one is an underhand toss for the first one.
Underhand toss. Okay, let's get into it.
Cool. What is the maximum number of Bitcoin that can ever exist according to the original code? We got 10 million. We have 21 million. We have 100 million. And we have 50 million. Chat, what do we think?
I know this one because I think I remember this one.
Okay.
There was like the white paper from years ago, and I think I know the number actually. But chat, tell us what you think. We got 10 million for A, 21 million for B, 100 million for C, and then 50 million for D. I don't like that 150 are switched. The orders. That's like.
I have to throw something in there. That's like I got to throw something in there.
Just to mix it up a little bit. Go ahead, everybody. Take your answers, throw them in chat. Brian the Nurse, awesome to see you. Thank you for joining us. 21 million is what everybody is saying. That's also the answer that I'm going to give. Is it 21 million Bitcoin?
It is 21 million. And a fun fact, Bitcoin's capped supply at 20 million is one of its defining features, making it a scarce asset, often compared to digital gold. So that's where we get the comparison from. But so apparently, Data Trader says I look like a Shiba Inu coin holder. SHIB.
Got SHIB coin?
A SHIB coin. I don't have SHIB coin, but I can see it though. I can see it, Data Trader.
At least it's not the Glizzy coin. They made like a
not the
like
Glizzy
Costco
coin.
Glizzy coin.
Not the Glizzy
I heard
coin.
about that in one of our crypto streams. Someone brought it up. I'm like, what? Of course there is. Why would I expect anything less?
Right.
Oh, y'all, but a bunch of people got it. Really good job, guys. Well done. Let's go on to the next one.
Cool. In 2021, which country became the first to adopt Bitcoin as a legal tender alongside its official currency, the US dollar? We got El Salvador, we have Venezuela, Argentina, and Brazil.
Ooh.
Which is the answer?
Now, see, like this is almost like prepping us for Tradle because it's like a geography question.
It is.
In a way.
It is a little bit.
Or geopolitical question, I guess you could say.
Mm-hmm.
Okay, everybody, go ahead and give your guesses. In 2021, which country became the first to adopt Bitcoin as legal tender alongside its official currency, the US dollar?
All right, we got El Salvador. We got Venezuela.
I do know the answer to this one. I'm just looking something up because I wanted to I want to fact check something. Let's see. Before I say it.
Maybe Mike's looking forward to Tradle. We may have a few minutes.
Okay, everybody, go ahead, give your guesses over in chat. I have a feeling a bunch of us already got it. A bunch of people are saying El Salvador. We got A is the guess. Yay, Tradle. El Salvador, there we go. That's also going to be my guess, El Salvador. And what I wanted to fact check is I thought that they were building like a crypto mining like base at the base of a volcano. And I think there were plans for it. From what I can find from 30 seconds of Googling, I don't know if they actually moved forward with building it. But yeah, I was going to say El Salvador is my guess.
El Salvador. A little fun fact again. El Salvador's president, Nayib. I seen somebody drop the name in the chat. Nayib Bukele promoted Bitcoin's adoption to increase financial inclusion and promote technological. Tech. Stay with me now.
I know you got this.
Sound it out. Help me out, Julie. Technological. Goodness gracious. Innovation. Wow.
There you go. That's okay.
Yes. It looks like Luis got the fun fact in there. That wasn't a part of the question, but I see the name in there.
Oh, hell yeah. No, that's a fun one. And a bunch of people actually knew that. But well done, everybody. I think we got it. Yeah, they're probably pretty happy about it now.
Yeah, that's a a great decision that was made at that time, especially with all the,
Well, if I recall correctly, they made the transition right before Bitcoin sold off. Presumably, they're still holding on to a bunch of it. I don't know how much Bitcoin I'm actually curious, does El Salvador have? Is that public? $500 million in Bitcoin amounts to 1.5% of its GDP, just in Bitcoin. Look at that. What a wild idea. Oh, man. Well, that was some good trivia, testing our knowledge. I think we did pretty well at that. Those were some good questions. Do you want to hop into some Tradle?
Let's get some Tradle. I know Grumpy Mike's looking forward to it. Data Trader said, now you're making me think you might hold Doge. I did hold Doge temporarily, so that's where that came from, Data Trader.
I mean, it's cheap enough, you can, it's a little Doge. But here we go. We got our Tradle.
Cool.
If anybody is new to Tradle, it's a game. It's very similar to Wordle. That's what it's right. Is the name of it? I haven't played it in so long, actually. And Wordle, it's very similar.
I remember
to Wordle.
everyone in the office was playing Wordle.
Well, I got Wordle mixed up with Worldle, which is where you're given the shape of a country and you have to guess what it is. And they tell you the direction and how much you're off by. Very similar to this, actually. But it's Wordle, very similar to Wordle. Okay. You're given the export distribution of a country. So this country exports $38 billion in total exports. And this is the distribution of exports. And we have to guess which country this is. So we got textiles like house linens, suits, sweaters, cotton stuff, more men's suits. Rice makes up 6.61% of their exports. We have potatoes, corn, citrus, tropical fruits. 4% is refined petroleum up in here. Refined copper. Looks like we have some sugar, baked goods, bovine meat. Okay, so we're seeing a decent amount of agricultural products, and then textiles is a pretty big one. 38 billion. So last time when we did this, it was like 10 million. When I played it with Gus yesterday, it was like a $10 million country, which is very small. This is a bit bigger. And I wonder if it could be like Indonesia, maybe? I'm trying to think who makes a lot of textiles.
Well, that's not a guess, and we could always just throw the first one out to kind of get a feel for where we're at.
Want to give it a go? You can take a look at chat as well. We got Egypt, Pakistan, we got Vietnam. I was also thinking India. It seems kind of similar to India, but India would be like a lot bigger. Philippines is a pretty good one. A lot of people are saying Vietnam. Do you want to go with Vietnam?
Yeah, I've seen that a couple times in chat. Let's do it.
Let's do it. So our first guess is going to be Vietnam. Let's put it in. And we are pretty close, actually. We're 78% of the way there. And it's 4,000 kilometers to the northwest. So I'm trying to see now at a point it becomes more of a geography problem. It could be like Eastern Europe, right? 78% of the way there. It's 4,000 kilometers to it could be like Georgia. I feel like it's a little small to be Georgia. It's also Northeast. Another little trick is if you look at some of the agricultural exports give you hints. So like tropical fruits makes up 0.38%.
Okay, I like that.
Kind of warm.
What is it saying over house linens if you hover over it?
House linens is almost 13% is house linens. Right? We got copper. Croatia. It could be Croatia. I actually really like Croatia. Do you want to do Croatia?
Yeah, let's send it.
Let's do Croatia, y'all. Let's see. We're looking for something that's... okay. No, it is not Croatia. Shit. My geography is completely distorted. Bangladesh is also a very good guess. Is that northeast of Vietnam? Northwest, I'm sorry. Bangladesh, I thought was... Oh, it might be. It might be. Bangladesh is... We got two Bangladeshes in chat. Let's do a Bangladesh. How about that? Yeah?
Yeah, let's do it.
Let's take a look.
Like 4 more tries.
Oh, we got...
That's closer.
8 more tries. And 89% of the way there. It's basically like a couple countries east of Bangladesh. Sorry. Bangladesh is a couple countries east of the target country. There we go. It's closer to Bangladesh. It's still not like that close, though.
Sri Lanka, organic farming says.
I also like, yes, the actual answer is 2,000 kilometers to the west of Bangladesh. That's what this had to read this, 2,200 kilometers. I also like Sri Lanka. We got 3 guesses left, so let's throw out a Sri Lanka and see if that's, I think it's a great guess, actually, with the amount of textiles.
Okay, closer-ish. Wow, we haven't gotten the same arrow. Oh, actually, we have the first one in the last one now.
The first and the last. So, okay, so now we got our little map. Okay, so Croatia's too far west, and it's still like outside of it's still to the west of like Southeast Asia, basically.
Data Trader did say Pakistan when we jumped into this for the first try. I'm not against that.
Data Trader did say Pakistan. I suppose but isn't
Thailand?
Is Pakistan? Is Pakistan to the east of Croatia? Why did I feel like Pakistan was in the other direction? Thailand is a good guess. I'm doing that without a map, though. But that's what makes it hard. You got to do it without a map. Well, we are just about out of time, so the tropical fruit thing is also throwing me off. We're going to do Pakistan because we got to finish up. I am not... Oh my God, it's Pakistan.
Let's go. Data Trader. Shout out to you.
Data Trader got it this whole time. That was the first guess they gave.
Yeah.
That's how bad I am at geography, y'all. No, it's actually Pakistan. Data Trader totally got it. Oh, and we doubted you.
The buzzer beater.
Silly goose. Good job, guys. Shit. Did our daily tradle. I feel like I learned a lot about geography during that.
I do as well.
For whatever it counts for. It's exactly between Croatia and Bangladesh, apparently. So yeah, I feel like I'm learning a whole lot today, y'all. But that was a fun time. Thank you guys, everybody, for participating. E, do you want to say anything before we get out of here?
No, that'll be it. Always good chatting with the Bad Taste crew, and be sure to tune in the next ones. But that'll be it for me, Julia.
That's going to be it for me, too. Well done, everybody. Great job, Theta Trader. Called it before anybody else. Thanks again, guys, for participating. Really well done and awesome to see you. So we'll catch you guys over on Thursday. Good luck trading and peace.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's